we're back. Monday. What is it? June 9th.
You're dang right it is. Good morning, Frank. Happy to be here.
That's good to hear, man. How was your weekend?
The weekend was good, but too long.
Too long, yeah.
Glad to be back.
Had to be back.
Yep.
I think that I'm turning the corner into like Tom, Pete.
Oh God.
That kind of territory where I'm checking markets nonstop now over the weekend because I just maybe I don't have anything else to do.
Maybe too much of your portfolio is crypto. They at least have some sort of reprieve.
Crypto has no reprieve.
28 hours. I know. I'm saying Tom and Pete.
But I think
give themselves a little bit.
They've spent almost every weekend and vacation and whatever time away from markets wanting the markets to be accessible to them.
Fair.
And I'm starting to get to that point, not because I'm like doing a bunch of crazy stuff.
Making so much money.
I just want to know what the heck's going on.
Yeah.
My mom was in town this weekend.
Very nice.
That was great.
Did you had Bob's Pizza for dinner?
Dude, I think it's gotten to the point you can't take flights. If you have a flight scheduled after like 1 p.m., you might as well just book it for the next day. Because like it's gonna be delayed.
That sucks.
She was supposed to come in from Lexington to Chicago. Seemingly simple enough flight.
Popular route. Hub to hub.
Leaving at like, I guess, I don't know, 4 p.m., 5 p.m. Sure. I think it was Eastern, whatever. Getting in at like 7:20, and she didn't get off of the plane until like 11:30.
That is so demoralizing.
And like, it's one of those like, oh, it's delayed. And so it's like, all right, well, I'll come pick you up. It's like, okay, like we get in now at 10. All right, like I get to the airport at like 10:15, whatever, like some time for her to get off the. And it's like, oh, actually, we're landed, but they don't have a gate for us. And it's like, what is going on at 11 o'clock? Like, all the gates are taken. So it's another hour that I've thankfully at O'Hare, they've just given in to like anything goes.
Now. In terms of just like waiting there?
Maybe it's because it was so late at night, but you know how there's like usually the guy that's like, you got to be moving. Like, you got to be moving. Yeah. I just like pulled up to Terminal 1, parked right there, and didn't move for an hour. Yeah, just like checking my phone,
that might
podcast.
Be a record.
And so it wasn't. Nice. Thankfully, in 2025, you can amuse yourself pretty much anywhere. But like, it is just like I told her, I was like, I schedule almost all of my flights pre 9 a.m.
Has to be.
Because it's just like, if it's in the afternoon, one of those flights got delayed.
Summer rains, too.
It's ridiculous.
All little thunderstorms. People freak out.
But yeah, she got in town. It was great. She went to see some play with her girlfriends. Her and she grew up on the South Side, nice. Italian American neighborhood. Her and all her girlfriends are funny little Italian American women. And they went to see some Tina Turner play.
Heck and had a ball. I think I saw it at like the Chicago Theater.
I think Cadillac, yeah.
Oh yeah. Nice.
But yeah, it was good. And then we crushed Mission Impossible Fallout yesterday, and watched Jerry Maguire. Have you seen this movie?
Mm-mm.
It's pretty good.
Watched Ocean's 11.
So good.
So good. Just class. Except for Don Cheadle's accent.
He switches it up a couple times.
Pretty bad.
Man, I haven't seen that movie in a while.
Worth rewatching.
Yeah, amazing. All right, let's get into it. What's going on?
We've got a pretty exciting open in terms of U.S. dollar pairs. If we want to hop into the platform, slightly softer open for equities and metals and whatnot. But this U.S. dollar, we've got some movement, especially in this Australian dollar. When we started the show, it was up 0.5%. Now pulling back a little, but we had some. If we look at the hourly chart, it tells us a little bit of the story. We had a big move, a little bit of a move on the open, consolidated, big move around a China exports number.
Okay.
Lowest exports to the U.S., but very strong otherwise. So I think not good for U.S. dollar, particularly against these Australasian currencies, but not too much else going on. Not sure.
Why don't you zoom out on this Aussie? Because this is one that like
We're up there.
Yeah, man. But look at this. It feels like I'm just gonna do it. It feels like Ethereum. It feels like it's like, oh man, like nice rally here, start the week.
You've got to be
like
up more than you have
feeling
been.
strong, and it's like, where are we at? We've got to be like 72 cents at this point, 65 once again, like not
Yeah,
going
man.
anywhere. Which good for you.
Building in recent days,
Stronger
but yeah,
than it's been.
the sell-offs, man, they take you right back to square one. But yeah, I guess now holding this 64-cent level much better than in months prior, as we've called out many a times before. You know, on a percentage basis, up a ton from this April low. But yeah, if you're looking at markets at the present, not too much runaway in this U.S. dollar.
It just feels like it's fully under the radar. Like we had obviously all the volatility in early April, and throughout April, it quickly became that euro and pound were the winners against U.S. dollar. If you're talking about major currencies against USD. And after that, it kind of, there was, and that's why I bring up ETH almost, because it's like, oh man, big rally in Bitcoin. And it's like any day now, ETH is going to rally.
Catch up.
Any day now. And it just hasn't. It hasn't fallen apart. It's shown strength in certain times. And this one, you know, obviously as well, you've seen as recently as the end of May there was a really nice rally from around 64 cents, well above 65. And they gave it all back. And it's just like this feeling of it's strong, it's not falling apart, it's not going back to the lows. These are the strongest prices here above 65 cents going back to November, December of last year. But we're just not going anywhere. Like you pull up like the pound, and it's like you see some strong rallies, and then you look at the ground that we've covered, and it's like, oh yeah, like it was trading 130, and then it was trading 131, and then it was trading 132, and now we're 135 bid, and feeling like they might try to finally break above 136. So just super different feeling. These commodity currencies, they've been very volatile. They've been moving around, but you're not seeing the upside like you are these other currencies.
That is my question here. You kind of got my gears turning on crypto comparisons. What do we think here in this Australian dollar, US dollar market? Obviously a little harder since they're more two-sided, not necessarily have a positive drift. But what do you think of this pair's relationship to volatility right now? Before, if there was a vol shock, very bad for Australian dollar. If volatility is coming in, is that necessarily
to equity vol?
Correct, or just global, any sort of volatility in this market? Is there obviously prior bigger moves to the downside to the U.S. dollar's favor? If volatility is starting to come in a little bit, does that benefit this Australian dollar?
It seems like this pair has become more than anything I can hang my hat on, and maybe we should run the correlations or something. Sure, there's some equity vol correlation in there, and you'd look at April because you'd say, well, that early April chart when the tariff stuff is becoming real for a lot of countries, the volatility in pairs like euro dollar and dollar Swiss franc and some of these other major U.S. dollar pairs was one directional. And this one, you see two sides of it. And so you'd say, okay, well, there must be a correlation here to U.S. equities. And I think actually the murkiness of that move and what we've been seeing is throwing me off, and maybe other people. It's a really strong correlation seemingly to Chinese equities. I think that the correlation is really getting robust between Australian dollar and Chinese equities, and this as a proxy trade for Chinese equities. And I say that, and everybody might say, well, Frank, in the long run, you know, the correlations between Chinese equities and U.S. equities is probably going to be like 0.7, 0.8. Yes, of course. Recently, this has been weird. The last couple of years, this has been weird, where S&Ps, NASDAQ, are printing new all-time highs constantly. And guess what? On a week like this one, they could make all-time highs again. And Chinese equities, it's not the same. Now, you've seen Chinese equities bounce pretty well in the last year or so. They're no longer kind of like drifting lower as U.S. equities are drifting higher. But this one, to me, and I again harp on the Chinese equities part of it, is because you'll see in the last couple of weeks days where Chinese equities are up 1% or 1.5%, and S&Ps and NASDAQ are down or flat. Right. And this pair is moving. And so this, to me, one of the most volatile pieces, one of the most interesting pieces, but not from a price point. The least interesting from an extreme or a price point and trying to hang your hat on being like, oh man, 65 cents, that's expensive. Or when it dips down to 64 cents, oh man, that's really cheap. This has weirdly been one of the most range-bound pairs, least extreme pairs, but also day-to-day most volatile. And I mean, just if you have free time, just take a look at a Chinese equity basket, and you'll see a similar thing where it's like, oh man, like not falling apart, big moves, but like not shooting the moon by any means.
Exactly. Good call out there. And speaking of historical extremes, let's check in on one of our favorites here.
This has been a fun one last couple of weeks.
U.S. dollar Swiss franc up a little bit in the early hours here, but not didn't run away from us as we thought it might on Friday morning. Really drifted back down to end the day, opening here a little lower, about where we started last week. What do we think coming in here? Because just for some historic context, we're consolidating around this 82 level, and that is the low for about a decade plus. We have the 2015 euro dpeg as the last time we were showing these prices, and no real time otherwise spent around here. But if you thought this was cheap in April, you're still right here at unchanged.
And this is why those commodity currencies hurt my feelings so much. It's just because like this is from a price extreme standpoint, a super interesting one. And this has been not nearly as volatile as Aussie. Right. But like you see these moves down to 81.5 or as recently as a mid to late April there, below 81, and then a move back up to 82, 83, 84 even here a few weeks ago. And the carry trade dynamics around this one have been so interesting. Of course, this market can break down back below 81 or even 80 and get to even crazier decade-long extremes. But it is a funny one for your theoretical meets practical example. When this market broke down in early to mid-April, tariff talks, we go from 88 all the way down below 82. If you have the patience or whatever to get in around 82 cents, even 82 to 83, that area on whatever day that is where there's the huge bar where we break down below April 10th there, and you've just been holding this dollar long, getting the carry trade. I think the Swiss interest rates are 25 bips and U.S. rates are still obviously 4.25. And you're getting the long dollar carry trade that can range from, it looks weirdly low right now. I don't know what's up with that. We'll have to look into that. But
still positive.
Usually from 0.5 point to 1.5 points. And Paul corrected me on this. I was on with Paul last Wednesday that I was like, oh yeah, like that, times 250 or whatever. It's a 365 thing. It's every calendar
all
day of the year that you're getting the carry trade. And of course, those carry trade dynamics can change. And there's price action risk of this market breaking below 82, below 81, going against you further. But it is a funny one that if you were long at 82 and you held from mid-April, early to mid-April there, April 10th, whatever day it was, and now it's June 10th almost.
Yep.
You've gotten now 2 months of carry and the market has not moved. Now, of course, you might say, oh, well, when it went up to 84 cents, I would have taken the 200 points in profit versus, 60 times, let's just say it's, as an example, a theoretical 1 point of overnight every night. I would have taken the 200 points in price action profit versus the 60 points in carry trade profit. Sure. But it's just a funny one and an interesting example for the people out there that trade options or long crypto and do the staking and are just like, oh, well, I'll buy this thing at 100, and if I stake it for 8% and it's 100, then 8% APY is better than 4% or 3% or 5%, whatever, with treasuries. An interesting one here, and yeah, like I say, the price point is more interesting than those commodity currencies. The carry trade dynamics, obviously Australia has more similar interest rates than to the U.S. Euro area, similar interest rates to the U.S. UK, similar interest rates to the U.S. Makes this one really a fun one to look at, and one that we've been looking at constantly, and yeah, has been like, oh, it's back below 82 cents. Interesting. And it's like, oh, it's back above 82 cents. Interesting if you wanted to take that, price action profit. But if you've just been, sitting long, taking the carry, we haven't moved off of 82 really for the last 60 days.
Yeah, great walkthrough in a very interesting pair. Where do we want to go next?
Did you put together something?
Or
let's look at dollar yen really quick, just because we had a really interesting close to the week. Sorry, guys out there. Thanks for pulling the chart back up.
Oh, yeah. You've got a nice little...
Non-farm comes out. USA, as you like to say, stronger than expected. It was a classic, all the employment data throughout the week, bad.
Yep.
And then non-farm comes out better than expected. And you see US dollar rally into the weekend pretty much all the way up to 145. They sell it off a little bit into the close there, just to like 140. Actually, no. The Friday afternoon it was just 144, like 75ish.
Yeah.
So not really that much, but now they've sold it off all the way down to 144 recently, as an hour or two ago. Railing as we speak now to split the difference. But man, different than the pairs we just talked about. Obviously, 140 to 145 is not a decade-long low for U.S. dollar versus Japanese yen. But this is just a fun one because it has those carry trade dynamics similar to dollar franc, but not at those lows, and actually a really wide range relative to that Swiss franc. That Swiss franc trading like back and forth around 50 or 100 pips, low vol, which might be interesting for those people trying to take that carry trade.
Exactly.
But this one, a little bit higher vol, range of a few hundred points, keeps getting up to 145 and unable to stay above it. But keeps getting down to, like we saw mid last week, gets down to below 143 and can't stay below it. So everybody, when it gets down to the low 140s, is like, the carry trade's unraveling. The U.S. dollar is getting annihilated. And then it just keeps bouncing back up to 145. It's an interesting one to watch.
Absolutely. We'll see where this range takes us this week, but that is why I've prepared some slides for today.
Cool.
We've got, we'll see what the week ahead brings us, but we've got a CPI number on Wednesday. We've got a Fed meeting next week. There's some signs that point to this could be more of an inside week.
Okay.
Not a ton going on unless we get one of these, unscheduled headlines that shake things up, but prompted me to ask the question, which Forex pairs tend to move the most? And this is some analysis we've done time and time again. But taking a look at popular U.S. dollar pairs, we've got the standard deviation of daily price changes. So this will give you an idea of what a standard daily range is in pips for all of these markets across 4 different time horizons here. What stands out to you here? I'll start with, I look at the 3-month standard deviation primarily because that gives, of these data points, kind of enough data to base things off of, but also stays a little bit relevant to how things are moving across the globe right now. But this 3-month, to me, is now looking a little bit more of an outlier because it includes some of those early April shakeouts, but those are now maybe behind us.
Sure. Yeah, I definitely. First thing that you see is obviously dollar yen with the biggest pip moves out of any of these popular USD pairs, but also just the general trend. If you move from right to left in almost any of them, you're seeing a little bit of a widening out of that standard deviation. So an increase in volatility going from 6 months to 3 months. So to Glenn's point, the last few months being the most volatile period of any of the time periods that we're looking at here historically. But then the general trend from 3 months to 1 month to 1 week here is lower vol, tightening of standard deviations here. Now, I also don't think it's any coincidence that if you're looking at the last 1 month and the last 1 week, what have we not gotten as we head into an FOMC is we haven't had an FOMC in the last month.
Sure.
So there's that. But yeah, more importantly, in the last month, we've seen a little bit of diminishing volatility returns around the tariff talks that obviously hit 2 or so months in the past. So it's an interesting one here. A couple of call outs for sure. I mean, that dollar Swiss franc.
Right, yeah.
Really interesting that vol got so juiced in that they were moving. If you're looking at the 3-month correlation, I guess that the number is still relevant right now. If you're looking at the last 3 months, not correlation, standard deviation, the standard deviation would still tell you, man, this dollar Swissy is moving 70 points on a given day. Now, we haven't really seen that in the last month or so. So some interesting little tidbits. But when I look at the left part of your table here, I wouldn't necessarily take those 1 week numbers because we have been pretty low vol the last week specifically.
Right.
But I would more look at that 1 month number as being like, my porridge is too hot, my porridge is too cold. That one probably is the column that I'd be like, this seems normal because of course, yeah, like to think that we're going to get 120 points in dollar yen every day, I don't think is normal because that has just those crazy tariff moves of early April in that data set. Same with dollar Swissy, 75 points every day is a lot to ask for. But I mean, 60 points in euro dollar, reasonable, 50 in sterling, 100 in dollar yen has absolutely been reasonable. And as you go down the line there, of course, it looks like, oh man, those commodity currencies are so boring. 30 points in Aussie, 32 points in Kiwi. Those are lower notional pairs. And so on a percentage basis and a potential return and risk basis, more volatile than some of the other ones you're looking at.
Absolutely. And quickly wanted to call out some of these non-US dollar pairs, perhaps those slightly more volatile. And this one, an important call out as well. If you look, to the biggest number there, that Euro Australian dollar in the 3 month.
That's cool.
That one as well is similar to kind of the US dollar Japanese yen, where it's priced pretty rich as opposed to, for US dollar, Australian dollar is the base currency.
That's very cool.
So you get some similarities there.
Euro Aussie, great. Wow, this just calls out that Euro Aussie might be a better pair for day trading, for scalping around, than that Aussie USD. Man, some interesting action. Again, that 1 week, I would kind of throw that out. It's been kind of a lame last week. But if you're looking at even that 1 month, as well as obviously the 3 month data, that's some significant price action for people looking at some day trading in non-USD pairs, that Euro Aussie. And of course, that's going to be a relatively low margin pair as well. Euro USD being 2% and Aussie USD being 3%. So that pair is probably 3%. And then that sterling yen, another interesting one. as well, because you might think like, oh man, on those weeks where U.S. dollar is beating up on yen again, it's like, oh man, like this is probably the most extreme price action. But sterling's been beating the hell out of USD the last couple of months. And so if you're looking for some extreme price action, that sterling yen piece might be your ticket. Yeah, across the board, pretty much there, over 100 points of movement. That's this is some cool numbers.
Yeah, similar trends, but definitely some unique opportunities if you're looking to diversify past that U.S. dollar. And before we get out of here, just wanted to call out what you called out earlier, that there are, we were looking just at per pip movements. There are definitely some other variables that go into all of these calculations. And a quick example is looking at the Australian dollar versus U.S. dollar, Japanese yen. Because of the margin rates, because of where we are in terms of the exchange rate of Australian dollar, U.S. dollar being so cheap, you can, with the same margin, you can size your trade a little bigger, get more movement per pip, and get a theoretical profit or loss based on the daily ranges a lot wider than that dollar yen, even though dollar yen has a lot higher of a daily pip range. So a lot of things to consider here when you're looking at these per pip movements, but we'll see if it ends up being more of an inside week like those 1 week standard deviations, or if we start to see some volatility come back in these major Forex pairs. But that'll do it for us here today on Forex Focus. Thanks for joining us. It should be a fun week. Thank you, Frank, as always. A lot of trading ahead, so stay tuned on Tasty Live for Tom, Tony, and Vanetta up next.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Come on, you know it, can you feel it? We got some things to talk about. Pre-market, it's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So taste it.
knuckleheads. Happy Monday to you both.
Hello.
Good morning, Saz. What are you chewing on? Leftover breakfast or something new?
Pistachio nuts.
Pistachio. Oh, Nick saw those on Friday. I think I wouldn't eat those if I was you.
Tom, you better have brought me something from the great state of Maine for leaving me with the bats.
Oh, I totally forgot. I didn't get anything.
That's not nice. You had fun.
You have one job.
Yeah, you're right. I had one job, but I forgot. I forgot a lot about my one job. I forgot a lot about things. I always have all these things. If I don't write myself a to-do list, then I forget about all the stuff I need to do.
Awesome. How was Maine?
I could see that. Most men have to write a list of stuff they need from Home Depot. You have to remember to bring a gift to your co-host of 14 years. I mean, seriously.
Maine was great. I mean, the weather was crappy. It was raining the whole weekend, but yeah, it was nice.
Did you get your clam? Did you go to Ken's and get your clam roll?
I went to Ken's, got the clam platter. Okay, I'm gonna tell you this right now. Because I couldn't
Break it down, girl.
Because I couldn't really walk the next day because it's not really good for me. But
it's not good for you.
But once or twice a year, it's worth going off the deep end to go to Ken's. If you've never been there, I told Tony this morning, I made a list on my way home last night on the plane.
So you had time to do this.
On the plane ride home, I decided I would make a list of the 7 places in America that I've been to. This is my list. I don't care what anybody else says. There are 7 places that you would drive out of your way, like get off the highway if you're going somewhere to go get a certain food.
Okay. Okay. What is this list then?
So I made the list. I'm going to present it to you now.
We are ready for your presentation, my lord.
I feel like this is groundbreaking stuff. And again, I have to put a little context around this. It's hand food. Okay? So it's not fancy.
Is that like over the bra stuff? What's hand food?
There are no Michelin star.
There's no Michelin stars. It's not like Tony having to go to Alinea. You don't have to make no reservations. It's every one of these places. You go up to the counter and order your food. That's kind of it. No waiter service, nothing. Just you walk up, you pay your money, they call your number, you get your food. That's what it is.
Okay, that's how restaurants work. Okay.
And you have to, like, where would you get off a highway to drive? Like when I was going to Nashville a couple weeks ago, like I got off the highway to go to Buc-ee's. Like I would never do that again. Like that was not worth it. Like
how dare you say gas. That? I'm so jealous that you.
Okay, whatever. I'm just saying. My whole point is, where would you go off, drive like an extra hour, whatever it is? When Tony and I were on the road once, we went like 2 hours out of our way to get this giant crab cakes. Remember that?
It was not worth it.
Right. It wasn't worth it. And we went to like the most famous crab cake place in, where were we, Maryland or something? I think we were in Maryland.
Yeah, Maryland, yeah.
And
you were in Maryland, yeah.
Some giant, listen, the size of the crab cakes was like massive. We were sick. We were sick for hours after that meal. But it wasn't worth it, is my point. And we drove like 2 hours. And we were in Texas once. We drove like 2 hours out of our way to get pies, like in some place. There's certain things you got to, I wrote the list of the 7 places in America that I've been to. And every one of these places multiple times.
Are we sure we shouldn't be putting this behind a paywall? We're just going to give it to the people for free?
This is the stuff that people have been waiting for, son.
This is the stuff.
Tasty Plus. You need Tasty Plus, honey. I don't know.
And I don't care if you don't agree, whatever, blah, blah, blah. And you're going to say there's better places. But this is the list of the places you have to try before you die.
Get to it already.
Before you die. And I would like to give somebody a huge award. I don't know. I'll send them something if you've been to all 7 of these places, because I doubt there's anybody in Tasty Nation that's been to all 7 of these, because they're my choices. Okay, ready?
Break it down.
The most public one of them all is in New York City, you have to go to Katz's. I don't care what people say about the pastrami. You have to get a pastrami sandwich at Katz's. You have to do it. It's part of life. If you've never done it, even if you don't eat pastrami, you've got to do it.
I'm sorry, and what highway are you driving on that you then see a sign for Katz's?
No, you're going to New York City. You got to get to Katz's. It's a pain in the ass to get to Katz's. It's down in the
gotcha.
It's down in the Bowery. It's not like it's wherever you are in New York. It's a pain to get to Katz's. You're not staying next door to that. Okay. When you get to Chicago, you have to go one time because you can only do it once. Otherwise, you'll die. You have to go to Riccobenni's.
I like the call. I like the call of Riccobenni's. I haven't been there in years.
The breaded steak sandwich, with hot jardiniere from Riccobenni's is world class. It's one of the greatest sandwiches in the world.
So Riccobenni's is getting your Chicago nod all over like something that's legitimately won recognition, and that's Pequod's?
Yes, it's Riccobenni's because
I kind of agree with them.
Okay.
I kind of agree with them.
Next one, and I've gotten off the highway many times for this. You have to get off the highway in New Haven, go to Worcester Square, and go to Pepe's, the original Pepe's. Some people go,
Pepe's Pizza, yes.
Yeah, some people like Spot, some people like different places, but I like Pepe's, the original, and you have to get their American bacon pizza. It is one of the greatest pizzas in the history of the world.
Not the clam pizza.
No, I don't like the clam pizza because it's white sauce. I like red sauce on a pizza.
But that's what makes it New Haven style.
I'm not listening
to you here. I got to disagree with you. I go with the clam pizza.
Bacon, that's it. Pepe's. Then you drive straight up 95 until you get to Maine, and you go to Ken's in Scarborough. I was there this weekend. I put it easily among the greatest meals I've ever had. The fried clams at Ken's are the best in the freaking world. I've never had anything like it.
So good you can't walk the next day.
They'll take you
down. Can't walk the next day. They are so good. It is so good. It is worth going 5 hours out of your way for that place. It's not the lobster rolls. It's not it's the fried clams, whether you do it on a roll or do it on a plate. Their fried clams are the greatest. It's a meal that you can't eat again for a day. Okay? Then we go out to LA. It's no doubt about it. It's Howlin' Ray's for fried chicken sandwiches.
Spicy hot chicken.
Yeah, spicy hot chicken, Howlin' Ray's. It's the best. There's not any place close to that. Then my two final stops are actually both in Texas. I love Pecan Lodge in Dallas, in Old Elm.
Okay.
For their brisket, their fatty brisket. It's unbelievable. And then you go to Austin, and I'm a Terry Black's beef rib person. It's the best I've ever tried.
Okay.
And those are my 7 places.
You don't have a Super Dog on the list. You don't have Randazzo's on the list.
Randazzo's not Randazzo's.
You don't have L&B's Spumoni Garden.
No,
Spumoni on the list.
You can have your list. This is my list.
No.
Super Dog.
Listen.
Super Dog would probably be like an honorable mention, and as would Pequod's. Like if I was doing Chicago honorable mentions. As you know, there's other places.
You don't have a dirty water hot dog from any New York stand. You don't have a knish from a New York stand or on a beach in Brooklyn.
You're right. You're right. I don't.
And there's no shawarma on this list. How's there no shawarma?
This list is fakakta. Although I do have people asking me for the list now. So can you email it to me?
No, you don't. You're not worthy. They can email me directly. This is my list. This is life-changing. These are the 7 places. And if you haven't been to all 7, it's worth. This is easier than going to all 32 baseball stadiums.
It's not really, but okay.
No, it is because it's in a small shuffle zone. Like this is.
No, this covers the South, the West Coast, a couple of places on the East Coast. And Midwest, but you have to.
You don't want to go to the halal truck or anything like that
not even close.
But there's no Miami. How come you don't? There's no Miami on this list.
What are you going to get in Miami?
There's no beef on Wick here. I mean,
there's no
beef on Wick.
Yeah, there's no.
What do you
beef
got?
On Wick?
What do you got? Beef on Wick. What do you got? Somebody from Buffalo crying? Okay, Buffalo.
That's half our trade desk.
Buffalo gets like a. They're like a tier 2. Like Like Anchor Bar and Beef on Weckers, that's like tier 2 food. That's like Pimenti
Pace
Brothers.
was this close to being the beef princess.
I mean, these are all level 2 places. Like, there's a lot of level 2 places, like your Halal Brothers and all that crap. They're all level 2. You know, like, listen, there's places, you know, I considered Athenian Room, the large gyros from Athenian Room. That's life-changing, but it couldn't make the list. It's an honorable mention.
Can it get are there like 3 gouts
How come
and
there's
2
no
gout
Wo
list?
Hop? There's no Chinese. What, you got to put Wo Hop on there.
There's no Chinese. If I went Chinese, I would have done the Peking duck from Sunhua.
Oh, here in
Because
Chicago. Okay.
yeah, and their beef chow fun. I would have done that because that's
You can't have Peking duck.
no,
as
I know,
your-
but it's
your
cheap. It's cheap. It
reason
fits
for
into
You
the.
said hand food. You
It
said
fits-
hand food. That's
That's
not
hand food. It fits into the category, but I didn't do it. I left it off.
All right.
But listen, this was really well thought out. This was 2 hours of work. Okay, this was. I had to focus on this, so that's all I'm going to say.
Praise the Lord. You can email him. That's tom@tastylive.com if you, for some reason, if you want this list.
This unofficial official list. It's horrible.
Okay, Bat, so you and we got to make our own lists, okay?
Okay, I could do that. I could do that. I mean, you know, Tom's list is like Tom. It's from the 80s. You know what I mean? Like, it's just not it's not relevant. Is really what it comes down to.
It's not. What do you mean it's not relevant?
And
This
there's
is.
no like iconic sweets on the list, like a key lime pie in Florida or like a donut in LA.
Listen,
or
there's
something.
going to
You know what
be
I'm saying?
people.
Or you know, number
Or like
10,
a Junior's cheesecake.
Yeah, there's lots of
you
places in New York. There's lots of places in New York. There's places in, you know, they're going to say, oh, you missed the beef from, what's the place in Montreal? The oh my God,
Poutine?
No, the beef place.
I don't know.
Tony,
the
what's the
pastrami
beef place? The famous
You're talking
beef
about
place.
Montreal pastrami or whatever.
No,
you're
yeah,
talking
but what's the
about.
place called?
I'm going to Google hot Montreal beef. Hold on.
I've been there a couple times. It's great, but it doesn't make the list.
Sure.
Yeah, no, the other places. Listen, you know, if you had asked me this list 20 years ago, I would have put La Pasadilla on the list for their steak burrito.
Oh yeah, cool. A little tongue.
No, for a steak burrito. But you know what? Couldn't make the list.
Yeah.
Not anymore.
Mm-hmm.
But La Pasadilla for years would have been number 1 on the list for me.
I'm a taco burrito 2 kind of girl, a TB2 kind of girl.
You know,
Only when I'm drunk, though.
I have a taco burrito 3 by my house. It's actually really good.
I have not been to the Tray.
You ever been to the Tray? It's on Lincoln
The
Avenue.
Tray, yes.
It's actually quite good.
I'll have to check it out.
Mm-hmm.
All right. So how was the rest of your week? And how's your mom? Is she doing okay?
Hanging in there.
Oh, good. Bat, how was your weekend?
My weekend was very nice. Thank you for asking. Although the weather didn't cooperate too much. Yesterday was a nice day.
It rained yesterday. That thunderstorms.
It rained later in the day. The beginning of the day was at least you got something. I mean, I think we almost hit 80. Yeah. I mean, we have to take our days. Our days are now in 1 hour intervals here in Chicago because they change so quickly.
Schwartz's. You've been there, right? Tony Schwartz's?
I have not.
Oh.
I've had the meat from there, but I've never been there.
Oh, it's fun.
Are you going to get off the highway for it?
Yeah, is it highway worthy, Sosnoff?
Schwartz's? Well, I don't know if you'd be driving in Montreal, but it's line worthy. Like it's worth waiting online.
Okay. Yeah. Good job out of you. I don't know. I didn't eat at any of these places that Sosnoff mentioned today, so I guess my weekend wasn't complete.
Well, how many of the places I mentioned have you been to?
Well, I don't have the list in front of me, so it's hard for me to tell because you said I couldn't have it for some reason.
Well, no, you went to Terry Black's.
I've been to Katz's. I've been to Rico Benny's. I've been to Pepe's. I've never been to Ken's. I've never been to any of those Fakakta LA ones because who wants to go to Smell A? I've been to. I haven't been to Terry Black's, but I've had Black's.
That doesn't count.
What else did you mention?
And Pecan Lodge.
I don't think he's been to
Pecan Lodge. So 6 of the 10. I mean, they're phenomenal. They're all.
I've only listed 7.
Oh, okay. All right. I'm sorry. Then I got most of them. I think.
Did you go to Pecan?
LA, didn't you?
Did you go to Pecan Lodge?
Yeah, with you monkey, and then I brought you pie. I brought you pie next door. I've been there twice.
Okay.
You know what? Seriously, some days I just would like to slap you right across that smug face of yours. Unbelievable. The back of my hand. You haven't been to Pecan Lodge? Yeah, I'm the only one that's ever paid at Pecan Lodge, okay? You've eaten the food. I've paid for it.
Fancy.
Yeah, I don't remember that.
All the girls are fighting. Hey, we got a great show for you today. A lot of really good content headed your way on this magnificent Monday here at Tasty Live. I got to find the schedule. There it is. Hey, at the top of the 8 o'clock hour, we're bringing Kai in for a little research corner. Kai provides his outlook for the week ahead. Always look forward to that. Then at 8:40, Skinny on Options, Abstract Application, Dr. Jim, Optimizing Winners as a premium seller. That's going to be at 8:40. Dr. Jim always bringing really good content. Then 9 a.m. Market Measures, timing the SPX IV inverse move. What does that mean?
The market measure?
Bueller? Yeah.
Well, it's just, the question is, can you time anything?
Okay. All right. Well, we will be looking at that with regards to SPX then.
Yeah.
Yeah. Yeah. See? And then we got talking with Tom and Tony around 9:20. They will be taking your calls. Wait, where's Scott Sheridan? Is he in Korea?
Yes.
Oh, yes. I love that for him. He is my favorite rich guy of all time. Like, hands down. He is S tier. You guys are F tier. Scott is the best. Oh, have you talked to him? I hope he made it okay.
He's there. I haven't talked to him.
Okay. All right. Well, do with that what you will. So you guys are stuck with Tom and Tony, but they will be taking your calls at 9:30, so that'll be good. But hey, in the meantime, in between time, let's get this show on the road. You guys want your daily dose?
Sure.
Yeah, hit me with my theme music. Let's go.
Our leading story. Breaking news.
Coming
across the wire. Leading story. Top story. Just in.
In today's headline.
This just in. Breaking news.
All right, everybody. Today's a magnificent Monday. It's June the 9th. This is a part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name is Vanetta. Are you ready for the news?
Ready for the news.
Any earnings for today?
No earnings for today. It's a slow earnings front movement right now. Later in the week, we got GME and Oracle, but we'll talk about that later, not now.
Okay, looking forward for the week ahead, S&P futures had a great week last week. S&P trading near a record high last week, around, I believe, 3% of its all-time highs. So great move in the major indices last week. This week, some inflation data on deck. You're going to get CPI and PPI. Also, trade representatives from China are meeting today to hopefully hammer out a deal between the two very powerful nations. You're going to get some consumer sentiment out of the University of Michigan, but mostly everyone's looking at CPI and PPI that's going to be coming out today. What are your plans for the week?
If those people who believe in news matters for direction anymore, but if with everything we have had going on over the last decade, if they still believe in that, they're in trouble.
I'm hoping that.
What are your thoughts or feelings for this week ahead?
I'm hoping that the bonds go higher. I mean, we covered it. A lot of our I covered a lot of it last night on just on First Call, kind of what I thought for the week ahead. I'm kind of neutral on stocks here. I don't have much of an opinion on bonds. I'm very bullish.
Okay.
They trade under 112, 112.03 right now, 111.26.
Yeah, I mean, this is a week where I thought it's gonna be a very tough week to be short Apple. I kind of like Apple here, but I don't.
I'll get into that in a second.
I don't like Meta, and I don't like Microsoft at these levels. So everything else, kind of weirdly, neutral on. But I want to be long Apple, short Meta and Microsoft for no reason other than I think it's going to be a trader's market. Not really, I think you're going to see. I think you're going to see a lot of two-way trade this week. There's no more real. The earnings plays this week are minimal. The economic news and all that kind of stuff, it's really minimal. I think it's just going to be a trader's market. I think it's going to be thin. I think it's going to be very much two-sided. And, it's weird. The last couple of years, as we've gotten close to, because we're getting close to June triple witching, what day is today? Today's the
9th, Sadnoff.
Right. So
you're looking at triple witching 11 days away on the 20th.
Right. So surprisingly, because this is a weird statistic, because I always thought triple witching in June was super bullish. And I just kind of remembered that from my years of trading on the floor. But the last couple of years, it's been super bearish. Just the expiration cycle itself.
Yeah, just not the expiration cycle, or just the day.
Just the day of Thursday to Friday.
Thank you. Two very different things.
Right, the Thursday to Friday. So, which is weird.
Which will be Wednesday to Friday.
Yeah, it's like Wednesday to Friday. It's been super bearish the last half a decade or so. So I think that I'm just
but I can't play for one day, 11 days.
No. I know. So I'm very mixed. I think volatility is still a little bit rich here. I think it's got room to come down, and I'm going to stay bearish on gold, bullish on bonds, and I'm pretty neutral on most of the other commodities here. I think the dollar's gotten a little bit oversold. I think it's a little bit oversold here, so I'm not as bearish on the dollar as I've been. And on crude oil, here's the crazy thing.
Do you want to just go through all of my stories just like right now, or do you want to just...
Well, you asked me.
It was nice
it was good talking to you guys. That's it for Daily Dose today. I'll see you guys tomorrow.
Well, I'll finish up by saying the craziest thing about crude oil here, for those that have crude oil positions on, is that it's been in a range, and I think it continues to stay in a range.
You can't wait 10 seconds.
But they've absolutely annihilated volatility in there. So it's been one of the best trades on the board for all the wrong reasons, because it's been
that's why BAT put a trade on Thursday, Sadnoff, benefiting quite nicely from that. Looking for a couple more ticks to take it off. Option trades today, every Tuesday and Thursday.
It's been a volatility annihilation in crude oil. So anyway, that's my whole story.
Give me 30 seconds, please. I want to.
You give me 30 seconds, I'll give you the world.
Or we could just end right here. It's like I'll see you later. Roll my dog video. I don't know. The Treasury is set to sell $22 billion of 30-year government bonds on Thursday as part of its regularly scheduled borrowings. The results, though, I'm on the next story here, John. The results, though, are going to receive special attention because they will offer an instant readout of the scope of market demand when the appetite for 30-year debt has soured. Bond auctions are coming more into focus, and we are paying more attention. They are moving the markets a little bit more, so I'm just giving you a heads up that there's one on Thursday. Do you want to talk more about your bond position and your feelings going into this week?
Yeah, I mean, I agree that the long bond is very unloved here relative to the shorter term paper. On Friday, my biggest new position was buying the 10-year note.
Okay.
It's about, maybe it's up a couple ticks this morning. The long bond's actually down a couple ticks. The 10-year note's up a little. I think you got to be long on both. So I'm long the 10-year note and the 30-year bond. Those are the most tradable instruments. I think they're just a buy and hold. I think it's a buy the dip and hold on to them.
Okay, Bat, what are bonds doing this morning?
They're trending a little bit lower. I mean, they're over 112. They traded 111.26. That would put them at the low end of the range. Now, listen, this low end of the range, they've had a nice range from around 111.5 to over 114. So take that what you will. The last week or so, it's been a good range bound, big moves. Every point is $1,000 in bonds.
Here's the difference in bonds, which I think is the important thing. If you've never traded bonds or notes before, and if you were thinking about it, is that I just like the pot odds here. It's not like Tony or I are like thinking there's some macro story here that we're thinking, oh, this is going to be the greatest trade in the world for some crazy macro reason. But I just think at these levels, they can move 2 or 3 points to the upside and maybe 1 or 1.5 points to the downside. So I just like what we consider to be pot odds. That's all it is.
Okay. I want to get your feelings on this, John. I'm skipping a story. A professor has been testing ChatGPT, DeepSeek, and Grok's stock picking skills, and he suggests stock brokers should worry. He's impressed with what the currently available AI chatbots can do when it comes to trading equities. You said yourself personally, Tom, that more people are asking you questions that have been generated with AI in regards to trading options. What are your thoughts on people asking ChatGPT about their trades?
Well, that's it. This is very, very misleading because there is no chance that ChatGPT, DeepSeek, or any other AI engine can pick stocks. What's happening here is this professor is getting very confused by a bull market and stock picking, and there's a big difference there. It is absolutely not possible for ChatGPT. I mean, it's like a ridiculous argument to make for ChatGPT.
It's the same thing as a monkey throwing a dart at the newspaper.
That's right.
I love those videos. Or the corgi that picks the basketball team.
Yes. Yes.
You cannot.
Well, the corgi's a little bit different. He's got skills.
You cannot train an AI engine to pick stocks. It's not something that's trainable. And so this is a very misleading headline. It's just an attention grabber.
Do you think that there's any use case where traders can benefit from AI?
Sure. There's 2 use cases for me. The first use case, which is the most important benefit, I believe, for traders, is you can access information almost instantaneously. So the learning process, whereas before, if you wanted to learn about some crazy strategy, go try to figure out what basis arb is on your own. Go try to figure out certain things about like little nuances about futures trading and strategies and all this kind of stuff. It is very hard to find the information. So what ChatGPT does, what AI does is it gets you instantaneous answers to some very complex questions, which could really
like in bite-sized bits.
Yes. The other thing that it can do for traders, if they're interested, is if you're writing your own code, if you're trying to automate something or you want to write your own code, just script out different things. Obviously, it can expedite the process and make it simpler. So I think there's an educational piece to it. There's the ability to access at much faster speeds information, and also the ability to help you everything from write code to help you to automate stuff if that's what you really want to do. I think those are the 2 things that AI can help with. But you
don't see utility in asking ChatGPT, hey, I have $10,000, I just graduated or whatever. What should I invest this $10,000 in?
No. What I do think you could do is you could say, hey, ChatGPT, go find me a list of 10 different people who have suggested how I should allocate $10,000 into the marketplace. That you can do. And maybe they'll use Tasty's allocation tools or somebody else's. But no, if you're asking ChatGPT what they suggest you to allocate, all they're going to give you is somebody else's allocation.
Okay.
And Tom, you're forgetting the most important thing. You could find Tom's top 10 list, which only of food, which only has 7 restaurants on it, which is great.
Sure.
I just thought this was an interesting question to lead to an interesting discussion. Hey, here's something else that is interesting. You might have heard of the Magnificent Seven, but there's a new crop of stocks, and that's the so-called bro billionaire stocks, and they are trouncing shares of small caps. Small caps were thought to, really flourish under the Trump administration because it was going to bolster America's beleaguered industrial core, and small businesses were going to prosper, but really hasn't worked out that way. From the bro category, it's basically looking at tech and cryptocurrency firms, and these elite group of stocks are up more than 45% since the election, while the Russell is down around 7%. Stocks that are include Palantir, Nvidia, Meta, Coinbase, Tesla, ARKK, and things like that. What are your thoughts on these bro billionaire tech stocks?
Well, they've been on a crazy tear. I think they've jumped the shark, and I think that now if you look today, even the Russell's way outperforming pre-market all the other indices, and I think you're starting to see a turn in that. And I think the Russell, this is kind of a jump the shark moment here with your bro billionaire headline. I think that
you're welcome.
I like the other side of this. I like the small cap Russell stocks here relative to, like, I'm a seller of the Microsofts and Palantirs and Nvidias here. I shouldn't say I'm a seller. I'm a seller of Microsoft and Meta. The rest of them I'm not long, but I'm not sure.
Okay. You preemptively went off on this, but let's bring it back and talk about it now. And that's oil. Oil seemingly holding price gains ahead of U.S.-China trade talks. Go ahead, say what you want to say about oil and what's currently happening in the crude market.
Nothing's happening in the crude market today.
Oh, now you want to clam up, Chatty Cathy. I couldn't shut you up 5 minutes ago. You're talking about the most impressive volatility crush that you've ever seen, and now you're like, oh, I don't want to talk about it.
What I was telling you, if I could get a word in here, what I was telling you was that it's been being short premium in there has been a surprisingly good trade. We don't have any market direction.
Okay.
IV rank of 30 something, if I remember correctly, 35 in there, yes, and it's been going sideways to higher, as you mentioned.
Britain wants to lift a ban on a key crypto product and catch up to the U.S. The UK's Financial Conduct Authority announced Friday that it plans to lift a ban on the sales of crypto exchange-traded notes, or ETNs, to consumers. What are your thoughts?
I think it's way overdue.
Okay. Good job.
I mean, literally way overdue. Britain's been so far behind. It's a little bit embarrassing, to be fair.
Okay. In other crypto news, the Winklevi twins have filed an IPO for their crypto firm Gemini. Now that they aren't under the specter of, legislation, they are free to have an IPO. The filing follows the SEC's decision to drop its investigation into Gemini and the company's $5 million settlement with the CFTC, all wrapped up in a nice little bow. The firm, founded by Cameron and Tyler Winklevoss, has confidentially filed an IPO in the U.S. What's crypto doing to start the week, Bat?
It's having a big move higher, up $3,500 back to 108 and change. If you remember on Friday, we were talking about flirting with 100,000, 102 or so. It went under 101.30 or 101.300 or so was around the lows. Now we're at 108 and change, just off of our highs of around 112. So mid-price, but it got there in a day.
Tom, what are you doing in digital assets or Coinbase to start the week?
Nothing other than what we were doing.
Point up $6 to 257.
I mean,
that's
nothing different than we had on last week. We haven't sold any of our crypto. We haven't sold I mean, nothing.
Okay, so you're saying nothing.
Yeah.
Sounds like he's doing nothing right now at these levels.
Hey, the other thing that I couldn't get you to shut up about earlier, now you're going to be crickets, is the other thing is that Apple's WWDC Worldwide Developer Conference kicks off today, and Apple is going to have a lot to answer for. It's been a rough first year for Apple Intelligence, while OpenAI, Meta, and Google have all made progress with their respective AI hardware strategies. CEO Tim Cook is going to be under a pretty big spotlight as he needs to explain some of Apple's business strategery. What are you doing in Apple this week?
Apple has not participated, right? So I don't know if this is a lagger for sure.
Yeah, we're a couple of we're small delta long, like tiny, but I want to get a little longer. I was hoping it opened.
Doesn't it feel like a crowded? Doesn't it feel like a crowded trade right now?
It does. It does. I'm not really. Well, I'm definitely not short it, but I was hoping to buy it. I was hoping it would be a little lower on the opening. It's actually up $1, so I'm probably not going to buy it on the opening today. I like Apple here relative to the other stocks. So like I'm not like some crazy Apple bull. I just think it's way cheaper versus itself than Microsoft or Meta or Netflix or any of those stocks.
Okay, I got you. Hey, this NVIDIA-backed AI stock soared 103% last week. That's Applied Digital, APLD. The stock, I don't know, is likely to remain on investors' radar. If you're into it, it formed a cup and handle pattern last week, but Applied Digital shares were hot. Also, CoreWeave, I don't know if you're doing anything in the two or how the options markets are, APLD and CRWV.
Yeah, just all I'm going to tell you about CoreWeave, because we got a bunch of emails from customers last week. Just be really careful in there and selling. You don't want to sell anything within the money calls, that deep in the money calls that look like you're getting some kind of edge, because you can get assigned, and the carry costs are crazy expensive. And it's a hard to borrow stock with like 300 and something percent. Wasn't it like 350%, Tony? I don't remember. Exactly.
The carry cost?
The carry cost in CoreWeave. It's like something crazy.
I don't think it was 300, but you are right. It warrants a look at. When you're looking at how much it is to cost to carry on a stock like that, you're looking at 144. It was 180 at one point. Now it's 144.
So at 144%, if you're short deep in the money calls, you are going to get a sign. And and so you're going to have to.
No, opposite way, Sosnoff. If you don't want short stock in there,
right? You don't want short stock. That's exactly what I said.
Right. Oh, did you? Okay, I'm so sorry. I wasn't.
Yeah.
Okay.
So you don't want to be short stock in there because the carry cost is too high. So if you're going to trade that, either trade puts or way out of the money calls.
Okay. Do you ever trade Applied Digital, the other one?
And here's the other thing about CoreWeave. Godspeed if you're trying to get filled on something in there. The markets, I looked last week, the markets were like $2 wide.
Sadnov, I'll give you an idea on how much it costs to carry. The calls trade at parity that are only $10 in the money, and the puts are trading for $10 themselves or more. So it costs you $10 over the next week or so to hold that stock. It's very expensive, so don't.
Too rich for my blood.
Just be really careful trading CoreWeave. I'm telling you, and the markets are super wide because of that. And it's so no matter what you see, what everybody's writing about it, it's not what it looks like. Trust me.
Hey, getting to other stocks that are moving around pre-market today, Tesla shares have recouped some of their losses that have been triggered by a spat between CEO Elon Musk and President Trump, even though a truce appeared uncertain. What are you doing in Tesla?
I don't really have...
it's moving around this morning.
Yeah, it's down. It was down about $10 this morning. It's down $5 now.
Okay.
But our position there,
290.
I'm just
Should I be ranked a 42?
I'm just short premium. That's it. I think we'll be fine. The premium came in a lot on Thursday and Friday of last week. In there, it was big winners both days.
Hey, Meta is in talks over a scale AI investment that could exceed $10 billion. Founded in 2016, Scale AI is a data labeling startup that's also been backed by tech giant NVIDIA and Amazon. Last valued at nearly $14 billion, it provides a platform for researchers to exchange AI-related information. Meta wants to go all in with a $10 billion investment. You are not bullish in Meta.
I'm not. I don't know anything about Scale AI, to tell you the truth. I never heard of it.
I literally just told you everything there was to know about it.
Okay, I'm just saying I've never heard of it. So.
Okay, well, what are you doing in Meta or not doing in Meta?
I'm short
if
Meta.
He's never heard about, has it really happened, Vanetta? Probably not. Probably not. Meta 697 and change, unchanged, but that brings it near its highs. And I think Meta is making a big $10 billion, or thinking about making a $10 billion investment in an AI startup.
That's what I've been talking about.
I know, but I have a penis, so I figured I would say it so Tom would hear it.
I
hate it here.
I bought the 670, 680 put spread on Friday. I started accumulating that put spread in there. It's a cheap short right now, but I'm gonna add to it today when the stock's higher.
This is pretty funny. One of the first Liberation Day losers is up to report earnings again this week. Infamously, just hours on April 2nd, after President Trump announced hefty new tariffs that shook the market, luxury furniture chain Restoration Hardware got caught in the crossfire. In fact, the CEO was on the earnings call, found out about the tariffs, and basically was like, oh shit, that's not going to be good. So this is like one of the first, because it literally was just hours after this all happened. And I'm bringing this up because the stock tumbled 40% a day later. The shares are still down 53% so far this year. But again, they are on deck because, again, they import all of this furniture from foreign lands into rich guys' houses like Tom's. But they are on deck to report earnings.
I will not buy anything else at Restoration Hardware.
You like their restaurant, though.
It's not theirs. It's in their space. It's not their restaurant.
Okay, semantics, Sally.
I mean, every piece of Restoration Hardware I have, which is all outdoor hardware, it's all falling apart in like zero. I hate this company. I absolutely hate them.
Okay, well, they're reporting earnings this week, and stock's down 53% for the year, so maybe a little scoopy.
It's untradeable unless you have a directional bias, and then I would do something with a vertical spread. Markets are $2 wide.
You know they're Chicago-based, I believe.
Oh, that I didn't know. Okay, whatever.
I think they're Chicago-based, or the CEO lives in Chicago. CEO lives in Chicago.
Okay, those are two different things.
Yeah. I agree. That's two different things.
Hey, I got to keep it moving. Boeing prepares to resume
plane. They're in California.
Yeah, I know, but they started in Chicago on Dearborn or State Street with their first purchase, and that was kind of where they launched the company.
Just smile and nod.
No, they're located in California.
You can say whatever you want. I've read the story.
Hey, Boeing, can we talk about Boeing, please, for the love of God? Look over here. Boeing plans to resume plane deliveries to China. Does anyone care? Boeing.
No, I don't care.
You don't have a Boeing position?
I don't.
Okay.
IV rank of 1 in Boeing.
Oh, that's brutal.
211 up $1.
That's brutal. Hey, AMC Theaters is announcing they're going to run even more commercials before its movies start. No one asked for this. Starting July 1st, they are going to add a platinum spot to its pre-movie commercials, incorporating additional advertising alongside the traditional bevy of film trailers that get rolled out before movies. Like, it already takes like an extra 45 minutes now when a movie starts. But AMC's like, you know, it'd be great if we added even more ads. I'm not sure what AMC Theaters are doing. I hate everything about this.
I mean, it's a $3 stock. You got to either love it or probably stay away from it, right? I mean, it is a $3 stock that used to be a $2.50 stock about a month ago. So,
hey, well,
nice run up relative.
Speaking of a movie that I might sit through an extra commercial for, shocking photos from set have been released from the new Madden movie, and Christian Bale is shocking with a next-level transformation into the iconic owner Al Davis. The Dark Knight actor was spotted in Atlanta for the upcoming sports film Madden with Nicolas Cage and John Mulaney. He looks like the Oakland Raiders owner Al Davis. For context, on the right is the same actor as in American Psycho. So that is called range, honey.
That's good. That's good.
That is good.
Al Davis looks like the Crypt Keeper.
Yeah.
Al Davis, he was, yeah.
Yeah.
Mm-hmm.
Well, anyway, good job, Christian Bale there. But yeah, it's Patrick
Christian
Bateman
Bale does a
in
lot of that
American
method
Psycho.
acting, doesn't he? Like, he gets into the character, becomes the character kind of thing, 24 hours a day, 7 days a week.
Yeah, he's very method. But Nicolas Cage is playing John Madden, so.
Nice.
Really?
Yeah. So, okay, interesting. Hey, speaking of sports, the NCAA's House settlement has been approved, and it's ushering in a new era where colleges can now directly pay athletes. A California judge on Friday night granted approval to the NCAA's landmark settlement of 3 antitrust cases, but it now sets up the ability for schools for the first time ever to directly compensate athletes in a system. It does feature an annual cap, and there will be a new enforcement entity that is expected to more heavily scrutinize booster-backed payments. What are your thoughts on this?
Well, I've long been supportive of college athletes getting paid. So I don't know all the details of this, but it sounds decent.
In other news, following up on that, EA Sports College Football 26 has an interesting compensation factor to it. Schools' royalties will be tied directly to how often teams are used in gameplay. So if you're a big Notre Dame fan, you better get on that console and play Notre Dame, because the more you pick your team, or it's Notre Dame or Michigan or my Hoosiers, then that's how the school gets paid. The new royalty structure was revealed. College Football 26 gets released worldwide July 10th.
That's cool. Interesting. More interesting, Savsnoff. Are you ready for this? Oklahoma in 5 and the Panthers in 5. Savsnoff, you heard it here first.
Is that from the corgi that makes the picks?
From me.
Oh, okay. Well, that's not breaking news. I thought it was from the corgi. And now, finally, after a very arduous and trying daily dose, here's a dog video. Here's what happens. This lady bought her dog a tent. Things did not go as expected. Watch this.
That's great.
Thank you, John. Because you think dogs are like den animals? You think they like to be nestled? You think they're like, oh, he'll chill out in there. It's like a little space. He'll be calm. No.
Feel safe, surrounded on all sides.
Yeah. No.
Mm-hmm. Sadlov does the same thing when he gets in a tent. Don't ask me how I know. Let's take a quick 90-second break and come back. We got more Tasty Live right after this with Confirm and Send.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live with Confirm and Send. But before we do, let's take a quick look at the market. E-mini S&Ps hanging steady, up $8.50, about 4 handles off of their highs. But they've had a pretty tight range last night, just about 30 handles. NASDAQ up 11, Russell up 17, and the Dow up 35. They're all up around the same, but I would say the Russell's a little bit stronger here on a percentage basis, up 17. Bonds are down 7. Oil is up 35 cents, 64.93 after trading over 65 for the first time since what? So I don't know if that looks like early April when it had that major fall down from around 70 into the high 50s. We're sitting at 64 and change, ever so slightly climbing. Gold down $9 and change. Silver doing the opposite, up almost 30 cents out of 29.1. That's almost a 1% move. Silver's been on a tear. Gold taking a little bit of a breather. That's all I've got, Sadnov. Kind of quiet, very much like Friday's action, which you missed.
Yeah, I watched the market all day Friday. I was trading, actually. I made a lot of trades. I just didn't. Anyway, let's do it. Let's take a look.
Well, Friday we opened at 59.30. We rallied all day long. You know, into everything. Stayed there pretty much most of the day.
Yeah, right. It wasn't. They're actually. If I remember Friday now, I think for like 4 hours we didn't move like 5 points, and then they bounced them a little on the close, whatever. So yeah,
that's right.
I tried to get short a couple deltas on the close. I don't know. Anyway, it's Monday, June 9th. Can't believe it's Monday, June 9th already. Unbelievable. So far, I've had one day where I feel like it's been warm.
I know. Here in Chicago, yeah, sure. I agree with
it's
you.
Unbelievable. Anyway, we're getting ready for our Whirlwind Tour, so we leave in another week. Can't wait. And for now, we'll be here all week. So
going to London, going to Milan.
Sit back, relax, enjoy the show. Let's do it. Confirm and send emails that came into us over the weekend. We got lots of them. What is the most efficient way to maintain upside potential while having downside protection?
The most efficient way to maintain upside potential while having downside protection. Man, this has got a lot of booby traps in it here. It's going to take me a minute to think about this more than just what I'm answering here. So I mean, most efficient buying power way would be with futures. You can get the most bang for your buck there. And to maintain some downside protection, long future, short call, maybe something like a back ratio spread here on the call side. I don't know, son. This is a tough one.
Yeah, there's no super perfect answer to this. I mean, the most efficient way to maintain upside potential while having downside protection, I think it's just to buy a call.
I mean, size comes to play, but I didn't want to go there.
I mean, I would say to buy an at the money or in the money call. I mean, if this is truly what you want, the most efficient way to have leverage and have upside potential while having downside protection, because the most you can lose is the price of the call, I would buy an at the money or in the money call or call spread. I mean, that's the easiest way to do it, I think. Buy a call or a call spread. That's the only way I can think of where you have pure downside protection. I mean, you could say you could buy a stock and buy a put, but you know, that's not how we trade. I would either buy a call at the money or in the money, or I would buy a call spread. Those are both have upside potential with downside protection.
Yeah, I mean, I think it's a tough question to answer.
Yeah, I agree. Let's go next slide. If you have to defend an iron condor, do you move the entire untested side or just the short strike? I understand moving the whole untested side keeps the buying power the same, but if I just move the short strike on the untested side, it seems like I don't have to move it as aggressively to collect the same amount of premium.
Oh, yeah, absolutely. You won't have to if you're just moving the naked option, but you're going to use more buying power. That's the key here. So if you're at your max limit of buying power when you place the iron condor, I don't think you can afford to move just the naked option. So for that reason, I would probably move the spread. If you have more buying power sitting on the sidelines and you don't mind the extra risk on that side, making it more like a skewed iron condor, I have no problem moving just the naked option.
I'm with Tony on this one. There is an occasion where we will just move the naked we would just move the option and not the spread, but for the most part, we move spreads. And the reason for that is because we generally don't like to add more money to the same trade. So I'm a much bigger fan of moving the entire spread. I know you won't collect as much money. I know you'll have to get closer, but I don't like to add new money to an existing. I don't like to use additional margin on an existing trade that's not a winner. So in order to protect,
you wouldn't be using any margin. You'd be using more buying power.
More buying power. That's what I meant. So my preference is to move both sides, but you can just move the untested side. If you have plenty of capital, you can you could just move the short strike if you want. My preference is to move the whole spread. Let's go next slide. When you say you're delta neutral and you try to keep your portfolio that way, does that mean you have bullish and bearish trades on at the same time? How do you keep yourself delta neutral?
You try to keep portfolio that way. Does that mean you have bullish and bearish trades? Yes, exactly right. Yes, that's exactly right. And how do you keep yourself delta neutral? By here. So if we go higher, and some of the trades that obviously all the trades that we have are dynamic, you're going to pick up a little bit of short delta somewhere. You're going to look to roll up the untested side on one of those existing positions first. To reduce your delta, then go, if you can't do that, then you go into the market and try to find long delta there, either from, something that's highly correlated like a SPY or the Qs, or something that's good, nicely correlated, a Meta, a Netflix, or something like that.
He's correct. This is exactly how we do it. We have some bullish trades, some bearish trades, same time. We also have a lot of delta neutral trades. It's all of the above. It's always all the above. Nothing ever changes for us in that regard. We always have essentially that combination of 3 different bullish trades, bearish trades, and delta neutral trades. Always. I mean, yeah, always. There's just never a time we don't have all 3 of those on. Let's go to the next slide. Do you ever defend a butterfly? Not a broken wing butterfly, but just a traditional 1 by 2 by 1, equidistant apart butterfly.
I don't place a lot of these because they don't move until the week of expiration. And typically, I'm out of these positions 21 days before expiration. But I have no problem with the strategy for those who are trying to, risk a little to make a lot with a very small probability of success. And if I was going to have that butterfly on, I would not defend it in any way whatsoever. I would just purchase it for the price that I'm paying. It's usually relatively small price per $1 strike, maybe 8 to 10 cents or less. So a $5 butterfly would cost around 50 cents if you're putting it on with 2, 3, 4 weeks to go to expiration. And I would consider it my lotto ticket.
There is, if you're talking about a regular, just like a butterfly that has a 5 or 10% chance of success. So like
that's what it says there, right?
Yeah. If you're paying like 1/10 the width of strikes, 20th the width of strikes, 1/7 the width of strikes, normal butterfly, we don't touch it. You're just going to let it go. So you made a bet, you took a shot, you made a bet, let's see what happens. If you're talking about massively wide butterfly, like you're covering $100 or something, you might want to do something occasionally, but very few people trade that way anymore, and I completely understand it. They're really expensive. They're not normal trades for retail customers. I would say the answer is we never defend a butterfly.
Mm-hmm. Totally agree.
Let's go to the next slide. So how do you determine max profit on a diagonal trade, and how do you know when to close a diagonal?
Yeah, great questions. I mean, what I'll typically do, because you can't, here's the reason why you can't come to a definitive answer. You don't know what the implied volatility is going to be in the front or the back month to decide how profitable or this trade can be. You know how much it could lose because whatever you paid for it is your max loss on it, but you don't know what your max profit is. So what I do is I just simulate the same trade closer, meaning if I'm trading a spread like this in July and August, I might look at like what the June-July spread looks like at this moment and try to figure out then approximately how much I could make from that spread on a best case scenario. You could play around with it in the Analyze tab, but you're just playing around. You don't know.
Yeah, this is that's it. That's the answer. You're just playing around. You don't know. You really don't know what your max. That's like saying, hey, what's my max profit in a calendar? Anything that's vertical in nature, you can know exactly what your max profit is. Anything that's horizontal in nature, you just will never know what your max profit can be. You know what your max loss is, but you never know what your max profit is. So now, how do you know when to close? Well, in your head, you have some number. And what I'm saying is you're not going to do a diagonal unless you have kind of an idea of what you're shooting for. Let's just say you want to make $1 in there. So when would you close? Well, at any level of profit, like Tony and I will close at 21 DTE. Like that's the easiest thing to do. Keep yourself to a set number of days and close them. But if you want to close at set profit number, you can do that as well. But you have to make that up. There's no way you can define it.
That's correct.
Yeah, that's correct. Yeah, that's all. Let's go to the next slide. After the drop in volatility, this is the last one. After the drop in volatility last month, earnings became my main trades. But the earnings season's over. Now what do I do? Yeah,
great question, right? I mean, You stay selective and you stay small, and you don't ramp it up, and you don't get frustrated is what you do, because markets move and market change, and volatility changes in an instant. And nothing's worse than getting caught with a lot of positions on in marginal stocks with marginal implied volatility, and you can't benefit from a large move. So you keep it tight. You start looking at a lot more calendar spreads and diagonal spreads that we just talked about a moment ago. You look a little bit more to vertical spreads like iron condors that we did a moment ago. Maybe you go into commodities like oil that we talked about a moment ago, but you don't get frustrated.
Yeah. This is one of the
it's one of life's quandaries.
Yeah, it's one of those we go through these all the time, actually. Every single year we go through different periods where there's there's these lull periods where there's no good earnings trades, the volatility sucks, you're kind of searching for trades. And then you go through these periods where everything explodes and goes the other direction, and you're overwhelmed by all the high volatility, volume, and crazy movements. So nothing ever seems like it's easy and normal, ever. Nothing, ever in this business. Nothing's ever normal. You have to figure it out. You got to work harder.
Work harder. Nobody cares. Work harder.
There's a trade-off. The trade-off is when things are slow like this, you have to work harder to find trades, but you take significantly less risk. That's
Very
the
good,
difference.
sir.
You're taking less risk. You make less money, you take less risk.
Let's take a quick 90-second break and come back. We got more Tasty Live sound off. Immediately following these messages with an option jive and Kai next.
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
From the smart mouths at Tasty Live.
If you missed the live show, here's our cherry on top weekly recap.
What was the last time you were up till midnight?
I was up past midnight.
When? So
No, my son doesn't get done with working at the DQ until almost 11-ish, so I make it to midnight. Weeknights.
Do you?
Yeah.
Okay, how about you?
That's why you're such a bitch in the morning.
Gentlemen, I want to open up playing a little game called Guess the Price of an Electric Vehicle in China. I want to see how good you guys can
Let's
can
do
stick.
it.
I have to
really wanna
full
talk
disclosure, I have to abstain.
You know it.
Because I read your tweet. So I'm.
Oh, I did not read your tweet because I removed you from social media. So I have you are nowhere to be found.
He has concierge level on the, for
American, yes, yes.
Flying American. He just 2 minutes ago sent me a text message, and here's what he says. Concierge level is gangster. Sushi for breakfast and champagne. The good stuff. French omelets and caviar. Enjoy your prison food.
Wow.
Is that a haiku? That was really nice. That was really good.
Oh, you should have been here the last couple of days. I bought a pie from Costco.
Which one?
Cherry.
Really?
I like cherry pie.
I love cherry pie. Blueberry is my go-to. You wouldn't know that because you do bring me cherry, but I appreciate either one.
Cherry pie's good. It's kind of childish.
You prefer apple?
You're childish. I played golf yesterday.
Yeah, I know. Can you please give me $20? Yo, Steve, I came in to collect. I said, how'd it go? He said, collectively, we were all horrible. He said, I think we averaged 150 each.
I shot like in the mid-80s.
Get the full scoop by checking out the archives at tastylive.com.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Tasty Live's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging, and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
It's options. Jive. That's right, Sosnoff. It is option jive, and we've got this man Kai in the house. Kai, what's up, brother?
Not much. How are you doing on Monday morning?
Doing wonderful. Thank you for asking. How are you yourself?
Not bad. Not bad. Hang there. Watching the market.
Oh, beautiful. Well, tell us about that market. What do we got?
All right. So let's take a look at the summary of last week.
Sure.
Yeah. Can we go to this first slide? So last week, definitely the big news, SPX broke $6,000 for the first time since February. And we're already more than 75% recovered from the bottom. And the silver hit 30-year highs. I think the news is all over the major website last week. And so definitely good news for all the gold, silver pairs traders. Right, gold is going down and the silver is going up.
Yeah, just the opposite of what's been going on forever, right? Like, for the last few years.
Definitely for a month, right?
Yeah. Let's be very fair about that, though. That was a very hard hold. Nobody put that trade on at 105 for the first time.
Oh, I mean, you can't say that, but anybody.
I can't say nobody, but all I'm saying is that was a trade.
It was a very hard trade to try.
It was a very hard
trade
trade.
There.
Yep.
Yeah.
Yeah, but if you're a contrarian trader, we saw in the past 20 to 30 years, there are only one time that gold-silver ratio exceed 100, like for extended period of time. So, we
were in it, and it was a big trade, and
I've seen it go to 120 before, Kai. So it's
there's one time, right?
Yeah. So it's not like it was no layup. That's for sure.
Right.
Okay. Yeah, the third one is pretty much the first season earnings already out. As 78% of the SP 500 companies beat the quarter one earnings expectation. So that's why we saw the average daily move, the post-earnings daily move is positive, like a 0.5% positive. We can see the number later.
Okay.
Yeah, so last week, let's take a look at the indices. We definitely up again last week, 1.5% to 3% for different indices. But most of the days we actually have trading in a very tight range. We only have like one day have pretty quick reversal. Is that Thursday, right? When the news coming out?
I don't remember when there was reversals, but there was a pretty strong week across the board, mostly in the Russell.
Yep.
Yeah, I probably shouldn't say strong reversal compared to the month before, like only 20 to 25 points reversal. That's half a point of SPX. All right, so next slide, we take a look at the last month. So May, we're actually up a lot for all the indices, especially NASDAQ rally almost 10% compared to April. We're down, even though the numbers in April looks small, but the volatility inside is huge. I just wanted to show the overall April versus May performance.
Yeah, what a difference a month makes, right? I guess you don't. Do you sell in May and go away? I guess no more, right?
Yeah, that's a good point.
Not this time.
Good point.
Mm-hmm.
So next one is the expect move. The SPX was up 1.5%. The expect move for last week was 1.7%. Can we go to the next slide? So one of the few times that's within the expected move in the past 2 months. This is probably the third week within the expected move. So we have a lot of volatility going on. So this week, the expected move is 1.4%. So speaking of SPX, only 84 points. The reason is definitely the VIX drop to 16 handle.
Yeah. VIX is low, /VX is low, going lower. I mean, Friday was really the nail in the coffin, I think, to volatility, Thomas. I mean, we held in there for most of the day, and then it just kind of got soft going into the weekend. A little surprising for me, to be honest with you.
Yeah,
I thought it would hold up a little bit.
Yeah, so just for information, 16.7 is already below the medium long-term VIX. The medium is 17 point something.
Yeah.
So
what now, right? For volatility,
average.
Yeah.
Okay. So next one is the IVR change. We have some across most major assets. The implied volatility keeps going down. Natural gas, Bitcoin, I think it's not that important, relevant to the main market. So pretty much again, implied volatility dropped across all the different assets.
Yeah.
All right. So some big movers in the market. The first one is I want to show is SPX. It's actually not big in terms of the weekly movement, but just it's kind of significant for a lot of technical traders. 6,000 points. Can we go to the next slide? Yeah, 6,000, and we already rallied 20% from the bottom in April in 59 days. So drop 20% and bounce 20%. The absolute points is different. If we starting from the bottom, we already rallied 20% to 6,000 points, and that happened in 59 days. So we had a study in April to rally more than this is already recovered 78% of the decline. So rally more than 75% of the total pullback. The medium duration is 75 days. It only took 59 days to get there. So this is actually very quick rally.
I would say anybody who's traded through this tried to fade it at all. It happened way too fast. I mean, you just saw that almost 7% move in the market. This is why you have to be in the market all the time.
It's tough. If you want to keep it, you want to chase the market and fade the market, this volatility can kill you at any day.
That's correct. Put your schmutz.
Yep. All right, next one is silver. So silver, we can see from this chart, just try to show you, the highest point that equivalent to right now is 2012. Just crazy level right now.
I don't have too much to add. I think crazy is the right word.
Yeah, no, I don't have too much to add to. We've been, we're definitely not short silver, so we're good.
No.
Okay. The next one is the top 5 and bottom 5 performers. Top 5 Dollar General, First Solar, MU, Airbnb, Best Buy. I guess the top 2 are whatever you hated the most, right? First Solar and Dollar General. Did you trade Dollar General?
No.
Okay.
The markets were untradeable.
Oh, that's right. I remember it. That's right.
Yeah.
I tried to put it on Wednesday, but yeah.
The only stock I trade there is MU.
What? Which one?
The only stock I trade there is MU.
Oh, MU. Okay. And bottom 5 is Lulu, Tesla, Wing, Costco, and PLTR. And I believe the top 2 of this 5 is also what you hate the most, Lulu and Tesla.
Well, Tesla, we actually had a pretty good weekend. Lulu, we lost money on that earnings trade because it opened, I want to say, down about $50 or $60, whatever it was. It was about 2 times the expected move.
Yeah, Lulu down 20% at the end of that day.
Yeah.
So one of the largest movers.
Most earnings plays are good for 5 to 10% at best. You move 20%, you're going to lose money.
Yeah, 20%. We still have our Lulu position on though. I need a miracle.
Yeah, 2x is very tough. You have to push really far.
I hate
He's
Lulu.
pushing. Push.
I hate Lululemon.
Next one, Next slide. So this is what happened to last week, the large movers for earnings. Dollar General up 15%. It's difficult trade. Mango DBA is up 13%, and Lululemon down 20%. Yeah. So the next two slides, I want to summarize this earnings season. So far, 3,500 companies roughly announced the earnings, and again, winners and losers. This is probably the fourth or fifth weeks we saw is 51% winners and 49% losers. Very close to 50-50. And average return this season is more positive due to a lot of different reasons, tariffs. So the average return is positive 0.5%. This number is actually pretty high compared to the previous 3 years average. So last slide. Last slide, try to summarize again, 70% of the S&P 500 company beat earnings expecting this quarter, but only very, very small portion of companies provided guidance because a lot of CEOs is announced they don't know what's going to happen down the road, so they want to wait and see how the tariff things play out. And more companies gave very weak forecast for the upcoming period. So that actually can push the stock price up or down, more down.
Well, it hasn't. That has not been the case yet. That's for sure.
Yeah.
Well, good job out of you, Kai. You know what? You got us right to our opening here for the market in about 9 minutes. So let's take a quick 90-second break and come back. You still got even the S&P's up 6, Nasdaq up 10, Russell up 19. That's your leader in the clubhouse. Bonds down 7, under 112. Sadloff, I know you nibbled on some notes. You haven't done anything in the bonds or the bond puts. I'm talking about ZB yet. We'll take a quick 90-second break and come back. We got more Tasty Live with the opening bell. Be back in 90 seconds.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
I love to take risks. I love the instant pain, the instant gain of trading. I would describe my trading style as a calculated risk taker. I like to play towards volatility, which is something that you can quantify high and low points of. Well, my favorite strategy currently is the diagonal spread. I like the idea of having defined risk, but while also having a little bit of positive decay that works in your favor if you're not directionally correct. But the best part about it is the positive gamma that you get from it. I really like that the position can grow and get bigger as you're more correct on that position. So I think that the variable of trading on a day-to-day, hour-to-hour, minute-to-minute basis is really powerful and really fun to have access to. What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the Tasty Live core strategies.
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
From the smart mouths at Tasty Live.
I want to play a game. It's a relationship game. So I'm going to ask you each a question to your partner.
Who loves the hardest?
Yes. So are you ready?
TikTok.
Who's more stubborn? more public? And who do you think takes longer to get ready in the morning?
Oh. He's gonna do his hair.
Who's a better driver?
I mean, for sure.
Yeah.
Like, I live in Italy.
Yeah.
Like, we drive like...
I drove a truck in New York City.
I drove a tractor on a farm. I can fly an airplane.
Who loves the Fed most? Who is more spoiled?
It's not even close. Like, you got buildings full of people. What do you want, Mr. Sosnoff? I have nothing.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live, about 4.5 minutes before the market opens here. Let's take a look at what's going on, Sadnov. Kind of seems quiet, up 8.75, very sneaky. Last night they opened down around $6 or $8, kind of hung around there for most of the night. They're up 9, trading near their highs, about 4 handles off of their highs. But you can see here, we've been going nowhere fast to the upside. So I haven't really had any downticks in the market. You look here, you got over the last 7 or 8 days, you got one small red move, and that was the buy the dip, Sadnov, right there. Did you do that on June 5th? Good work out of you. NASDAQ up 20 and change. Russell up 20. Russell on a percentage basis, almost up 1%, with everything else basically unchanged. I don't usually like when the Russell's the leader in the clubhouse, Sadnov, and nothing else is going on. What do you think about that? Dow up 34. Go ahead.
Yeah, I just don't have a lot to do this morning on the opening here. I'm just taking a quick look at my positions to see, all right, what do we got? What do we need?
Well, volatility is going to tell you down 17 right now at 1848, Sadnov. And you can see here volatility just getting creamed the last couple of days, that it's hard pressed to find more premium selling strategies going on here. Not a lot with high implied volatility. Yeah. You might look at bonds to do something because you got a decent implied volatility in there. IV rank of 29, although it too is at the lower end of its range. You mentioned oil a moment ago, a little bit of volatility in there. IV rank of 36. These are marginal by far.
Yeah,
gold.
They're all marginal.
Well, whenever you get commodities leading in the IV rank field, you know you're at a inflection point in the market. Meaning the market is sitting here at 6,000. Is that an inflection point? That's all I could say.
Yeah, I agree with you. It's marginal. I haven't done anything. The only thing I've done this morning is I bought some 10-year notes, some CNs at 29.5. I'm bidding for more. I was bidding 29. I didn't get filled. I moved up to 29.5 for more. They're currently 30.5. So I'm about 2 ticks away from getting filled, buying a bunch of 10-year notes. I'm already short some bond premium, like you mentioned a minute ago, some gold premium. I mean, of all the stocks, the only, other than like UNH or Tesla, where there's still a little bit of juice in the options, there's not much.
What has implied volatility kind of creeping up in a good way is your corn, wheat, and soybean trade, Sadnov.
Yeah, but I know so hard.
I get it. I understand. But those commodity traders out there, soybeans been on a tear to the upside with volatility going higher. You would expect that. Wheat's down the most today with volatility seeming to catch up a little bit too. So you got wheat maybe in play, and corn volatility continues higher. Corn looks like from the contrarian role to be the best play to the upside.
Yeah, Godspeed, man.
I know I'm the world's worst commodity trader.
I have positions on all three: corn, wheat, and soybeans. And let's just say I'm limping along. I've had them on all year, no deltas at all. I think we're up money in 2 of the 3, and about unchanged in 1. But it's been a slog. It's been an absolute slog.
I hear you.
I'm trying.
Well, Tesla's bringing the Nasdaq down. Looks like Tesla's going to be open here down around $10. We're just seconds away from the opening. That's going to be your big one to the downside.
Yeah, we have a bunch of Tesla positions on. I actually rolled up puts on Friday, thinking that Tesla might have made a short-term low. Now I'm going to have to roll down some calls today.
Oh, baby Jesus!
No, premium came in big time in there on Friday.
It did when the bat pointed it out to you. Yes, you're 100% correct.
I expect it to pop up a little bit today. I'm going to roll some of the 370 calls down, pick up a little delta. I'll probably roll them down to the 350s.
Tesla opens down 10 and a half, maybe even 11, down trading at 285 and change. Let's see what else is moving this market. To the downside, you got Costco down 5, Carvana down around 5, Hood down 4.5. Sadnov, what happened there? Didn't get into the S&P 500?
I mean, I assume that was $4 of premium they put in to the S&P.
Yep. ABGO down 4.
Which one?
CRM down 1 or 2. Go ahead. What?
What'd you say? Which stock?
Carvana down 4, CRM down $1.50. Then you start getting Palantir down 60 cents. They're much smaller moves to the downside. On the upside side, a little bit of a different story here too. You've got MSTR up around 6 and change, Coin up 6, AMD up 4. Restoration Hardware, Sadnov, based out of California, up $3. Qualcomm up about $3 and change. UNH up $3.
I still have my UNH position on. It's the gift that keeps on giving, I guess, a little bit.
Earnings July 29th. You got plenty of time.
Yeah, I tried to get filled in Tesla. It was a little aggressive.
NVIDIA up $2.
Yeah, don't like NVIDIA here. Don't like Meta here. Meta's up $1. Do not like it. Don't like Microsoft. It's up 20 cents.
Tesla down 12.
Apple, that's surprisingly, I thought it was going to be stronger. I'm surprised.
Beautiful.
I'm going to sell a few puts in Apple just because. This is never a good reason to do something just because. Well, I might have just missed it. Just because. Looks like I did. Oh, there you go. I sold some puts in Apple just for a little delta.
Just for a little delta and maybe a little bit bored in this market. Be careful, Sadnov. Apple up 50 cents.
Oh, I'm definitely a little bored.
I can tell. You had a day off. You were with mommy. You showed her your limp. She rubbed some dirt on it for you.
Definitely a little bored. Roblox down $2 today.
There goes the market, Sadnov, down $2. Is it time to buy the dip?
I don't think so.
I don't think so either, but you got volatility in 15 cents. We're going to meander around here, Sadnov, so far as what it looks like. We'll see if anything breaks. I think you got more velocity to the downside, even though you got volatility so low. When you least expect it.
I thought range bound makes the most sense to me for quite some time here.
On Friday, I said the market is going to collapse about 8 handles. Sadnov, it'll feel like the end of the world. We'll get under 6,000, and then we'd rally. What do you think about that story?
I would think that both sides of that story are going to be correct. I see no reason. I'm just looking at all the positions and how everything's moving this morning, and I see no reason to think anything different. I'm just taking a look at Lulu to see if any of that premium's come in. It has not. By the way, DocuSign was a major league pig as well on earnings last week.
Beautiful. Nice. And you like a good DocuSign.
Love a good DocuSign.
DocuSign unchanged after taking that major move down from, flirting with the 95 and down to 75 and change. Ivy rank of 22. What do you think about that?
It's not interesting to me.
Yeah.
It's really not. Yeah, I'm taking a look and they really just crushed premium in Robinhood just in case.
That you knew that was going to happen if it didn't get mentioned.
They myrtleized it.
Yeah,
literally myrtleized it. All right, Mr. Batista. I mean, I don't really have. This is a slow opening for the good kids, that's for sure.
Oh, Sadna, speaking about slow openings, well, nothing says Monday like this, man. Dr. Jim. That's right. The skinny on options, abstract applications. You think it got slow on Monday. Just you wait. We'll be back in 90 seconds with Dr. Jim.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
So you're an active trader, looking to increase your return, decrease your risk, or quite possibly both. Sure, you've heard of the Greeks. You know, your deltas, your thetas, your vegas, your charms, your vamas, etc. And you're wondering, hey, how do I use these guys to improve my risk-return relationship? Well, join me for a 10-episode crash course, and I'll show you exactly how to do it with all the gimmies and gotchas, one Greek at a time. We'll see you there.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Tomas, we are back, my friend, and you know what that means. Time for a little bit more Tasty Live. Sad enough, well, nothing says Monday like this, man. That's right. Bring on Monday. We got Dr. Jim. How are you, my friend?
Man, I'm well. As I was telling you guys before the show, I'm on Cloud 9. Absolutely on Cloud 9. I was walking around the city yesterday, right? 3 different locations.
What
3
city?
different people all commented about how luscious and beautiful my hair was. St. Petersburg, Florida.
So you're walking around St. Petersburg, and a random person would ask you about your luscious hair.
They didn't really ask me about it. They really just wanted to admire it.
What was
it was
his
more
name?
of an admiration. It was more of an admiration type of thing. And so, I was at, let me think. I was at church, I was at the gym, and I was at Publix. And so at all 3 different locations, had 3 individuals, 2 older gentlemen and 1 young woman said, man, you've got some beautiful hair. Now I understand the older men, they had, their great hair days were behind them. So I understand that. But I'll tell you what, man, I was feeling pretty good. That 22-year-old woman was like, you've got some beautiful hair. And I was like, well, thank you very much.
Did she want to touch it?
No, not necessarily. But she was a little bit, she was kind of taken aback. Like, I was doing my cart at Publix, right? I'm getting all the groceries for the family, whatever. And I turn into the aisle, and she's standing right there, and she saw me. She did like a triple take. Like I kind of,
she probably.
And I was going up into like to get some cereal or something. So they were kind of like there was a little breeze that came through, and so I understand that it took her back.
Well, she probably thought you were a Manny. Since you were doing the grocery shopping, and she was probably looking for a Manny herself.
She probably needed somebody to reach the top shelf to get something.
And she picked Jim. There was nobody else in the store.
Exactly.
I'm 5'10", so it makes sense. If you need somebody to grab something from a high place, I'm your guy.
5'10" from the top of your lid with lifters on. 5'10". Lord have mercy.
So there has to be another part to this story.
No, that's pretty much it. She was kind of, it's probably similar, like Tom, it's very similar to like when somebody sees you in public. Like they're kind of awestruck. They're kind of like, oh my goodness, it's Tom Sosnoff. She was kind of like that, where she's like, wow, I don't think I've seen hair like that on a man before. And so she wasn't quite sure what to say. Like, I got it.
I noticed why Sosnoff's quiet, because he's jealous of the luscious locks.
No, he's super jealous. But I'll tell you what I need.
I, on the other hand, will go and get a haircut tomorrow, just so nobody mistakes.
God knows you need one. Yes.
So I need a working definition. So I need a working definition on myrtleized. So can somebody help me out? Like myrtleized. I heard this word.
We're gonna have you watch the Three Stooges when they use the myrtleized, so you can see it.
Is that that's a Three Stooges thing?
That is correct. Sadla, very topical with a 1947 TikTok here with the myrtleize them.
I'll find the original. There's a couple different myrtleize.
Okay. All right. Yeah, because I heard you use that before, and I was like, yeah, I don't know that I'm necessarily familiar with this term. So.
Yeah, not many people are. Just those over 78, like Tom Sadloff and me, who spent enough time with him.
And I heard you were bored this morning, Tom. I don't know how you could possibly be bored. We just took 2 out of 3 from New York in New York. Mm-hmm. My Boston Red Sox are turning the corner, Tom. They're turning the page. It's all going to happen, and it all starts right now. Mm-hmm. I know you saw it this weekend.
There are 3 people that have used the word myrtleize in the past. Bugs Bunny, Yosemite Sam, and the Three Stooges.
Okay. Yeah. So
it's slang for to murder or pulverize, but Bugs Bunny and Yosemite Sam used it a lot, and then of course the Three Stooges. So timely it is.
So I'm curious. So which came first, Bugs Bunny or the Three Stooges? Bugs Bunny predates the Three Stooges, right?
I don't know.
Tony, can you look that up? Because I bet you it's close. I bet you it's like within. I'm serious. I bet you it's within 5-6 years of each other. Like I'm trying to think about because Stooges was in the 40s, right?
I mean, yeah. I mean,
Bugs Bunny maybe it was earlier than that. I think.
I'm gonna myrtleize that varmint.
Calvin and Hobbes, popularized by the Three Stooges. So
okay,
Three Stooges get the win.
Okay, all right, fair enough. Okay, fair enough. Okay, well, are you guys ready to collectively myrtleize this segment?
I'm ready.
Sure.
Man, let's go. All right, so this morning, Tom, we're going to talk about your favorite subject, which is optimization. Tom, are you ready to optimize some of your winners as a premium seller? I know you don't get many, so the ones that do come your way, let's optimize those. Are you ready?
I'm all in.
He's got to be very selective. Very selective.
I mean, he's got – man, you want to talk about beggars can't be choosers. I mean, you've got to really, really ring that register when they finally come your way. All right, John, so hit us here on the introductory.
My Taiwanese sources say the Three Stooges debuted in 1930, Bugs Bunny in 1940.
The Stooges were first. Okay, well then, that would make sense that they would get the naming rights to that word if they did come first.
Thank you.
1930s. Wow, that's crazy.
I have popularized it in the 2020s.
Yes. Mm-hmm. Oh, speaking of things coming back and just coming back to my hair for another 6-7 minutes. So I told my wife yesterday, because I told her about what happened to me. And as it was happening throughout the day, she kind of couldn't believe it. And I was like, I can't believe this is happening to me. And I told her, I said, hey, listen, I said, whenever I get my hair cut, which I will at some point, because I mean, I've had short hair most of my life. I said, we're going to go with a really extreme mullet for like a month or like two, like in the kind of the transition period, just because A, mullets are back. Speaking of things coming back, and B, it's like, man, this is a once in a lifetime opportunity, Tom. You know, it's like only you and I can really have these discussions. Most regular people, like your Tony Batistas, your Pete Malmats, they don't quite understand.
You should go. I am 100% supportive of you going full mullet. And we will increase your airtime on Taste. If you go full mullet, you'll get prime time.
That's not going to happen.
You will get prime time on Tasty full mullet.
Oh, you mean 2 o'clock Eastern isn't already prime time? You sold me on the prime time ticket long ago.
You're going to get drive time in the morning. You're going to get the drive time hour.
I think I'm competing with like vacuum infomercials and stuff. Yeah, okay. I get the drive time slot in the morning?
Drive time slot in the morning. You go full mullet. Oh, for sure.
I don't know. Autumn said, she's like, I don't think you can do it. She's like, you're barely hanging on to what you've got. She's like, so I don't know that I would necessarily go full mullet, but we'll see. I'll keep you guys updated. All right, so let's go into some finance. All right, so a hidden gem, gentlemen. We're going to optimize Tom's winners this morning. One of the core principles at the Tasty Network is to manage our winners quickly and give duration to our losers. Doing this allows us to efficiently use our capital and keep our focus on high probability trades. But even more specifically, our primary emphasis is on out-of-the-money premium, which produces an important result with our winning trades. Gentlemen, I would say that when you think about the core principles of what we do, I mean, you were kind of lamenting this morning, Tom. Like there's no implied volatility rank to sell. Like the volatility, there's no juice in the markets. It's tough to do certain things. I would say high IVR, high probability, and managing winners quickly / giving losers duration. Those are kind of the 3 core principles that drive what we do. Those are kind of the 3 amigos, if you will. Would you guys agree with that as kind of a 3-legged foundation?
Sure.
Lamenting. I'm still getting into that word. That's a good one.
I mean, I've got to match the mineralization. I've got to match. I mean, he's pretty sharp this morning. So I gotta.
He sure is. Yeah, sure.
I can't just rest on my laurels of all my compliments yesterday. Like I got to push the envelope, man.
You do. You're doing a good job.
Oh, by the way, 3 amigos. Let me think. Was that it was Charlie Sheen, and it was Chevy Chase, right? And who was the other one?
3 amigos?
Was it Charlie Sheen?
No, I thought you were talking about...
It's from the 90s, right? The movie in the 90s.
Steve Martin Short, and Chevy Chase.
Oh, Martin Short? Oh, wow.
Which actually gives you a run for your money with the hair and the height.
He's never had hair like this, and I tower over Martin Short. I mean, I'm almost 5'11". I'm like 5'10 and a half. And so yeah. Yeah. Have you seen Three Amigos, Tom? That's a great movie, if I remember correctly.
I don't. It doesn't ring a bell.
Okay. All right.
Sounds like the type of movie both of you would love.
Yeah. Well, next time I'm in Chicago, that's what we're gonna do. We're gonna crash at the house and just
We'll rent Three Amigos and watch it. Sure, for sure.
Yeah, well, Three Amigos. We'll talk about hair products. It'll be a good time. All right. So the next slide. All right, John. So out of the money premium. So when we sell out of the money premium, like what are we focusing on? Well, we're essentially able to unlock 3 benefits. Now, this is not brand new. Like if you've been trading for a while, this is going to be very much a review. If you're brand new to the network, I know we have so many new people that find us every single day. So welcome to the show and welcome to the network. This is really important for you to understand because these are kind of the 3 reasons why we do sell premium, and specifically out of the money premium. Selling an out-of-the-money option produces positive theta, so that allows time passing to work in our favor. Pretty basic stuff, but very important. Selling an out-of-the-money option always gives a pop of greater than 50%. And this is really important because it allows you to essentially, have an opportunity to manage more winners than losers, which we feel like is a great baseline to start from. And then number 3, selling an out-of-the-money option gives us a buffer to be wrong on the direction of the stock and still make money. Which, Tom, you're wrong a lot. So this can be really, really helpful for you.
They got
like we always say, one of the things we love about options is you can be wrong and make money. You can be right and lose money.
Yeah, that's right. Yes, you have to include that second part. That's correct.
Yes, you must include.
And so
you must include the disclaimer.
You've got to, for every gimme, there's a gotcha, right? You can't be talking all gimmies with no gotchas. That's 100% right. Okay, well, so selling out of premium makes a lot of sense. Well, here's something that's very interesting. All right, so John, hit us on the next slide. And here is how we're going to begin to optimize our winning trades. So if we look at decay over time as kind of ranked or kind of depicted by moneyness, we looked at this slide before, but never necessarily in this context. You have in the money, at the money, and out of the money. A lot of traders, a lot of people in the derivatives market, they say, hey, when you sell options, you want to take it all the way down to the end. You want to take it all the way down to expiration simply because that's where you get paid more. That's where you're able to bring in most of the premium. And the reality is, and forget about gamma risk for a minute, because that's another reason why you would manage early, 21 days to go, whatever. But there's an altogether different reason why it's a lot more optimal to not stay in an out of the money short premium trade too close to expiration. And it's simply these curves here. If you look at like the green curve, you're at the money option. Yes, that is going to decay very rapidly going into expiration. There's a lot of bang for the buck. You get paid nicely if you hold on to the trade, etc., and so on and so forth. But if you go to the blue curve where the option is out of the money, which again, remember, this is going to be your winning trades. Like the at the money trades could be winning trades, but that's going to be more of kind of up in the air, with a lot of the at the money trades. The out of the money trades are going to be the ones that are going to be, those are your winning trades. The decay, actually, you could see it by the slope of the curve inside of 30 days to go. It really starts to slow down. So it doesn't make sense. Again, irrespective of the gamma, which we know is a big reason not to do this anyway, but leave that aside. Getting out of the trade around 21 days to go is a great marker because your decay begins to slow down. You're not getting paid for being right. The winner is not winning like it used to. And so you got to get out of the trade, Tom. You got to get out. You can't hold it to expiration.
What do you have to say about that?
Okay. I mean, I agree with him.
Okay, good. There we go.
I mean, this is the argument we've been making for, years now.
Agreed. 100%. I mean, this is something that's so critical to what we do, though. Like, if you start thinking about, so Tom, if you think about optimization as like a puzzle, right? If you think about like all the different pieces you're trying to put in place to give you the best possible chance to make money, this is a very important one as an out of the money premium seller. This is a very important one. If I'm selling premium and it's out of the money and I'm trying to efficiently use my capital to the best of my ability, this is something that we need to remember. This is something we need to be reminded of, right? And if you're brand new, you don't even know this. Like, this is brand new. And the way that you trade, Tom, a lot of times I kind of wonder if you're brand new. I'm like, man, should I come alongside him and show him a couple things? And so this is for your benefit more than most.
I'm not. What do you have to say about that?
I appreciate that, Jim. Thank you.
There you go. I know that you do. All right, Josh, so hit us on the next slide. But let's be really fair here. So a quick little note about defined risk, because I know a lot of traders out there are using vertical spreads. They're using iron condors, things like that. A couple of quick little nuggets on that. The theta decay, so a defined risk strategy, like a short vertical spread relative to a short put, or like an iron condor, short iron condor relative to like a short strangle. It's going to generally follow the same path as the undefined risk counterpart, but it is going to look and feel a lot different by the very nature of the strategy being defined risk. So understand two things. Number one, the theta decay on a defined risk strategy, it's going to be similar to the undefined risk strategy, but it's never going to be as clean. It's not going to look like the graphs that we just looked at, because now you have long options that are in the mix that are really muddying up the waters. Like, now there's lots of friction in the strategy. Things are slowing down. It's going to be a very, very different set of dynamics. But then also, number two, managing at 21 days to go is not as critical with a defined risk strategy like it is with an undefined risk strategy, simply because you have the risk defined. Like, you don't have to worry about the gamma risk blowing up. You don't have to worry about the strategy blowing up. And so if you have to hold it to all the way to expiration, that's okay. And sometimes you don't have a choice but to do that, because if you try to roll it, it's a debit to roll it, and we don't want to do that anyway. So I wanted to be fair about defined risk. And sometimes you just got to hold it, Tom. Like, sometimes you just got to, stew in the bathtub of filth.
Yeah.
You know what I'm saying?
The reason we agree with you, and based on all the research we've done, there is not a huge advantage to rolling, closing, adjusting the defined risk trade at 21 DTE. But the reason that Tony and I do it is to maintain consistency among all our other positions, so that we don't have this, I might have 100 different positions on right now, and I don't want to be like, when I roll, I want to move everything, because it's just about consistency in the mechanics, so that I don't have to worry, I had left a straggler behind. I mean, I will leave max loss trades on, hoping for a miracle, things like that. But for the most part, if it's a marginal defined risk trade at 21 DT, meaning small gain or small loss, I will close, roll, or adjust, rather than leave it on.
Yeah, 100%. So, if you're at 21 days to go and you have a vertical spread on and you can get a credit, roll it. If you're at 21 days to go and it's a wash, roll it. But if you're at 21 days to go and it's a debit, you're not rolling that.
It depends the size of the debit. It's a small debit, I'm rolling it just so I don't leave stuff out there. But again, Jim, it's a matter of preference.
See, this is what I'm saying, man. This is what I'm saying.
There's no edge.
Okay, so I have a lot of time this week. You and me need to do some one-on-one Zooms. Let me walk you through some of the basics, like understanding extrinsic value differences between the front month and the back month. Give me 3 2-hour sessions, and we'll get you squared away.
You got it.
Or you can even come to Boston for the Options Crash Course Live on July 13th. Man, that's what you should do.
I'm sending my minion. You have a minion going.
Oh, nice. Is your minion's name Brittany by chance?
Yes.
It's called a spy is what it is.
I'm sending my minion.
It's funny. You think Brittany is your minion. Me and Brittany are BFFs.
You could be all the BFFs.
Like Brittany.
You could all be all the BFFs you want, but I'll be knowing everything that's going on. I'm getting FaceTimed.
That's good. Oh, you're getting FaceTimed? Okay, that's good, because you know what I'm gonna do? So I've been thinking about the July 13th and how I'm gonna do it, what I'm gonna open with. So I think I'm gonna take another crack at the pregnancy story to open up the crash course. What are your thoughts?
Please no.
I think you need a new joke.
That is my new joke. I mean, I could do Einstein and it's B-, it's whatever. But that is my new joke. I've only done it once before. I gotta try it again, Tom.
To steal a line from Nikki Glazier, we're a big fan of your joke.
yeah, that's exactly right. Oh man, that's a pretty good line. That's a pretty good line. And so I mean, rolling everything is fine, but also keep in mind for people out there, a lot of people don't have 100 positions on, right? So I mean, if you've got 6 or 8 or 10, it's not going to be as challenging to kind of let a straggler fall through the cracks.
I understand.
And so your whole portfolio won't necessarily get myrtleized if you leave one behind. All right, let's get him a few takeaways. Man, let's go. All right, let's do it. As out-of-the-money premium sellers, we're naturally equipped with high probability trades that consistently produce winners. But taking a closer look at the natural decay curves of in-the-money, at-the-money, and out-of-the-money curves shows they all behave differently. And staying in an out-of-the-money trade too far inside of 21 days to go isn't as beneficial as being in prior to 21 days to go.
Sosnoff, what say you?
I mean, this is right. You're right in our wheelhouse. These are our mechanics.
I mean, I'll tell you what, man. So first of all, I love coming on Monday mornings because I love seeing you guys. I love being here and seeing you guys. But I just love when you use the pronouns we and our, and the way you use them, they always have a connotation that I am on the outside of that circle. Right? I love it. It makes me feel so loved and welcomed. And so now, to make me feel a little bit better, I'm going to go back to Publix in a little bit, and I'm pretty sure it's an 80 Delta that there's going to be somebody in there that says, man, is that natural? Like, how do you do that?
I could see you getting arrested for just being a creeper at Publix. But, I mean, it is hard Tony was kind of quiet today. It's hard for him to focus when he's watching your hair the way he is.
I mean, it makes sense. So I'm not gonna share the specifics of this story. I'm just gonna let everybody wonder. But did you know that I've been arrested twice? I've been arrested twice in my life, and I have spent the night in Canadian jail. Have I ever shared that with you before?
Yeah.
Once in the U.S., I know the U.S. one. You were trying to get your flip flop out of the cement that you stepped in,
and
they thought you were vandalizing. They were vandalizing the sidewalk, but they just didn't realize that you.
Quick.
Yeah, right.
That stuff dries quick, man. You'd be shocked.
Hold it. What was the time you were arrested in Canada? You told the story once, but it was like years ago.
No, I've never told that story.
I don't think so. I never heard it.
That one's staying in the vault. I'm just gonna throw a little teaser out there. I've been at Tasty now for almost 10 years. Maybe sometime when we get to 20, I'll tell the story.
Okay. Obviously, they threw you back. They were like, "This is not worth it."
Send him back over the border. We don't want him here.
You had to be doing something you shouldn't have been doing in Windsor. That's all my guess is.
Oh, I was 100% in Windsor. Oh, 100%. No, you got that part right.
Okay.
I mean, if you're a young man in Detroit, Michigan.
Okay.
I mean,
here's my guess. I honestly have no idea, but since I guessed Windsor right. Because every kid from Detroit gets in trouble in Windsor.
That's correct.
So it was either something in a bar, either you were gambling and you weren't old enough. That's possible. You got thrown out of a casino because you were gambling. Or something happened in Windsor, a nightclub or something. It had to be one of those two.
Okay. All right. Fair enough. You might be onto something.
Well, let's take a quick 90-second break. We can come back. We got E-mini S&P's down $1.50. So now we'll be back. Volatility down 20 cents. So about /VX. We'll be back in 90 seconds. We've got a market measure next. We'll be back in 90 seconds. It's Tasty Live. Thank you, Dr. Jim. You said Monday very well today.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Global markets never sleep. Explore them with Forex. now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
Your crypto needs a wallet, and crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Stephen and Lan, thank you so much for holding.
My pleasure, guys. And let me go on record as saying I think you've got Tasty Trade is the best brokerage, and you guys have the best content, and I'm not here just schmoozing. Y'all are the best on the planet, period, for what you do. Go on record as saying that. Tom,
Thanks.
You were the great disruptor when it came to forming Thinkorswim and then Tasty Trade. You're an innovator.
I appreciate you calling in. Good stuff as always. Thanks, man.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here. And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast. Option Trades Today. You listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bet.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with Tasty Live to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's market measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live. That's right, with a market measure. Before we do, let's take a quick look at the market. Sadnov, this sums it all up for you. Even the S&P is unchanged, Sadnov, up 50 cents. NASDAQ up 19. Russell up 11. The Dow down 125. Tesla's your big mover after being down 14 or 15. It's only down $2.50. IV rank contracting in volatility, even in Tesla, even more. Volatility down 30 cents, Sadnov.
I think Tesla's the biggest vol winner today. They've definitely killed vol in there. I mean, with all my positions, that's the one that's come in the most. I took off the 250, 350 strangle, and it came in pretty good today, among other positions.
I would imagine it did, right? Yeah.
Yeah. Yeah. I mean, S&Ps are unchanged. I don't know. The good news is bonds are back to unchanged. And the best trade we made all day was buying notes. I missed the second half of that note trade, but the first half was awfully good. Tried to get greedy on the second half. I don't know. I might take profits in here. I got to do something today.
I mean, you got to do something just to make you believe you were trading today.
I know. I mean, 110.03 maybe. Be a nice little scalp. Yeah, what the hell?
Why not?
Why not? Do something right. I'm Tom Sosnoff. He's Tony Batista. This is Tasty Live. Thank you for spending the morning with us. I like the new layout of the ES on the screen, John. Looks good.
The graphics, yes. While you were gone on Friday, I started taking over a little bit here, Sosnoff, and
way to spread your wings. I like
get things done, Sosnoff. Some people are a figurehead. Other people get things done. I get things done. The team obviously did all of the heavy lifting and the work. I just said implement it, get it done. I can't wait for Sosnoff anymore. I want to see it on the screen. Do it, ladies and gentlemen, and thank you for your support.
It's amazing what a
good leader can do.
It's amazing what a good leader can do.
Sosnoff, I don't know if you heard that ding earlier. Well, that was me closing my double diagonal, Sosnoff, in oil. That's right, Sosnoff. Breaking news. That's about, 6 for 6, basically 2-day trades. I just did this on Thursday, Sosnoff. That's correct. Oil volatility coming in. I'm just taking my $100 and running like a thief in the night. You know how it is, Sosnoff. Bada bing, bada bop, bada boom. Some people roll puts up and calls down and do all this other stuff and get them in trouble. I just set it and forget it and take some profits. Oil. Hey, if you'd like to take some profits, well, maybe you can tell us about them when you call in today at around 9:30 when we're done with this market measure, sponsored by the CBOE, by the way, also known as the CBO today. Sosnoff, we'll be taking phone calls, 855-238-2789 or 855-BE-TASTY, right after Sosnoff's done talking.
Yeah. We're looking forward to hearing from you. We love the call-in segment as long as you make sure you tell us how nice Jim's hair looked on air and how good Tony's shirt looks today, that kind of stuff.
Thank you.
But the good news is that Bat and I will be our series of road shows has started, and we finished the first one at Atlanta, and now we have like about 10 left, and they're going to go all summer long. So you're going to hear us talking about just the upcoming events. But we'll be in London a week from Friday. And then Milan 2 weeks from today. So
beautiful.
I got to get my traveling stuff ready. I'm not a good. I'm a good traveler. I just got to got to get my act together.
Sosnoff, you are a good traveler. It's just that your body's not built for traveling. That's the problem.
My body is built. I'm built for traveling now. I'm a traveler. I just got filled in my notes, so that's a good trade for today.
Sweet. Sosnoff, you're right. I'm getting some feedback here from YouTube that really is a nice shirt from Bat today. Well, thank you, ladies and gentlemen.
Tell your wife that's not her feedback does not count. Actually, she wouldn't even write that in. Somebody else, one of your whack packers. We're going to be at Earth, EARTH, with a capital H. Don't really get that logo, but I don't care. Never been there. It's in Hackney. The Bat and I are flying out on Tuesday night. We'll be there Wednesday. We're actually going to do this show Wednesday afternoon from London. It'll be Wednesday morning here in Chicago. We can't wait. Filming we have a studio in London. And then on Thursday of next week, it's Juneteenth. That's Thursday the 19th, so the markets are closed, which is the first time that I can ever remember the day before Triple Witching, the market being closed. So it's going to be...
But we know it's happened multiple times before.
Yes, but it's going to be the first... It's going to be the last time to trade the SPX opening on Friday morning will be Thursday afternoon. Crazy. Mm-hmm. I'm sorry. I mean, Wednesday afternoon. Sorry.
Wednesday afternoon, going into the Friday opening print.
But Bat and I will be doing the show with Ange and Rich on Friday morning at 1:30 in the morning. So if you're anywhere else in the world, we'll be joining those guys, having a little fun. And then Doors open at 5 p.m. Show starts at 6 o'clock on Friday night in Earth in London, which will be noon time, noon Chicago time on Triple Witching. So hopefully there'll be some stuff to do noon. Our preference would be always to be like, we'd rather trade the opening, but we'll do whatever we got to do. Noon's fine on Triple Witching. And then the same thing happens the following Monday night in Milan. And the London show will be all filled up, and it will be completely sold out by next week. Milan, we'll have plenty of room because we've never been to Milan before, and our Italian's not that good. But Dylan Radigan will be there, and Rich McDonald will be there. And also, if you would prefer it in Italian, we will have an interpreter that works with us, Andrea. He will be there. He's great, super nice guy, very clear the concept, runs an option group over in Milan, and he will translate some of the complex strategies into Italian. So we're super looking forward to that. I also think we have Julia's book translated into Italian. I'm not 100% sure. Let me confirm with Julia. I know we have the digital version in Italian. I don't know if we have the paper version. Is that? No, it doesn't say it there. Right now, it's only in English and German. But I believe we are printing it in Italian, but we have at least the digital version in Italian.
Beautiful.
Yeah. No, it's cool. Let me see if there's anything else that jumps off the screen. No, that's it. And then Bat and I then will take a couple days off after that since we're over there. I'm going to the beach. Bat's going to the weird thing is we're doing the opposite things of what you would expect. I'm going to the beach and Bat's going to the city. So
this is correct.
And taking a couple days off, and then we'll be back in Chicago the following week. Anyway, so it's all good. Have a little fun. Then, oh my God, I totally forgot about that. This week, Washington, D.C., Union Stage, the next generation, Tasty Live, Nick, Mike, and Katie. They've been together now. Nick, Mike, and Katie have been together now over 10 years. So it's not like we just threw them together and this is the first time they're ever dealing with each other. They've been together over 10 years. They're practically, it's a weird marriage between the three of them.
I don't know how they feel about that, Sadnov, but yeah.
Well, they can literally finish each other's sentences for the most part. Okay.
True that.
So they're definitely been hanging around each other a long time. And so Mike, Nick, and Katie will be in Washington, D.C. This event is, Tony, is it sold out? I think it is, but I think it's all full, but I'll check with Brittany today just to confirm. But it's on June 12th. I mean, still, even if it's full, it's wait list. It's a smaller venue. It's about 2 hours long. They will take questions. And also Ryan Grace is going to join them to do a piece on crypto. It's the only event Ryan's going to do with them this year. So there's going to be actually 4 speakers. And if there's time at the end, they'll take questions. It's a slightly smaller venue, but it should be awesome. And we're looking forward to to supporting Mike, Nick, and Katie on the road, and also, as you heard earlier, Dr. Jim. In July, he'll be in Boston on his own. So we're breaking it up to lots of different shows this year. Tony and I will be hitting 10 different cities. Mike, Nick, and Katie hitting, I think, 4 or 5 cities. And they've already done Chicago. Dr. Jim's also already done Chicago. He's got more. Mike, Nick, and Katie are doing Washington, Seattle, Dallas, and San Diego. And then Dr. Jim, he's doing Boston, Detroit, Tampa, and they've both already done Chicago. So
I love it.
Fun stuff this year. And if you haven't signed up, sign up at the same spot for all of these. tastylive.com/events. tastylive.com/events. The next city Tony and I will be in the U.S. is going to be Denver on July 25th. So, about a month after we get back, July 25th, we'll be in Denver. Can't wait to see all you guys there in Denver. You can sign up now for Denver.
Beautiful.
All right. And we'll be at the Summit Theater in Denver. All right. It's 9/19. We have no Scott Sheridan this week. He is on vacation. His daughter graduated from college. He was very happy. Took the family on vacation this week. So no Scott until sometime the end of next week, I think. Right? Next week, is it? I think.
Something like that. I don't know.
Yes. But I am here to report that he did go. Remember, we sent him to what's the place called? John, what's the place called? Egg Tuck. We sent him to
how'd he do?
We sent him to Egg Tuck, which is kind of like a fancy egg sandwich place. He said it was very good, not at the level of Egg Slut.
Okie dokie.
And by the way, Egg Slut did not miss my list by too much. It is an LA honorable mention because it's so freaking good. I just I can't put eggs on my list. If you missed it this morning, I gave a list of my top 7 can't miss places before you die that you need to get off the highway to go visit if you're ever driving anywhere near there. And one of them was in LA, but it was Howlin' Ray's, which is a fried chicken place, not Egg Slut, which is also great. LA is easily one of the best food cities in America. Easily. I put it, it's LA, Chicago, and New York. Those are my 3 favorite food cities. And LA's.
This is the unofficial official, right?
It's my unofficial official.
Got it.
Yes, but I only picked 1 place in most states, but Texas, I picked 2 places.
And yet that's not your number 1, even though it had 2 places. Odd, but I am not going to question you.
For barbecue, it is.
I'm not going to question you.
Yeah, I mean...
And you left out your mother's cooking. I hope she's not listening. You have to have your mother in there as an honorable mention, but, the animals don't do that. Yeah.
Not really.
All right.
Not really.
All right, whatever.
My mom was not a bad cook, but no, she does not make the list. And she is my mom was a no spice person. So like literally, if there's like 1 speck of pepper, she won't eat it. So like I love.
So you just tried to rebel your whole entire life, didn't you?
My food has to be doused in hot sauce or pepper.
Yeah, well, as you get older, you lose your taste buds. I don't blame you.
Yes. Okay. So let's do this. A little bit of the market measure, sponsored by SIBO. Let's do it. S&Ps, by the way, I think this is kind of close to the highs of the day, up 7. NASDAQ
619, 6019 is the high. They're 14 right now. 5 more ticks. But yes, since we've been on the show, this is probably the high.
Yeah, and looking around for just certain stocks, movement, whatever. Well, I guess there's no crazy surprises here so far today.
Nope.
Timing the SPX implied volatility inverse move, meaning when the SPX goes higher, implied volatility goes lower. That's the inverse move. Let's go. Let's take a look at the slides. Usually, when the market goes down, implied volatility goes up, and when the market goes up, implied volatility goes down. The inverse correlation, though, is not equally strong over all periods of time. When the inverse correlation between equity price and IV, when is it the strongest and when is it the weakest? That is the question we are going to solve today, Mr. Batista. When is the inverse correlation between equity price and implied volatility the strongest and the weakest? As an example here, if you're looking at the futures, S&Ps are up today, even though they're only up 7 points, and the VIX index is down. That is exactly what we mean here. Yep. Let's take a look and see where the boys are going with this one. So we looked at 10 years worth of data. We observed the correlations between the SPX and the VIX, depending on the size of the move in the SPX. We computed the correlations between the SPX and the VIX. When the SPX move was now less than 0.25%, just to put it these, because I don't like percentages. Vecchio quoted things last night in percentages. I had to bite my tongue not to say something as he quoted the market in percentages. I was gonna reach through the phone. You got to quote it in points, but But SPX less than 25%. Remember, it's a $6,000 index. So 25% is 15 handles, all right, in the S&Ps. 25 to 50% is 15 to 30 handles. 50 to 100, 50 to 1% is, or 0.5 to 1% is between 30 and 60 handles. 1 to 3% is between 60 and 180 handles. And over 3% is over 180 handles, which doesn't happen very often at all. Okay?
Right.
But lots to look at here. Let's take a look at the first slide. So the strongest negative correlation between implied volatility and equity prices occurs when the market makes large moves up or down, like we've had recently. However, when the market has small up or down moves, there really isn't any clear correlation with implied volatility. That is very fair, because what happens is a lot of the times you'll see the market down small and the VIX will be down small, or the market will be up small and the VIX will be up small. So it's not as easy when there's small moves. When there's big moves, the correlation's pretty strong.
So what you're really saying here is when markets are kind of wrapped around unchanged to slightly higher, slightly lower, volatility can do anything it wants, right? I mean, it's going to be subject to more individual stocks than the indexes themselves.
Yeah, for sure. So the SPX rallies show much weaker inverse correlation than sell-offs. I don't think this would surprise anybody either. While the VIX drops during gains, the move is gradual. Even large rallies of plus 3% only modestly impact the VIX. Positive days are more common. That's called positive drift. But the market greed builds slowly, unlike fear, which spikes fast during drops. So when the market drops big, volatility spikes fast. When the market rallies big, volatility gradually comes in.
Got it.
Especially after a large spike, it doesn't happen immediately because the market needs to believe that things are turning around. It doesn't believe it, necessarily right up front. Let's take a look at the next slide. So the SPX sell-offs trigger VIX spikes, with stronger drops showing tighter inverse correlation. Small declines show weak correlation, 0.13. That's basically no correlation at all. While crashes, anything down 3% or more, drives the VIX over drives the VIX over 7 points higher with a strong correlation of 0.7. So nearly half the trading days are negative, but they're mostly mild. Fear rises fast as losses deepen, reflecting the market's sharp emotional reaction to sell-offs. I don't think we're telling anybody anything that they didn't already know, is that the market reacts to sell-offs very different than it reacts to rallies, which is kind of the reason we always say, that when the market goes up, there's always stuff for sale. But when the market goes down, there's not always stuff to buy, at least at the price you'd like. So the down moves have this additional risk, which is why there's downside skew in the way we price options as opposed to upside. And you can see it all here. Yep. These visuals are really well done.
Yep.
Let's go to the next slide. We have shown before that when stock markets sell off, we see an increase in correlation, positive or negative, with nearly all assets. Volatility also works this way, meaning implied volatility tends to rise sharply with little exception when the markets sell off. This makes the case for holding negative delta as a hedge against IV expansion. That's kind of why we always carry just a little bit of short delta all the time, because we're just protecting ourselves against some kind of IV expansion. It doesn't always help either.
Hey, it's been a drag at market highs like we are right now. It's been a drag. So
over the last month,
you're not touting yourself here. You're not making yourself look better by saying it. So, but it is
the last month. It's been a drag.
Yeah.
Let's go to the next slide. So here are the takeaways. And these are pretty straightforward. I don't think there's anything here that would surprise anybody. It's just we put numbers behind everything. In mellow markets, or markets that are in a lull state, implied volatility actually does not exhibit strong negative correlation with equity prices. The stronger negative correlation between the SPX and the VIX happens when the SPX moves greater than 1%, and that's mostly even more so on the downside. Holding short delta may provide a hedge when the markets start to sell off, since that is when implied volatility and price exhibit their strongest negative correlation. The problem is you can't ever time that. And you spend a lot of time carrying a lot of positions waiting for that to work. So it's not easy.
Sure. Yeah. Not easy at all. Good takeaways.
And you understand too, by the time it does work, you need to make back so much money that it might not be worthwhile.
This is true. Even the S&P down 6 or so. Even the S&P's up 6 or so. NASDAQ up 63. Russell up 16. And the Dow, the Bucker down 110. But all that means nothing right now when we've got this phone call, Sosnoff, 855-238-2789 or 855-BE-TASTY. That phone number will be below momentarily. 855-238-2789 or 855-BE-TASTY. Give us a buzz. Phone lines open right now like Miss Chloe Sosnoff has answers. We'll be back in 90 seconds. We need your phone calls. Give us a buzz. We're so lonely.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at Tasty Live.
If you missed the live show, here's our cherry on top.
Did I see a birthing room?
Birthing room?
Oh, yeah, stop. Please behind stop. JJ, is there a birthing room?
That's not a birthing room, you genius. Okay. Oh my God. Yeah, we have a whole birthing room. It's called, oh my God, I think it's called a lactation room. Okay.
No, we have a birthing room. Hey, Tasty, we're delivering babies.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
All right, yeah, I'll talk to you. There she is. Good, you found the place. Good, you're not stupid. I dated 3 stupid girls in my life. I loved every one of them. So maybe you're the next one. Having a good day? I'm having an awful day. But then it got really good again. Oh, good. So I'm feeling all right. Hey, where'd you go to college?
I went to
University of Penn State Community College. You didn't know they had one of those, did you? Yep, the Fighting Rams.
Oh.
I'm one of the Rams now. Do you have any sexual fantasies?
Excuse me?
I do. My parents are watching. They're sitting on a rainbow. I'm a half man, half giraffe, and I'm dressed like Brett Favre. What does that mean?
I don't know.
Yeah, talking about it gets me pretty hot, though. Uh-oh, there it is. His pants just got tighter. I'm a vampire. Can you believe that? Does that make me more mysterious and attractive?
What?
Uh-oh, watch yourself. We don't want to get hit by a car. My brother did that once. He can't talk now.
Oh my God, I'm not serious.
Yeah, pretty serious. Are we getting serious? I think so. How many kids do I want? 5? 11? First meal. Here we go.
That was rude.
This is on you. So much time is flying by.
Yeah.
You're very funny.
Oh, thank you.
Does anybody ever tell you that?
Yeah.
Well, you're not that funny, so don't worry about it.
That's interesting.
Not a big fan of Sam's anymore. But now you know everything about me. I feel like I'm opening up so much. God, I'm scared. This thing's moving so fast.
Yeah.
Oh, wow. I haven't cried like this in a long time. Are these tears? Uh-oh, here we are. Front door. Big first kiss moment.
Oh.
This is just moving a little too quick for me. You're a great kid.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
The beauty of Thinkorswim was that we were different. From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building.
Tasty Live's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging, and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Damn. Wow.
Long live the trader nerd.
Man, you're a turd.
Trade junkie.
Hey, it's fun, see? Tom and Tony in the morning.
Tomas, we are back, my friend. And you know what that means? Time for a little bit more Tasty Live. That's right. Well, with your phone calls, 855-238-2789-55. Be tasty. That's that number right below me, right there. That's right. It's right there, right in the middle of the screen. Give us a buzz. We'd love to hear from you. I have 3 phone calls already sounding off from Louisiana, Texas, and California. But before we do, let's take a quick look at the market. Even the S&Ps were just up near their highs. They're still there, up 5 handles to 60.19, but sounding a very tight range today on the even the S&Ps, the NASDAQ, and the Russell. The Russell's actually come down a little bit to the rest of the market, still higher by 12 handles, and the Dow is the only one lower by about 50 more points, down 160 and change. Volatility down 35
What's
cents.
down so much in the Dow today?
I can get that for you, Sadnov, by going to my high option volume list and then changing that, Sadnov, to here we go, to the Dow Jones Industrial, and then
clicking on it to see which ones in the Dow are down, Sadnop, and that would be Travelers Insurance down 9, Visa down 6, McDonald's down 6. Sadnop, did you not eat there on the road? And CRM down 3.
Weird. Don't have any positions on any of those. Okay. Makes sense.
All right, let's get right to our phone calls. Good for you. Good for me. We're going to go to Andrew. Andrew in Louisiana. What's up, my man?
Hey, good morning, guys.
Good morning, sir. Thank you for calling in.
I got a platform. Yeah, of course. I got a platform feature request that I think you might appreciate. So I'm in the platform all day. I trade a bunch of different underlyings. And for each underlying, I trade several expirations. Okay. I feel like I spend most of my day expanding option chains.
Okay.
It would be awesome if the platform could remember the expansion state of each option chain for each underlying. Then I don't have to, when I switch from, MES to M&Q, I don't have to click to expand those option chains for the expirations where I have positions. What do you think?
Hold on, man. Maybe we're talking about two different things now here. Hold on one second. So I have all selected up here. That'll give me all of the option change. Is that what all of the strikes? Is that what you're talking about?
No. Click to actually expand that option chain. Click on the expiration, and that'll show you all the strikes. Click again to hide all the strikes.
Right.
I'm just talking about the actual expansion of the option chain for each expiration automatically being open or in the state that I previously left it. Does that make sense?
You mean so if I'm looking at July, have July open all the time?
Exactly.
In each stock I go to, like if I go to IBM here, it would have July already open.
Yeah, I feel like I spend half my day just clicking to expand, because I'm rolling and adjusting and just looking at my position holistically. That'd be a huge time saver.
That could be an add-on click, Sosnoff, where you could click it if you want it to be expanded, kind of thing.
So it's actually relatively easy to do. I've never thought about doing that before, Andrew, because I'm trying to think. So for me, what that would do is it would potentially confuse me because I would always want to make sure I'm looking at the right month in context. But I get what you want. It would have to be something that you could. It would have to be a setting that you could choose.
Something you click on in your settings.
Because I wouldn't want that to be a default by any stretch, but it could be a setting.
Yeah, I mean, I get what you're saying about being confused as to which expiration you're looking at. But I mean, you always have the expiration listed, at the top.
Yeah, no, I understand.
It's like a header for each one.
Yeah, I'm gonna.
I don't hate the idea.
I'm gonna write a note to Tim. I'm just making a note to myself right now, but he runs the process for, queuing everything up for features, and here I'm just gonna do it as a feature request, and I got it an expansion. I'll fill in the blanks later, but this way I won't forget. I'll send this to him today. I don't hate it. I'm not going to prioritize it, but I don't hate it. But I think you're the only person that's ever requested that.
Right.
Well,
but I get it.
If one person's requesting it, there could be others. Sure.
Yeah, there could be others that want it. I'll send it over to Tim. I think it's relatively easy. Let's see what we can do.
All right. I figured with Scott out for 2 weeks, you'd pick this up yourself. Just assign yourself to the JIRA ticket, knock it out, get back in the code.
I mean, to be fair, when Scott's out, I take the whole JIRA list, and I mean, he is the C blocker in the whole process, and so I have to. Yeah, when he's out of town, I get so much done here.
Sadnov, you get things done, and you're gonna like this too, my friend. Tim just texted me and said he's on it, Sadnov. So he's heard you. He's listening. He will get it done, me lord.
Okay, well that's good because I haven't finished writing the email to him yet. That's how efficient we are.
He said it should be able to make it a settings or a preference.
Yeah, that's what Andrew wants.
Yeah.
Now, Andrew, just to show you,
I'm trying to do what Andrew wants. That's
if
what
Scott
I'm
was here, it'd take 2.5 years. But Tim and I, we can get this thing done right away. Yeah. Okay. Thanks, man.
Well, look.
And Andrew, you have some love from our workers here. Go ahead. Yes.
Wonderful. Yeah, I appreciate the fast turnaround. That's incredible. So another real quick feature request on the mobile app. It'd be nice if you could have parity with the desktop app as far as strike selection, showing the number of strikes for
totally
a
agree.
given expiration.
Totally agree. And that is already something that Julia's helping us to redesign the mobile app. And that's already something I've talked to her about because it drives me crazy as well. So we're all over that.
Awesome.
I think we actually had a little bit of a mobile app release put out, Sadnov, with some new features in it for iOS and Android. So you can check those out.
That just came out this morning, but I didn't have a chance to review it yet, so I didn't want to discuss it on air.
I know, me either, but they sent out an email, so I figured I would talk about it.
Okay.
I've been on the show, Sadnov. I've been carrying your sorry ass.
Thanks, Andrew.
Thank you, Andrew. Appreciate your time. Sadnov, you love that Andrew so much. I've got another Andrew from Texas this time, Sadnov. That's correct. Austin, Texas. Andrew, what's up?
Andrew number 2.
Andrew number 2, what's up, man?
I had a quick question. So we're about halfway through the year. The markets are up maybe 1 or 2%. How do you all think someone that follows Tasty Trade mechanics, maybe rolling on 21 DTE, how are they doing over the risk-free rate, if you had to guess? And no fair looking at the backtesting tool.
I mean, I have my. You mean how are they doing if you annualize it, or how are they doing so far just to the 6-month mark?
So far in the 6-month mark.
Yeah. So, Tony, go ahead. I'll let you start.
Sure.
We don't. By the way, Andrew, we don't know the answer. Right. This is pure speculation. This is just us giving you our opinion. We have no idea what the actual answer is.
Right. I can't see anybody's account, so
either can I. Tony and I
have no idea.
Tony and I have no access to customer accounts.
Okay. Just answer it.
Yeah. I can go from my own experience. I had 1 or 2 outliers. UNH was one, and I didn't even that wasn't from the very beginning of the down move. Really, towards the end of the down move, that gave me some jitters. Other than that, it's been pretty smooth sailing for volatility expanding and now contracting pretty good. I think it's been a pretty good 6 months. I would say that they've outperformed risk-free rates by maybe a multiple, especially if the public is leaning net long, which I'm not necessarily doing. But that could have helped, I would have thought.
My answer to your question is, I'm guessing it would be there was a significant drawdown in April, no question about it. That definitely took a little bit of the bloom off the rose. So I'm going to say, if you took your 6-month risk-free rate, it's probably about between 2 and 2.5% is the 6-month risk-free rate. And I'm going to say that just sticking to Tasty Mechanics, no direction or anything like that, including, the big outlier drawdown in April, I'm going to say somewhere between 7.5% and 10%, which is 3.
If you look in the backtesting tool, it's actually negative. And that's any way you slice it. That's any way you slice it. If just doing like SPY strangles, QQQ strangles, rolling at 21 DT, however you want to slice it. Like, I urge you all to go in there and show me how you could get a positive return. Now, I'm positive for the year, but I just thought that was interesting. I wish you all would use the backtesting tool more on the show. I know Tom spent a lot of time developing that. That's it.
That's going to be the case because you can't, and just so you know, just to be fair about that, the backtesting tool, you have to set the parameters. So that's always going to be a worst case. Because there's no way you take the emotion out of it, but there's no adjustments in there.
I just thought it was interesting because we had that massive drawdown on like early April. That really hurt the strategy, basically. It kind of blew it up.
Yeah, no question about it. So it's a question of, but I think the thing that's challenging about that was, and this happens to me all the time. Like Tony mentioned, he said, like one of his drawdowns was UNH. Well, it was
a good UNH trade.
It was a drawdown for me too, but it turned out in the end to be one of my biggest winners of the year. Just because we, the premium came in so much after it that it's now one of our best trades. It was one of our worst, now it's one of our best. So I look at that drawdown in April as being, obviously bad when it happened. And
please remember, Sosnoff may have created the backtesting tool, but it only executes trades at 2:45 p.m. Central Time. It doesn't take into account intraday pricing or the ability to exit a trade.
I said it's worst case, Tony.
Your prime. I know, but I don't know if that really validates what worst case means. You know what I mean?
Well, the reason I like using the backtesting tool is I like to find the worst trades. What my favorite thing to do with the backtesting tool is to find the absolute worst trades so far this year, and then do the opposite, or the worst trades over the last 6 months or 9 months. When I did the last live trading tour, I used it just to show those examples. I found stocks that didn't have an uptick for 6 months, 9 months, a year, and just used those to sell puts in, because no other reason other than this. The strategy works. It's just a question of finding the right underlying. Anyway, but I hear you, Andrew. It's a good point. But I think most tasty traders are doing okay.
Yeah, I agree. I am. I just thought it was interesting. Love what y'all do. Thank you.
Yeah.
Thank you, man. Good luck to you out there.
And I'm not giving you I'm not saying it's a crazy number. I'm saying, 7.5%, 10% for the first half of the year is not an insane number. I mean, it's a multiple of risk-free rates, but it's not some crazy number like I'm up 200%. Like, that's not the case.
Yeah, I'm at 7% myself.
Okay, there you go.
Nice. Let's go to California. I got Ravi. Ravi in California. What's up?
Yeah. Hi, Tom. Hi, Tony. Hey, I have a question about this triple leveraged ETFs. All right. So, for example, TQQQ.
Yep.
Right. I've heard Tony say, a few times that it's not a good underlying to trade. I was wondering why, and especially in the market, low volatility market right now. Would you, use, because it's a triple leverage, so it moves more?
Let me quantify my answer. Maybe I answered like Sosnoff and didn't give you a full answer. It's not a good long-term hold, and by long-term hold, I mean more than a few days. I'm not talking 45 days because there's just too much drag to it. It uses basically the same amount of buying power, and it has too much drag to it. So if you're looking for quick movement, then you've got it. And remember, just because it's triple leverage and the market's up 1%, that product doesn't have to be up 3%. It's a percentage of the percentage, not the necessarily net of the percentage. That's all I meant. Thomas?
Got it.
Well, Robbie, my take on this is similar to Tony's, but the product was originally created. The triple leveraged ETFs were originally created as an alternative to using futures. You can get a little bit more, you can get a little smaller, that kind of thing. But they're a little less efficient because they're not as efficiently priced, and the capital requirements are really high. But the most important thing about triple leverage, the reason we don't talk about them a lot on the show, is because they are very short-term instruments. They are futures replacement instruments, so they're good for 1 or 2 days. When you start to carry them longer term, like 3, 4, 5 days a week, 2 weeks, there's too much drag for us, and so we prefer not to use them.
Got it. Okay. And then similarly, the short version of the SQQQ, the shorting version of it.
Same thing.
You don't use those as well. Okay.
No, because you have to realize that the cost to carry on products like that is significantly higher than the cost to carry on a future, which is built in at whatever Fed funds are essentially. So you're talking like 2% versus 7 or 8%. So the futures cost to carry, which is built into the futures price, is a much more efficient vehicle, and it's the same exact product essentially with lower capital requirements. So if we're going to use like the short, triple Qs or something, we would much rather use /NQ or /MNQ. It's just a more efficient
with the
instrument.
micros now, you can get so small, 100 shares of stock, it almost seems to be the place to go.
Yeah, well, you get 80 shares of stock. So, yeah.
Whatever. Yes. Apologize.
Got it. Okay. Thank you.
Thanks, Robbie.
You got it, man.
I mean, it's a very...
Bulgaria. We got Ross in Bulgaria.
Hey, Tony. Hi, Tom.
Hey, Ross. What's up, man?
Hey, so nice to speak to you guys. I've recently discovered Tasty. I saw Tom on Yahoo Finance, and I immediately hopped to Tasty, and I've been glued to the screen from the beginning of this year, and I just want to thank you guys for all the great content that you are producing and just in general what you're doing for the traders community.
Thanks so much.
I just have one. I've been trying to, I've been dabbling in options. I've done your courses, and I wanted to switch to Tasty as my brokerage options trading is kind of crappy. Mm-hmm. But it turns out I've emailed you guys your support that we are somehow a restricted country, even though our neighboring countries are not.
It's ridiculous. Ross, it's totally ridiculous. It's on our clearing firm, Apex, and we have been all over them for certain countries, and Bulgaria is one of them. It makes no sense anymore. I mean, it's almost like Bulgaria was on a list. Bulgaria was on this list of a bunch of other Eastern European countries. This goes back, it goes back almost a decade when there was a lot more fraud and there was a lot of there was a lot of financial scammers in different parts of Eastern Europe. But Bulgaria's come a long, long way, and it's absolutely ridiculous that we haven't been able to onboard Bulgarian customers. I know Scott's working on it. I promise you he is. I've talked to him about it. And, because I actually have family in Bulgaria. And so, as crazy as it is.
I didn't know that.
Yes. Yeah. My niece is Bulgarian and they wanted to join.
Cool, man.
And they wanted to join Tasty. And so it's been a little bit personal to me. So I've been trying.
Thank you so much. I just want to say that I've been working in a corporate bank, an American one, and we had a regular communication with OFAC, and our country is not in any sanctions list as far as I can remember.
No.
And I'm very, very surprised that this is in fact...
It's ridiculous, Ross. It's completely ridiculous. We agree with you 100%.
Okay. Well, thank you again, guys, for everything, and all the best.
Thanks.
Thank you very much. Appreciate it. We're going to go to Texas. I got Eddie real quick. Eddie, what's up?
Last one, Tony.
Okay.
Hey, guys. I tried to...
Hey, Eddie.
What's up? So UPSC, I'm just looking for a little bit of education. Wondering why it's got an IV rank of almost 0, but it looks kind of tradable to me.
I'm so sorry.
You're talking about Upstart?
Yeah.
UPST, Tony.
Got it.
It has an IV rank of 1, and your question is, why does it have an IV rank of 1?
Yeah.
Yeah, and it almost looks like I would still trade it. I think it's got some premium. Maybe I'm not looking at it right.
Well, it's got good premium. It's got 73 monthly implied volatility, which is high when you look at something like a Tesla even or an IBM if you go to that thing. But 73 is relatively low for Upstart. When you look here at what Upstart has had its volatility, you can see here that at one point Upstart had over 150% implied volatility. So it's all relative to itself. So if I was looking at Upstart right now, I would probably look for it for a defined risk trade or maybe a calendarized trade. July, September would probably be the place that I would go.
I mean, Eddie, it's certainly tradable. Upstart is definitely tradable. The problem with it is it's not a good premium sale here relative to where it's been. The volatility is basically what they're saying is the volatility is the lowest it's been in the last 52 weeks. And So it's the least attractive from a premium selling standpoint that it's been in 52 weeks. But that doesn't mean that you can't trade the stock. Of course, you can do anything you want in there. We would just use, like Tony said, we'd use something that's either define risk or we'd buy premium. That's all.
Yeah.
Okay.
Yeah.
All right. Appreciate you guys.
Thanks, Eddie.
You got it, man. Good luck to you out there. Sadnov, I'm going to have to let you go. We're going to take a quick 90-second break and come back. We got Liz and Jenny next. Peace.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
I tend to call myself a lonely options trader because I really don't have a lot of people that I can share stories of wins and losses with. Like Tasty Live plays the whole day at my house. I love that they've made everything really easy to digest and take in. I love that you can easily send an email if you have any questions and Tom will be quick to respond to you, or if somebody else, Nick, Tony. I really enjoy that it's a customer focused and it's a customer centric system that you guys have here. And Tasty Live has definitely changed my life financially because I'm able to determine how and where I can make my gains and not be a passive investor where you're just relying on the markets to do something for you. You could actually go out there and do it yourself.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Everybody, and welcome to the Monday edition of the Liz and Jenny Show. My name is Liz Deerking. That beautiful brunette is Jenny Andrews. Happy Monday, Jenny.
Happy Monday. It looks like you got some sun this weekend.
I was outside all day, every day, because every graduation party we had, we're outside, went to baseball games outside, was in the pool outside. I did have sunscreen on and a hat, but yeah, we were outside the whole time. And even if it's cloud covered, like a lot of it was cloud covered.
Yeah, right. It was kind of a cloudy weekend, but you looked like you got some sun. So it was a nice weekend here in Chicago with a little bit of rain, but mostly nice weather.
Well, yesterday my daughter goes, "This is the tannest I've ever seen you." I was like, "I know."
Yeah, because usually you stay covered in hats. I usually do too, but
you know what was crazy is when it was cloudy, I didn't bring anything with me to the baseball game, and then I had like a cute dress on for the parties we were at, so I didn't. You know what I mean? Right. And it wasn't like I could be like, "I'm going to be inside your house," even though you guys are all out.
Well, another busy weekend of graduation parties. You survived. I survived. Great America. I posted a picture on Twitter, John. If we can go to Twitter, Lily had a dance. Lily was dancing at Great America, so my son went to watch with dance too, and so I
want to make sure everybody can see what we're seeing because Jenny, I'm proud of you. You get a gold star. So if we can pull up Twitter for everybody to see, that'd be great.
I went on every ride with the kids. I stumbled into the house last night. And might be going to the chiropractor this week. I don't know. It's rough. Like they're not as fun as they were when I was like, remember those old SIBO days when the SIBO would rent out Great America and we'd have like SIBO night at Great America?
I think they still do that. I wonder if we can now get invited.
How old were we then?
We were in our 20s. We were in our 20s.
And we loved it. But yesterday, hitting every ride, it was a rough day.
I'm telling you, usually you're tougher than me because the last time I think I was there 2 years ago, maybe 2-3 years ago, but Batman took me out.
Batman's like so rattly.
Took me. I mean, I was like, that's it. That was the last time I'm riding that. I'm never going to do it again.
And I'll tell you, I remember when Raging Bull came out when we were younger, and I got off Raging Bull. I was like, that was the smoothest roller coaster I've ever been on. Yesterday, I got off Raging Bull, and I was like, what the heck happened to Raging Bull?
Well, there's Logan. He looks like he's having a good time, and clearly you knew when the pictures were coming. Were you like, smile, Logan?
No, it's not like the Disney rides where I know where the cameras are. So I think
which one is this?
X-Flight.
Oh, that's the one kind of by the entrance, right?
I don't know, but it's the one where there's like the air traffic control tower.
Yes. Okay, I know exactly which one you're on.
It was we didn't get on the brand new ride. There's a brand new ride the drop looks terrifying. It's crazy. They hold you over the drop and dangle you. They stop you, so you're like dangling, and then you go down the drop. But the line was so long, and I did the fast pass system, but it didn't count for the brand new ride.
Oh, it didn't?
Yeah.
Okay, I get that. But you don't like Rip Rocket roller coaster at Universal either, do you?
Well, I probably would have 10 years ago or 20 years ago, but Rip Rocket, honestly, this was smoother than Rip Rocket.
Was it? Because Rip Rocket, I feel like, is very Great America-esque. They're all kind of like those kind of rides. Yeah.
Anyway, I survived. But yeah, he did look very happy. There's Logan. And he was so excited going to work today. This was a big day for him going to work because he's been working every summer for 3 years now, an internship in like radio frequency. He's a computer, going to be computer engineer working on antennas. And today was the first day they let him like out to go to a customer. So normally he's inside working on stuff inside. Today he went out to a customer. So he had to go get steel toe boots to go on a site. And he was so happy going to work.
That's a big deal though.
Yeah, that they finally let him out to go meet with the customer. Yeah, he was very, very happy. Okay, let's take a look at what the market's doing. SPOO's up 6. Today was the day. Monday was the day. I put on an SPX trade. You did a couple SPX trades.
Let's talk about Tucker. I'm just kidding. No, nothing like that.
Couple tranches at 8:30. Couple tranches a little later.
Yeah, I did a couple tranches, but I was peppering the infield in the strategies because we've been all over the place with different strategies where it's the $20 wide or the iron fly or whatever at different times. So I literally every like 15 minutes put on a different SPX trade. All of them are off. except for the iron fly.
Now, so all of them are off except for the iron fly. I know these were my strikes, 10, 20. I did the 40 delta, $20 wide, buy, sell. And I know these were my strikes. The 610, 630, and then 590, 570. So if I were to buy it back right now, it's 840. And I took in just under $10.
That's not bad.
So this was at 9 a.m., exactly 9 a.m. I did the short 40 deltas, $20 wide.
That's not bad.
No.
So it's kind of working according to plan, right?
Right now, if you put on the short 40 delta, you look, this call, I mean, you're almost still at that same call. Let's say you made it a little bit and then it's tight. So here you're getting 875 and this is at 1009.
So what were your put strikes at 9 o'clock?
It was the 590, 570.
Okay, so you were.
And my call was the 610, 630.
So it's almost as tight. It's only $5 tighter, but shifted.
Yes, right, because we're up a little bit. When I put it on, we were pretty much unchanged.
Yeah.
So selling it for almost $10 and buying it back for $830. I'm already out. I'm already out of mine. I didn't wait. I'm not waiting. I didn't wait for 25%. Maybe I should, but I didn't.
Well, and like I said, I'm glad we're vetting these. So the morning one, the morning one, the one I put on at 8:30 was 20 delta, $20 wide, and I did it at 30, and I took 25% out.
Here, tell me your strikes.
So here, let me look. Hold on. Let me go to my platform, and I'll tell you exactly.
But at 8:30,
I did it at 8. I did it at exactly 8, like 8:32, whatever. So my strikes were the 625, 655.
And this was the 20 delta.
This was the 20 delta. 59.75, 59.55.
And you sold it for how much?
I sold it for 520.
And now it's 330.
Yeah, I'm out. I put a 25% in, and I'm out. It's right about where it was when I bought it back, but like a little bit less than that. But so that's 25%, and it went off. I got out at 9:30.
Okay.
So I was in it for about an hour and a half.
They were on and off quick today. Now, SPOOs have not been doing too much. They were down a little, up a little. At one point, it was going through my call strike. Then that's when I decided, well, I'm not going to wait for 25% because, you never know. It's hard to have diamond hands on these for me.
Well, I did for the 20. Well, because you collected so much and you were so tight, I was just going to let mine go. Like, because I had some width.
Right. So now we've been putting on the iron fly. Do we want to just do our $10 wide iron fly that we've been putting on?
Yes. And the funny thing is, that's exactly what I have on, except your downside is wider. You got to pull it up. Yeah, there you go. Okay. This is exactly what I have on, and I collected about 840 for it. So it's still right there.
Okay. I'll throw it in. And now, as I was putting my trade on at 9 o'clock this morning, I had to keep lowering my price. Buy nickel, buy nickel, buy nickel, buy nickel, because it was decaying like every 10 seconds. So I almost think when I put it on, whatever mid-market is, I'm going to go a dime lower just to get it on instead of trying to chase it down after the fact.
Oh, SMRT, Jenny.
I don't know.
SMRT. Yeah, that makes sense.
Let's see, 825. And if that doesn't fill, yeah.
Okay, but big news. So CRCL, and I'm so glad that you saw this, got its options today.
I wonder if I was the first one. I sold the 90 puts this morning. I looked right away, CRCL, are there options? There were options. I sold the 90 puts in the 11-day because I expect this to act like CoreWeave, where not a lot of premium is going to come out of these, so I'm just going to have to wait for them to expire.
Hold, please. Look at the volume.
How can that be?
That's what I said. Did they have it Friday and we didn't know?
Maybe.
They must.
And here, I thought I was the first one. I was like, oh, got these on the open. I'm going to be the first one selling puts in here.
But so unless something has changed, the volume should be zeroed out. So they must have had it Friday, or maybe they got it late in the day on Friday and we didn't know.
Yeah, I don't know. Maybe they obviously. Otherwise, this would all be zero.
Yes, that's what I was. Wait a minute. Hold on. Yeah.
But don't you think I expect these to behave similar to CoreWeave's options, where I know in CoreWeave I was selling put. When I sold the July puts, it didn't matter where it went; they weren't really coming in. So then, then that kind of forces me to the shorter term. I felt like I was forced to the shorter term.
Oh, to the 11-day? I get what you're saying. Now, if you take a look at here, I just want to public service announcement. Take a look. It's using $8,000 for this, which means it's cash secured. That means it's the same thing as if you were trading in an IRA. That's all I'm saying. When you're looking at something like this, it's holding up everything as if it goes to zero. So in this situation, you can just go down and buy that 60. It's still going to be a lot of money, but you're still going to release some capital.
If you need to, like when we started this with stock, the stock was cash secured too. So like we started this by buying stock, and then last week I sold out my stock. So I thought, well, if I was willing to have the stock, I can. Yeah. We kind of talked about this. The $8,000 is crazy buying power, but if you were to buy 100 shares of stock, it's using $12,000.
But what I love about this is what I love about options is because I do trade my IRA all the time. Just go buy whatever. Now, granted, it only goes down to 60 here because you've got all the strikes, but whatever you buy, you're releasing all that capital. It's not as if I'm not looking at this like I'm only using $2,000, but why not? Right? Have that. I'm not looking at it as risk definition, but if you have a smaller account and you want to be in CRCL, sometimes you have to spread it off when it's going as if it's a cash settled account.
Right. So for us, if we wanted to have something in here, we would have to probably give up more, right? Like here is, okay, we're in SPX. I'm going to push that out on the follow page. Activity. Today, all symbols. I'll get this pushed out on the follow page, and then I will put in a GTC for it.
Perfect. And breaking news, and we're idiots. This is from Frank the Great. Go to open interest at 0. Today was day 1. Volume, I guess, updates in real time. Open interest does not.
Oh, then maybe I was the first.
Maybe it was you, Jenny. Maybe you did it.
All right, 10%. 10% on this SPX. And I don't know, did we do this Friday? What happened Friday? Were we in or out?
Let's go back 7 days.
Yeah, we got out.
At what time? 12:40. Okay.
That was the 6th. I don't even know what day. What day was Friday?
That was Friday. That was Friday. The 6th was Friday.
Okay, yeah. So we got out. So
you know what I love is that you had to check your calendar, even though I was telling you this was Friday.
Liz, so my husband was in Germany. Like he's been in Germany for a while. He came home from Germany this weekend, and it was like we were living. It was like we were still living in May because we have my sister-in-law every year makes us a photo calendar for the month with all the pictures of the month. Like that was still on May. I had something else still on May. He comes back from Germany. He's like it's like I was never gone. He's like, you're still living you act like it's May 23rd.
Okay, just checking the calendar.
So I got to double check. Yes, at times I can't believe we're already June 9th.
I know.
And okay, but the good news is Friday we got out of this. And I like to go to the order chains and keep track of what's going on with our SPX. So order chains for the last 30 days.
Johnny, I'm not going to lie to you. I don't feel like we made that much in the last 30 days.
Okay, so what is this? Like, what are these checks? Gain, loss, open, closed. If we take off open, okay.
Still the same.
And we have closed. I don't know.
It's insane. Let's just move past this. We'll figure this out with the A team that is not us.
But I'd like to be able to see like, how we doing on these?
Go to something where we have very little in. Go to like CoreWeave and see what our option chain is. And then that'll, just because I know we don't have anything in there. Do you know what I'm saying?
But have we?
There, too, but you can see all of it.
Yeah, that makes sense, right? Total P&L. Right, we don't have anything in there. Doesn't matter if I check open. I don't know. So today was kind of an interesting day. I felt. All right, let's get back to Circle, and then we could talk about something else. CRCL. Do we want to sell a put spread in Circle? I pulled up the 90.70 for 268. That's still a lot of buying power. Do we have to make it even tighter, or do we have to treat this like a?
I think for us, that's a lot of buying power. I think you got to bring it up, sell the 195. I think we got to be for this account.
Or I mean, what do you think of the 90.80 for $1.73?
Looks great to me.
It's only 11 days.
Something is awry in that order chains with SPX because I'm looking at.
Okay. So he's instead of volume, go to open interest.
Open interest. Right above volume. Right above volume. Right above. There you go.
Oh, okay. And that's what. So I didn't realize this. I didn't realize that volume was today. So if we're looking at something that, like, high option activity, we can compare open interest to today's volume. And if the difference is there, you see it's happening today.
You can compare open interest to this. I was unaware of that.
Mind blown, Frank.
Yeah, who needs that SIBO's most active? We can just do the math every day on each line.
Yeah. All right. So how do you feel about this? 98.
Okay. I'd like to get in. So yeah, let's do this. We have to do something like this for this account.
Yeah, then we'll keep an eye on it. We're risking $800, but then we're in Circle. And we don't have what's core and what is CoreWeave? CRWV. What is that doing? Is that up again? Up $15.
Yep.
That thing.
Can't stop.
Although its high was 166.
Yeah, it is off its highs.
And how are those puts coming along?
Well, Jenny,
these were the puts I sold for $9, and even with it up so high, there's not a lot coming out. There's still $7.
Yeah, there's not a lot coming out of them.
Right.
There's not a lot coming out of them. You're pushing everything through, right? I'll do the other side.
Okay. Let me take a look. Activity to all symbols today.
Well, it's just SPX and CoreWeave, I believe.
Or Circle. SPX and Circle. All right. So I sent that. So what I thought was interesting today, looking at certain products. Now I know CoreWeave was up, but a lot of the dogs were up today, like Intel.
Oh, Intel is up. Intel's up. Archer's up. Archer's up huge, actually. Like a lot of that stuff is up with the relatively unchanged market in the S&P.
Right. Like market's unchanged. I opened my account. I was like, geez, what's moving? It's the dogs. And I got a lot of dogs in my account. So Pfizer, I don't know if we have Pfizer. That's another one that is like a lot of these that are near their lows are up today. And to your point, Archer up $1, so that's up 10%.
Yeah. And did you see what was down a ton? Do we have Hood? Hood was down like $5.
But Hood's been up so much. So Hood was down $5, but it was up $5 last week.
Oh, I know, but it's only down three now.
Yeah,
but it was up a ton last week. But is it not going to the S&P 500? Did the rumors get squashed?
Oh, I don't know. Or is it
I was just wondering why?
I don't know.
That's why it was going up and up and up, is because they kept saying it was going to go into the S&P 500.
And maybe sometimes when it does, sometimes it goes down. I don't know. Let me pop out the news on Hood. Yeah, Hood, I didn't really. Robinhood, AppLovin fall after snub.
Yes, snub.
Whoa. I want to see what AppLovin is doing, because AppLovin was. Here it is. That has been going up like crazy.
And that's down too.
Yeah.
5% because they got snubbed. I love that. That's a great line. A great line.
Oh my gosh. So we are taking live tweets. We had some tweets coming in. I'm going to go to early to this morning. So Frank came in, Frank the Great, with the economic calendar. Amazing. Then Eric, let's see, 2 6-lot tranches. Nice.
Look at Eric. So we're rooting for you here, Eric. We love it because your flag is still in the middle, and that's what we like to see.
Yeah, that's right. Well, he's looking good. He's probably out already. That was an hour ago.
I don't know if he's out already or not. Depends on what your GTC is set at.
Look at Permable, 410 profit in 30 minutes. First day, doubling the position size. That's the Monday. It's the Monday double down. I wish I would have doubled down.
And then he has hashtag JTT Jack Tucker trade. I got it now.
Yeah. Double down Monday. I don't know. I don't want to say that. Again, nothing we do is a trade recommendation. If everyone starts doubling down on Monday, it's Jacob at tastylive.com.
Yeah, true. I mean, the boys did the same study after us, and they concluded the exact same thing.
And again, we do some research. Our team does research. We look at the studies. We place our own trades. Nothing is a trade recommendation.
Nothing is a trade recommendation.
Clip that, John. Nothing is a trade recommendation.
Do you know what I want clipped? ALO at the end of the first show where we had the guest, where he was saying all those really nice things about us, and we kept being like, "What is happening?"
Maybe he'll be on again tomorrow. It was nice having him on because a lot of the traders can't come on. Their firms won't let them come on. And a lot of the traders say, we don't really want to talk about what's going on in the pit. So it was nice.
A lot of times they're muzzled because they're not allowed to talk, but I think they're allowed to talk about stupid stuff, which that might be like the stupid stuff microphone.
Hey, you know what? ALO had no problem talking about other things. ALO
Who do you think is going to be Tanner? Who do you think will be Tanner tomorrow? Me or ALO?
ALO for sure. ALO for sure. Les thinks he has a tanning bed in his house.
He for sure is. I mean, him and Tony Batista both had tanning beds at their house at one point, is my guess.
Yeah, at one point. But you know what? Growing up, we had a tanning bed in our house. Actually, it was one of those where it wasn't. So it wasn't a full tanning bed. It was like it folded in. You would open each door, gotcha. So it was like a 4-panel that you just sit in front of.
There's for sure one of those in ALO's house. I think so, don't you?
I mean, what happened to all of us because of those? I don't know. We
survived though, barely, but we survived.
I mean, we're not 50 yet, so we'll see. We'll see what happens to us in 10 years. Okay. All right. Ajit, names with the highest IVR, IVP, IVHV. Thank you, Ajit. What do we have on here today?
Do they have earnings? I know Nike is always on that cast of characters, but Adobe, is Bob coming up next? Because I need to review Bob's list.
And what the heck is ETOR, eToro?
No idea.
Only $75. Let's take a look.
Wait, eToro. I feel like I've seen that logo somewhere. Is that like a machine company?
I don't know. It sounds familiar. ETOR.
I feel like it is a machine company.
eToro. Whoa. Big jump.
They're new. IPO'd. Look at that.
Oh, yeah. How'd we miss it?
I don't know. I love IPOs.
Let's look at the, okay, so IV rank, but again, it's new, so it doesn't have like the history. But let's look here. These options aren't quite as juicy as some of the other IPOs we've seen, but, and the buying power is the same, completely cash secured. And do you find...
It should be for a while.
Okay, again, eToro, $6,000. Circle, $8,000. CoreWeave, $800. CoreWeave, $800. Like, someone missed it. Someone missed the memo.
And you tried to rat it out to tell Dad that you wanted to have more capital at use.
I was just trying to protect the people.
It's funny.
Look, SPOO's unchanged. Everyone's getting out. Anyone who put on a 0 DT at 9 a.m., he gone.
Well, not at 9 a.m. because it was up to
9 a.m. No, at 9 a.m. This is exactly where we were at 9 a.m.
Oh.
Mm-hmm.
Well,
yeah,
good.
Exactly where we were at 9 a.m. Okay, so eToro, this is the and these markets are a little wide. You want to buy something? Well, they're a little bit wide.
I mean, you can go down and buy that 50. Well, all I'm saying is we don't need to get into eToro. I just wanted to look at it. And it is the IVR, and I think it's on Ajit's list because it doesn't, this IVR is for X amount of days and there's not that many days left. So it's going to get a big pop once it starts having it.
Trading platform, eToro.
Oh.
Didn't know. If someone, I'm just curious of like how much a diagonal would be. Probably a lot. $6.75 for $10 wide.
Yeah, I mean, we'll keep an eye on you. We'll keep an eye on you, eToro. But I think
and you asked about Adobe.
Well, I wanted to see Bob's list because I feel like there might be earnings on the horizon in Adobe. Yep, there you go.
Yes, tomorrow.
There you go. That tracks.
Or maybe not tomorrow, the end of the week.
The end of the week. Once again, would you like to assess your calendar? Because it is the 9th.
The 12th. Hold on. Let me see when the 12th is, Liz.
It is the 9th. So 10th, 11th, 12th. It's not too far away. It's this week.
I'm telling you, like, after rattling my head on all those rides, I couldn't even think last night. Last night when I just walked in the door, like, I looked like I could barely stand up, and then I rolled right into bed. I don't even know if I washed my face.
Great America, though. You did it. What was your favorite ride?
I think I did like that X Flight. That was good.
X Flight's good. X Flight's good. So did you ride like the oldies and the goodies, the Demon and the Eagle?
Okay, so the Demon is like closed for refurbishment. Mm-hmm. I know.
What about the Eagle?
The Eagle. So we had a few issues because we had rain in and out. So we had quite a few times where they would, like, we were on. I don't know if you remember the old tidal wave.
Yeah.
Which is now the Flash. So we were literally on it, buckled in, ready to take off, and they're like, sorry, we're shutting down. There's lightning in the area. And that happened to us. We were getting on Goliath, and they're like, sorry, shutting down, lightning in the area. That happened to us numerous times.
Oh, that's sad. Goliath is a good one, though.
I know. And after the second time, my kids were like, can't we just, like, wait here so we can get back on when the lightning clears? Because then we'd have to, get off and get back. And the Fast Pass I bought, you could only do, like, one ride each.
Oh.
I think. I don't know. That's what I told them.
Do you remember, and I think I'm going to say the name right, but that one, and this is gone because I'm pretty sure, I'm almost positive somebody got injured on these things from the 80s. Like that one, they put you in like this hole and you had to stand against the wall and they spun the walls and you stuck to it, the Cajun Clipper. Do you remember that one?
The Cajun Cliffhanger, that was my favorite ride. That was
mine too.
My favorite ride at Great America growing up, Cajun Cliffhanger. You stood on a rubber wall in this cylinder.
Yeah, and they put you in like a hole, like you went into a hole. They closed it up.
Yes. And I was trying to tell my kids about that ride. I was like, Cajun Cliffhanger, my favorite ride. You're stuck to this rubber wall. It spins so fast, and then the floor drops out. Yep. And so in the car, we looked it up in the car on the way home because my kids wanted to hear about it. So like, what happened to the Cajun Cliffhanger? So yes. At one point when the floor was coming back up, a little kid, must have had sandals on or something, cut two of her toes off as the floor came back up.
Oh my gosh.
You asked. That's what happened.
I know.
And then they shut down the Cajun Cliffhanger. How about a sign like, you must have gym shoes on?
You want to bring it back.
Bring back the Cajun Cliffhanger.
No, if it makes you feel any better, somebody lost two toes at the SIBO on the escalator.
What?
Yes. Why do you think I'm so afraid of escalators? Like, you can't have any like loose pants or loose dresses or loose whatever near an escalator.
And that's why we have to wear gym shoes there, closed-toed shoes?
We've always had to have closed-toed shoes on.
Okay, so tell me.
This was during the closed-toed shoes, and it was a gym shoe that got stuck in it.
The laces.
Yep.
And they lost two toes.
Two toes, maybe three, but I know two at least.
Okay, since this was at the SIBO and we were there and we're there every week. Tell us exactly. I don't remember this. I don't remember being on the floor and someone losing two toes.
I don't think you were there because you left in 2004.
Yeah,
I was there. It was after 2004 and before 2012. So somewhere in those 7 years, someone lost two toes.
Was it a young spry person or was it an older?
I don't remember. But I can tell you which escalator it was. Those escalators are gone because it's the old building, but I can tell you exactly. It was the one right by the OEX pit, which was the VIX pit. It was that escalator.
Was it like a SIBO employee or was it a trader?
No, it was a trader.
It was a trader.
It was somebody from the floor. Maybe they were a clerk. I don't know, but it was somebody from the floor.
Really? I don't remember. I don't ever remember seeing this in the news.
I don't think it was on the news. I'm pretty sure they were like, someone loses two toes at the SIBO.
On the escalator. Well, I guess they're in the Cajun Cliffhanger. No more.
And who knows? Maybe they were just injured, but in my mind, they lost two toes. But nonetheless, they got stuck. The laces get stuck in the shutdown. That's why there's those shutdown buttons everywhere now.
Well, don't you remember? I mean, the SIBO had paramedics on staff. Like there was an office with 2 paramedics on staff.
Oh yeah.
I would go in there all the time.
And you would go in there and lay down.
Yeah. I'm taking a nap. Just gonna take a nap.
You know how many people told me, now my water did actually break on the trading floor, but when I was super pregnant, the paramedics kept being like, you could deliver the baby here. We're just gonna have to name it Bo. And I was like, that's funny.
So funny. Like nowadays, nobody has paramedics on staff in an office.
I mean, it was a wild, there was 2 paramedics fully on staff.
Oh, I loved it.
And like an infirmary, like you could go in there. Remember, you'd go in and you'd take like a hard left, and then on the wall there were all those drugs, and you just open a box and take out some
Take whatever drug you wanted. It was like a drugstore. But I just remember like at home, oh, I got a sliver, no problem. I'm going to SIBO tomorrow. They'll take it out. Like I'd walk in, I got a sliver in my finger, and they'd get it.
Yeah, 2 paramedics on staff.
But that's funny. The drug cabinet with anything you wanted.
It was little drawers. Remember, like you just open the drawer, it'd be labeled, and you just open it up and they'd be individually wrapped. The drug wall.
Yeah, Tylenol, Advil, Motrin,
Sudafed, which is now behind the counter, was readily available there.
Pepto-Bismol, whatever you needed, it was there. Yeah.
I wonder. You know what? I want to see if there's an infirmary at the new SIBO. I wonder if there is.
There's not. We would have seen it.
We haven't really scoured. We can barely find our way to the elevators, so I don't know that we would have found.
All right, we can look tomorrow. We'll look for the medical room. We'll see what it looks like. I'm sure it doesn't exist.
I'm sure it doesn't exist either. But yeah, no, walk down memory lane. All right, let's pop back into Twitter. I want to get to Bob's list, see if there's anything today.
And I was going to say, we have a couple things that are 50% too.
Oh, we do?
Well, IBIT are 53% on this IBIT put spread.
You got to chase that up. So here's the deal. If you're not just being long Bitcoin and you're just using this as puts, you got to chase it up.
Or at 11 days, do we go out? Do we move it out?
Oh, you could take it out in time too. You could do that as well. Because that actually is better than chasing it up. I did run for 11 day.
So we'll buy back our put spread in IBIT. And we were an 11 day. Where do we want to go? Do we just go out to the July?
Yeah.
58, 54. Here's a $4 wide for $1.
Perfect. Well, did we have a $4 wide before?
I don't know. 58, 50. We had an $8 wide. We were crazy, Liz.
Well,
crazy.
I think that 50. If it was there, I'm going to guess that was just to release capital.
Yeah, like we wanted to just sell the puts, but IBIT is one of those. I asked Scott to try to adjust the margin here, but I kind of like that 58 level, but it's $2,000. So if we do the same 58.50.
I mean, honestly, but 50.
That's not bad. We're only getting $1.36 versus $1. So you see
it's
that?
Insane. I like the $4 wide for $1.
Yeah, I'll take the $4 wide for $1 rather than $8 wide for $1.30. It's not worth the 30 cents.
It doesn't make any sense if it falls, because you can actually, in my mind, if you're using that 54, you could use that to your advantage if it does fall.
Right. So, okay, 58.54. How much is crypto up today?
I saw Bitcoin as high as 107. I don't know where it's at right now.
108 now. 108.
Yeah.
And is little old Ethereum ever going to catch a bid?
So Ethereum was up more than Bitcoin this morning, but I don't know if it still is.
It's only 2,500 though.
Yeah, no, I know. Just like percentage-wise on the day.
I just don't know. In my mind, I keep saying like I'm going to get rid of my Ethereum when it hits 4,000, and that might never happen.
When it hits 4,000.
Yeah. Why? That's what it always used. That was always my.
I know. I get it. It's just so funny when you're looking at it, because when you said 4,000, I glanced. I thought it'd be close to 4,000. It's not. It's 2,500. So you're gonna be holding on to this for a while.
Did you ever realize we have Ethereum options here?
Yes, and you have Bitcoin options too.
No, I know, but like, okay, Bitcoin is very big, right? I can't afford. I just don't have. Like, I don't have a whole Bitcoin. I don't have 108,000. So, but Ethereum is not that expensive. There are probably a lot more people that have like full Ethereum positions, for $2,500. Oh, but this is the much bigger one.
That's what I'm saying.
Yeah.
It's not. Something's amiss. It's not that tradable. It's not like a small.
I was thinking like, oh, for all the Ethereum coins we have, we could sell some calls. But no, this is still a bigger product too.
Oh, these are Bitcoin and Ethereum futures.
Futures.
Yes.
Yeah. Right, which is very different than if you're just going out and buying a coin.
Correct.
Yes. I wonder how many Ethereum coins you have to be able to sell a call here.
Well, you could probably do the math. How many? What is Ethereum? 2,500.
What does it say? Max losses.
I think it's $43,000. So you'd probably need whatever the $43,000 divided by 2,500. I mean, I'm just guessing though.
No, it's more. It's double. Max loss $100,000 from the 200 level.
From the 2,000 level.
Right. Yeah. So the max loss $100,000.
Wow. So
these are big. These are big. I'm not going to do the math. I need a lot of Ethereum coins to sell a call against them.
Do it.
We'll just keep our little IBIT put spread and call it a day.
All right. While you're in that platform, pop those out so we can real time throw things out.
All right. And then Intel, I think we have a couple positions. So, all right, all symbols today, IBIT we closed, and then we put on a new one.
Yep.
So the new put spread. And Intel, we have the short 20 put and the short 24 put.
Neither one is at 50% yet. How crazy is that?
No, but do you want to move these out to July?
We need to. They're negative positions. It's the right thing to do.
Yeah. So net, these are both winners, right? We're up $112 on both of these. So we'll just close these and then fresh set of eyes sell something in July. Well, I mean, and when I say winners since we rolled them, but I think let's just.
Yeah, I'm pretty sure those are. And if we were going to sell two, I would do 21 and 20.
So, and I know I said fresh set of eyes, but we just bought back the 24 for like 3 something, which I think we had one that was kind of like synthetic covered call. But with the 13 rank, do we want to change our Intel position at all?
Well, sure. I don't mind either way. But now if we're looking at this, if you just had the naked options, which we did, so you have a synthetic covered call is actually fine for a low rank.
And here, if we had a covered call, it'd probably be the 22 or 23. If I'm selling calls against my Intel, I'd probably sell the 23.
Yeah, and then if you want to add a position for premium, that's when I wouldn't do it. That's one with a 13 rank. I'm not. I mean, so right, I know we're selling a put. I'm well aware we're selling a put. I'm not gonna. Don't email me being like, but you sold the put. But what we're doing is synthetic covered call.
Yeah, that 23 put is a synthetic covered call. Synthetic 23.
Yeah. But I kind of want to get a little additional premium. I don't mind selling the 22. 20 as well, not the 22.
Right, like the 20 as well for 75 cents. I kind of agree, because then we're getting 44 cents extrinsic value here, 75 cents here.
Yes, then you're getting over $1 in extrinsic value. Now, granted, it's 13 rank, but this is a position. It's a lot. This has been with us forever.
Intel's been with us forever, and there are plenty of stocks that have hit rock bottom, that have risen like a phoenix, and I'm holding on to Intel until it does. If I have to write it down to 0.
Do you have any idea how angry doesn't even describe how I would be if you're like, well, we're just going to take our profit, walk away, and sell it. It's up like $10 tomorrow. I'd be so irate.
Again, this, and who knows, it could go down. It could certainly go down, but I'm just going to hold on. I have just a long position that I'm going to hold on to until 50 is I'm going to get out at 50.
There you go. Intel 50, Ethereum 4,000, and then she's just going to be sitting on piles of cash. Push those Intel trades out. And then do we have anything else that's 50%?
Let me check. Okay, so we closed our Intel and then got in with the new 358 debit. If we would have put this in as one, we would have been like, we're paying a debit to roll this whole thing.
Thank the Lord you put it in as two.
Yeah, that's what you have to. You have to. You're gonna it's gonna get in your head.
Yeah.
Anything else that is let me close SPX.
Yeah, SPX is gone. No, we're not closed out of SPX.
No, I just was going to close it, so I wasn't focusing on it.
That's one of those. When you put that iron fly on, I never really expect it to close during the show. It doesn't close that quick.
No. And Archer, we're so deep in the money, that's just got to keep on going.
Yep, we should roll that though.
Sure. Close our Archer and go out to July.
Yep.
The 12 to the 12. We're taking in 53 cents.
Perfect.
And that, I'm sending that. Hopefully that fills. Archer,
Yeah.
do you have an out point in Archer or never?
Nope. Never.
Never.
I'm just kidding. I mean, I have a big position. I'll probably sell 50% of it at some point, but I don't have anything in my mind. I would say 25.
I don't know. Yeah, I don't know. Well, I mean, only $5 billion in market cap, so, you know.
I love when you assess the market cap because that means nothing.
Right. So if it goes to $10 billion in market cap, then it's, 22 instead of 11. It just doubles the price. So,
I'm well aware, but I don't know that I would get out at 22. The market cap doesn't do anything for me.
I mean, I'm just saying, like, I'm not going to get out now. There was something I was in that was like, market cap was like 300 million. I'm not going to get out of this now. This has nowhere to go but up. Like, oh yeah, I've got some of these weird positions and I don't know how I have them. PSIX, that might be one of them. Do you have this?
No, I don't.
PSIX? Is this one of those? There's some really weird things in my account where they're worth so little and I have no idea how I've gotten them.
Oh, you've got to go to Twitter. You've got to go to Twitter. Just go Twitter and go top down.
Okay, one day on the SIBO, 3 of us in the OAX went down to the infirmary and tried to weigh our heads.
Right? I mean, this is the stuff that happened on a daily basis.
I love that Frank calls it the infirmary. I guess that's what it was called.
We just called it the infirmary.
I'm pretty sure that's where, okay, so we always have computer issues, Liz and I, and when we're there, so we go to it's like the EUC or whatever their computer place, but we call it the ICU or the ECU.
I call it ECB from Crush.
I call it the ECU, like the electronic care unit. That's probably the old infirmary.
Maybe we should look up there for the infirmary. I feel like that's a good location for it.
And Mikey, and you could have come for dinner on Sunday. Oh, because I was at Great America.
Oh, yeah. Look at this. Handmade cheeseburgers, lettuce, grilled onions, mushrooms, and guac. Ooh, that looks delish.
Okay, Mikey, this looks 1 million times better than what I ate at Great America. I'll tell you that.
Corn dogs?
No, I did have a cheeseburger, but it didn't look nearly as good.
Did you play any of the carnival games? Because
every one of them.
I loved it. It was always so fun to do. Did you come home with anything?
So I'm pretty good at carnival games, but then I felt bad because it was Dance Fest, so there were all these little girls there.
Away.
So I'm really good at the game where you shoot the water at the mark.
Okay.
But you're playing against others, right? You're playing against others. So I was like, I'm a ringer. I could win this every time. But I didn't want to be taking the prize from all these little girls.
You could have been like, I won. Here's your prize.
So we did win some prizes. We're no strangers to carnival games, Liz.
Oh, my favorite is the one where the hammer. Did Logan do the hammer one where it goes up and then you get the real big stuffed animal if you can hit the top?
No, I didn't even see that there.
Oh, I have.
They had some of the games closed because of weather. Oh. That might have been a lightning strike risk.
They could have been.
So they had some games closed because of weather.
No, I can't win that, but my husband can win it every single time. The hammer one where you go like this. So I was always like, don't play it till the end because I'm not carrying that giant thing around here the entire time.
Do you know what they don't have? What they used to have? Guess your weight.
Oh my God! Guess your weight. Talk about torturing kids in the 80s.
Yeah, it was guess your weight and guess your age. So every time we wanted a prize, and if we couldn't win one at the games, my dad would be like, "I got this." We would win on guess your weight every time because he looks. He doesn't look that big, but he weighs more than he looks. So they never.
That is hysterical. You're right. Can you even imagine if you're at a carnival and somebody's like, step right up, let me guess your weight? No, thank you.
I know.
Guess your weight. That's pretty funny.
Yeah. But Mikey, this looks delicious. I should have called you.
Okay, and
Herb,
then
Herb, good to see you. Is Herb getting in on the IC that you placed for a 10% profit? What research did you base that on, Herb?
Jacob Studies.
Go to Friday. Okay, so hey, let me see. Let me see if I can find this, Herb. I'm going to go to Tasty Live. I'm going to go to On Demand because this one.
Wait, no, go to us because I had this one attached to us because we got so many emails to it. Go to the Liz and Jenny Show.
Okay, here we are.
And
it's days of the week.
The days of the week, yeah. It's got no, this wasn't the days of the week. The $10 wide Ironfly, was it?
No, but this one was the days of the week where we were like Monday double. That's what we came up with. So here, Liz and Jenny Show most days of the week. But and is it attached? I'm gonna see. Can I click on this?
Yeah.
Weekly. No, that's the weekly summary. That's not it.
Okay, but usually when we're doing these from the SIBO, they're attached.
The slide should be attached. The weekly summary.
Go back one. I do believe it was weekly summary, but nonetheless, Herb, it's these. They're all kind of springboarding off each other, and we said 10%. We've never ever based any research off 10%. Jacobs is always 25, but Jenny and I have been getting out for 10%.
But so the boys did it on a Thursday.
Like I said, it's in here. But Jenny, he's asking about the 10%. We don't have any research on the 10%. Nothing.
No, we don't. But the trade we're talking about today, days of the week for 0 DTs. It was this. I want to say it was this one where we showed this is 40 delta short sold at the open.
And Jenny, I'm not trying to stop you. This is what we did do on Friday. But Herb is asking about the Ironfly 10%. That's what his tweet is about.
Herb, there's nothing that says 10%. Liz and I are just taking this trade and we just took it off for 10%. That's all. We took this trade off for 10%. But
no. We've been doing the Ironfly, the one we put on. We just put on today. We put on the Ironfly and then we put a 10% GTC in for it.
Right. And I don't remember which study that was.
But it was from a study.
It was from a study.
You know what study it was from, Jenny? The one that said how many losses it takes to get out of it. It was that study.
I know. So I will say, whatever we do on a Wednesday at the SIBO, the boys usually take a look at it on a Thursday, and they are attached. So here, I just went to the market measures and found these slides from the days of the week study.
Yeah, but Herb, the one you're looking for is the one that says how many days does it take to recover a loss? That's where we got the Ironfly percentage from. But he wanted 25%. We just changed it to 10.
So I'm curious. So I'm just curious from this study, and I know you're talking about a different study, but this morning, this is exactly what I did. The 40 delta sold at 9 a.m., $20 wide wings Monday. Average win rate 80%, average P&L 121. And honestly, 120 is exactly what I closed it for today. Took $120 out of it this morning. Now you did the short 20 delta.
Oh yeah. But then I did the other study too. So this was 20 delta.
Did this one. You did the short 20 delta on the open. Short 20 delta on the open, $20 wide wings. And you took it off for how much?
$125.
Yeah. So that's what you did on the open. The other study.
I just don't want to confuse him because that's what he's asking about. He even gave the strikes. It's the Ironfly for 10%. It's our trade that we have in right now.
I know. I was just seeing if I can see that.
It was the one that says how many days losses. It's that one. How many losses in a row do you need to get out of it?
I know. And I just don't know exactly. I don't know exactly. Can't find that here. Oh, here. Analyzing the losing streaks.
There you go. Analyzing losing streaks.
Analyzing losing streaks. And here you can see how often did you have 2 consecutive losers, 3 consecutive losers, 4 consecutive losers.
And this is the short. This is what we were doing. $10 wide, the 50 delta. That's why it was the first one that we're doing.
And right, using 2 years. Narrow 0 DT iron condors at 9 a.m. every day with a variety of short deltas with wings $10 past the short.
Yeah, so the 50 delta is the Ironfly, and that's the one we landed on. And that's what we've been doing every day around 10 o'clock, a little bit later.
So short 50 delta, that's this. Short 50 delta, $10 wide wings. And Probability
so that was his tweet, and this is where it is, and that's where we're getting it from. I just didn't want to stop. Jenny, I know you were going down like a different rabbit hole, but I wanted to answer his question about that iron fly. That's the trade that we have in right now. We currently have in the iron fly, $10 wide, and we're trying to close it for 10%. We decided to go 10%, Herb, because we're putting it in later than 9. We're putting it in at 10. So we took our percentage down.
And I think when we looked at this, we thought, the average total loss is only $147. And that's what we've been putting this on because the drawdown is so low.
Yep. And this is exactly what we're doing. We took our percentage down because we're putting it in at 10 on the show instead of on the open at 9. But thank you, Herb. See, that's what I'm saying. The 10% profit, there's the iron fly. That's what we have in.
Yeah. $10 wide, $10 wide.
Yeah.
And the 10% profit, there had to be another.
It's totally worth it. I'm risking $140 and I'm making $80. It's great.
But I'm saying there has to be another piece, another segment where it talked about that trade, because from that, I think there was another segment maybe the week before that talked about this trade, and then he went into the probability of consecutive losses.
Yeah, possibly.
Because we wouldn't have just looked at that and said, "Oh, this is what we're doing." Because from that.
I looked at that and said, this is what I'm doing from that study because the drawdown is less. It's something that we can do in this account.
Hack the Great America web feed.
That's so funny. Did Bob on fire? Do we have earnings?
So we looked.
It's not his job.
Oh, look at Hibachi collecting $3 on a 15 Delta. Count me in. And Frank Walsh, he's sharing this from YouTube, from Fabio. Hello, Liz and Jenny. What strategy do you suggest for Adobe and Oracle earnings? So Adobe earnings later this week, or Adobe and Oracle. Let's take a look. I know we looked at Adobe. They're the 12th, and then Oracle, ORCL. Are those today? June 11th. So no, a couple days.
Still the 9th.
Honestly, I don't know what earnings strategy do we suggest. Sometimes I'm a fan of Tony Batista's earnings strategy, which is put on a trade after earnings.
I know things have been reversing though. After earnings, you'll get a big move up and it comes right back down. Or you get a big move down, it comes right back up. So we'll look at these. We'll look at the eve of earnings and not before, unless we're directional.
Yeah, there's been for me enough else to do that I haven't really been focusing on earnings trades.
Yeah, I have not either. We're almost out of time, and I do want to get to all the other tweets.
Okay. Me double checking my phone for the text from Jenny that she was at Great America, only 20 minutes away from Mikey's house. Hey, Mikey, last week on the show, I said I was going to Great America. I didn't get a text from you.
That's pretty funny. I love it, Mikey.
And Punish Pixels. Morning, ladies. I have a CL July Strangle, 53.71. Currently at 45% profit. Still has 38 days to go. Should I roll? You know what?
No. I take 45. I'll take 45 on a CL Strangle.
I would check the rank. And the rank is a 29. I'd probably just take my profits and then wait to get into August in a couple weeks. Take a break for a couple weeks.
I wouldn't even check the rank. I would say I've got 45%. I'm going to get out. And then guess what? If I wake up tomorrow and want to put another one on, I might put the same thing right back on. But I would take my 45%.
Yeah, I think I would take it off. And to Liz's point, keep an eye on it. And,
Yeah, you can get right back in.
And that's another thing I forgot. For a while, we were doing those dailies. And where, on Tuesday, we'd sell the Wednesday. And Thursday, we'd sell the Friday.
Yeah, I don't like those at all.
Well, we have a viewer who loves them, but I think
they work until they don't. I put 3 on, 3 max losses. I'm done. Tapped out.
So that we could ask Jacob to do a study, what's the probability of 3 max losses in a row in the CL weekly?
Well, I mean, I know I trade oil. I trade natural gas. I don't trade them that way. I trade them completely different. I do like the way that I trade where I'm putting the downside ratio spreads in CL and in natural gas. I don't like the non-directional in those because I think they can whip.
And natural gas right now, do you have any in right now? And are you going the 49-day or the 16-day?
I have 16-day in right now, but I'm locked and loaded. I'm all butterflied off. And then once those come off, I'll start going into the
49-day.
Yeah.
And it also does is what?
We are almost out of time. I just do downside ratio spreads. I've talked about this numerous times. I go pretty far out, downside ratio spreads. If I get a little bit of a pop, then I immediately butterfly it off, and then I just sit on them. And you open up my natural gas positions, and it's this long.
And when you're putting these in, you want to take in a credit. How wide do you usually make them?
Oh, pretty tight, like that. So I know whatever I can take. Some I like it if they're $1 wide, but if I'm not taking in a decent credit, then I don't. And I don't mind if they're just 1 tick wide. But just sometimes you got to be careful in here because the strikes are bizarre. So just because you're on top of each other doesn't mean that they're going to be symmetrical. Do you know what I mean?
Right. So
just be careful with the strikes.
In order to butterfly them off, you've got to take in enough of a credit. And what kind of credit are you usually looking for?
Like, that makes sense. I mean, that would be right around there, 50 cents. And then I would immediately put an order to butterfly it, like to buy the 3 in for 40 cents.
So that you've got it on and you've locked in a profit.
I'll lock in a 10-cent, which is a $100 credit, and then I'll leave it. But it's easy to get a butterfly if I'm not trying to take more than that off, if I'm not trying to have more of a credit than that. And then once I have that in, then I'll step it up and do another one so that if I lose on the ratio spread, it goes right into my butterfly.
Right. And now just be aware natural gas is a big product. So, you start with the naked options there, but that is a big product.
A big product. So be careful. But yeah, we're out of time, Jenny. It's 11 o'clock.
All right. Everybody have a wonderful day. Remember to trade small, trade often.
Laugh with us, learn with us, and watch Liz and Jenny show. We'll be live from the SIBO tomorrow.
See you tomorrow.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
If you missed the live show, here's our cherry on top weekly recap.
What was the last time you were up till midnight? I was up past midnight. When? So
No, my son doesn't get done with working at the DQ until almost 11-ish, so I make it to midnight. Weeknights.
Do you?
Yeah.
Okay, how about you? That's why you're such a bitch in the morning.
Gentlemen, I want to open up playing a little game called Guess the Price of an Electric Vehicle in China. I want to see how good you guys can
Let's do it.
I have to full disclosure, I have to abstain.
You know it.
Because I read your tweet. So I'm.
Oh, I did not read your tweet because I removed you from social media. So I have you are nowhere to be found.
He has concierge level on the, for
American, yes, yes.
Flying American. He just 2 minutes ago sent me a text message, and here's what he says. Concierge level is gangster. Sushi for breakfast and champagne. The good stuff. French omelets and caviar. Enjoy your prison food.
Wow.
Is that a haiku? That was really nice. That was really good.
Oh, you should have been here the last couple of days. I bought a pie from Costco.
Which one?
Cherry.
Really?
I like cherry pie.
I love cherry pie. Blueberry's my go-to. You wouldn't know that because you do bring me cherry, but I appreciate either one.
Cherry pie's good. It's kind of childish.
You prefer apple?
You're childish. I played golf yesterday.
Yeah, I know. Yeah. Can you please give me $20? Yo, Steve, I came in to collect. I said, how'd it go? He said, collectively, we were all horrible. He said, I think we averaged 150 each.
I shot like in the mid-80s.
Get the full scoop by checking out the archives at tastylive.com.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank. rank, and more tools. Tasty Trade. Download today. Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade. Make your move.
Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batiste. I got my man, Mikey Butler, and, of course, Mr. Ryan Grace in the house with us today. And if you want to come join us, hop over to YouTube, type in Tasty Live, come to our channel, give us a like, and subscribe to our videos because it helps us immensely. But more importantly, just come chat with us live because we'll be taking questions throughout the show, whatever you got questions on, from strategies, concepts, trade ideas, trade management, whatever. Just come in with us for the next hour of the day. My favorite hour of the day, I get to spend it with my buddies, Mike and Ryan. Ryan, good morning. How are you, sir?
Good morning. It's good to be back, guys. It's been a little while. I think last time I was on the show was like May 19th. I'm updating the slides like, oh, these prices are a bit different. So we've got a lot to talk through. I'm doing well. How are you guys doing? Good weekends?
Good, yeah. Yes. This is our last weekend before we're in DC next weekend. So if anybody wants to sign up, tastylive.com/events. Get on the list. Come out and see us. Hang with us. If you got suggestions for us. Are you going to be there the whole weekend or are you coming back?
I'm going to be there most of the time. I'm coming back on Friday with Katie. Okay. We will be there Wednesday through Friday.
Beautiful.
Lovely.
Thursday night show. Looking forward to it.
Yes. Yeah, just a few days away, June 12th.
Yes.
Sign up if you want to go. Yeah, it's going to be great. First show.
With the jitters out.
Looked at everyone's slides. It's going to be just a banger of a show.
Yes.
Lots of visuals, lots of colors.
I'm still working on my slides, guys. I'm sorry.
Please. It's okay.
It'll be fine.
You'll be fine.
But yeah, it's going to be great. And if you can't meet us in DC, we're also traveling around the rest of the year, Seattle, Dallas, and San Diego.
Yeah. But this is the only one you'll get to see the very esteemed Mr. Ryan Grace.
Yes.
So if you are anywhere near and you got to shake this man's hand, you come hang out with us.
Yeah.
Oh, that's nice of you. I wanted to go to all the other shows. I'm not allowed.
Yeah.
My wife won't let me.
And don't upset her.
No. Please. The reason being we are having a son. So
congrats.
I can't just take off and hit the road, unfortunately.
Yeah. Are you going to name him Tom after the creator?
Oh, yeah, obviously.
Yes. It has to be. He will be indebted to the Tasty. Like, he will be a future Tasty trader. Maybe he'll do it with Vinny, my little brother.
Yeah.
Occasionally.
Totally will be a
Vinny
Tasty
trader. He'll be
trader.
like an old guy by the time he's, he'll be like one of us.
Yeah. I was just going to ask, like parents play like classical music, around the baby in the womb, but like, are you playing what is Bitcoin? Like, are you going down that route? Just like,
not even Bitcoin, market measures from 2015.
Yes.
All right, this kid's going to come out of the womb selling volatility.
Yeah. It's going to be fantastic.
Unreal. Yeah, good stuff. So yes, it's going to be a grand old time. So join us in a few days in DC if you can. Everything's flat except Bitcoin mooning. What's going on here?
I have not seen anything that's driving the price higher specifically here today. I think again we're in an environment, as we've talked about ad nauseum, that is bullish for crypto over the next few months. You probably have a 6-month period ahead of you. When you look at the implied range from the volatility or the volatility derived ranges that we look at, one standard deviation based on the implied vol. We calculate this for all sorts of different assets, right? This is not uncharacteristic, what we're seeing. Really kind of just range-bound trading here, chopping around, a little bit of a quiet weekend. Maybe there's some positivity on one front or the other. I really honestly haven't seen anything. But you're trading back towards the top of that range. Right now, that's about, when you look at where realized prices have been, it's closer to 110. Your implied range on a weekly basis is going to be closer to 114. Downside there has been 98, 99, 100, creeping higher here. So again, nothing that's uncharacteristic of how Bitcoin has traded, but it is nice to start the week after a bit of a quiet weekend, and you've got a couple $1,000s in a pop here. We know how quickly that can get slammed back down. Not seeing this show up as much in other areas. You're seeing a little bit of a bounce in some places. We'll talk through that in just a second when we look at a performance dashboard. But again, feels good, right?
It certainly does, and I think you hit it on the head there. That there's, this is. There's nothing driving this no news story specifically driving this price. I think when you look at markets as a whole, it's been a chop fest. And even in Bitcoin and in crypto specifically, we've been pretty range bound. I know it's at the higher end of the range, but it's been chopping around recently. And you've seen the same thing in markets. I think on Tuesday of last week, it was our tightest range. It was like a 27-point range on the E-minis that we've had since October of last year. And I think that's kind of across the board in markets. Bitcoin's ranges seem to be wider, or the numbers are bigger, but we've stayed relatively contained, between 100 and 110 for 2 or 3 weeks now. So I think it's kind of across the board in all markets, kind of waiting for the next shoe to drop, whether it's an upside or downside move. At least that's what it's felt like to me. Quick little market update with E-minis, only up 2. They've had a 27-point intraday range, been one of the tighter sessions going back to last week, Tuesday, which I think was the tightest since October. We'll see if that one, I think that was 28 points, so maybe we come inside that today. NASDAQ up 33, you got the Dow down 70, and the Russell up 12. So the Russell actually the strongest of the group here. Bonds a little bit higher. They were weaker this morning, but they are at the lows here, just off the lows. Volatility coming in significantly, /VX 1835. You got VIX futures at 17 and change. Maybe we get a 16 handle today. I don't know, pretty wild to see volatility coming in just so much over the last couple weeks here. Gold up $4. You have silver getting to new highs here, up 63 cents, up a little over 1 3/4% here. Bitcoin 3,600 on the future, spot up 1,800. It's been very strong, but low vol, choppy market, a relatively low volume market. I was highlighting that with my dad on Friday. We only trade about 1 million E-mini contracts on a day, which was bookended by employment numbers and the Trump-Elon kerfuffle. You would expect to see a little bit more volume. It definitely seems like it's the summer low volume, summer doldrum.
At least for now, yeah. I mean, when you look at expectations for interest rate cut on hold here for June, you have a couple economic data points that maybe matter, right? You've got some inflation data, you've got retail sales coming up, but relatively quiet week. In general, I think it's a market where, when I look at Bitcoin specifically, you can still feel pretty comfortable, pretty confident in buying the dip. You're going to get dips. We know that throughout bull markets in Bitcoin, historically, we've seen 25 to 30% corrections. We got one of those in April. If you bought the dip, you've been rewarded. You want to take some profits, I think. You want to be prudent in your approach to managing risk here. But it's one, again, where you can come in and likely on some of that volatility, regardless of what induces that volatility, right? To think that a spat between President Trump and Elon Musk is going to really determine or matter for the price of Bitcoin, that's insane.
Yeah.
But you had a really nice opportunity to buy around 101, 100K in Bitcoin. You had nice dips in other assets as well in the crypto space because of that. For whatever reason, right? It does not matter to the price of Bitcoin, but it introduced some volatility very short term into the market. I think you still want to look for and take advantage of those opportunities. Don't let that shake you out in any way, in my opinion. And it's, again, going to remain an environment in which I believe that you can do that for hopefully the next couple of quarters, at least the way that kind of forward projections are looking right now. This is coming out of that point in time where, remember, it was, there's a recession that's imminent and the end of global trade as we know it, right? Well, that wasn't necessarily true. And maybe those things do happen in the future. But when I look out the next 3 months, 6 months, I think, at least for right now, and this could certainly change, you're still in an environment where you want to buy the dip in assets. You want to buy the dip in Bitcoin. You don't want to chase the highs necessarily, plus 6,000 here in the S&P. And maybe some people are forced to chase, are forced in. But I think these are levels where, you kind of take a little bit of a profit if you have it. You wait for a pullback, and then you take it when you get it.
And I mean, what you're describing is the trader's market and just the market as a whole. it's good to have a little bit of a chop fest. You can't always just go V bottom. Like, it's good to have a little bit of consolidation, a little bit of choppiness, points to buy the dip, points that you can sell into highs. I mean, that's good for markets as a whole.
Yeah, I think that's still indicated by the VIX at these levels. Like we haven't really seen that volatility suppression that kind of just means up only, right? We're not. I don't have a
13
in front of me. Yeah, we're not sub 15, are we?
No. The VIX is at 17 right now, but I mean,
you're moving closer.
Yeah, we're getting there.
Yeah.
We're getting there. It's pretty wild. I've been on the opposite side of it. I've been leaning a little bit short in equities here. I'm just shocked that we haven't had any sort of.
Isn't it fascinating that you can look at the VIX chart and let's go back a decade. And when you're in these periods of very low volatility, you're hoping that you get that pop in vol. And you look at those few times where the VIX has gone plus 50. And you just had one, and everyone absolutely freaks out if it's the end of the world. And every single time, within a matter of months and sometimes even weeks, that volatility collapse is massive, and you're not necessarily back at 15 or 20 VIX, but you go 60, 50, 30. You made money very quickly if you took advantage of it, but everyone is afraid, terrified at that point in time. But every single time, it comes back down, which is just, again, I mean, we know this, right? We've done a lot of work around this. We've talked about this for years on this show. It's just amazing to see how everyone freaks out when you couldn't have a better opportunity, assuming you have some dry powder and you didn't absolutely get blown out, right? I mean, sometimes you're on the wrong side of this and those things don't work out. But if you have the flexibility to be able to enter into the market at that point in time, my God.
It's the psychology of it is very, very hard. And that's when, like, you get down moves, and that's when you start getting the texts from friends. Do I sell, this? Do I move to cash? Do I do all, but that's what that's what we play for, is that pop in volatility. We want that. And when it's gone, you miss it. I totally agree with you. It's like, those are the times where you have to have some powder dry so you can take advantage of those opportunities, whether it be equities or crypto or anything else. Volatility, that's what you need that.
Yeah. And it's always, and to piggyback off that, it's always interesting because it's always a different thing that created this collapse.
And it seems worse than
it always seems worse than before.
Yeah.
It might be a new thing. Maybe it wasn't something that had been repeated, like, COVID or, what we had with the Japanese yen. That was the quick one where it was just like
another amazing one.
Yeah. But yeah, I think when you have these pops, like, of course, there's going to be single name companies that drop and never come back. But when you look at like the E-minis and NASDAQ, like they've historically recovered every time. So you have to kind of just forget about what the story is. And like Ryan said, if you have dry powder, it's an opportunity that comes every once 5-10 years.
Yeah.
In some cases.
So. This goes to, that was clearly a call to buy the dip, or at least, lay out risk into.
Oh, I just saw the VIX chart in front of me. I had pulled it up on my screen as we were talking about it to reference a price, and I was just like, again, wow. Here we
It's
are.
unbelievable. It's unbelievable. But is there a point where we don't have V bottoms? Like, is there a time, where we just chop at lower prices?
Yeah,
or you think that it's, it's a bounce back market for the foreseeable future? Like what would lead you to believe that we chop around at some sort of lower prices?
You get pushed lower and you stay there. The uncertainty remains, right? And I don't know what that's a function of. It's probably more a war. I don't know. Let's say the United States gets pulled into a broader war, something beyond just the proxy wars that we've been fighting for some time. Anything that's going to introduce this kind of perpetual state of uncertainty, certainly you could be there. Right.
The money printer still stays on in a war.
But you do have, and that's the thing, right? You have this privilege as the global reserve currency, and it's not that other central banks can't stimulate, but you have this tool to go to in your toolbox, and we have kind of a pretty consistent, kind of reflexive narrative around that, where if you get a large enough drawdown, you'll see the authorities take action, right? The Powell put. Maybe it's at lower strikes at certain points in time, but I don't think that. if you have the ability to control certain situations from a policy standpoint, that you just sit by and like throw your hands up, right? And so we have some degree of confidence in that. The system's large enough that they can't let it fail, nor should they or would they. And so maybe that explains some of what you see. But I think it's largely just like mispricing, right? Let's go back to Liberation Day. I believe that's what it was called, right?
Yes.
Okay.
Do you feel liberated?
Yeah.
Yeah.
As free as I'll ever be. You go back to that, right? And largely what you had was offsides positioning. You had, if you look at crypto and other markets, I mean, they were trading pretty poorly going all the way back to February. The economic data was starting to slow down. We were talking about a bit of a growth scare, months in advance of whatever President Trump was going to do. Now, when he came out and put that big ass flashcard up there or whatever with all those reciprocal tariff rates, that caught everybody off guard because it was worse than what the market had priced in terms of the worst case scenario. So everybody's offsides from a positioning perspective, has to sell. Volatility begets volatility. You have to take positions down and then you have to hedge. And we absolutely blow out. But then you get the V bottom because you went to levels that, well, the last time you were there was COVID and we shut down the global economy because of the uncertainty around a virus, an epidemic. And then the prior time, I believe, was the great financial crisis, the uncertainty around that, right?
In terms of volatility, you're talking.
Yes.
There was a high of volatility.
And so I think the reason you've come down so quickly is that, information is disseminated very rapidly in the market. And pretty, almost instantly, we came to the realization collectively that this isn't that.
Yeah.
And so while there is uncertainty and it's going to introduce friction and volatility around global trade and it might still have repercussions in the future, it's not COVID, right? And presumably we would come to some conclusion where there are some agreements in place and you have discussions and people are coming to the table. I mean, we're seeing this here today between the US and China.
Yeah.
And so I think that explains, the rapid V bottoms, but in an environment where obviously you have more uncertainty because it's a little bit more serious than what that was at the time. These are things that can very quickly be reversed if it's self-induced versus, let's say there was some sort of attack in America or something like that, right? Right. Worst case scenario sort of thing versus like, well, yeah, Trump could come out tomorrow and just decide that wasn't the case.
Yeah.
So I think that, again, explains obviously why you see a quick recovery.
I think the speed of news is one aspect, and also just the access that we have to markets has made the vol crush happens so much quicker, right? Like, could you imagine any of these sort of events happening, 15 years ago when it was much harder to have, where you didn't have really phone apps or whatever? That volatility, I imagine, would have sustained because, it's harder to get in and trade.
Yeah.
Whereas now you have it at your fingertips, and everybody's like, oh yeah, it's cheaper today than yesterday. What's changed? I'm buying the dip.
Yeah, I think you do have that force that can suppress volatility or come in and sell it. Yeah. Absolutely. There's more participation in that case, and kind of get this scenario where the tail wags the dog, as they like to say.
Yeah.
Yeah, I think, there's a massive speed boost in terms of how the markets move now versus 10 years ago. But also, I think when you think about this one specifically, it was tariffs that impacted the Mag 7 stocks. And a lot of the Mag 7 stocks were near highs, and you saw them just tank. That brings down the rest of the market. But then again, after a couple of weeks, you're like, oh, Apple, Microsoft, NVIDIA, all these stocks are at multi-year lows now. Might as well buy it. Like that, it was a very quick shift in that sentiment. And there's still plenty of uncertainty, which is the most wild part to me.
You'll have bubbles and you'll have catalysts that pop the bubbles, but I just have a tough time not seeing how, in a currency or in global currencies that are debased over time, asset prices in those currencies don't kind of trend higher. You're going to get volatility in between. But unless, we have capitalism in the United States, right? We have some of the most innovative companies in the United States. And so unless you were to see the population get wiped out, I don't understand really what would take this down to levels where you would just stay there, right? Things should trend higher. It doesn't mean that your consumer price inflation doesn't trend higher as well, hence why you want to own assets as a hedge against that. Bitcoin being a great asset, in my opinion, to own. But I think that's what you generally will see is a trend higher as we have historically with volatility.
Wonderful.
Craziness.
What else do you guys want to talk about today?
Yeah, then let's get into what we got. Some Bitcoin slides?
Yeah, for sure. If you want to join us on the YouTube channel, we are streaming live. Just pop over to Tasty Live. You can throw in your trade ideas, questions along the right-hand side chat. If you have any crypto-specific stuff, just shout us a little note. Type in @TastyLive, and we'll be able to see it very easily. So, why don't we take a look at the crypto markets, see what's moving here.
Let's do it. Quick Bitcoin update here. We got our performance dashboard. So we'll run through all of the tokens that we track here that are available to trade through the Tasty Trade brokerage.
And you send this out.
We do.
On Saturdays, tastycrypto.com. So
thank you for that.
For the newsletter. We'll post it in the chat as well. So you can get this even before we show it on air. And you can front run us.
That's right.
As the kids would say.
You
can dump on us.
Yeah, sometimes those daily signals do, there could be a little bit of noise, but a lot of this does work out pretty well, or at least in my opinion, in my experience, it has historically. I don't know if that always will be the case in the future, but I use this personally, and you're going to see that this will inform some of the trades that we'll place now on the follow page. We got that working. Thank you.
Yes, we have that going. If you look at Brian on the follow page, you'll see some trading in crypto. It's going to be just buying and selling because that's really all you can do in crypto. The sizing is a little funky. We'll be working on that. It shows everything as 100.
Yeah.
So, Ryan's not out here buying 100 Bitcoin. If he was
only buying 5, no.
Yeah, he's only got 5. Yeah.
No. Only buying very small amounts at a time. But we'll put that in the comments too. Like I think I bought a quarter of an ETH as a trade last week.
Yes. Great.
So we'll show that. But yeah, you can see these and more on the page there. And we'll try to place some options trades too, some stuff in ETH-A, in IBIT. Every once in a while we'll get wild. Maybe there'll be a modular reactor, nuclear energy company
CCJ
that we get into, a little uranium. Yeah. So I go everywhere, but for the purposes of what we're doing, trying to mostly stick to crypto.
Cool.
But you can get this on Saturday mornings, Tasty Crypto email newsletter called Next to Orange, and then we send out our market update on Wednesday. Get them both. Sign up for it over at tastycrypto.com. There's an email sign-up box there. Join the club, I guess.
Support the team.
Yeah.
Working hard.
So thank you guys for that. But yeah, we'll put this together. Let's see where we are right now. Bitcoin's 108, so slightly higher, climbing a bit. 107.7. It's been a good week, good month, good past couple of months. If you look at that on a rolling basis, year to date, Bitcoin's done pretty well, up 15%. One thing I will note is that as of recently, we've seen a little bit of a pause in that bullishness. We'll see if it changes here given the move today. But after we pulled back again from new all-time highs, you got momentum that triggered neutral for both Bitcoin and ETH across the board. What I will note about ETH, though, is that the difference here is ETH is coming out of a bearish period of momentum and is transitioning into kind of a sideways neutral environment that could then go bullish, which...
in a 100-point range for...
Yeah. You break out of that, that is a signal. So if we very quickly see that the moving averages cross over almost instantaneously, sequentially here, we go from neutral to bullish, then I typically want to just jump on that train. The opposite is true as well. Get out of the way if we're bullish and very quickly we see that kind of transition to neutral and then into a bearish trading environment. But really kind of sideways, as you mentioned, Nick, with ETH, Bitcoin. I think that the trend structurally here is still in place, but should just note that the signals are what they are. These are exponential moving average crossovers, and have recently triggered. As of last week, have triggered neutral on the daily. Solana hasn't traded very well versus Bitcoin or ETH. We'll talk about that in a second. And the rest of the alts that we'll track here, this weekend's email was, the subject line was trashy alts. So the theme that I've called out over really, I think the last couple of months, it's been kind of, stick with Bitcoin until you get the signals in the market that you want to rotate. Haven't really seen much. Doesn't mean that you aren't going to get a ripper here and there, right? We've seen that with a handful of these that we trade, Aave being one of them. But for the most part, I think, again, it remains an environment in which you kind of want to stick with what's working, and Bitcoin's been working versus on a relative basis versus just about everything else. You can see that year to date versus Bitcoin, that outperformance for now has only really widened. Bitcoin's up 15% year to date, ETH's down 40% or so versus it.
You think that's because volatility in the space overall is so low? Like it's almost, in markets when volatility is high, everybody's looking for like the junky stuff to buy that goes up 10, 20, 50% every day. And when you get into low volatility markets, it's more of like a passive, indexing, that sort of thing is when is like the low volatility period. Do you think that because volatility in the space is relatively low, that people are just kind of saying, you know what, I'm just going to own Bitcoin as opposed to try and, make 10%, 20% in some random token in a Doge, just kind of parking money as opposed to trying to speculate on the higher beta stuff? Yeah, I think there's been, certainly that upside volatility that induces FOMO. You haven't seen much of that, right? The last time that we really saw that, I think, was kind of pump.fun on Solana. You saw the launch of all these meme coins. You saw these AI agents, and you go back to the beginning of this year, really end of last year. You haven't seen that. Doesn't mean that you won't at some point, but Bitcoin has a story. It has a narrative here, and it also has ETFs. It has big ass flows, as I like to say. So to your point, that new money that's coming in, it's not going into Litecoin or I'll pick on something else here. It's not going into Aptos or Chainlink. It might at some point, but mostly it's going into Bitcoin. That narrative of sovereign wealth funds and large institutions, countries, right, accumulating Bitcoin. It's not accumulating Dogecoin or even ETH. Now, there's a lot that's being built on ETH and being built on Solana and other similar blockchains. But the narrative today has been there's a race to accumulate Bitcoin. There's a competition to accumulate Bitcoin. Michael Saylor is out there pumping Bitcoin. He's not pumping everything else, right? So the pump is around Bitcoin today. That may change. As it continues to outperform on a relative basis, there's still reason to chase that performance versus something that just hasn't done that well. Again, if you get to a point in the cycle where, let's say, economic growth picks up further, we get lower interest rates, we possibly even get to a state, and the path to get there is probably pretty volatile, but we get to a state where you have monetization of debt again, you have open market operations, you have the Fed quote unquote printing money. That's when, at that point in the cycle, this stuff just absolutely rips. And I think we'll get there. But here today, if I'm looking at where are the trading opportunities, where's my attention? It's largely on just trying to accumulate more BTC, taking advantage of the trading ranges in there versus, all right, let me try to bid the bottom of Doge and hope that it doubles in price at some point in time. It might, but you might wait 3 to 6 months for that to happen. I don't know. What has been working has been that Bitcoin trend kind of just grinding higher. And you might need to get to a point where Bitcoin market cap dominance is 70% and Bitcoin's at 150 before everybody says, hey, let's take some profits here and rotate into some of this other stuff. But largely that's been this flow into Bitcoin from big money institutions that has been, for one reason or another, really the only place that we've seen some outperformance. Has it been that positive inflows? Absolutely. Yeah. I mean, as of recently, you go back last month, you saw some of the biggest days and weeks that you've seen since the ETF's launch and certainly since the beginning of this year. I was at a couple of conferences recently, one being the CoinDesk Consensus Conference in Toronto. And you spoke at it too. I talked for a second at StableCon in New York, not at Consensus. Okay. But at Consensus, and StableCon as well, really two themes: Bitcoin and stablecoins. And on the Bitcoin front, you had people like Kevin O'Leary, pumping it. You had people like Eric Trump pumping it, talking about in his travels around the world, all of the very wealthy people and the heads of state, et cetera, that he meets with. Everybody's trying to accumulate Bitcoin. Whether that's true or not, this is what's being said, and this is the narrative at these conferences. And you're seeing that play out. And yes, you're absolutely seeing those flows into the ETFs, and you see it here when you look at the relative performance of the asset.
So that's kind of the big takeaway here when we look at our market update. You know, on a 3-month basis, we've come out of that period of volatility. When you go back to what happened at the beginning of April, you're well off of those lows. In some cases with Bitcoin, you're trading near or at all-time highs. If we continue to jump through some of these, you'll see what I mean when I say trashy alts. Just momentum has been pretty bearish versus a couple of pockets where, you know, I want to ride that trend. In an asset where my strategy is kind of either to jump on it, hopefully you get higher prices, or you kind of stay out of the way, and maybe in some cases you short it through the derivatives market. But you don't really have a lot of opportunities for, you know, volatility views outside of the ETFs or ways to structure neutral strategies. You want to then pick your spots that are going to outperform on a relative basis, and that again has been Bitcoin. You'll see that as we go through here. So a few more of the tokens that we added recently on the slide up here. But yeah, a lot of red versus what we just saw, you know, on the first slide. That said, if we jump to the next one here and we dig into that relative performance a little bit more, Bitcoin market cap dominance is at right around 65. So momentum is positive in there for Bitcoin's market cap versus the rest of the space. ETH BTC, we did get that pop. Looked like maybe we'd get a breakout, but has kind of traded sideways since then. So we'll keep a close eye on it. But again, no signal there that says, okay, that trend, that trashy trend has shifted. And that underperformance with Solana is pretty prevalent here. Underperforming Bitcoin, underperforming ETH, Doge as a proxy for what is all the crazy shit doing is underperforming as well, right? We know that can change, but for now, it's been Bitcoin over everything. Jump to the next one here, and we've got our expected moves. So for anybody that uses these for trading or just kind of to observe, you know, where we are in the market, one thing I think is important to call out, how low volatility is. You saw that with the realized vol on a 30-day basis for most of the tokens. It's very, very low relative to where it can trade or has traded. And you see that here when we look at implieds for Bitcoin and ETH. Implieds for ETH a little bit higher, naturally. But Bitcoin's implied volatility has traded near zero as of the last couple of weeks when we look at that IV rank. So realized vol for Bitcoin, 30%. Implied volatility, there is a little bit of a premium in there in the options, but the options themselves are historically cheap. I think there's a trade idea here. Doesn't mean that it'll work, clearly, but it's as cheap as it's really been in some time to buy that upside tail in IBIT.
Yeah.
So I own 90s, 80s, 70s.
You're going as a gamma play, as a move play.
Yes, I'm looking for that volatility expansion. You might not necessarily get that delta move. You do need some of the delta move, as you guys know. But I'm looking for vol to very quickly, as it can, go back to 60% IV versus 40% IV in Bitcoin.
And that typically comes with the up move. Just to explain what he's doing with these like out of the money leap type trades, because I imagine you're adding some duration here.
Yeah, I'm not doing this on a weekly basis. This is going to be 6 months out, 12 months out. You want to sit out there where you give yourself some time. If I'm saying, look, I think that you might have a couple of quarters of decent kind of support here, doesn't mean that the price necessarily goes higher, but conditions might be right, then I want that time on my side.
Yeah.
Right. I don't want something that happens in November to actually happen. I was right, but you don't make any money.
Yes.
And so I've structured that in that way. What you have to also know is that we're looking at a 30-day volatility. It's annualized, or the implied volatility, right? So that's not going to be on a per strike basis. So these strikes that are 80, 90, I'll have to take a look.
Higher volatility.
Yeah, it might be a 50% vol, but those same strikes, your trade is, the idea is that if you do get that move in Bitcoin. It
goes to 100.
Yeah.
200.
It goes up a lot more than where it is here today. On the basis of Bitcoin implied vol, that smooth 30-day VIX style calculation going from 40 to 50 or 60, then maybe those 90s, which will be predicated on a delta move, but maybe those 90s are 80, 90 vol, and they're 50-ish right now, 60-ish right now. So that's the trade idea. You're not looking for like a $300,000 Bitcoin price.
No.
You're just looking for a very cheap vol to get expensive.
And what I was going to mention, because that's a huge part of the trade, is that you could see those options, 25, 50% on a relatively small move in Bitcoin just based on the volatility. I mean, you're playing for a little bit of an up move, or even if a big up move came, that would obviously be beneficial for you. But it's really the change in volatility and that gamma exposure that you have to the upside. Volatility expands, that options relative size gets bigger, and if you get that with a delta move too, it's a convex risk profile.
And I think you want to own that, right? You're going to fight the time decay. Try to find ways to offset it. You can sell short-term options that are also, on that basis, relatively expensive. Yeah. You can find opportunities to reduce your cost basis, as we teach on this show. But I think you want to own that convexity. I'll put it this way, guys. I'm sure as hell not selling 90 call or 90 strike calls in IBIT with 6 months to go. No chance.
Yeah, because yes,
come on.
You don't want that volatility exposure on the up.
That to me is, you might get paid. You might be right for weeks, if not months on end, and then boom.
Yeah, the tail risk.
That is the pennies in front of the proverbial steamroller.
Yeah.
And these products move like volatility products in the sense that like all you really need is if you got a 10-point move in IBIT to the upside in a short time frame, you will get that vol pop and you will get that gamma move in these options. And let's say you're long IBIT shares, instead of having this short call on now, if you're trying to sell calls and reduce basis, you wait for those moves, and then you can literally go to the July or August and sell the furthest out of the money strike available, which is like these 120s right now are trading for 15 cents. If you get that move, a 10-point move in IBIT in a week, those options will be trading for $1 or more. And then you can sell that option. And even if you get there, you'll be fine because Bitcoin would have doubled if that happens. So.
And these are super liquid too. I want to just dispel that notion, that argument that there's no liquidity here.
That's only Tom. That has
like I'm looking.
He didn't get filled one time on it, and so it's now been banished.
These are very, very liquid options. I don't know if they can get more liquid.
They're 5 cents wide, but you can trade them all day long. I mean, the shares, from a shares perspective, it's traded 25 million shares today. It's been a couple hours. I mean,
there's been many times where we've been on this show and IBIT's share volume was greater than SPY and the Qs combined.
Oh yeah.
So I mean, it's definitely here, and it is the product you want to be trading if you are just looking to trade spot Bitcoin price in a cheap way with options. So you can literally do whatever you want in there.
Yeah. The longer dated calls give you the tradability of even shorting IBIT into those pops.
Yeah, absolutely.
Like short stock, long convexity, you have this kind of interesting trade possibility if you do get that delta move, a way of locking in some of the profits while still being long volatility into that sort of up move.
Yeah, and it's not super capital efficient. If you have the capital in your account and you own spot crypto, ETH, Bitcoin, whatever it might be, to your point, you get that move, you can lay out some of that premium against it when you do get that volatility pop, as you're saying.
Yep. Fantastic. I will put this on. I know you have a couple more things that we'll go through.
Oh, this is it. The rest is just correlation, still somewhat positively correlated to equities, a little bit more correlated recently given the bond market volatility, so a little bit of correlation to bonds. But yeah, let's go wherever you want, Nick.
I want to go here because we had the Circle IPO, and I see some people in the chat mentioning the Circle IPO, which is a stablecoin issuer, and the IPO, we were talking about it before the show started. It's 5x from what they priced it at a week ago. You have other speculation. I saw some tweets about XRP, the actual company behind XRP, the other half of the situation being a potential candidate for IPO. You have Tether that's been thrown around as a potential IPO. It's sort of reminiscent of the SPAC craze in the Chamath era of just kind of the IPOing, the dumping on retail. Do you feel? Does that feel any way to you?
I don't think so. I can't speak to the valuation of Circle. I haven't looked at its fundamentals. I haven't looked at the S1. I don't know a ton about the business.
But just like the fact that all of them are kind of coming into play now.
Not necessarily. I do think some things come back to reality. Naturally, you see this with any IPO. We've seen this with other crypto companies, and then we've seen it with companies that have nothing to do with crypto. I think what this kind of reflects is you have a sea change here in the United States, and as a result, to some extent, globally, if you think about global regulatory harmony. With this administration being as pro-crypto as it is, and the prior administration being presumably, seemingly, I should say, as anti-crypto as it came off. I mean, certainly the SEC
Pendulum
was
swing has been
weaponized,
about
right?
as wide as possible.
Going from an environment where participation was just constrained. So you have all of these companies that are growing, you have this global market that's evolving, and yet in the United States, you had Coinbase. Robinhood is a publicly traded company, has a pretty strong crypto business.
A couple of the miners.
Crypto miners. You have a couple ETFs that package some of that together.
Yeah.
You got the ETF in January of 24. But there's just not a lot of ways for large institutional participants to get capital into this space and diversify away from just the underlying asset being Bitcoin itself, right? There weren't many businesses to invest in. A lot of these were trading at different valuations in the secondary market, but in the public market, not a lot of opportunities. And so I think with Circle just being that one that came about recently, if we were to have seen 5 to 10 different companies go public all of a sudden, I don't necessarily think you see the exact reaction in the price that you're seeing in Circle here. And a lot of times there's that FOMO, right? And we know that there's a little bit of that gamma squeeze. Not that there's options here, but more of, I guess, just kind of squeeze conditions. Everybody's chasing this, right?
Liquidity of like excess liquidity.
Yes.
On one side.
I don't know what the float looks like, but
it's low.
There will be an unlock at some point, and insiders are going to be able to sell. And so this stuff then moderates.
Yeah.
But I think it's more so, I don't think it's like, oh, okay, this is what we saw previously with SPACs. It could evolve into that if everybody starts to add some crypto component, or you see a lot more of, hey, let's put Bitcoin on our balance sheet. That doesn't necessarily have anything to do with companies going public, but I think that you could get to kind of those kind of conditions in the market. I think this just simply reflects the fact that capital has been constrained, one, but two, the perceived opportunity around the regulatory shift and the tidal wave of stablecoin adoption that's coming. So back to New York City, stablecoin, I can confidently say that there are a lot of financial institutions and many different players in this space that are very interested in this. Doesn't mean they're going to participate immediately, but pending legislation in the United States that creates a framework for this and allows these large institutions to participate and others to then enter into the space as a result, you should see a very serious increase in demand, not just here in the United States, but globally. And I think that's what you're seeing in the market here, is this is the evolution and the adoption of this technology, and this is an investment in it, right? You're looking at a market cap, we talked about this before the show, stablecoin market cap, total market cap on chain right now is about 250 billion. I think it goes to $1 trillion by the end of the decade. This is just a superior payment rail versus ACH, wire, remittance payments have a lot of friction, a lot of costs associated with them. It's harder for us to see here in the United States because I can Venmo you guys.
Yeah,
but outside the US, this is really important. And so blockchain rails, US dollars, more so access to US dollars because of this technology is huge. So does that mean that Circle should be $140, $150? I don't know. But I think it's explainable.
Yeah.
I would be surprised if it didn't go up, put it that way.
Like that. I like that. You think so you talk about the technology and obviously the coins themselves, but do you think the technology and the use of the technology outpaces the increase in the price? Like, do you see as much room for the space, the value of the space to run in comparison to the technology? Because I think what you're saying is that there's a lot of room for the technology, but does price move in that same velocity?
Yes. I don't think it's a straight line, but absolutely. The total crypto market cap is $3.37 trillion according to coinmarketcap.com.
Okay.
That is tiny. So if this technology is real, which it is, it's adopted by more companies, more institutions, more people globally over, and we're not going to say overnight, but over the next 5 to 10 years, absolutely, prices follow suit. The total crypto market cap, I would not be at all surprised to see it at 10 trillion or more. Now that's inclusive of everything in the space. I'm just quoting the tokens that you can trade here, right? And so that's not including your companies that are going to be involved and other, sources of kind of market cap in that calculation. But yes, I think this is still a very small industry, a very small asset class at this stage. I think it's still very early. There will be a point at which it's saturated, and you rightly so want to take some profits. But if I look at the trajectory over a 5 to 10 year period, I still think it's early.
He's like the Kool-Aid man, just hyping me up, just
barging through the door,
like
in the
we're early.
The
and
orange
just
color,
screaming at me.
Time frame and timing is everything, though. I am, and I want to be clear, I'm describing a 5 to 10 year time frame.
Yes,
you could see a 50%. Collapse or
We've
correction
seen it multiple times.
Yes, and you will see it again. It might be off of higher prices, right?
Yeah.
Just arbitrarily 500,000 to 250,000, or 200,000 to 100,000 would just get us back to where we are today.
Yeah.
You're still going to experience those levels of volatility, but I think over time this certainly grows.
Can we talk about Ethereum just a little bit? Just in the chat, looking at Ethereum saying use case for dApp smart contracts, gaining traction. And Ethereum did have a pop. We were talking about it at its lows when it was at 1,400. It's now 1,000 points higher, and it's sustaining that. What do you think? What do you think is the future of this for the rest of the year and beyond?
Yeah, tough to say kind of how this trades short term. I know it's been left for dead at times. The narrative has shifted a multitude of times, but I think you have to look at TVL to start with, okay? So of all the chains, all the use cases, well, where are people actually building? Where is capital actually being secured? What's locked in smart contracts and on what platforms? Well, there's a lot of chains that are doing very interesting things, and some of the technology is very compelling. But Ethereum is the biggest by far. You've got to focus on that. I think institutions will. When I look at what's BlackRock going to do, or what are they doing? Who is building where?
Liquid.
It's on Ethereum. It's on layer 2s, and maybe that means that less value accrues to the layer 1 at times. I don't think it really matters. It brings in more participation, more use cases, more utility, and more value in the space. And so I think there's a lot that's positive about Ethereum. It doesn't mean that it's going to, again, go up overnight. Some of these things are more of a function of market conditions than they are, the fundamental aspect of what's being built on chain at this point in time. But institutions are building on Ethereum. I think it's going to be a platform that continues to attract the attention of those big pools of capital. I think you're going to only see, the technology through these Ethereum improvement proposals. You're only going to see it evolve, right? So there's been a lot of things that might not necessarily be familiar to everyone, but there have been a lot of updates to the chain, to the network. In terms of the price, what pulls flows into some of those ETFs, what pulls more money into this. One would be staking, ETH, ETF being one of them. Staking services being provided by other financial institutions, right? We're not anywhere there today. I think that's all coming. But yeah, I guess to answer the question, is ETH dead essentially? No, not at all. And I think you look at where are real world assets being supported, what's being built on chain. You can go to DeFi Llama just to get a sense of what I'm talking about in terms of TVL. So if I look at DeFi Llama, I've just pulled it up on my screen here. Total value locked in DeFi, 111 billion. If I look at Ethereum here, if it'll load for me, well, I can't get it to load, but I'll give you guys a quote.
61 billion?
Yeah, so, a good chunk of that, the majority of it's on ETH.
Yeah.
And that narrative can shift in a heartbeat. Mm-hmm. And you'll get a move and a squeeze in there, because we've seen it at times. We've seen it go down 50%. It can go up 50%.
That's the volatility of the space.
Yes.
Anything's possible, and it's a grand old time to be a part of.
I haven't seen the pump fund stuff running around anymore. Is that done with? I saw they were a candidate to IPO as well.
I don't know. I haven't tracked it that closely. I think it's probably slowed down a little bit from what we've seen.
Mm-hmm.
It
I saw
does.
some stat that was like basically like 80% of the wallets were negative through the last like month or something like that, like 80 or 90%. It was some crazy number where it was basically everybody was negative except for a handful.
When there can be unlimited supply of these tokens and they aren't based in anything rooted in any fundamental reality, like, well, what are they worth? Nothing. Your time and attention and whether you're having fun and maybe you put a little bit of money into that and hopefully you're not the last one in. Not surprised, but it shouldn't take away from the fact that it shows that Solana can support this type of activity, can settle these transactions. This is a use case.
Yeah.
Doesn't mean that it's a great use case of it, but who cares what tokens are being created for today? It can support this activity, which I think is interesting.
Yeah. And a couple months ago, we were talking about Solana as the new shiny thing. But now if you look at a chart, like Solana is almost reflective of what Ethereum was when it was trading near lows. I mean, Solana's come off of the lows from April, but what do you think? What do you make of the kind of the inverse shift we've seen where Ethereum had a huge pop, Solana's kind of near the bottom still?
Oh, I've just seen these narrative shifts so many times now. We've joked about this is the 100th time that Bitcoin is dead or ETH is dead or now Solana is dead. None of it's dead. The narrative shifts quite frequently. It's very short term. These are 24/7 markets. So you live these kind of market lives, many years in a 1 year period in the traditional sense. And so things just move a lot faster. There are applications being built on all of these chains. There will be other chains and there are other chains that are emerging as the Solana killer. Tough to say whether any of that's true. I don't think there's going to be one chain to rule them all. I think you do have a multi-chain world. You have this degree of interoperability. You have different use cases on different chains. And ultimately, at some point in time, for most consumers, it isn't going to matter what chain it's on. We're just not at that stage, technically speaking. So I think you're going to see them all go up, guys. I don't know. I don't think that in 5 years, Solana is going to be 150 or that ETH is going to be 2,500. I tend to think that they're going to reach higher prices over that period of time. In some cases, Bitcoin might go up a lot, but a lot in Bitcoin's current price might be 2-3x. I don't know. Can ETH go up 10x from here? That would be amazing, right? Yeah. That gives you a $25,000 ETH price. Who knows? Can Solana go to 1,000? Sure, it's 150. Does it stay there? I have no idea, but I don't think any of them are dead. I don't think one is better than the other necessarily because they're not the same. They're not the same thing. Yeah. And you're going to find that the best chain for the use case is going to be the one that is used by those developers. And you're seeing development activity, while it can kind of ebb and flow across different chains, more and more people are building on blockchain networks. More and more institutions are investing in these companies. I think that's only going to continue for the time being. I don't think we've reached the pinnacle.
I will say I'm messing around with the Tasty Crypto app, which you can see on the right side of the platform. I wanted to give Mikey a shout out. SPX 69,000 is the top gainer for the day. If you remember when you bought it, I don't know what our bag is there.
Oh, we're bagging.
It's probably a pretty big bag that we have.
Call me Bilbo. We are bagging. No, but the narrative is real. If and when we get to 6,900, that will be the coin that is just mooning.
I agree.
I will ask you, you got any cool updates coming to the Tasty Crypto app or the space or coins on the platform or anything before we jet out of here?
We're doing some work around NFTs. I don't want to say too much, but NFTs and rewards or point systems on the app, we've been more so recently focused on the brokerage side of the operations. So while the Tasty Crypto app is out there, I encourage everybody to check it out, give us your feedback, something that we've been building for some time, and there's a bit more that we want to add to it. A lot of our focus here short term has been on the brokerage. So on that front, without giving too much away, you're going to see us continuously work on improving the experience, starting with mobile and on web. We've got some nice changes that are coming.
Buying and selling through Tasty Trade.
Through Tasty Trade, yes. That's right. So the Tasty Trade app, kind of moving away from Tasty Crypto for a second, but Tasty Trade mobile app going to continue to evolve. We've got some great updates coming to the UI, to the trading interface there that I'm excited about. We've got more coming in terms of the expansion of crypto services. So again, without giving too much away, there's more that we're working on, let's say, beyond just buying and selling. When you talk about trading, we are looking to continue to expand the list of available tokens. So we've got it at, I think, 23 here today. You're going to see us keep adding. We want to bring more product to everybody. If there's a token that you want to see traded on Tasty Trade, let us know. We'll do our best to work with Zero Hash, the third-party crypto service provider, to offer that token, line up liquidity behind it, and make that available to trade. So those are a couple things that we're working on. But if people have any feedback, up to this point, crypto was kind of left for dead in the U.S. Among institutions like ourselves for the last couple of years because you couldn't really participate given the weaponization of the SEC. Since that's all changed, we welcome any feedback, right? This has been a platform, Tasty Trade has been a platform that for a decade now has been built by users, by viewers. So let us know, please, what you would like to see. What you don't like is probably even more important. What can we fix? How can we improve? And we'll build that.
Support at tastycrypto.com. They can email you guys directly there.
Yeah, support at tastycrypto.com or any other channel that you want to hit where you provide feedback, whether that's on Twitter or on the Tasty Trade desk on the support channel there. Let us know what you think of the product, what we can improve. And again, that's what we're in the business of doing.
Fantastic.
Love it. Well, with that, it is almost noon. High noon. We got to go eat some lunch. Thanks for tuning in. If you got any further questions, you can find us on the Twitters. I'm at Trader Mikey B. Nick's at Trader Nicky Bat. Ryan is at Ryan Fred Grace. And give Tasty Crypto a follow as well. We will be on the road this week. So if you are in or around the DC area, June 12th, you can find us there. You can sign up on the tastylive.com/events tab. If you're on YouTube, I've got the Tasty Crypto newsletter pinned to the top of the chat. So go sign up for that for free. And yeah, we got plenty more content coming your way on the YouTube channel as well as tastylive.com. So stay tuned. We'll be back same time, same place, 11 a.m. Central tomorrow. Peace.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on Tasty Live.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style. and speed. FX marks the spot. Trade it on Tasty Trade.
Wolf! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Tony Bat Batista, the John Jay College of Criminal Justice. Number 69, because it's one standard deviation plus one. And you know, I'm the Bat.
John McLaurin, Wisconsin, number 2, because I'm Beth's right-hand man.
Vanetta Logan, the Indiana University. Number 3, because that's how many shots of bourbon it takes to make it through the first hour.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Well, he's more public in his mentality.
I'm a believer. I believe that the world is good.
And I know that the world is not good. That questioning yourself and questioning yourself in dialogue with someone you respect is both pleasant and sometimes extremely insightful and useful sometimes.
I got Joe in Houston. What's up?
Just want to call in and say I really appreciate everything. I started trading and learning from you guys about 6 years ago. You know, it was you guys' work and the platform that got someone like me that didn't really know anything about the market capable of really outperforming the market now for, 5 out of the last 6 years. And so I really appreciate you guys. I think of another company where I can pick up the phone and call the CEO, the trade desk, and reach somebody as quickly as I can there. So just really appreciate everything and what you're doing for guys like me out here. What you're doing is really spectacular. So really appreciate it.
Thank you, my friend.
I really appreciate it.
Very. You made my weekend, man.
Are you tired of one-size-fits-all financial services? Tasty Trade is a bespoke brokerage that tailors to the unique needs of your trading style and account size. You can trade stocks, options, futures options, and crypto all on the same platform. Find stocks that fit your criteria and analyze them with studies and drawings on our charts, or keep up on a company's events and performance with our in-platform newsfeed and fundamental data. No matter where you are, you can trade with confidence on Tasty Trade. Place trades and keep track of the markets with ease on our desktop, web browser, mobile, and tablet platforms. Having any trouble? Don't worry. We have the tools and resources to help. Check out the Tasty Trade Help Center to learn about our platform, trading concepts, strategies, and more. Forget the one-size-fits-all financial services and go with the bespoke broker that can help you grow. Learn more at tastytrade.com.
Tasty Live's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging, and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Contrarians,
I just signed up for Dough and opened a new brokerage account. Time to get trading!
Newbigard, big barbarian on Hillside. To celebrate, let's slaughter 1,000 ewes and suck the raw marrow from their bones. Oh, yeah. Why did I say 1,000 ewes? I always get caught up in the moment.
I don't even really like raw marrow. I mean, it's fine, but it's definitely not my favorite.
Hey, maybe next time when I do something cool and smart, just give me a subscription to Bob the Trader, okay?
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here. And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast. Option Trades Today. You listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bat.
We are back. It's still Monday, June 9th, 2025. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's our new Monday co-host, Glenn Freiberger. Glenn, good to see you again.
Good to see you as well, Chris. How are you? How's the weekend?
Not too bad. Something funny did happen.
Okay.
So my daughter likes to do this thing with her friends called sleep unders. It's a smart little thing that's kind of like a sleepover minus the sleep part. So the kids go to someone's house. They like play games in their pajamas. They have, snacks, food. They watch a movie, and then around 8:30 or 9 o'clock at night, the kids are picked up to actually go home and sleep. So
pretty good deal.
I go to this house, and I realize as I go inside, I don't have my phone on me, and I think, what's the worst that could happen? So when I get back to my car, 10 missed calls from my wife, missed calls from ADT, fire alarm going off in the house.
What?
Someone burned something on the stove, but I didn't have my phone with me, so ADT is only calling me.
Oh my gosh!
With my wife to turn out the alarm, so when I get home, the fire department's there.
Holy smokes! That's no
Everything
fun.
was okay.
That's because you didn't even see it was in your car. So
no, it was in my car, and it was literally like I said out loud, "Yeah, don't worry about it. What's the worst that could happen?"
But by that time, the fire department was already at your house. Oh, jeez. Is that? Do you have to pay anyone for that? Is that?
I hope not.
Okay, good. That's good.
I think we pay taxes for that.
Yeah. What was
Anyway,
it? Microwave.
yeah.
I've microwaved ramen before. Without water. Microwave ramen, no water. Bowl explodes. Saved someone 5 minutes there.
And yeah,
no fire department though. I didn't burn the microwave down, but -1 bowl.
Yeah, so I've learned that I'll always take my phone with me no matter where I go, and probably won't leave anyone alone at home again.
That's such an unfortunate lesson from that. You try and disconnect for 10 minutes to do a wholesome thing and pick up your child, and what happens? You get punished, and now you're going to be perpetually online.
Yeah. Now, and I was like, you know what? No, I won't. I'm going to give these people my undivided attention.
Right.
My kid's here. Wife is home with her parents. What's going to happen?
It begs the question: are those back in? Kind of, only in case of emergency, having that on you instead of phones are too toxic.
I'm impressed that you know what a pager is. Although I'm good for you. But you know what? We can BS here for a while, Glenn. You and I are going to be doing this together for the next few weeks, months, however long you're going to stay on air here with us. You're more than welcome to come along. But let's go to the slides here today, John, because we do have markets that are trading like it is a summer kind of Monday. It's Sino-American tea time in London right now. U.S. and Chinese trade negotiators are overseas to hammer out a potential handshake deal, according to Carolyn Levitt, the White House press secretary. The U.S. obviously wants to unclog some of these rare earth minerals that haven't been going anywhere recently. And so we're waiting for headlines around that, of course. It's leading to fairly low volume conditions today here, Glenn. When I last checked before we came on air, we were below 500,000 contracts traded on ES. Gosh, that is excruciatingly light. But before we get to the stock market, let's just get some anchoring for where we start this week, because this is somewhat of an important week for markets from the macro point of view. We do have a U.S. inflation report due out on Wednesday, and it's a week where we're not going to be hearing from Fed officials because those Fed officials are in their communications blackout window.
Right.
The two Saturdays before the Fed meeting and going into that Fed meeting on June 18th. So no one this week, no one for the first half of next week. Granted, Glenn, we've had this whole shtick here on Futures Power Hour and Overtime that if their name doesn't start with P and end in owls, the market doesn't really care what those Fed officials have to say. Sure. So I guess the big deal is that Powell won't be speaking this week or early next. But where are we anchoring our expectations ahead of this CPI report, ahead of next week's Fed meeting? We go to our trusty sponsor, CME FedWatch tool, and we see that there's basically no chance of a rate cut for next week at 3.39%. Glenn, one piece of data factoid that we like to share around here is that if you look through the available history of Fed funds futures and you look at the Fed funds futures pricing on the day of every single Fed meeting in history, going back to the late 1990s, like 1998, in fact, you'll see that the Fed has delivered a hike or cut if the market's priced for at least 55% in that direction, 100% of the time.
Interesting.
So at 96.61%, slam dunk that we're not getting a cut, right? Same thing for July right now. A lot can change, but at 82%. This is what intrigues me here, and which is what we want to watch over the next few days. Mm-hmm. The contours around a September cut. Because a September cut a week or so ago was about, well, it was a 100% chance, and there was a little bleed over it to being a 50 basis point cut. And instead, post-NFP, pre-CPI, we're looking at a 27% chance of a hold. So if this shifts forward a little bit more, one would expect a Fed rate decision, not this week, but next week, that's probably a little bit more hawkish on the margins.
Right.
And then we start to have those conversations like, will the Fed even cut rates this year?
Man.
Which is a totally different tone for the market. So that's where we start this week, Glenn. What are your thoughts here as we think about Fed cut odds? Are you surprised that the Fed hasn't cut this year so far?
I mean, surprised only from the perspective that, we went into this pricing in, 4 or 5 rate cuts this year. And as we know, we kind of went through this exercise last year of just, you only run out of so many meetings, so many chances, so many things to go right to get those cuts throughout the year. And so, yeah, that's why you have something like the September meeting increasing in importance, just because if they don't do it, then it just snowballs into a if not now, then when. And I think the crucial part here is that you don't want any sort of political posturing leaking into this. You want it to be data dependent. They've stated they're data dependent, but if we continue to have rhetoric saying Powell cut now, and the Fed not wanting to appear baited into that decision at all, I don't know how that goes away. And so hopefully they don't hang their hats on appearing to give in when the data is conducive to another cut. But definitely surprised that we're able to maintain kind of similar numbers to where we've been at over the past few months, more than that, without a cut and without any of the next tier data looking like we'd be fine with this cutting cycle. So,
yeah, there's that paradox right now that the more that Trump and people like Bill Pulte, the FHFA administrator, keep talking about Powell needing to do a cut, the less likely it is.
Right.
So if they stop talking about it, then Powell can probably do it without the perception that he's being driven by political reasons.
100%.
In any event, Glenn, we start this Monday here. We have stocks that are drifting higher. I say drift because, oh gosh, we just got to 500,000. That's pretty low. Glenn, as you spend enough time around the futures market, you see that on a typical trading day, about 1 million contracts traded by 1 p.m. Eastern is a healthy benchmark.
Okay. Not there.
So this is nowhere close. And it's kind of like we talk about it being a summer trading day,
right.
Light volume, constrained trading range. I have to double check, but I think this is the second lowest trading range that we've had since December 4th, 2024. The first lowest coming that we had here on June 4th. So nothing's really doing right now. And that's a frustrating market for people, particularly those that want to take bearish shots in the short term. 100%. I suppose it's cheap with volatility so low, but when vol's low, you have positive technical drift and you have light trading volume, it's kind of a listless market that you can't stand in front of because it's waiting for something to happen.
Exactly.
And what is going to happen, you don't know, but you kind of just got to stick with what's working for you right now. So ES here, as we start the show, or we're about actually a third of the way into it already, up by 0.18%, the NASDAQ up by 0.24%, Russell, the leader here, up by 0.78%, perhaps not coincidental as we see the long end of the curve give us a little bit lower yields. We'll get there in a little bit right now. But Glenn, what's your take here on stocks at the start of the week? Obviously, we've had a good start here to June. It's been slow, if not steady, a gentle push higher. We could be closing at some of the highest level we've seen since late February. We're closer to the all-time highs than we are to, heck, the opening levels for the month of May.
Yeah, I mean, I take it as a good sign that on such a not volatile day that we have a positive drift as opposed to, markets kind of cringing at what could come out. So I'd take that as a positive sign. But I think it also plays into the fact that just being wary of headlines, coinciding with the approach of summer, as well as what we've got on the docket. I mean, are we going to get news from any of this China trade development later today? Will it be tomorrow? We know we'll have CPI on Wednesday and some more data points coming down the pipe later in the week. So I'm not exactly expecting much for the day, but these markets and all these market participants are, waiting for those unexpected headlines is what I take of it right now. Nothing to do with kind of where we are price level wise. I feel like you got to kind of take that out of it because we would have had a bigger reaction if anyone had a reaction to where we were from a price level standpoint.
And I've had a few people tweet at me over the past few days. Trump tweeted out or said the other day that he's beginning to look for a new Fed chair. Is that going to be bad for the market? Look, Chair Powell's term ends next May. And even though Powell was appointed by Trump himself, if you're going to replace someone like the Fed chair, that's not, if you're going to do it the right way in terms of searching, you're not going to just roll out of bed and do it. Right? You're going to take some time. It's going to take months. You're going to signal publicly like this is coming. I'm not going to stick with this guy. So get ready for it and the process begins. So I don't think that's something the market's going to react negatively to, particularly because of what the Supreme Court ruled around Humphrey's executor, which was this esoteric court case decided in the 1930s, FDR versus the FTC. We've talked about it here on Overtime, as well as on The Price of Truth with Victor Jones. But basically, can the president fire independent directors within the executive branch? And the Federal Reserve chair is basically carved out. That can't be touched, according to the Supreme Court. So Powell's not being fired by Trump anytime soon. Those remarks about him looking for a new Fed chair are really more about getting ready for his retirement next May, which means there's going to be a vetting process. There's going to be Senate confirmations. It takes months. It's not worth reacting to, in my opinion. For sure. All right, I just want to clear the board on that. And likewise, why aren't stocks reacting to some of the news about what's happening in Los Angeles over the weekend? Look, I don't know what burning Waymo vehicles does, Glenn. Isn't that bad? Those are electric vehicles, right? Those are bad. That's bad for the environment.
Right.
I don't know what that does for anyone. Protests are about imagery. You're not trying to convince the police to back down. You're trying to convince the people who are watching you on TV to be sympathetic to your cause.
Right.
So why does this not matter? I mean, Los Angeles is 510 square miles. Manhattan's 23 square miles.
Yeah.
Los Angeles is a very big area. I mean, I spoke to some friends out there yesterday, what's going on? How is this impacting your day? They're like, it's not happening near us. It's not impacting anything whatsoever. And that's just not because they're privileged folks in Beverly Hills.
What do you think about the response? The act itself, maybe nothing.
I don't think we should have active Marines on the streets of American cities.
Okay.
That's a line that should not be crossed.
Yeah.
But like the market is looking at what's happening and saying, this isn't of any significant consequence right now as it stands. And I think that's also, again, what is the pricing telling you?
Mm-hmm.
Right? If this was a big deal, you would see it here more. And quite frankly, there were days in 2011, it feels like, where Occupy Wall Street had a bigger impact on what was happening in financial assets, just from that's probably anecdotal and maybe my memory's ajar, but that's kind of my sense of it as I think about why the market isn't reacting today. It's not of material consequence yet.
But even to that point, the kind of tail risk, not much there either. Otherwise, there would have been even a greater reaction. Like how bad could this get? Market saying not too much further out in duration or too severe.
Right. So the news flow that I'm paying attention to today is like what's happening in London.
Exactly.
That's the thing that we're hanging our hat on here. If you're looking at stocks that are up across the board and bonds that are trading a little bit firmer and growth commodities trading to the upside, right? Like that story is of more optimistic risk appetite in a low participation type of Monday, which I suppose is a little surprising. Is there a holiday here in the US that I'm forgetting about? Am I missing something here?
Next week.
I don't think so. But enough of the narrative here, Glenn. Let's just talk about some of the technicals and the volatility right now. We have our volatility term structure still comfortably in contango. We can head over to SIBO's website, which we like to pull up here every now and again. But if we look at the term structure of volatility, that's a volatility curve that looks fairly normal. And as you go to the back months, it's getting 22-ish, below 23. That's not bad. We see that we're above our 1 week, we're above our 1 month. Stochastics are overbought. We're peaking above the top side of the trading range. Again, we're trying to close above 6K a little bit more decisively, which we did do on Friday. This is not a market that you fade right now. If I'm trying to get bearish here, I know it's cheap, but we've been talking about this over the past week plus. If it's low volume and you're in the summer and there's positive technical drift with low vol, it's very difficult to get bearish because the market can kind of just float for a while.
Right. And so that stochastic overbought, you as more of a trend follower take that as a positive sign. Is it also possible to take that as at face value overbought? Or is it a combination of something else we're seeing as well that you would take, even if you were a contrarian, you would say, well, in context, that's kind of overruled?
I think the context is what matters. I don't think this is a great question for people who are approaching the markets technically, either from a new perspective or they're trying to incorporate it as part of their trading strategy. So there's no perfect trading strategy out there, right? There's no golden indicator, if you will. It's not like Indiana Jones and the Last Crusade. We're going to find that, right? Like you're not going to ever find that one thing that works 100% of the time. What I care about more is the characteristic of the indicator during different market conditions. And so to that end, one of the characteristics of this market in ES, as we've sustained this rally above our 1 month moving average here, 1 month EMA, this yellow line, has been that stochastics have been staying overbought for the duration of it. And so we can see those two things hand in hand. Are we still in an uptrend? Well, are stochastics overbought? Are we still above our 1 month moving average? Yes. So we're beginning to build a profile here for what this uptrend looks like. And when there are cracks in that facade, all of a sudden, like, okay, we're still above our 1 month, but stochastics have fallen out of overbought. Is this a correction? Or is this the top?
Gotcha.
Like, let's maybe watch this a little bit more. But up here, there's nothing indicating that the characteristic of the recent move has necessarily changed. So trading above the 1 week and 1 month, right? You're drifting. You don't have a sign of a turn or a loss of momentum. Even on like a 4-hour time frame, you could see that we're back to overbought. MACD is trending higher above its signal line. Vol is in the tank. You could take a cheap shot bearish, maybe buy a 0 DTE put, but as everyone here knows, as I've explained to you, Glenn, I'm a garbage scalper, so take that with a grain of salt. Because if the market does reverse, it could reverse hard on higher volume. Otherwise, though, I think it's just, for me, pressing on with long deltas and equities for the time being. There's not really much else to do here except continue to manage your risk as this market floats higher.
Interesting. So you look elsewhere. Where else are we looking?
The one thing that intrigues me, the Russell here is probably the most consequential move today, I would say, about all this.
100%.
Because unlike what happened with ESRNQ in recent weeks, where we clear the April 2nd high on a technical basis, where we clear those late March swing highs, just to quickly scan the charts here. There's your late March swing high in NQ. There it's in ES. You never really got through there in the Russell. Maybe that's because of the higher yields. But the Russell technical setup is a lot more intriguing than I think what you're seeing in ESRNQ right now. If only because we could take a number of different interpretations here, but for the sake of this conversation, let's just call this a left shoulder, head, right shoulder, your neckline around 2135, head around 1700, 400 plus points as a bottom. Russell to break out, and today tells you that the breakout may be getting started for 400 points on top of 2135. We'll call it 2500 plus between friends. So back to the highs that we saw immediately after Election Day. There's also on this 4-hour time frame here, again, after our gap open higher, the U.S.-China trade weekend negotiations in May, left shoulder, head, right shoulder, a little bit of a more shallow inverse head and shoulders pattern as we get ready to break out. But if that's also the case here, 2135 down to 1980, we'll call it 150 points. 150 points on top of 2135 brings you close to 2300, 2280. And sure enough, if we go out to 46 days, Glenn, where is the one standard deviation expected move over the typical 46 in, 21, we'll call it 45 in, 21 out. Tasty window, closest DTE is 46. Our one standard deviation move is basically at 2300.
Interesting.
So there is a technical setup that kind of lines up very neatly right now with the options pricing in the market. So looking for an inverse head and shoulders pattern to get to 2300 or so over the next few weeks. That is a bit of a call in the Russell because you're looking for 4% plus, 5% plus here in RTY. But that's just what the pattern calls for. So consistent with that, we've been talking about this for a few days. We go out to 46 days. We look at the long 23. We look at the short 2350. It's only a 21% probability of profit, but it is the head and shoulders trade. And so we're going to send it here because we need to, if we can get filled on it, there's no volume here. This is the problem with RTY.
Oh, there you go.
You see the volume here today, by the way? One trade.
Yeah.
That's me.
Hold it down.
But that's how you have to play this. So it's a cheap, it's a shot. It's not the typical tasty methodology where we're looking to sell a put spread or sell a call spread, but an inverse head and shoulders pattern here. Maybe there's room for catch-up right now. Again, China trade deal comes about or a handshake. They're going to buy more of our debt. The dollar's not displaced. Lower yields, right? Tariffs aren't going to choke off small businesses. Russell gets its pop.
So yeah, we're looking at the technical indicators, the past performance of recent weeks and months, and also on top of that, anticipating that the kind of fundamental storyline that held it back in recent weeks from performing like some of these other stock indices could be soon to be lifted, and that would take us into this kind of more convex play here with a low probability of profit, but with more upside.
That's what I'm thinking here too. And note, unlike the S&P 500 or the NASDAQ, which have seen these persistent overbought conditions, we see here today, we're now getting MACD on the other side of its buy signal on Friday with the close, and stochastics here are back to being overbought. So this has the characteristic of a strong trending market with both a short term and a little bit more of a medium term bottoming pattern in play. So I think that's, it's the line that's been crossed. We've been waiting to see what would happen in that here on Futures Power Hour in this trading range in the Russell. And I think there's resolution here. So perhaps it means underperformance for ES and NQ in the foreseeable future, Glenn, where people are allocating to some more domestic growth sensitive type things, which I suppose is worth mentioning here. We do get an update to the Atlanta Fed GDP growth tracker here today. It is now up at 3.8%. That's unchanged from June 5th, but second quarter growth trending at 3.8%.
That would be pretty big.
So we look to bonds, which had a really ugly Friday, Glenn. Such an ugly Friday that it looks us in the face with a potential evening star candlestick cluster here, which is quite an ugly topping pattern here in ZB. Vol is increasingly non-existent. It's only a 23.7 IVR in ZB. Over in the notes, the 10s, it's 20.8. What's your view on the bond market here? Because I know this kind of leans a little bit more into your neck of the woods with currencies. Have you noticed that the dollar has been following yields a little bit more closely the past few days? Kind of like it's a normal market again?
Yeah, a little bit, but that is, coming off of a lot of weeks where there was a lot more separation, a lot more action in the long end of the yield curve here, and dollar prices tending to fluctuate more with the short-term bonds and U.S. debt. And so for me, it's a tough one where there's a lot of storylines here, just kind of waiting for more of that reprieve to act like normal markets. You're seeing it, that kind of comeback in recent days in terms of the correlation, but not really seeing it in terms of price action in the bonds. So a lot more to do with the supply and demand dynamics in this bond market that are above me, and so can't really make heads or tails of it right now. What are you seeing?
Well, the Fed's not doing anything anytime soon.
Right.
Which actually I think is something that's going to keep the bond market cushioned. Because when we're in a world where we are concerned at the margins about inflation, and we're still trading above the Fed's inflation target in both CPI and PCE, then a Fed that has a looser monetary policy stance could ultimately fan inflation again. And so I think what's instructive is if we think about what happened in the bond market, we go back to the continuous contract here, $/ZN, and we look at what happened at the end of last year, in particular in September. What happened to bond prices after the Federal Reserve gave us its 50 basis point rate cut? Bond prices fell, note prices fell, yields went up. And at the time, we said this was a reflation trade. The Fed is cutting in an economy where you do have underlying strength. And so you're just going to stoke more economic activity. And so stock markets go ballistic, right? We start getting into the pricing of Donald Trump being president, lower taxes, deregulation, with the Federal Reserve that just cut rates. So yields are getting pushed higher and higher and higher. But the lesson there is that the Fed cut rates when growth and inflation were still running hotter than what they presumed at the time.
Right.
And so the market pushed yields up and bond prices down. I would posit then that a Federal that's doing the exact opposite here, that's staring in the face of potentially lower growth and not cutting, well, it means they're going to have to do more later and play catch up. If they're not cutting when the Federal Reserve sees higher inflation potential, they're going to avoid fanning the reinflation trade again. So yields aren't going to shoot to the upside. So no cuts in June and July. I think I'm treating the lows that we have for this year so far, at least in notes and ZN, as a floor of sorts, which is why for me personally, I'm still operating in the 46 DTE short iron condor position. It might be prudent for me to recenter my strikes over here because we've drifted into the lower half of that trading range. But I still see a lot of chop moving forward. And if there are opportunities to sell an iron condor near the midpoint of the yearly low high, I'm going to continue to do so because this has been a market that's, you dip down into the mid 109s, you find support, you trade higher into 111, 112, you sell off again. That's been the cadence pre-Liberation Day. It's basically been the cadence post-Liberation Day. I don't think we need to overthink it.
What would be the most likely of your assumptions to break this strategy down? What is the most likely thing that could happen that would change this in your mind, if it's possible before it happens? What do you think would go first to either make this market get out of this range to either the upside or the downside?
Let's give some combinations here. There are two levers that I'm looking at in particular. The state of the spending bill in Congress and what's going on with our trade negotiations. Let's say that because we're now more than 2/3 of the way through our 90-day pause and the only trade agreement that we've accomplished thus far, not a deal, right? There's nothing on paper, written, ratified. It's just spoken agreement, according to both the U.S. and the U.K. governments in the official postings on their respective websites. We only have an agreement with the UK, a trading partner for which we had a trading surplus with. So
not everything is solved.
No, and so let's just say, like, we get to the 90-day pause, one of two things has to happen. The pause is extended to give more time for deals to be worked out, or because the deals haven't been worked out, the Trump administration says we're turning back on the tariffs to kind of apply a little bit more pressure. One of those two things has to happen. And likewise with the spending bill in Congress, either we're going to get a lot of new debt and deficit spending that is currently in place. You know, it was there under Trump. It was there under Obama, although the deficits were shrinking under Obama. But the deficits got blown out again under Trump. They stay blown out under Biden. They're staying blown out, it looks like, under Trump, right? And a lot of the reason why they were blown out under Trump in the first place was because of COVID.
Right.
Okay. Right. TCGA did a lot in and of itself in 2018, but it was COVID and the continued COVID level spending the last few years that has put us in this place. So, you know, worst case scenario for notes and bonds. Okay, let's game that out. You get a big increase to the debt and deficit, and the trade war ignites again over the next few weeks. Notes and bonds probably get slugged again during that window where people are panicking that we're going to add another $6 trillion of debt wall. Who's going to buy the debt? If we're not trading with all these people, they're not going to have U.S. dollars to recirculate, so why would they buy our debt? Right? You get that narrative going again. The flip side is, let's say this Elon Musk-Trump feud leads to a different bill that it increases the debt and the deficit, but it's not as egregious as it was before, and you get a bunch of deals done, right? You get an agreement with China, you get something before the 90-day pause to extend the window or in good faith show that an agreements are in the pipeline so there's no reason to ratchet the tariffs back up.
Sure.
Then you can get bonds rally. So it's really those two things. And I think those two things are constantly in conflict right now, which is why for at least this next intermediate 45 and 21 day out window, which basically carries you through the end of June.
Gotcha.
We still could look for some chop, right?
So your trade duration would be trying to anticipate before any of those critical deadlines, getting flat before those?
Yes.
Okay.
And I think, volatility is low. We have to keep this in mind. If people are going to hedge, volatility is low now. And this is the time before we really get into the teeth of, oh gosh, it's 80 days into the pause. We don't have any deals. It's 81 days into, okay, pause ends in 2 days. Pause ends tomorrow.
Right.
Where are the deals? Where's the announcement about the extension? Right. So we still have some time in this before people start to get worried. But that's really the question of thematic trading, macro trading. You have to think about the time frame with which you're operating.
100%.
You could be right, but if you have the wrong entry and you miss it, then, well, you didn't make the money that you needed to make. Just as wrong.
Yeah.
So I have what I'm doing here in ZB and ZN. ZB makes me really uncomfortable because I'm trading this like a bullish falling wedge, which ultimately calls for a return back to the highs that we had here in April. Bullish engulfing bar, but then evening star candlestick cluster, morning star candlestick cluster, evening star candlestick cluster. I'm not loving.
Never seen that combination before.
No, it's a lot of false starts, but that's why today with this news of U.S. and Chinese trade negotiations going in a positive direction in London, stocks are up, bonds are up, right? That's kind of what you want to see if the market feels confident that the trade war is not going to escalate as a result of this conversation.
Fair.
Not comfortably, though, at all. Metals keep climbing.
Yeah.
Glenn, I'm not a gold bug or a metals bug by any stretch of the imagination, but this past year has been a lot of time spent swimming in the metals pool, if you will. I guess that would be lava. That sucks. Silver here is up another 2% today, a new yearly high for what it's worth, clearing out the highs that we saw from 2025 last October. We do have our triangle breakout that occurs, and it carries us up to the March 28th high, and we have carried us through there. For the longer-term traders that have been following this with us over the past few weeks and months, we've had a view that silver could potentially go back up to 40 or so. There is a potential breakout opportunity for a move up towards 43. So, Glenn, I would consider this well on its way. Vol's not that high, all things considered. If you've been trading this on the long side, I don't see a reason to not keep doing that here. Depending upon your window, though, if you were in the long 35-36 call spread, which we were talking about last week and the week before, or 36-37, 37-38, we've seen vol go up now, which is a great contemporaneous indicator with price action for the metals. We've seen those positions increase in value. It's also not a bad place to start taking some profit.
Right.
Or maybe repositioning oneself if you have a profitable trade going on. We're a little bit removed from that 1 month moving average, I would point out. That's currently sitting at $34.154. It's not that often that you see silver sitting in the neighborhood of like more than 7% away from its 1 month moving average, where the market starts to get a little bit frothy and maybe we run a little bit too far here. That's been the case over the past year. So the point is, gold silver ratio is coming really quickly here. This, up near 37. Even myself, I'm thinking that this is a good place perhaps to take some chips off the table and reassess on a pullback to say 35.50, where we had some of the highs carved out in October and again here in March on the continuous contract.
Because in your mind, is this, the reason for all these China-U.S. talks now? Do you think this is one of the first points of contention and would be one of the first, regardless of the news to come out of it, anything around these metals markets being one of the first to go and there being some room to deflate here just on any sort of resolution?
I think that's a really important point, and I'm remiss to say that I didn't bring that up myself, right? When we've seen the trade talks go poorly, the metals have run. Gold's been the leader. Silver and copper have struggled a little bit more because of the growth angle.
But now.
But if the talks are going well, silver and copper are okay. Gold tends to lag. You're seeing that a little bit here. But there also could be that moment in time where folks say, okay, we're clearly backing away from the edge and we're not even, directionally, what's our impulse? Are we escalating or are we on the path towards de-escalation? And if we're on the path towards de-escalation, do I want to hold a shiny rock or do I want to hold something that that holds the future earnings potential of, the tech sector of the global economy? And people get into equities and they get out of the metals.
So one thing you do have here, though, is, a more interesting metal market. If you do have any conviction among the metals, you've got some big price movements and a variety of them. I mean, today, platinum leading the way. Do we make anything of that? We've got silver, copper lagging behind silver, and gold behind that. You've got kind of, if you're playing metals across the board, if you think their correlation is rekindling, and that there's some unique price points there among those. Do you know anything about this platinum move? Any legs to that? Any additional color?
I will be honest. No strong opinions on platinum. It's one of those metals where, after the run up, like in my recollection in 2011, everyone was saying, okay, silver went, gold went, when's platinum going to be there? And there have been fits and starts where it's tried to rally, but it just doesn't have the same profile or usage or demand that the other precious metals do. So the fact that it's rallying certainly raises an eyebrow. Is this a moment where people are saying, geez, I just need to get whatever exposure I can to some non-fiat, and this thing is lagged behind, so it's cheaper than buying gold at $33.50 an ounce? could definitely see that being a motivating factor. Silver's only $33, $34, $35 an ounce in recent days. Certainly cheaper than gold. I'm curious what you think about gold here. I've been watching these two different patterns the past few days, either a symmetrical triangle breaking out or a potential bearish rising wedge that's been forming. I can't help but notice when we go to the, we'll call it the 4-hour time frame here, the swing level that we have on May 29th, which becomes support here in early June, is kind of holding as resistance again. Mm-hmm. That would be support. Excuse me. Usually mute it there. Thank you. That would usually be a place where, okay, this is uptrend support in the wedge. So support turn resistance. Okay, former resistance, support, back to being resistance.
Yeah, and that's what's interesting to me is I would have said it had some downward momentum, but each of those, sputtering and kind of consolidating. And so in my mind, with how popular this market's become, it's not really a surprise that this is consolidating a little bit, similar to the equity space right now. I think if it's gonna fall apart, it has a lot of room to fall apart for sure. But I think this market, for one, definitely needs a catalyst and is less susceptible to some drift, just because of the highs that we're already at. As well as, nobody's really letting go right now because probably fundamentally nothing has changed. There hasn't been a shiny new object per se. Nothing is ripping at the moment. And so I think you need a lot of conviction to get into these markets. And it's tough to paint that picture right now. You have some, like you called out in silver, some technical analysis there that could raise your conviction. But here, I mean, you've called it out, a lot of mixed signals.
Mixed signals and Klein and Vol, which if we think about how the market evolved in mid-May, right? Mid-May, volatility falls off as prices come in. And then we see here as the market has stopped rallying, volatility has been coming off the board. So if we think about the wedge now, like IVR is only 38.8. And if we are indeed fit, I mean, if we don't cross through this threshold today, if we're not really clear, let's call it now 33.60 on today's close, the wedge looks like it's in play. Stochastics are falling out of overbought. MACD just gave you a sell signal. Volatility has been trending lower. Those are the, I don't want to be long gold in that scenario. So whatever exposure I have is going to be killed, spiked. I'm not crazy comfortable about it at this point in time. Copper, likewise, we're trying to see if this is a potential range up here. I have a position on still 49 DTE, short the 505, 5-1 call spread. It appears that we've been range trading for the past 2 months now. It's June 9th, and this range begins on April 11th. So I'm taking a small position up against the recent high that we had here.
Sure.
If we can swing back down towards 4.6, 4.7, I would then flip this and do a short put spread. But that's really what I got going on with the metals. I'm trying a little bit of everything here. Right now, long gold, silver, short copper. But we'll see what happens. I think ultimately, if this all works out, copper, silver breakout, gold pulls back in, bonds, stocks will rally if this U.S.-China trade talk yields something substantive in the positive direction.
There you go.
We have 10 minutes left. We have yet to get into the portion of the show that I know you want to talk about, which is a little bit more FX. So let's skate through energy here real quick. Mm-hmm. It's an oil up, natural gas down kind of session here. Crude oil is starting to make an advance back to a place that we haven't seen since we were in peak panic during Liberation Day. My vested interest is in CLQ5, and we've been talking about this the past few days, how on a close north of 64, it's going to warrant an adjustment to the current short iron condor position that's on the board here, just because I want to recenter those strikes. If we're making our way into the upper half of the Liberation Day, April 2nd, post-April 2nd trading range, I don't want to have my short put spread so deep in the money, I suppose, and price creeping up towards my short call spread here.
Right.
So I'm watching this a little diligently here today. 71.73 would be my new short call spread strike, and then short the 58.56 put spread would be the other side of the iron condor here. Right now, it's still in that neighborhood where it's basically a 4-to-1 risk to reward, 60 to 70% probability of profit. I'm a little bit more comfortable with that than the current trade right now, which if you were to put it on today, this is in the neighborhood of, again, 65%, 3-to-1, and you're getting paid a little bit more because, well, where do we currently stand?
Yeah.
An adjustment may be coming soon, but we're at that line in the sand for me personally. I've been outlining it. We're nearly through it. I'll wait for the close. It's not looking too hot, though. The adjustment may be needed.
All right. I mean, when you pulled up what those strikes would be today, not in the worst position. But yeah, definitely want to monitor.
No, it's not terrible. It's not like I'm getting slugged here. It's just, it seems suboptimal.
Nat gas, though. What are you doing there? That one's moving.
Nat gas is still a nothing trade. We've, it's a good question. We've been watch listing this for the past few days, if only because it's been in a trading range for the past month, effectively, between 3.42 and 3.85. And so north of 385, want to look bullish. South of 342, want to look bearish. In between, we're playing the chop. I know our colleague Thomas Westwater sold the put spread recently when the market dropped down into that 3.4, 3.5 area, which kind of makes sense because if we were to extend recent support backwards on our chart, hey, resistance in November, support in January, support here in April. Yeah. So this does seem like if I could sell a put spread down here on first glance, that would be appealing. But I haven't had an opportunity to do so because I missed the late May move. So it's just, it's on the watch list. But Glenn, for someone who's perhaps new to the natural gas future space, I would remind people, one, this does not trade like any other asset.
And it moves.
Natural gas, it moves. It has its own mind. There's also a flip side to that. Like if this is the only thing I'm trading in my portfolio, I'd be really nervous. If I was a big stock or bond trader and I wanted to add a small risk-defined natural gas position in, because of how uncorrelated this market is with basically everything else, it can actually bring down the beta-weighted deltas of your portfolio. And that's the beauty of diversification, right? You want to diversify your products, your time frames, your strategies, your rationale for why you're taking the trade, so that if stuff hits the fan for a reason XYZ, at least your positions that are put on for reasons ABC are relatively insulated, or at least you hope so.
Right.
And so natural gas can do that for you, right? It does move a lot. It is wild. It may not follow technicals like other things or fundamental or the typical quant fading vol type of mindset. But for those reasons, actually, it can be a piece of the puzzle that helps traders out, and around something like a Fed meeting or non-farm payrolls or even earnings reports can flatten out your net portfolio risk, broadly speaking, which seems counterintuitive, but that's the same thing that Bitcoin does, right? Yeah. Bitcoin actually brings down your portfolio volatility if it's in there at like 3 to 4% for long-term investors.
And next
let's talk about the dollar, though.
U.S. dollar, another diversification tool, can be.
It can be, yeah.
If you're doing things right.
Talk to me about the dollar today. It feels like it's a kind of soft day here. The dollar's a little bit weaker now across the board as we made our way through the session.
It's a soft day, but it's an interesting day. Are you able to pop over to the TastyFX tab?
Yeah, let's do that.
All right.
Want
New
that load up here.
TastyFX tab in the desktop platform. Here we've got, in my mind, a much cleaner U.S. dollar picture. You're able to look at all of these granular pairs if you know the currency codes. So yeah, I mean, it's been a softer dollar day, but it's been up and down. If we pull up that euro dollar chart, if you just hop up to the trade tab up there, we got some good back and forth. Sunday open, consolidating a little bit.
Can I say, by the way?
Yeah.
The way that this chart auto scales when I zoom in and out,
money.
Very satisfying. Very satisfying.
But the ones I've been watching today have been U.S. dollar, Japanese yen primarily, and that Australian dollar, U.S. dollar. Both of those big movers on the China export data last night. If you look at the hourly, that one tells, you can just right click.
Yeah.
Or it's up in the top left where it says daily.
Yeah.
You're getting some
We
good
want
back and
the-
forth. Yeah. Here
I just wanted
today.
to point this out actually on the before we go over to the daily chart real quick. Or to the hourly chart real quick. This line here, I want to get lined up. We've had a bit of resistance sitting like 65 and a half. You can see these swing highs here in November and then here post Liberation Day.
Yeah.
So like it feels like the Aussies had a line in the sand. Sorry to interrupt you.
No, 100%. That's important context, and that's why it's one to watch today. Been trading as a proxy to Chinese equities recently, and then you also have the dollar story. So this one has been the most fluid when you talk about dollar following yields. This one definitely not just following U.S. yields, but earlier months, a lot more risk on, risk off sentiment. Australian dollar, historically more of a risk on. Now trading more with Chinese equities, one to watch with all this China trade talk development. But not to discount the overall dollar story as well, which is why you pull up a pair like dollar yen, and that one, you're getting a lot more of that historic yield play, which is broken down as we've had more of a unanimous dollar story in recent weeks. But this one, it wouldn't surprise me if we start to get more momentum in the bond market, that correlation picks up again in this market. But you're getting a really good range here, from all the way up to 145 down to 143. You're getting resistance pretty strong in recent weeks under that 143 level, and unable really to get past that 145. What was it last week on the kind of tariff court stay? This market almost got away, and then right back to the range. So. Like everything else, kind of consolidating on this Monday morning, but you get a lot more granular exposure against these in your dollar exposure, picking which currency to trade against, so you can get better exposure to this China news, or if you want to stay completely away from it, you have something like the European currencies and those non-dollar crosses. So definitely a lot of opportunity, but I think on this Monday morning, you got to have a lot of conviction in your trade decisions.
For sure.
As we await.
You mentioned the Australian. Yeah, as we wind up here, you mentioned the Australian dollar and trading with Chinese equities. Chinese equities, if you're trading the ETFs, right? 9:30 a.m. Eastern, 4 p.m. Eastern. Aussie trades all day long, effectively in spot FX. The 1 week correlation between FXI and the Aussie dollar right now is plus 0.98, near perfect.
Holy smokes.
Near perfect right now. What's next on the calendar for tomorrow? It's a light day. There's jobs data out of the UK. So if you're trading the British pound, 6B futures, or any of the pound crosses on the TastyFX platform, keep that in mind. Treasury auctions this week. Tomorrow, we're going to have a 3-year note auction. The bigger ones, the 10-year notes and the 30-year bonds are Wednesday and Thursday this week. Outside of that, though, Glenn, we'll be back later today. I'll be back for overtime. We'll see you on air again tomorrow. You're going to be on air with someone on Tasty Live now moving forward. So great to have you.
Thank you.
But with that said, we are done and dusted. Good luck trading. Up next, Dr. Jim Schultz with From Theory to Practice. See you soon.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
I'm Jim Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast. Welcome to the Monday edition of what it is that we are trying to do. Man, welcome to the Red Sox take 2 out of 3 from the Yankees in New York edition of what it is that we are trying to do. Man, we're 5 games under 500, but the season is back. It is still very, very early, and there is a lot of ball left to be played this year. So welcome to the show. I'm so glad that you are here. If you're watching over on the Tasty Live Network, I would actually bounce on over to YouTube because you can join the conversation and join the discussion and communicate with your brethren who are also watching the show. You can celebrate if you are a bull, I think. Commiserate if you are indeed a bear. And of course, you can drop whatever questions you might have for me down in the chat, and I will try to get to as many as I can here right around the second half of the show or thereabouts. So, John, go ahead and bring us into the market here. Let's take a little look at what might be going on here in the stock market. EME S&P is up 17 on the day. You've got the risk-free instrument up 72. You've got the boomers up 96. You've got the Russell 2000 futures up 20. You got the bonds up 11. You got the notes up 10. You got, let's see here. You got oil up 37 cents. You got UB40 up a couple of ticks. Man, you got the shifties are celebrating up $8. You got British pound is up. You got the euro is up. I know Chris and Glenn were slamming a little Tasty FX before this very show. We might even be slamming some Tasty FX on this program, along with some Natty Light Ice, of course, in the coming days and weeks. Got volatility futures down 50 cents. And then spot volatility, the old VIX, let's take a look at this guy, up 16 cents. So it's kind of a mixed market with, current volatility and futures volatility. Some of the volatility bros out there that trade volatility on a regular basis, and they're kind of really focusing on the curve, and they're really focusing on the level of contango, the level of backwardation, whatever it might be. They'll be trading these differences between spot volatility, futures volatility, even front month volatility, back month volatility. That's not really my cup of tea. It's not even it's not even my cup of pre-workout. It's not even my cup of protein powder, right? I mean, we could be going whey, we could be going collagen, we could be going with like a blend. It's not really any of those cups. And so I'm not really a volatility expert. Obviously, selling volatility via options, short premium, etc. That is something we do every single day, and I feel, fairly well equipped to do that. But some people trade like volatility, like right on the curve. That is not my area of expertise at all. And so this might be something that one of those bros or bro sets could help you with from the standpoint of spot volatility being up, futures volatility being down. To me, I don't know that there's very much there, but that could definitely be just a lack of skill and ability. And so market looking good. Everybody's happy. Not too much. What's silver doing today? Man, look at silver. I'll tell you what, man. I mean, I thought the Hunt brothers mailed it in. Like, I really did. Like, when I was driving down, the pickup, it was when I went to pick up the kittens a few months ago, right? I was driving down out to the boonies, straight up picked up these kittens, off the side of the road, in the boonies. I was like, I was driving down the street, saw Hunt Brothers Pizza. I was like, well, that makes some sense because silver has kind of fallen on some hard times. It makes sense. I mean, they can't be scalping these silver contracts like they used to back in the 70s, back in the 80s, like back in the heyday of the Hunt brothers. Like, man, they had it made. But then it's like, we've got to diversify. We've got to find other streams of income. Like, we've got to find a new revenue source. So when I saw the Hunt brothers pizza, it all made sense. But now, man, silver is back. It is back. Silver up 73 cents today, up to 36.87. And I'll tell you what, man. I mean, if you're not, let's look at the chart of silver. Man, look at this. That is so crazy. If you're not bazooka short silver at this point, I don't know what to tell you. Like, if you're not, like, levered to the gills short silver at this point, I don't know what to tell you. And by that, I mean, of course, I'd probably stick with maybe a one lot, smallest possible size that is available. But if you're not playing silver to the downside, I mean, gold's kind of been back and forth. Gold may go up, gold may go down, whatever. But silver, this is just crazy, man. This is super, super crazy. And so we're going to get short some silver here today on the very show because, you know, what good would my opinion be if I didn't back it up with an easily fadeable trade that you all can take the opposite of today? I mean, you could do it today. There's no reason to wait. And so for silver, we'll talk about silver here in a couple of minutes and get something new on in there. But looking at the portfolio, you know, our gold trade, it didn't make it. I think you know, this guy's gone. It's not gonna get there. We needed gold up to 33.80. It is set to expire here today with 0 DTEs left to go, and you can see it's currently marking at 0. I think it may did it not already expire? Again, I thought the metals expirations were at like 12:30 or 1 o'clock in the middle of the day. They didn't line up with the equities. They didn't line up with the end of the day like what we're kind of used to with, you know, equity options or even futures options and MES, MNQ, things like that. And so I don't even know that gold is still like a live wire. Like, I mean, we couldn't close it for anything anyway because it's marking as 0. But even if gold, like, let's say that, you know, all of a sudden all the shifties get together, like they all kind of, you know, collaborate in the subreddits that they like to frequent, and then they just buy a whole boatload of gold in the next 2 hours and send this thing up to 33.85. I still think this thing's gone and it's dead. It's not going to come back. And so the gold trade didn't work, unfortunately. But last week, so we missed SPX. We lit that stack of cash on fire. We missed GC. We lit that stack of cash on fire. Which those were my 2 trades. And then you all saved me with an Avgo expecting a butterfly at the last second that saved Christmas, completely saved Christmas, and gave us at least one winner that we could put on the board there. So thank you all very much, man. This is a team game. This is a team effort. And so, man, it's because of you all in the chat, you all giving me trade ideas, because my track record, like my batting average is kind of like Aaron Judge in the clutch. Like, it's 220, 230 maybe? I mean, sure, when the game's out of reach, he's putting them, you know, 400 feet, 450 feet, whatever. Like, when the at-bat doesn't matter, like, he might be the greatest right-handed hitter of all time. But you put him in a clutch situation? You put him with the game on the line? You put him in the playoffs? Playoffs? Do I have to gym more of you guys today? I mean, he just doesn't have it, man. So that's basically how I am with my trades. But you all, I mean, you guys are like an Abraham Toro. Like, you guys are like a Rob Refsnyder against left-handed pitching. I mean, you guys are where it's at. So anyway, I digress. Let's go ahead and let's see here. What do we want to do? So we did GC. I want to get short some silver. But the other thing I do want to talk about is Starbucks here. So I'm going to talk about Starbucks and Bank of America together. So these are a couple of long share positions that we've had on the portfolio. If you've been following the show, basically since the beginning of the year, we've kind of mixed in some more long share positions here on in the portfolio just to mix it up a little bit, just to shock the muscle. It's like, man, we've been doing the same type of progressive overload, you know, in the 6 to 12 rep range for, you know, quite some time. So let's mix it up. Let's do a little tempo stuff, maybe get some supersets in there, a couple drop sets, you know, nothing super crazy. Well, let's kind of keep the muscle guessing. And so that's what we've been doing here with Bank of America and Starbucks. But we've been treating these 2 positions specifically very differently. So Bank of America has been a long share position that I did not intend to touch at all. I just wanted to hold it, very similar to how, you know, someone that's a passive investor would just buy shares and just hold it. Now, of course, they might be adding to it. They could be dollar cost averaging. There's other things they could be doing. But this gives us some type of representation of what a passive investment over time might look like without having kind of any other strategic tools available in the toolbox. Starbucks, however, you can see our original trade price at 92.18. We're only about $1 away from being back to even on the trade from a share price standpoint. If you are a passive investor and you're considering derivatives and you're kind of open to the idea, but you don't know where to start, pay attention for the next 2, 3, no more than 13 minutes. Like no more meaning no less than 13 minutes. This might be a very useful conversation for you. With Starbucks here, we're pretty close to getting back to even on the original share purchase. However, you can see that with Bank of America, basically the same story, right? Trade price was $45.60. Mark price is $45.20. So with both of these trades, in fact, it's almost identical. We're about 1%. We're a little more than 1% with Starbucks, but, extend me a bit of latitude here. We're about 1% away from being even on the trade. With Bank of America, we have done nothing else. We've just bought the shares, and we've just sat on them. We've stuffed them in the sock drawer, and then that's that. With Starbucks, however, if you go to the activity page, I was actually taking a look at this before the show to kind of prepare our discussion. So it might be a bit more streamlined than it would usually be otherwise. But you can see that on December 27th, we bought our shares right here. Right. And then, it was only a few days. I decided to hold the shares to begin with because I was kind of waiting for a pop to sell the shares. I think we did get said pop to sell some shares. I'm sorry, not sell some shares, but sell some calls against those shares. And then that's exactly what we got. So if I grab my Diet Strawberry here, you can see on January 21st, we sold a call for 93 cents. Don't worry about the strikes and all that kind of stuff. I mean, you can go back and watch the show. You can go back and watch the January 21st show, and you'll see me talk about this for no less than 19 minutes. So you'll get the full gamut of analysis around all the moves you make here. That's one of the things I do on the show, where I make all of my moves live on the show. The only exception to that is with an expecting move butterfly that actually works, where it's just not too often, so it's not something we have to worry about on a regular basis. But in the off chance that it does work, sometimes I will take it off, off air, and then we will talk about it for many, many minutes, on the show, especially if it worked. But on January 21st, we sold the call for 93 cents. We then bought it back. It took us almost 2 months, but we bought it back for 16 cents. So right there, we just picked up, 77 cents? So we picked up 77 cents. Let's keep track of what we've been able to pick up against the long shares just by selling calls. Just by kind of utilizing the features and the things that are available to us in the derivatives market. And so right there, 77 cents. And then let's see, on March 11th, we sold another call for $1.60. On April 3rd, so less than a month later, we bought it back for 31 cents. What is that, $1.29? Man, look at this. Picked up $1.29. Okay. And then on April 29th, all of this, it all worked, but to be fair, this is all earning stuff, if I'm not mistaken. Like this is all, and even this trade right here. This was so in the Miami Dolphins teal here. These are all earnings trades, and so I don't know that it would be super fair for me to talk about these trades in terms of the impact that they've had on the overall P&L. I mean, we could include them, I guess, but I'm trying to look. Wait a second, we got an 85 call in here. Where did I? That was like part of the butterfly, I guess. Huh, interesting. And so, all right, so basically, we've only sold 2, from what I can gather. And I even looked at this before the show. This is a little bit of a train wreck. But we basically sold, we had 2 rounds, 2 tranches of short calls against the shares. The rest of this stuff, it all worked. So it's all P&L, but I want to be fair. Like, I want to be totally fair. I want to be balanced. Much like Tom's Cherry Bomb. Like Tom's Cherry Bomb, he's explaining both sides. It's not biased. It's not politically charged. Like, my man gives you an honest, open take of both sides on whatever issue he might be focused on. And for those of you that read the Cherry Bomb, you know exactly what I'm talking about. And so I'm going to do the same thing here. So everything in the teal, let's just, let's cross it out. Not unlike Tom might cross out the other side in his Cherry Bomb. So let's just cross all that out because it's not going to help us. And so right here, you can see, if we just focus on these 2, though, I mean, this is going to make enough of a point that I want to make. That looks like it's about 206? Approximately. You can never be exactly sure. And I mean, I'm no Julia Spina, so we'll put the little squiggly line for the approximation symbol. But that looks like about 206. So in other words, for Starbucks, for a position that's basically unched since we bought it, right? Again, we're down 1%, but just to make a clean comparison between this and Bank of America, it's unched since we bought it. I've been able to manufacture, again, irrespective of earnings, irrespective of, the other things that we did in here. I've picked up about $2 on a $90 stock. That's 2.5%. We've been able to just muster up a 2.5% return on a stock that's essentially gone nowhere. And this is the power of selling premium against, long-term holdings where, you don't have to give up a ton. I mean, we do have to give up the upside beyond the short call strike, whatever we choose, of course. But you can choose strikes that are pretty far away, which is essentially what we've done, to minimize the probability that they go in the money, and you're leaving a lot of upside on the table. Like, I understand if you're a long shareholder, that's what you don't want to do. You're like, hey, I like the unlimited upside. I like the potential for, the doubles, the triples, whatever. And I totally understand what I'm saying. But that's kind of, for doubles and triples, I mean, that's what you're kind of signing up for when you buy a NVIDIA. That's what you're kind of signing up for when you buy a Wolf. I mean, Wolf's definitely going to zero. But if it didn't go to zero, maybe it doubles, maybe it triples, right? Starbucks is not going to double in a year, right? Starbucks is not going to triple in 3 years. Like, those days are gone. I mean, they're just slanging the same C+ coffee they've been slanging, basically since the dawn of man, and it works. Again, I'm not throwing shade at them. Like, they have figured out how to make it work. And so, but with Starbucks here, this is an example of, and with Bank of America, we've done nothing. We're basically sitting at unched since the opening of the position, where the Starbucks were actually up on the position, even though it's down about 1%. So anyway, that's what I really wanted to focus on today. I'm going to leave the long shares in Starbucks. I'm going to wait and see if it can peek its head up above the basis. So if this guy pokes up above, 92, maybe I'll look to sell some calls against it again. But right now, let's just leave the long, clean delta to the upside and kind of play it that way. So, all right, let's go in, though. And I'll see you guys in the chat. Man, look at you guys. I appreciate you guys. Look at you guys. I see Brian Dowdy's in the house. YJ's in the house. Sam L's in the house. Rancho's in the house. Emmett Morrison's in the house. Harold's in the house. Harold, man, this is not a good day for you, bro. This is not a good day for you to pop into the stream and show up. Man, that was brutal. That was brutal. I mean, Dobbins just, man, he cleaned you guys up. My man talked the talk, and then he walked the walk. Of course, he served up a batting practice, ball to Judge in the first inning. But again, that didn't even matter. It didn't even matter, right? I mean, when it actually counted, man, Dobbins is my guy. And so, man, it's really a tough day for you, man, real tough day. And it's going to get a whole lot tougher this weekend in Boston. Because 2 out of 3 in New York, I mean, that means we're probably sizing up for a sweep in Boston. And it could be a sweep either way, actually. So you'll have to watch to see what happens. But let's go into silver. So I'm going to go to SLV. Again, just using common sense. We don't need technical analysis here. We don't need fundamental. I mean, I don't know what fundamental analysis you would do on silver. Like, are you going to go out and start interviewing some of the miners? Like, I'm not sure when silver reports their earnings calls, and they're going to say, well, yeah, we found a whole bunch of silver, or we didn't find a whole bunch of silver, or whatever. I think you kind of got to just rely on common sense here. Bazooka short is the only way. So I think what we're going to do, we're going to go into July with 39 days to go. And if we, let's see here. I want to get short, but I want to do it with some sense of strategy and strategery behind me here. So you've got the stock at 33.47. What if we sell a call in silver? And I was looking at this earlier, and I was like, all right, you could sell like the 34 call, right? You could pick up a little over $1. That'd be fine. You could even sell 34.5 for $1. That'd be totally fine. But then I was like, what if we sell a 33.5? That's going to be basically the at-the-money strike. We'll pick up a little bit more. That looked a little bit better, in my opinion. But then I thought back to yesteryear when we cheated death and danced between raindrops when we sold an in-the-money call on Amazon. So we sold an in-the-money call on Amazon, and we got paid. We sold an in-the-money call on Amazon. We beat the system. We cheated death, and it worked. So I was thinking, man, let's do the same thing here. Let me erase all that rigmarole. I'm thinking, let's sell a 33 call. It's slightly in the money. We're going to pick up $1.63 or so. And when I go to sell this option, you're going to see the circles don't make any sense anymore, but you're going to see that we still have a pop that's greater than 50-50. right? We're a little bit more short silver. Again, just using common sense here, guys. You can apply technical. You can apply quantitative. You can apply, fundamental. Again, if you happen to know any silver miners in your family or friends, or maybe they're, they live down the street from you, you could get a little inside intel. But I'm thinking, man, you just, you gotta be short silver here. And so here we'll pick up $1.62. Buying power is only $600-700. This is a very small position. This is not a very large position, because if you get into like silver futures and stuff like that, like yes, you're quickly approaching Shooter McGavin status. So be very careful if that's what you're going to use. Even SIL, which is the micro silver future, that's can be a pretty sizable position. And then if you get into SIs, you're talking about some really, really big silver notional value. But if you want to be super small and you want to just take a shot, this is the way that I would do it, and this is the way that we are going to do it here on the show. And so here it's like, man, even if silver, like let's say that we're wrong, which again doesn't happen often, only happens 80, maybe 85% of the time. Let's say silver shoots up another 10%, which would be a massive move. It'd be a huge move. That's only going to be $3 on SLV. $3.30, whatever. It's not going to be that big of a deal. Like, yes, we're going to have losses. Like, yes, we'll be down a few bucks, whatever. But it's not going to be something where it's like, all right, man, like now I've got to, figure out a way to finance this position with, extra shifts at Publix, maybe selling some of my Pedro Martinez jerseys, things like that. Probably not going to have to go to those links to cover this position. So if I go in here, though, if I sell my SLV short call, boom, there you go, Phil, $1.63. So in the money short calls, man, that's what this show has become. This show has really, really changed. We're holding long shares, just straight long shares, Bank of America, Nike, right? Best Buy, right? Starbucks. Look at this, man. We're just holding long shares, collecting dividends, reinvesting said dividends, and now we're just selling in the money short calls, which it's kind of funny because it'd be hard to actually drum up two positions that are more closely polar opposites than being long shares like X stock and then short an in-the-money call on Y stock. Those are basically polar opposite positions. And not an in-the-money covered call, like not doing something where they're actually linked or synced up in any way. These are separate positions that are kind of independent, which that's kind of funny to me. But anyway, I digress. So there's our silver position to the short side, of course. Because, again, I'm not really sure how you could possibly play silver to the upside. I know all the momentum bros on the internet are going to be upset with me when I say that. But I'm sure Johnny Pools 47 will get over it. So, all right, let's see where you guys are at. All right, I see Daniel Perkins in the house. What's going on there, Daniel Perkins? This is where I'm in the YouTube chat. So, again, if you're watching over on the Tasty Live Network or you're watching through some other mechanism, I'm not exactly sure what the other mechanism would be at this point, but hop on over to YouTube because you can follow along in the chat. You can see the questions as I answer them live, and you can participate yourself. So Daniel Perkins in the house says, "Hey, Dr. Jim, it was awfully nice of Autumn to compliment your hair at Publix and Albertsons this weekend." Albertsons? I've never been to Albertsons. I've heard of it. Is that a grocery store chain? Like Publix is obviously the go-to down here in Florida. You've got let me think. Publix, Whole Foods is obviously here too. I'm trying to think of the other ones that are here. You got Winn-Dixie, but again, on any given day, if you find yourself in a Winn-Dixie, something's gone very, very wrong that day. And so Winn-Dixie, you've got I'm trying to think of like around the country. You've got obviously Mariano's up in the Midwest. Mariano's and Jewel. Was never quite a Jewel guy. Really, really enjoyed Mariano's a lot. For my money though, Harris Teeter is still the nicest grocery store that I've been in. It's very popular in the Carolinas. I'm not sure Albertsons. Maybe that's out west. I don't know, Daniel. I don't recall where you're at geographically. You'll have to remind me on that. But no, it actually wasn't Autumn. Believe it or not. She's told me before. She's like, I like your hair. I think it looks nice. She's like, it's better than some things you've done in the past. She's very honest with me about that. But I talked to her about the mullet this weekend, and she's like, you can't do it. She's like, you can't do it. She's like, you don't have the face shape. She's like, your head is just way too big. She's like, if you did like a legitimate mullet, you can't swing it. And so to me, like I heard those words and I'm like, I feel like this is a challenge. Like I feel like this is something we need to strive for and train for. And so just stay tuned because I have a feeling there's a mullet coming your way to a program near you. So Daniel Perkins, thank you so much. Orgdenu's in the house. Greetings from Italy, Dr. Jim. Hope you had a nice weekend. I did, my friend. Thank you so much there, Orgdenu. Appreciate you. Harold's in the house. Yes, you just know, Dr. J, who's in charge of the AL East? Yes, I mean, in June, in the first week of June, right? I mean, that's like an Aaron Judge stat, right? Like you're going to be able to say at the end of the year when the Red Sox come storming back, and maybe you guys sneak in the wild card, but we take the actual division, you're going to be able to say, well, we led in June, right? Got Aaron Judge batting .380, right? Hit 65 home runs, right? But his average in the clutch, his average, when the game's on the line, 260. My man's got 9 home runs, and they're all over that short porch in Yankee Stadium, which is like 240 feet away. I mean, I could hit 20 home runs to right field in Yankee Stadium. As a right-handed batter. I mean, it's not good for you, Harold. It's not good at all. But Sam L's in the house. Dr. Jim is in the house. Hope you had a great weekend. I did, my friend. Thank you so much. I hope you did too. Sam L says, Doc, when you were going to rock the full fit headband, elbow sleeves, and lifting belt, did it all today for chest and back for the show? Oh, what am I going to do for the show? You got to let them know it's Max Effort Monday. Yeah. I don't know. Maybe I'll do it. Maybe I'll mix it in. Maybe we'll do it when we do the pineapple. We do the ponytail. That would be a good time to do that. Scramble, everything's in the house. Hey, Dr. Jim, welcome to Monday. We should just change the name to Mullet Mondays. This is what I'm saying. Right? See, I mean, 15 years of marriage, 15, it'll be 16 if we make it to October, which, I mean, I just checked the poly market this morning. It's only about a 60 delta. October 10th would be 16 years. When you get to this point, it's kind of like, I'm my own man. Like, I'm going to make sure that I get permission slips signed and I get her approval, many, many weeks in advance. But I'm my own man. And this is going to be my call. This is going to be my call at the end of the day, as long as it's okay with her. And so Emmett Morrison says, Dr. Jim in the house, the hair is looking good there, man. I appreciate you, my friend. I appreciate you so much. I'm going to send you that cash that we talked about before. Pretty soon you'll be sporting a man bun. Yeah, I got a ways to go man bun. According to my stylist, I still have a ways to go man bun. The ponytail is whenever I want it, I think. Just a tiny little guy. The pineapple obviously is there for the taking, but the man bun, I think we're still months away from that. So Brian Doughty in the house. Hello, Dr. Jim. No questions. Just looking to put on additional trades. Yes, silver is the trade for my liking. So you just need to figure out a way to fade that over the course of the next 15 minutes or so and make yourself a little coin here on this Monday, and you are welcome in advance. And so Sergio's in the house. What's going on there, Sergio? Appreciate you. Dav Nico's in the house. Appreciate you, Dav. Scramble Everything says, looking forward to more sultry, smooth victory laps for no more than 12 to 13 minutes. Now, obviously, Scramble, that no one can serve up a sultry, smooth victory lap quite like I can. The problem is, I mean, I couldn't even turn GC into a victory lap. It was just too bad. I mean, it's just a pile of ashes at this point. I guess I kind of manufactured one with the Starbucks Bank of America discussion. But hopefully that was a victory lap that actually brought you all a little bit of value rather than just kind of stroking my own ego, which is what is the case with most victory laps. But thank you there, Scramble Everything. Thank you very much. Theta Trader says, today what I'm trying to do is take a lunch break and listen to Dr. Jim. But the urgent needs of street dentistry patrons sometimes take precedence, as it should. So people that are brand new to the show, Theta Trader, he's our black market street dentist. So like if you ever need to know like what the real dealio is on whatever mouth issues you might be having, whether they be cavities, whether they be, just gum disease, whatever, he's going to shoot you straight. He runs an all cash business. He's doing root canals like on the side of people's houses. Like he's just in the alley, just serving up crowns like left and right. So if you ever need some off the record dental advice, he's going to shoot you straight. So Rancher's in the house. Howdy, Dr. Jim and the chat crew. Yes, thank you for being here there, Rancher. I appreciate you as always, my friend. Samuel says, Doc, Apple is red and our risk-free instrument is green. Are they still in business? Yeah, I don't know, man. Also, quick check. Are you still an iPhone guy? Yeah, have I ever not been an iPhone guy? Oh, yeah, no, I mean, I'm not an Android guy. Are you serious? Like, do we really have to have this discussion? Like, there are still Android guys out there? Like, the previous NFP prints with the, the close shaves with the apocalypse didn't clean all these guys out. I figured everybody's an iPhone guy now, right? It's kind of like Demolition Man, where Taco Bell wins the food wars, the fast food wars, and every chain is Taco Bell. Like, I just assumed, like, after all these NFPs and CPIs and PPIs, which this week, man, you talk about some close shaves with the apocalypse. It's coming again this week. But I just assumed everybody was an iPhone guy, myself included. Let's see. YJ says, I'm staying long, baby. I'm in stock, though, and my stops are at break even. There you go. I mean, the market's been incredibly strong as of late. And so today is just, it's like the same day, man. It's like Groundhog Day all over again. I mean, every day, if I bring up a chart of like the NASDAQ here, I don't want to see a weekly chart. Let's do a daily chart going back. Yeah, I mean, just look at a lot of these days. I mean, it's just kind of like every day is like another 80 points in the NASDAQ, 80 points, 110 points, a little down day just to kind of think you got a little something, and then, then back it up a little bit more. They had you down there, but they rallied them right back. There's another 110 points. There's another 118. I mean, they're just slowly just wearing you down now. They're just wearing you down. Right, they're all wearing you down. I mean, the Sosnoffs, the Batistas. I mean, that's what they do. Did you not see the show this morning? The Skinny on Options Abstract Applications. Every Monday morning, I join Tom and Tony at 8:40 Central, 9:40 Eastern, and we bring up some mathematical or some rather abstract concept. Sometimes it's more abstract than others. I really felt like this morning was very practical, and it was very, very straightforward. But Tom he's trying to wear me down. But again, I think he's just, he sees the waves and he sees the locks. And he can't help but just, there's a lot of envy that bubbles up. And I understand. I got it. But Scramble Everything says, if you're not short silver as much as Baum Nosnov is short gold, well, time to revisit that options crash course. That's right. So Tom is short some gold. I mean, that makes some sense to me. But again, this gold to me is not the layup short that silver is. And by layup, of course, I mean, this is like one of those halftime, half-court shots from some jokester they pulled out of the crowd that, I mean, once in a blue moon, they actually hit it. But yeah, short silver makes a lot more sense to me than short gold. Short gold to me is a little bit trickier. If I had to guess, I'd say gold gets to 3,400 before 3,300. I think last night it had a close shave. Speaking of close shaves, gold almost went down to 3,300, I want to say. Yeah, 33.13 was your low. And then the shifties kind of swooped in overnight and kind of buoyed it back up. And so I would say gold hits 3,400 before 3,300. But, again, what do I know? But I could see the gold-silver trade kind of reversing course a little bit where gold gets hot again and silver maybe cools off a little bit. And so let's see. Brian Dowdy says that's funny stuff. And he says, I'm still long gold, same as Chris. Oh, okay. So Chris Vecchio is long some gold, which if that's opposite of Tom, then he's in a really, really good spot. And so Lone Sofo says that's a lot of red. Where? I don't see any red. I mean, I see that's all pretty normal. That's all pretty normal. And then again, if y'all are talking about this, I'm not going to bring this up again. This doesn't matter, right? It doesn't matter. We've talked about this 5-6 times in the last couple of months. Like, I'm not bringing it up today. You guys are going to get me all fired up. Somebody else is going to ask about selling options for income. P&L opens don't matter. They don't matter. They're irrelevant. If you are selling premium and managing winners early, you're going to carry. Here I go. I'm getting into it. I'm not going to do it. I'm not going to do it today. But if that's what you're talking about, Lone Sophos, then you are alone in that Sophos. And so let's see. Scramble everything, perhaps like a Mariano Rivera. Ooh, that's some Yankees comment. Maybe Harold can decipher that. I'm not exactly sure what that is, but let's see. Here we go. Where are we at? Theta Trader, but not partial rep 21s because that's just nonsense. Partial rep 21s? I mean, isn't that the nature of a 21, of a set of 21s? Everything's a partial rep except for the final 7, of course, which is obviously the full rep. But let's see. Where was I? I lost it. Hang on. Scrummer says, chalk that SPX up to that positive drift. Oh, I forgot to surprise and delight somebody. Well, I totally forgot. Let me get this, Scrummer. I'm going to surprise and delight somebody in the middle. Or, I mean, at the end, basically. Chalk that Starbucks up to that positive drift theory and the poor performance of their largest competitor, the Bad Coffee Chicago location. Yeah, Bad Coffee. I can't say anything. I can't speak to Bad Coffee's financials because A, not privy to that information, and also B, even if I were, I don't think I'm allowed to. And so I'll just say that Bad Coffee, to compete with Starbucks from a quality standpoint, it's a pretty low hurdle. Like, it's a pretty low hurdle. And, you would hope that maybe the ambiance is going to be a little bit better at a Bad Coffee because Starbucks, I mean, it's kind of, it feels a little hospital-ish in a lot of Starbuckses. A lot of Starbucks locations are kind of sterile and kind of cold. And so hopefully, whoever owns Bad Coffee, whoever that might be, hopefully they can figure it out and kind of, do some improvements from an ambience standpoint. But let's see. Let me find somebody in the middle here. Let's see. Where are we at? I got to find somebody quickly, though. I don't want to do this too long. Here we go. Oh, wait. I don't know if this is a question, but it looks interesting to me. Gregor V. Dub says, Dr. J, I am up 20,000 K on the year in a Tasty Bite account. That's amazing. Wow, that's amazing. I am coming to see you in Boston in July to show you how big my smile is. Man, that's incredible. Gregor V. Dub. Wow, amazing. Yes, Boston, July 13th. Totally free. Going to be amazing. I hope to see many of you there. Gregor V. Dub. It's going to be exciting to be able to talk about this live in person in like a month. That's going to be great. That's amazing, though. Wow, that's incredible. 20K on a Tasty Bite size account. I mean, Tasty Bite size accounts are usually 25,000 or less. So that means, again, I'm just doing some real quick back of the envelope math. I'm no Jacob Perlman. Looks like maybe you're sitting on like an 80% return for the year, 100% return for the year. I mean, that's like some rising star stuff. That's like some fake internet scam stuff. Man, that's some really, really good stuff there, Gregor V. Dub. Really, really good stuff. And so let's see. Theta Trader says Bad Coffee, but slightly above average toast. There you go. Very, very good. Scramble says, could be great if there was some area of the platform that would like group up the types of orders in one underlying in one area. Is that sarcasm? Because that's what the order change does, right? I mean, that's exactly what the order change does, I think, right? That groups up kind of what you're trying to do within a given underlying. I don't have any positions on that have multiple trades in them, but because I'm grouping by the order chains, it'll kind of show you, like if you have like a strangle and like a vertical spread open in like, Wolf, well, Wolf's a terrible example as it's a terrible stock. But like QQQ, for example, if I had two positions on a QQQ, if I group by the order change, which is what you guys helped me all with many, many months ago now, it would show up in here like you would see like vertical, which you see right here. But then below it, you would see like, strangle or whatever. And so I think grouping by the order change is what you're looking for there, Scramble, I think. Maybe I'm missing it. But let's see. Emmett says the toast isn't for those adverse to butter. Oh, I didn't know that. That's interesting. Let's see. Sergio says, did you also get a dividend for Starbucks? Did I get a dividend for Starbucks? Man, I don't even. It's been so long since I have not even checked. And so I don't know. What do? We go to the history tab? Hold on, maybe. Let me go to Starbucks. I actually don't know, Sergio, because I haven't held long shares in here like ever. So this is kind of new. But let's see here. If I go to the type filter, dividends. Oh, here we go. Yeah. Hold on. Let's go back. Let's go. I mean, we should. Wow, we've potentially picked up a couple, right? Let's just go year to date. Whoa, look at that. Well, look at that. February 28th, got ourselves $61, right? May 30th, got ourselves another $61. I mean, why are we even messing around with SLV in the money calls? This is crazy, guys. This is like free money. You guys haven't told me about this before? You mean to tell me that I can just get money for just owning shares? You mean to tell me that I can just get paid for being part of the team? Is this some kind of pyramid scheme? Like, is this some kind of Ponzi deal? Like, this is crazy. This is $122 right there for just being part of the team. This is crazy. I can't believe you guys haven't told me about this. Man, this is it, man. This is the secret sauce. Forget about your strangles and your ratios. Nah, man, wait a minute, hold on. Where's Bank of America? Now I'm like, this is crazy. And look at this. Another $26 in Bank of America on March 28th. Well, look at this. Hold on. Wait a second. Let's look at Nike. Oh, we got nothing in Nike. Not yet, at least. Hang on. Let me go to Nike. When are they going to pay a dividend? Now I kind of want to know. So, well, it might show me in the, oh, yeah. Oh, it's coming. Wait. Hold on a second. Oh, you know what? So we did not get a dividend in Nike on 6/2. That was like a week ago. They holding out on us? Maybe we weren't the shareholder of record. Oh, I think they got us. They got us. I bet you it's because we were not the shareholder of record when the dividend on the ex-dividend day. That's what the ex-dividend day is. That's the day you need to be the shareholder of record to get the upcoming dividend payment, which is like a few weeks later or whatever. Because this has been a shorter-term play. Oh, look at that. They've got earnings on Autumn's birthday. 626. All right, how about that? And then Best Buy. Let's look at our Best Buy position. So Best Buy, they have a dividend coming up on 618. So that makes sense. We don't have any in here because this is a fairly new position too. But wow, this is crazy. I still can't believe you guys never told me about this. Like, why are we messing around with, short strangles and SLV for 80 cents when we can just make all this money from just holding shares? That's absolutely crazy. And so let's see. Rets Media says, yo, Dr. Jim, my Tesla fiasco is going to be profitable today, man. That's amazing. Tesla is up today. Okay, so you got Tesla up a few bucks. That's good stuff, Rets Media. And again, it's another supporting point for doing nothing, another supporting point for just staying in your positions and just letting them work and letting those guys cook. And so let's see. Scramble says, here's a question. I've got a Meta June 650 straddle for a $40 credit. I've managed into it from a strangle. IVR is at 6. Roll up till the July 725 straddle or pay $27 to go to the 30 Delta strangle. Okay, this is a very good question, and I only have a couple minutes to go, like a minute left. I'm going to give you a quick answer because I'd like to get to one or two more. So generally speaking, if you want to stay in the trade and you have a chance to kind of reshuffle the deck and kind of reset things back to a regular strangle, you can do so and you would still have a $13 credit. That's what I would do. If you want to stay in the trade and you have a nice opportunity to kind of, this is buying the guts and selling the wings. That's exactly what this is. So when you hear Tom and Tony use that phrase, that's what they're referring to. You have a chance to where you could kind of escape, get out, start over, $13 credit. I would definitely do that. I wouldn't mess around with rolling the straddle. I wouldn't even mess around with going inverted. That is the move that I would make because you have a nice opportunity on your hands. And so let's see. Howie Egg says, but Jim, what about 2011 when silver went to 50? Nah, don't worry about that. Nah, you don't have to worry about that. The in the money call is the way to do it. And by that, I mean, you should be buying those calls that I'm selling. And so let's see. There's Gregor V-Dub. I see Emmett Morrison, Scramble, Howie Egg. Let's see. It was Howie Egg says it was April 18, 2011. SI, not SLV. Yes. I mean, same thing, but obviously a different product, but the same underlying. And, man, I just see Jimmy T's in the house. Bill V's in the house. Man, Jonathan Green's in the house. Jonathan Green says, I'm on the same trade with silver as Dr. Jim, and I don't like it anymore. You should switch. You should 100% switch. You still have time, my friend. It's still not too late to switch today and actually make yourself a little bit of money. But, guys, I got to go. I'm totally out of time. I appreciate you guys. I appreciate you guys so much. If I can ever help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Jamal coming up next with Engineering the Trade. In the meantime, guys, trade them small, trade them heavy, and stay optimistic. We'll see you guys tomorrow.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move. The market doesn't stop, so why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
What's going on, everybody? What's the current state of the tariff situation? We know that last week EU was in the crosshairs. Obviously, China's still in the crosshairs. We'll talk about what currently is happening right now. There was a merger with a quantum computing company, and that's become a hot space more recently. So we'll talk about what happened today and there. And finally, the opposite of a merger is happening. There's going to be a split now with Warner Brothers Discovery. Yeah, there's a lot been going on with that company, and this could be the beginning of the change of streaming for sure. We'll see what happens there. So we'll talk about those 3 things and more. We'll take a look around what the next trade is that we're finding interesting, and there's really not a whole lot of earnings, so you shouldn't be trading really any of those right now. Welcome to the most dangerous show on the Tasty Live Network. Folks, it's Engineering the Trade. I'm your host, Jamal Chandler. Hope you all had a great weekend. Weekend was good for me. Ended up spending some time at Blues Fest here in Chicago, which is always pretty cool. Just a one day. It's like a 3-day thing, 4-day thing, actually. Friday, Saturday, no, 3 days, I think. I went Saturday. Saturday, there was this guy called Chris Kingfish Ingram, if you ever heard of him. He's incredible, man. He's such a character. Real great blues dude from Mississippi. Looks a lot older than he is. He's only like 26 years old. He's actually really young, and he looks older. He's just like this larger-than-life character. You really got to see him sometime. He was incredible. The cool thing about him, he likes to go out into the crowd, and it's kind of fun when he does that. And then he ended up having like a whole bunch of people on stage at the end, too. It was something else. He was here at the Vic a few years ago. That's the first time I saw him, which also happens to be a venue I played. Then he's going to be at Park West later this year, which also happens to be a venue that I've played before, along with other Tasty Live folks. So this guy is taking all the same venues that I do. That's kind of cool. Yeah, it was great to see that this weekend. It's pretty awesome. Something else, man. Something else. Oh, gosh, yeah, scramble everything. You got it. Good point, man. That Alcaraz center matchup was incredible, dude. And you know what? I never really felt like Alcaraz was out of it. And I think a lot of people thought he was. And they talk about the comeback, but that was just he does well on clay, kind of like his predecessor Rafa in that way. And center is he's incredible. But that was a super epic matchup. The other thing about sports that I found this weekend, I don't know how much of you follow college sports, but it's about to get really interesting, right? So they just passed this landmark ruling where now the universities can pay the students. It's going to get messy, it's coming. But here's the real messy part. As always, football takes center stage in a lot of college universities, right? It's simple math. You can get 100,000 people in the stadium. Obviously, that's a little bit more revenue than 19,000 in a college basketball stadium, right? And so football is always king at colleges. I think as of now, from what I understand, there's going to be like $20 million worth of revenue that they can allocate towards these programs, right? And so from there, the university gets to decide how the breakdown is going to be. A lot of the major universities that obviously rely on football have already stated probably more than 3/4 of that revenue is going to go to football, and then the rest goes to a lot of different programs. And that makes sense, but here's where it's going to get messy, right? Like, look at a university like Tennessee, for example. If they give 75% of their revenue to football, which their football program is really good, How much is left over for basketball? How much is left over for women's basketball? For those who don't know, traditionally, that's really huge in Tennessee. And so how much you're really not giving them a whole lot to be able to recruit and maintain that standing as far as women's basketball has always been and what men's basketball has become. Again, they were one of the top 8 teams, I feel like, this year. So that's going to get wild, man. I mean, when you look at a university that mostly does basketball, say like Marquette or like Creighton, well, they're just going to give a majority of that to that program. They don't really have any other things to speak of. Nobody watches Creighton baseball. I think Creighton baseball is actually a thing. I'm not making fun of it. I'm just saying they have some real hard decisions to make, and it's going to be, I think you're going to see a real shift. Like, for example, Duke, even better, University of North Carolina, and this is the last thing I'll say on it. University of North Carolina, obviously, the home of Michael Jordan and James Worthy and Rasheed Wallace and just like Vince Carter, somebody who went to my high school, Anton Jameson, so many great basketball players over the years, right? And so obviously you would think maybe they're going to put money towards basketball. But hold on. Who'd they just hire in football? Bill Belichick. And Bill Belichick obviously cost a pretty penny. And that's a lot of money they're going to have to allocate towards football because they've already made that commitment. That one is going to get really messy. I mean, it is. I mean, because essentially whoever you're giving money to is the thing that you're putting out in front as the one that's going to make the most money for your program. Is it going to be UNC basketball or UNC football? Whew, it's going to be interesting. Let's pull up some slides and let's talk about what we've seen so far today. Fairly quiet day, as you can tell, right? Not a whole lot happening, and I think that's just because we're kind of waiting, and we're in a holding pattern here. There's been some discussions going on between the U.S. and Chinese delegates talking about what's going on with tariffs. If you remember, they pulled back a whole lot on tariffs, right? But still, there's a lot that they need to discuss as far as the tariffs and the rates and what's going on. And so we're clearly in a holding pattern. Vol has come in. Markets are sitting like they're looking for that little kindling to light a match to either push them a whole lot higher, or if it doesn't come sooner or later, I'm sorry to say, it might just fall over. And so that's really where we are right now. It's still kind of in a holding pattern. Nothing much has obviously come out of there, but clearly that's something that the market is waiting on. And I think until we get some resolution there, we're not going to make any real major moves. Anything else is just going to be out of fear. We also had IonQ, which is one of those quantum computing stocks. They actually purchased a company for $1.1 billion. Now, by purchase, they actually used mostly stock. It was mostly a stock purchase. But the fact is that this has been an area that's been heating up more recently. We've seen Microsoft and Apple sort of put a lot of money into these areas of the market. I think it bears paying attention to, right? When you know, the fact that they were able to buy this company and the stock didn't tank means that the stock liked it. It clearly is something that's going to be big going forward. You know, again, you see these other companies, QBTS, RGTI. These companies have made some real headway recently as far as their stock movements and just how they are being a huge part of the market. So I'm keeping an eye on it. IonQ was one of the names that I was actually short vol in for a little bit. I ended up cleaning up that position. I'm kind of glad I did because I think you're going to see this thing move around coming up real soon. So keep an eye out on it, man. I really have to. Finally, Warner Brothers Discovery, they plan to split into 2 companies. So there's going to be a streaming portion, and then there's going to be, what's the other portion? A studio portion for movies and things like that, right? And so I think you're starting to see more of this. Look, Netflix is still the leader as far as streaming, and they've been able to work it such that they can produce movies and stream. But this is still an area that I think is really changing a whole lot when you look around at it recently, right? Like you're seeing a lot of streaming companies sort of have this decision of whether they want to go mostly streaming or whether they're going to, if they have a movie portion. Like there's been some combining over the last couple of years. I think you're going to see some more of that. This company clearly is splitting off because they're trying to create, they know the one area that makes more revenue than the rest, right? And so they're trying to identify that. That process is happening, but then I think you're going to start seeing some combinations at some point. I wouldn't be shocked, man. Just keep an eye out for it. Leftovers. Men in India do more yoga than any other male counterparts across countries. Let's move to the next slide. James Bond, I see you, man. I'm going to answer that question when we get to the platform. Oni, should Tesla dip this week? I mean, it already did dip this week, right? I mean, if you missed it this morning, you blink, you missed it this morning. This is a chart of the share of female and male correspondents that at least occasionally practice yoga or Pilates. Yeah. In Korea, you got 43%. Wow. Yoga is big in Korea, huh? 43% are practicing, 7% only male. Guys got to catch up. India is the one, man. Look at this. 31% of females in India versus 22% of men in India. That's right. The men, they're doing it. Yoga is something I've been wanting to get into for a little bit. I just haven't done it. I think I'd like hot yoga. I like when my body is really warm and hot during exercise. I like that because then you're nice and loose and you don't have to worry about pulling anything. That's why I've been kind of kicking this idea around in my head about yoga. But, you gotta find the right situation to start. You can't just jump into any yoga class, right? Like, it's got to be a little bit more, you got to work your way into it. They're like cults in a way. I mean, you can't just jump into any yoga class. These are people who've known each other for a while and all these other different things. So I'm just saying, keep that in mind. Spain, 31% of females versus 7% of the male population. Yeah, also pretty low. UK, 30%. Obviously, this has always been more of a female thing. I mean, it is what it is. 30% of females in the UK versus 9% of males in the UK. 27% of females in the US versus 12%. I am not part of that 12%. I'm trying to get there, though. 12% of males in the US. 26% in China versus 4%. They are the lowest. Almost surprising, right? 25% in Germany versus 6% of males. 21% in France versus 5% of males. So that kind of gives you an idea of what we're seeing here. As far as those who are doing yoga, I tell you. Let's move to the next slide. Thank you. Volatility obviously has changed a whole lot in the last couple of weeks. We know what it did in April. That's the heights that you can see right there. And this is just VIX compared to a correlation 1 month. We always know that when things get scary, markets tank, VIX goes up, so does correlation, right? We typically see a lot of things moving in one direction, typically down at the same time. And that's, kind of changed over the last few weeks here, if you will. So where is going is anybody's guess from here. Where is actual VIX right now? I hadn't even looked at VIX today. 1684. I feel like we should stay in this range. Honestly, I know a lot of you probably like this type of market that we've been in. I kind of like it because things are actually moving around and you're able to sell some vol, which is nice. Trust me, you don't want a market where the VIX is 12. That's where things are just zero fun. But yeah, we've seen this come in quite a bit. Let's move to the next slide. Treasury yields have actually, we've seen go up more recently. They ended the week up. This is actually toward the end of the week. Today, they're slightly down, but we've seen them mostly kind of trending up a little bit higher. They're on the higher end of what we've seen over the last couple of years, I suppose. I mean, to be fair, I guess they're kind of, are they in the middle of the range? I guess they might be over the last year and a half, going back to last year this time. But more recently, they've started to bounce up. And it's still surprising that we're at, again, you look at the S&P 500, we're at 6,024, and yet we're seeing 30-year yields near 5% and 10-year yields near 4.5%. Much higher, I think the market gets a little spooked out, but if they calm down, I think we do see higher prices. Just saying. Let's move to the next slide. So as far as things we got going on, this week, CPI and PPI inflation reports. I would imagine that things are probably, I bet inflation is not as high as we expect, and I bet the market should end up liking that. Because again, everybody was expecting us to be in a bad job situation and inflation to still be high, right? And stagflation to be rampant and recession on the way. And that was the thought process just 2 months ago. And now, again, we just had jobs report last week. Everything seemed to be fine. We're creating jobs. I bet inflation is the same way. Maybe that's the kindling we need. Maybe. 30-year auction, though, I don't know how this is going to go. And again, remember the 20-year auction a few weeks back? We got a 30-year auction coming up on Thursday this week. That's something to keep an eye out for. Week after that, well, the main draw is the FOMC meeting, which we're not expected to do anything at that meeting. But it's never about what they do or don't do. It's more about the rhetoric, right? And so we'll hear probably Powell address what's going on with inflation, what's going on with jobs, and whether or not he feels it's necessary to change rates anytime soon. Right now, I think this pushed back to possibly October. And again, I don't know who comes up with these like ideas of when we're going to cut rates or not. I don't see any reason that we would cut rates as of right now, but what do I know? Retail sales the next week. Of course, there's a holiday, Juneteenth. We got OPEX after that. June, options expiration. Week after that, you know how it goes. End of the month, GDP, core PCE, towards the end of the week, etc. Week after that, you got, boom, right around the corner, another non-farm payroll and another holiday. How about it? So, yeah, this is over the next couple of weeks, the things that we got going on. Typically, summers are quiet. Typically, June is quiet, right, like over the years, but most years. But last year was not. The last couple of years, I feel like June has not, and neither has July. Like, things have been live wires, and I think that's just the kind of market we're going to be within for some time. Let's move to the next slide. So for earnings, we don't have really much going on at all, and we shouldn't. We are way at the end of the earnings cycle. JP Morgan, let's see when earnings start up again. JP Morgan essentially isn't until July 14th, which is basically, we got a solid month here before earnings really kick back in. I just showed you the calendar as far as some of the things coming up. And I think really, again, it starts with what we started with at the top of the show, which is China and U.S. and how much they're going to, how much inroads they're going to make towards coming to a deal on tariffs. Robinhood missed out on S&P 500 inclusion. Stock was down this morning. There was a lot of discussion about whether or not they were going to go in. I think they had a shot, but there was no real rebalancing that happened. And so as a result, they didn't get in. Yeah, stock tanked. It's something, we pay attention to. Obviously, it's another retail brokerage, right? Just like, eToro, where we all focus on somewhat different areas, right? Like we're king of options as far as retail trading goes. Some of these others more crypto bound. Some of these others are more stock, whatever. So something we always keep an eye on. CPI report is on Wednesday, like I said. Decent bump this week expected and for vol, like I just showed you on the sort of chart there for vol for the rest of the week. PPI coming up on Thursday. Number of S&P 500 stocks above the 50-day moving average, 73%. Things are pretty healthy right now. And I'm telling you, let's move to the platform. We are just sitting here waiting on a breakout. I mean, that's literally what's happening here. You can see it. You can see it. But if the wrong thing comes across the wires, let's move to the platform, please. James Bond, thoughts on 0DTE? Do you trade it? What's your go-to strategy if you trade 0DTE? I don't really trade much 0DTE. If I do, I shouldn't say I don't trade much. It's not my main trade. I mean, I probably trade it 10 to 15% of the time. A lot of times it's SPX, I would say, although it really hasn't gone well for me this year at SPX. What I try to do is center things around big strikes. So like the 6,000 strike. A couple of weeks ago, I had something around the, you know what I'm so mad about? Not last Friday, the week of the May 30th must have been, right? May 30th, I had this idea where after we had fallen on this talk of the EU, right, and 50% tariffs, and as a matter of fact, going back here, right, like it was not the 23rd, it was this week, right? Same week, within the same week or so, we came back from 4th of July, market, then we fell this day. This was like a day where we had S&P 500 fall after, there was talk of like EU and tariffs and all this, right? And then over the weekend, it was like, oh, we're fine. I put out a Iron Condor, basically one exactly like this. We were at, again, where were we? We were starting the week. We had closed the week at 59.11 and S&P 500 on the 30th. And I said it would be interesting if we get back up to 6,000 next week. I tried to put on 2 different iron condors. So, and I'm showing you all this because this is how I try to do my iron condor sometimes. It's $50 wide. That's not cheap. But I felt for sure, pretty strongly, we would. And I did one here. I did one for last week, Monday, 6.2. Didn't work out. I should have done it for Friday because that's exactly where we landed by Friday, which was essentially at 6,000. Friday was the 6th. I mean, we closed at 6,000. Like, the amount of annoyance that I could tell you that I had was out of control. So I was pretty annoyed about that. But, you know, it happens, man. I mean, I don't. But outside of those, I don't really trade too much 0DTE. Particularly right now, I think it's been a little hard to do over the last couple of months. You know, I do some of those iron condors trying to sell. But again, the markets have moved so much. And as much as I may want to do one now and feel like, the market's kind of quiet this week, we're not going to move. That's exactly when we seem to move. So, you know, this is a lot of premium just for 4 days, $900. I just decide not to do it. I mean, it doesn't help. It doesn't suit me well. You know, you could, and then you start wondering, well, maybe I shouldn't do it for 4 days. Maybe, and again, that's not exactly 0DTE. Again, I mean, you're talking here, right? Like, I just personally, if and when I do trade days like this, it would have to be a day where I expect, you know, maybe a big bounce back or a big fall. Those are probably the main times I play 0DTE. Outside of that, it's really not too often at all. I have some decisions to make as far as some vol plays. 24 IVR here in the bonds. Bonds have been fairly quiet recently. You know, I mean, fairly quiet. Like, we haven't gotten these type of moves is what I mean. It's been more in kind of in this 113 to 112 range, 114 to 112 range, I should say. No, it's more like 111 to 112. Anyway, I feel confident in the iron condor I got. I probably, if this thing IVR gets in the teens this week, that's when I'll close. Otherwise, I'm just going to hold on to it for some time period. Yeah, I mean, there's really not much happening in markets right now. And as a result, that can kind of create the situation sometimes where you want to put something on just because you figure, okay, well, if it's quiet, I'm just going to sell vol. But then that's exactly when vol pops, right? So I'm trying to be a little bit patient and just wait. I feel like you've been rewarded if you've waited on big moves and made trades based off of that. Like, Tesla was a good example. Last week when that thing dropped, I mean, look at the vol. It jumped up to like 40, 50, ended up selling an iron condor in there. And that seems to be working out as of now. But I just feel like those are the times where you really get rewarded. Just wait for the big moves to happen, which seem to happen quite a bit in this stock market right now. But yeah, I mean, outside of that, it's fairly quiet. These earnings I just mentioned, I mean, none of those are interesting to me. I don't even know these damn names. I mean, GHM, like, what in the hell? GHM, what the hell is this? Graham Corp? Never heard of it. Sure took off this morning, it looks like. But yeah, just, oh yeah, wait, did this have earnings this morning? Is that what it was? Yeah, I'm not, oh yeah, this did have earnings before the open. Wait, what else is there? There's Casey. After the close, there's really not much else neither. Smuckers is a name that used to be somewhat interesting from time to time, SJM. But yeah, this is just not a name that I would trade for earnings. I wouldn't trade it with your money, honestly. UNFI, also not something, I mean, you know, after a while when the earnings just dry up, it's just best to just go close up shop as far as trading earnings and wait till the next cycle, you know? Like, you don't gain anything from trading these names. I mean, Casey's General Stores, wow. First of all, how is this stock $400? Some stocks, I swear, man, I bet there's a lot of person who's making a lot of money in this name too, like, meaning like the owner of the company. Yeah, what are you going to do in a name like this with pretty wide markets? You don't want to be trading earnings in names like this. So I refuse to do it. I'm not going to. Apple has their WWDC thing going on, but are they really saying anything new? You know, they're coming out with a lot of different applications that, you know, work with other things, but I just don't feel like this was one of those sell the news events. It seems like a lot of their events like that end up being sell the news, right? The stock was a little bit higher this morning, but then things kind of pulled back and there's just not a whole lot going on in here. So this is not a name I've had anything on for a while. I did yeah, I don't have anything on here. I did look at selling vol in here. Looked at selling a strangle. It seemed kind of like a nice trade to do, but I just didn't really like the risk reward, so backed away from that. Speaking of risk reward, I still have the strangle. Sorry. What's the name? I'm blanking on it. Not CrowdStrike, CRWV. I bet people confuse that all the time, CrowdStrike and CoreWeave. Still have the strangle on here. Yeah, this thing moves, man. It definitely moves. I still got the 100, 180. I'm holding tight. I'm not doing any adding or anything like that. These options, I mean, this thing is pretty jacked, man. But I'm holding on in here. I like being the strangle in here for now. Although it feels like the stock could be trading 200 one morning when you look up. I mean, it really does. But yeah, I'm trying to hold steady because again, you keep hearing about, China and the US working on deals, EU. I feel like we've come to some normalization a little bit with tariffs, right? And again, when you look at the SPX, like I said, this is pretty technically sound chart that you want to see here, where right now we are holding steady at right around the breakdown, right? The breakdown here was the low close anyway was 60.13. This was the beginning of the breakdown on the 21st. We're hanging right around there, and we just need something to sort of give us a little bit push higher. CNM. What's CNM? I see you guys talking about CNM. Court and Main. Okay, looks best for the what? There's no volume in here. Yeah, I'm it's not something that I would trade a strangle in, that's for sure. Ion Q, like I said, I had a strangle in here as of early last week. This one has, I mean, if you're looking for a strangle to sell, now this name can be volatile, but if from anybody looking for a strangle to sell, this is one where you get a nice little pop on it. But again, these stocks can pop at times too. It looks like it's beginning to coil. You probably got a solid few days to sell a strangle in here. I don't know how much vol comes in or how fast it comes in, but you got a solid few days in here to be able to sort of work that. That's it right now, folks. Like I said, I don't think this June is going to fully be that quiet, but I think it's quiet in the interim as we're waiting on some data. Again, we got inflation data that doesn't start until Wednesday, so tomorrow could end up being somewhat of a quiet day too. It lends the opportunity to sell some vol, in SPX and things like that, but I'm just going to wait on the other side of big moves. That's the best trade these days. Folks, that's the show. Thanks for watching, and as always, be smart, be patient, trade them small, and trade them often. See ya.
In the world of investing, beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Hello, everybody. Happy Monday to you. Happy New Week. Well, if you're an equity bear, a lot of things have to go right in a very short amount of time for us to have any hope in that respect. We're basically up against the wall at this point, and it would be really easy for the bulls to take this from a 9 to a 10 in terms of the potency they have and the success they're going to have this summer. There's 3 big events looming in the next 9 days. Probably the most imminent one, probably tomorrow before the close, is the latest China trade talks, Kabuki Theater. So Besant, again, is overseas. For some reason, he never does it in the U.S. He's overseas. And they'll probably have some announcement tomorrow of some kind. The last time, of course, this happened, the market exploded higher because the final white flag went up. So that's event 1. Event 2 is not long after. It's an hour before the opening bell on Wednesday. That's the CPI, see how the inflation data is doing. And the third one is a full week after that, which is the FOMC. So everyone's all obsessed about interest rates and inflation, et cetera. So those are going to be some big goings on. I've got my charts loaded up for you. Let's jump in and kind of catch up with each other. We begin, as always, with the spider, which, as always, is just kind of creeping a little higher every day. We're at 0.25% on the ES. Nothing dramatic. The VIX has collapsed. I read this morning that it is the fastest collapse in volatility in market history. So we've gone from terrified to, everything's fine. So the VIX is in the mid-teens, and the spider just kind of tacks on a little bit more day after day after day, except for weekends. That's about the only exception. The diamonds are also up, again, a little bit. This line here is anchored to this data point up back on March 4. We have a cluster of overhead supply left here. And the kind of easy part of the rally, which was from here, April 21, to here, May 19, well, that's over, and that we lost some and then regained it back. But this is the really explosive, kind of effortless part of the rally. IYT, just since we're talking about the Dow, has continued to be in a much more bearish configuration. It has sealed this price gap, but on the whole, IYT looks way more vulnerable than, say, the diamonds do or the cubes or the spider. Ethereum is up over 2%. It's still below this broken trend line. And that broken trend line is something I've been more than obsessed with because it's, for me, a guide for what's happening with tech stocks in general. And so as we look at the cubes here, they remain below their own broken trend line, although much closer to it. Ethereum's way below its busted trend line, whereas the cubes have been kind of kissing the underbelly of this for some days now. As we zoom in, we are up about 1/3% on this. For weeks now, we've been just skirting underneath that broken line, never surpassing it, and we're getting closer and closer and closer to the lifetime high right here. So that convergence looks like less than 1% at this point. And of course, what could happen for the bulls just to run roughshod over the 1 or 2 remaining bears would be just to pop it over that sucker and get it over the trend line, get it over the lifetime high, because lifetime highs make easy press because by their nature, everybody's a winner. And you can go in and hope that prices just keep bumping higher until who knows when. SMH, the semiconductors, is also up even stronger. They're up about 2%. And also getting very close to what should be resistance, and if it's busted, will be another success story for the bulls. The descending trend line and the gap are at play here. Here's the descending trend line. As you can see, today's high got rather close to it, didn't violate it. And the gap, same deal. Got close, didn't push above it. So we're just like right there. So honestly, by Wednesday, there's no doubt about it, by Wednesday, either the bulls are going to just strap on their rocket boosters and take this thing even higher, having conquered all those things, or it'll be one of the cleanest reversals in technical analysis history. Just like boing, hit resistance and, by the skin of our teeth. So it should be an interesting day or two. SOXL, by the way, which is the leveraged bullish on semiconductors, quite obviously is very strong today, up almost 9% and getting close to its own resistance trend line, which isn't quite as important because it is leveraged, but it's still an interesting chart nonetheless. Over in a different industry, financials, it's actually down, amazingly, XLF. As we look here, this zone here, around about 52, has tended to be the poop out point for over half a year now. We got up to it, it sunk. Got up, sunk. Tried again, sunk really hard, and up once again up there. So this seems to be, for whatever reason, a line that it just cannot seem to pass by any substantial margin before it just re-weakens. Overseas, emerging markets continuing strong. EEM has busted above this line here, up about 1% today. So, I guess the closest pattern one could associate that would be a cup with a handle. No, there's the cup, there's the handle, and up it goes over the line. We've also got, excuse me, a little fumble fingered there. That happens on occasion. We've also got EWW, which is Mexico. And this one's up a little bit, but it does not look poised to break out at all. On the contrary, it looks like it's just about done, assuming it doesn't pass this dashed line that I've drawn there at 62.33. But it's, in spite of the supposed trade wars going on, Mexico's been doing just great. But it looks really exhausted at these levels. And speaking of China trade wars, here's FXI up 1.33%. And I would say the key on this one is this gap at 38.22 for resistance. Now, bear that I may be, there are tiny pockets of assets which I have been a longstanding fan of and been pretty vocal about. Gold is one, silver even more so. And silver, I guess I always kind of like the underdog. Everybody knows gold, but I'm kind of silver's champion because it's been, it's got a lot of things going for it from a chart perspective. It's had some wiggles and wobbles along the way, but on the whole, it's been doing just fine. And so as we look at the long-term continuous contract of silver, it's having another nice day, up well over 2%. And it's at least getting within the zip code of its own lifetime highs. Gold went to lifetime high territory back in April, had no problem. Silver, a little bit of ways away, but we're getting close. But it's a very nice formation, very nice breakout. Rally's getting a little long on the tooth. I can see that. But, as we look at silver by way of SLV, this is the highest it's been in 13 years. That's not bad. And this bullish base here was quite well formed. And like I said, it hasn't been squeaky clean. There have been some scares. We went into the pattern and then so forth. But on the whole, higher highs, higher lows. As I say, we're getting kind of lofty up here. And they don't hand you a notice on this day or this day that the rally's over. Just the odds get higher and higher that it will be over for some more backing and filling. But I want to at least highlight how nicely silver's been doing. And also miners continue to do well. One particular individual one I've been mentioning is DRD. And we're up about 4% on that with important support down at this line level, 13.18. Crude oil has been a thorn in my side, but it hasn't violated the setup quite yet. It's not helping. We're up 1.22%. This is the key pattern right here. We're a few pennies into it. Not sure what to say on this one. I've certainly trimmed exposure to energy down to just a couple of symbols at this point, but so far not going so well on the energy front. Politics are informing a lot of asset motion. The latest one, of course, with the drone attack and the domination of China in drone manufacturing. U.S. is making drones, domestically made drones, a priority, and so companies like Joby Aviation are getting a lot of attention. So they're having a very good day, up about 13% on JOBY. Another hot tech area, although not particularly politically driven right now, it continues to be quantum. Couple of stocks here. One that I think is kind of hazardous. It's a very speculative sector in the first place, but this is Quantum Computing Inc., QUBT. The reason I say it's hazardous from a trading perspective is that we are getting terribly close to a major price gap there. In contrast, QBTS, which is down 2.5% today, seems a much better formed pattern. I say again, this is like fusion nuclear energy. It's very speculative. There are plenty of very serious people, scientists, who believe that quantum computing is decades away. And this is a fad as meaningful as, say, Nikola, remember them, NKLA, or Theranos, or something like that. It sounds good, but it's pie in the sky. Could be. It's hot right now. I mean, people can create a mania without any true basis behind the business, and eventually the mania will bust. But if you had to go into a quantum stock from a charting perspective, I sure like D-Wave better than I do QUBT. There are a few decent short actions happening in the old portfolio here. Shopify is behaving itself. We're down at 1.5% on this one. This is a new one, Vertiv Holdings, VRT. And in this case, we've got a beautiful gap there where we've got pretty close to, on Friday. And so, but this is turning away from that, it seems. And a little better known than those things is CMG, Chipotle. This is another short holding I've got, which is down over 2%, which on a day like this that is utterly green isn't too bad. So, that's CMG. But just to hit on some general themes before I say goodbye, once again, bonds. If we break this pattern, it's a big deal. If we break this pattern, rates by definition will go up, and that will be suffocating. So I think it's critical to respect the bond setup and keep an eye on if this breaks. I will mention it endlessly if it does, believe me. NQ, the NASDAQ, we've seen the cubes before. I know that. I just wanted to highlight this because this is long-term and shows these fib zones and shows not just a short-term trend line, but this very long channel that we've broken below. And what remains key here is the lifetime high. That's psychologically very important. As far as the chart goes, there's not any really patterns or setups to speak of. It's just all about whether it can push to a new high or not. And finally, the Russell 2000. On the one hand, on the bearish hand, this setup is still present and has not been violated by present price action. On the other hand, this bullish pattern has completed and we have reached escape velocity on this. So in the middle there, we've got kind of this see, now you wish I knew sports because I could come with some metaphor, but I don't think it's the line of scrimmage, but let's just call it the fight zone between those two patterns. The bulls are winning today clearly, and it's really a question of can it push into the zone defined by this pink pattern, because if it does, well, all bets are off. It's just going to churn higher. So that's the face-off right there. The bears in the pink versus the bulls in the green. And it is exactly the bottom of the hour, so I'm going to say goodbye. Thanks for coming around, and by the time we see tomorrow, maybe we'll hear from Besant again. We'll see. Bye-bye.
Dear Cheapo Airlines, thank you so much for sending my luggage on a magical side quest instead of my planned destination. I am glad that I had the sustenance of the single pretzel I was served on board while I was waiting for my bag to arrive. Looking forward to your reply, because surely the response can't be as delayed as long as my flight was. Warm regards, Bettina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
Every day I do God's work here.
From the smart mouths at Tasty Live.
If you missed the live show, here's our cherry on top weekly recap.
What was the last time you were up till midnight?
I was up past midnight.
When? So.
No, my son doesn't get done with working at the DQ until almost 11-ish, so I make it to midnight. Weeknights.
Do you?
Yeah.
Okay, how about you?
That's why you're such a bitch in the morning.
Gentlemen, I want to open up playing a little game called Guess the Price of an Electric Vehicle in China. I want to see how good you guys can
Let's do it.
I have to full disclosure, I have to abstain.
You know it.
Because I read your tweet. So I'm.
Oh, I did not read your tweet because I removed you from social media. So I have you are nowhere to be found.
He has concierge level on the, for
American, yes, yes.
Flying American. He just 2 minutes ago sent me a text message, and here's what he says. Concierge level is gangster. Sushi for breakfast and champagne. The good stuff. French omelets and caviar. Enjoy your prison food.
Wow.
Is that a haiku? That was really nice. That was really good.
Oh, you should have been here the last couple of days. I bought a pie from Costco.
Which one?
Cherry.
Really?
I like cherry pie.
I love cherry pie. Blueberry is my go-to. You wouldn't know that because you do bring me cherry, but I appreciate either one.
Cherry pie's good. It's kind of childish.
You prefer apple?
You're childish. I played golf yesterday.
Yeah, I know. Can you please give me $20? Yo, Steve, I came in to collect. I said, how'd it go? He said, collectively, we were all horrible. He said, I think we averaged 150 each.
I shot like in the mid-80s.
Get the full scoop by checking out the archives at tastylive.com.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Tomas, we are back, my friend. You know what that means. Time for a little bit of the last call. So I don't know if you just pointed it out to me, but I had seen it too. Look at the volume on the E-mini S&Ps, 663. I think on Friday we were like 950 or a little bit more at this time. Most of the week on Wednesday, Thursday, around 950 to a million cars. 663 on a full day, Sadnov. This is a full day.
Yeah.
Turn those machines back on. NASDAQ down 63. I'm sorry, up 63. Maybe I'm dying for a red day so we can buy the dip, Sadnov. Russell up 18, and the Dow, which was red all day, turned it around, up 56. Volatility in by 44 cents. Bonds are, they're up 6, Sadnov. They were up a little bit more. They got up to 112.16, down to 111.25. I know you have to be happy about that. You bought some notes a little bit lower. They're up 7 ticks right now. Bitcoin flirting. I got to say it's flirting with 110,000, even though it's $109,070. Bitcoin with a monster move, 4% to the upside. Ethereum up $100. That's also a 4% move to the upside. Oil up 72 cents, up 1 1/8% or so. up 70 cents. Gold up $4.70, hanging steady, not doing too much, although it is $50 off of its lows made earlier. Silver up 77. That's a bigger move. Look at these last 3 days in silver. Big move to the upside. Nat gas, a move to the downside with the cold front in Chicago. We appreciate it, down 13.5 cents. Sadnov, on some of the movers, I think one surprising mover to the upside has got to be, and I have the Dow list up here, I apologize, has got to be Tesla to the upside. Tesla's up almost $11 right now. I believe Tesla was down around 15 today. I'm doing this from memory while I get this up here.
12 in the morning for sure.
Yeah. Netflix on the other side is down 16. Costco's down 6. These are your buckers. Boyle, which is a nat gas product, is down. It's a triple leverage. Lulu down 4.
While you're talking about that, I closed a trade in Boyle today because I had one on for a long time. I had a front month June butterfly on. The markets in there are $2 wide. It's not. Yeah,
it's a horrible trade.
Yeah, you cannot trade that stock. Just stay away.
Yeah. Tesla, you are correct, Sadnov. It traded down to 281. It's 306 right now. 306.66. The devil, Sadnov, is the high. Let's hope that changes before the day is over.
Yeah, I think the bigger story actually is the reversal in Apple. It was up $1 this morning. Now it's down $2.50. Apple, when they started talking at their conference, it did the exact opposite of what everybody else thought it was going to do.
Yeah, Apple never got out of its own way, to be quite honest with you. Over here, look at the last 5 or 6 days. I totally agree.
No, I know, but it was up like $1.50 this morning. It sold off $4.
Mm-hmm.
That was
I'm sorry. I think the $25 move in Tesla is a bigger story than the $4, $5 move top to bottom in Apple. I'm sorry, Sosnoff. It's my show.
I disagree. Anyway, there wasn't much else.
But you know what, Sosnoff? We're friends. So as friends, we can agree to disagree. Like, that's what makes an intelligent conversation, when people agree to disagree.
Well, all I'll say is there were a couple stocks that did turn around, which were nice. Which one is Meta, which was up $5 this morning. Now it's down $1, and the other was Apple, which didn't help me, the turnaround in there. Tesla just was, I guess, the biggest mover. But the thing with Tesla is the premium came in there so much. I'm not complaining.
Yeah, I don't blame you. Yeah, volatility in there, IB rank of 29. It was in the 40s just 48 hours ago. 48 hours trading days, not calendar days.
Yeah, I sold some more premium in there today. We're short. I don't know, some calls and some puts. We're about delta neutral. We're maybe a little bit short.
Ladies and gentlemen, don't let him paint a picture that's not accurate. He's been on a trading bender as of late. Every day is a winning day for the Sosnoff. How does Daddy do it?
This is just the kind of market that's good for me. That's all.
Uh-huh. Mm-hmm. So it's not you, it's the market?
It's never me. It's always the market.
Just want to make sure. So the market has to cooperate to your assumption for you to make money?
Not exactly.
Always.
Not exactly.
Always.
But
always.
When volatility craps out, it's usually pretty good. We're up at some levels. Volatility
has done that, Sadnoff. Volatility down another 45 cents today, 18.20.
We are approaching a few levels of interesting. We're approaching a few interesting levels here. For me personally, where I think there's not necessarily the market as much as there's certain stocks that I feel are frothy, and but I'm a little bit reluctant. We took a bunch of profits today in Tesla, but I'm a little reluctant on some of the other stocks out there.
Are you going to tell me which ones they are? Or are you going to make me guess?
Yeah, there's certain stocks that there's certain earnings stocks that actually don't look very good. At post earnings, like AVGO and Lulu and DocuSign actually rallied today. I'm not sure what happened with APP, but I don't trade that very much. It was down $32 today. But there are other stocks that are really frothy here. Can I list a few of them?
Sure.
Boeing at 217. frothy. MU at 111, up very, very, very frothy.
Full disclosure, MU is a tough one to make $1 in. I'm not going to lie.
Yeah, AMD, frothy, 121. A lot of these are kind of chippy stocks. Microsoft, really frothy, 472. Anyway, I'm just mentioning a few just to throw it out there. Those would kind of be my top ones. Meta being my favorite short.
Understood.
I would like to sell some Palantir up here, but I'm going to wait till tomorrow. We're also short Roblex and RBLX. That's another one of our bigger shorts. It's down $2 today, but it's been on an unbelievable tear. RBLX. It hasn't had a single downtick.
It has been. This is actually the first downtick since April. It didn't even when the market was imploding in April, it hardly went down. It actually caught itself a bid. You're correct. Hey, my time-ready sources tell me it's the lowest volume in SPY in months. Tesla options are almost as big as SPX options, 2 million.
Oh, I wouldn't surprise me at all. But I got to tell you something. I have not on a normal day. Yeah, you know the old never sell a dull market. Well. Yeah, this is the crazy.
You would say this was a dull market, right?
Well, first of all, the market drifted higher all day, right? It didn't really do anything else. It just drifted higher, and this is the biggest.
We had the biggest sell-off this last hour or so.
Right,
we went
from up 19 to up 9 right now, or whatever it is.
Correct. That's correct.
That's the biggest sell-off we've had. I don't read anything at this point. I don't read anything into it, but.
The bat did say we would go down 8 handles, and we did from 59.92, and it would seem like it was a crash, and then we would rally. The bat did say that on Friday, Sal. Now, if you weren't around for that little nugget, but I'm sure you were watching.
Praise the Lord. I'm glad I missed that little nugget.
People made fun of me. I said, we're going to look like we're going to crash. We'll be down 8, and then we'll rally from there. Now, I don't know how I do it, Sadnov. It just comes in my head. It's like an idiot. Savant.
You'll be telling it to the walls when you're locked up in a padded institution and you're just screaming at your caretaker, change my diaper and the SPUs are going down 8. That's exactly,
And don't forget to wipe me. Last time you forgot.
Exactly.
Okay, Vinny?
Exactly. All right, let's see what else we got going on here.
All right, thank you for asking, Sadnov. No, Vinny's arm is doing better. He was at lacrosse this morning. He's feeling good.
I'm feeling good that he's feeling good. Great.
I'm glad you're happy. No earnings. GME for tomorrow was after the close, though, so there's not too much to do there.
Yeah. I'm not trading GM either. I find that stock to be annoying, as they say. So I'm going to pass on GME. I'm actually looking for stuff to do, and I haven't really been able to light the lamp, as they say. Maybe I'm saving that for tonight. I found.
Who do you like? Who do you like tonight?
I mean, who do I like? I like the Panthers.
Oh, okay. I didn't know if you were switching teams. You've been known to do that on the weekends. I didn't know if you were doing that now during the week.
No, I found 2 suckers that are on the. I found 2 suckers on the trade desk who are taking the Edmonton tonight. So
Edmonton, Oilers?
Yeah.
Are you kidding me?
Yeah, that's what I said.
You got him even up?
Yeah.
Nice. It's pretty much a pick'em game. I mean, I think it's 53-47 or so.
Yeah. I mean, you're not getting any odds. You're not getting any odds for this series.
No, not yet. But I will tell you, Panthers in 5.
They have the first 2 games have gone into single overtime and double overtime. So I wouldn't say that this has exactly been a runaway.
I didn't think it was going to be as good as last year, and so far it's been just as good.
Oh God, yeah.
Mm-hmm. Yeah.
Yep. Tonight's going to be awesome.
Yeah.
All right, let's see what else we got here.
Did you see their rally flags at the rally towels that Panthers have. Did you hear about this yet?
No.
So they put them on the back of all the seats, and it's a rat, for Marchand. Yeah. They got the rat there, and then inside.
No, a rat's always been there.
Yeah, and now you've got him in there too.
Yeah.
Now, there's some little subliminal messages in there. Each team that they beat to get to the finals, there's like a little symbol in there of each one of the three teams. It's pretty cool. The Canes, and they've got them all in there. It's pretty cool. I want one, Sadnov. Can you get me one? Will you fly down there and get me one?
No, but I will tell you that in my lifetime, going to the NBA Finals was super cool, but going to the Stanley Cup Finals was amazing.
Oh, you've been?
Been to three. I've seen the Hawks win all three.
Oh, nice. Good for you. Wow, it must be nice to be king.
Nice. And it was great. Let me tell you something. It was great.
I bet it was. That's great.
Wasn't it?
I must have been busy that night.
Oh, yeah. Oh no, we took a lot of people, but I don't think you got the nod.
We took a lot of people. Said no one ever.
No, I think my favorite. The Hawks thing was pretty good. It was almost as good as the Bulls winning the championship. All right, let's see. What else do we got? I mean, we're lucky. In our lifetime, I got to see 6 Bulls championships and 1 Cubs, 1 Sox, 6 Bulls, and 3 Hawks. And I was at all 6 of the Bulls and 3 of the Hawks. I missed the White Sox and the Cubs.
Call yourself a fan.
Well, I had tickets for Game 5 of the White Sox. They swept in 4, and the Cubs.
I remember that. We talked about it. I go, oh my God, this is going to be the greatest. Game 5 will be awesome. It might actually be it might mean something. This could be great. It meant nothing.
I also had tickets to the Cubs to win in the World Series, but I gave them to my son Cole because I felt like,
all the horrible things you had done to him his entire life. You
Exactly.
felt you should make it up here.
I felt like being raised in our family. I felt like I had to throw him a bone.
I don't blame you.
Poor kid. It's amazing he turned out even close to normal. All right. What else? What time do we got here? Let's see. Oh, it's only 2:48.
2:48. You got plenty of time.
I mean, do you get short here on the close? I don't know why.
No. I mean, for all the reasons why you shouldn't probably. I mean, you started saying it, never sell a creeper. You got a little bit of a creeper going on here. There's no volatility going on in the market. That's another reason why you shouldn't sell it. I mean,
to buy Apple.
You got to go with the pigs. You got to buy Apple. You got to buy Nike. I mean,
I'm already long Nike. Do you buy Apple?
I know here? It's a depth march.
I know. Do you buy Apple?
Do you buy Apple? Ivy rank of 24. You can't really calendarize anything here, Thomas. August is 34. July is 31. I guess you got to do something in July. If you're going to do anything.
Yeah, I'm gonna buy a little bit. I'm gonna
You know what? June with 11 days, the 200 puts for 340 brings you back down to 197 and change. That's below the lows that we haven't seen since May. I don't know if you're really trying to do something, but I know it's a little too rich for you.
No, I'm gonna do something different. I'm gonna adjust my position a little bit. Oh, I messed up.
You can't do anything without me. Seriously, you really can't do anything without me. You didn't notice when you were selling more calls than puts that it was probably the wrong thing, Delta. When you load this up, it'll show you deltas on there.
I was trying to roll down the calls. I messed up. Please. There you go. I did a better price.
No, that's easy.
All right, now I'm short twice as many puts as calls.
You know you sold calls just now, right?
Yeah, but I'm short twice as many puts. Right? That's all I wanted. I want to be short 2 puts for every 1 call.
Let me take a look at what you have.
I do.
You are short 2 puts for every 1 call. You're short the 190 puts and you're short the 215 calls. You are short 2 puts for every 1 call.
Yeah, that's a little bit bullish position.
That's a little bit of a bullish position. Yes, sir.
Yeah, so that's that.
Even the S&P's just rallied 4 handles off of the bat low.
There you go. You're amazing.
No, but I am getting punch drunk. I'm not going to lie.
Well, it's tough on days like this. I mean, these are punch drunk days.
Yeah.
You know, I mean, let's be fair. That's what low volume does. And everybody's going to start crying when vol goes down and the volume gets low. Everybody's going to be like, "What happened to the business?" Don't worry, it'll be back. It always comes back.
It always is.
Yeah.
Even your beloved Bob is up today, up $2 and change. A lot of Chinese stock up today.
I know they did a little pig hunting today.
Yeah, I agree with you. Yeah. Mm-hmm.
Yeah, a little bit of pig hunting, and Baba Baidu are up.
Costco traded under 1,000 today. It's rallied back to 108. It's still down $6.50 or so, but it traded under 1,000. Hard trading Costco.
It really is. Mm-hmm. Like, why don't they split the stock? Like Costco and Netflix. I mean, just for the fans, they should split the stocks.
Agreed.
Nobody can trade, $1,000 stock. It just sucks.
Yep.
And you can't make markets in $1,000 stock. I know why they don't do it, but they just should.
They want to keep it in controllable hands.
Yeah, exactly. Mm-hmm. Exactly. All right.
You want to tell everybody we're going to be in London?
No, they already know. You've told it 50,000 times. Let's bring on the boys.
Oh, beautiful. Are they all ready? Are they here for us?
Of course.
Oh, of course. Who we got?
Dylan and Chris and Ilya's on his way in. Hey, boys.
How are you?
We're good.
Hello. What's
Dylan,
going on?
You getting ready for us?
I am. We're out there harvesting the truffles. We got the pigs are out in the forest looking for the finest truffles in all the land in anticipation of your arrival. They are
only white truffles. Only white truffles for me, Lord. Remember that.
They're stomping the grapes over in the Barolo Valley as we speak. We have to choose between some Piemontese and some Super Tuscan. But you'll survive either way.
Give him a table Chianti. He won't know the difference. Save the Barolo for yourself. Trust me on this one.
Listen, in your world, Sosnoff is just another jackass who's been standing around nearby for the last 40 years. In my world, he's a Greek philosopher.
He's a new jackass who just started standing around.
No. I'm doing the introductory comments in Milan. I'm not going to present him as a trader or a financial executive. I'm going to introduce him as a peer of Nietzsche and John Locke. The man is a timeless philosopher of risk and life planning and peace and decision making. I mean, this is more than math and money. This is a mental revolution. Not since Plato has the world seen a thinker like Tom Sosnoff.
So, Tony, I forgot to tell you this. So I'm out to dinner with JJ, and we're at a fancy Italian restaurant. This just recently, and he's parking the car, so he's run a few minutes late. He couldn't find a spot. So I go, "You want me to order you anything?" He goes, "Yeah." He goes, "Order me a glass of Chianti." Okay. So Scott's there, right? And somebody else is there, and they go, and they're looking at a wine list, like, you don't
even want to waste Chianti on him. Chianti we waste on you.
They're both snobs. So they're looking at this list, and I'm like, they're like, we're not ordering him Chianti. Like, they went through this whole thing. It was really funny. You would have enjoyed it.
I'm sure I would have. Sure I would have. There's Ilya. What's up, my man?
Gentlemen.
Scott said, bring him anything that comes in a basket,
Anything he can take the bottle home and stick a candle in it for his dorm room.
Exactly.
Anyway.
All right, boys. Well, no volume, dead day. The market did maybe everything we wanted it to today, I guess. I don't really know. But what's the thinking here? More of the same for the week, or is this just, let's get the dead day out of the way? And I really thought it was so dead this morning that something wild was going to happen this afternoon, and it didn't.
Yeah.
Shocking.
Yeah, it was kind of like watching paint dry today. But I think as you get closer to some of the event risk this week, it might get a little bit more active, at least for people to get positioned or maybe even out portfolios. They might get a little bit more active. There's CPI this week. I'm not sure it means anything at all here because the Fed is very firmly sitting on its hands, but that confirmation may be a thing unto itself. We'll see. I did have to run away from my Russell short today because of all of them, that one seems like it's attempting to do something.
Russell was the strongest of the group today.
We've liked the Russell for quite some time relative to everything else, and I think that's I think that's a good.
I'll tell you one thing, since you just talked about the Fed. I mean, this market's acting too good for the Fed to have to do anything with interest rates. They're not. They're going to be. It's going to be so non-eventful. I think they just don't want to upset the apple cart. That's the way I would look at it.
Is there a Fed meeting this week?
There's a Fed meeting next week, but there's CPI data this week. And for me, actually, the most interesting thing, and it's not going to have much to do with what the markets do all week because it's not there until Friday, is the consumer confidence numbers. Because at the end of the day here, you either have a growth scare or you don't, and the economy is 70% consumption. So as long as consumer confidence is okay and anchoring, then the Fed doesn't really have to do anything.
When does the Fed meet next week? What day?
The 18th. That's
Wednesday. Next Wednesday.
That is a Wednesday.
It's always a Wednesday.
We have to get used to the dinner time Fed announcement, Dylan. You have to train us on the. So let's see. If we're in London Wednesday, that means 7:00 at night.
Mm-hmm. So you guys are going to do truth or skepticism live from dinner. A few bottles of wine.
Digestif after your meal.
I mean, I work every night around here, you people. You know, this is how it is. It's what we do.
Preach, Dylan. Preach. Nice. Tell him.
You guys.
He's got that Italian work ethic.
Hardest working man in Milan. Absolutely.
Listen, I'll tell you what. I'm going to say a very pro-American thing right now because I spent my part of my afternoon today opening an Italian SRL, which is like an LLC in the U.S. And the degree of nightmarishness associated with doing so, I can't imagine how any Italian would ever create any new company to do anything ever.
Hence my argument all along that America's too big to fail because nobody else has a working system.
Just try to originate a new company in any. I'm sure any European. I mean, it's just comically. They really don't want you to do anything new. They really, really don't want you to do anything new. So. Just a validation of your very thesis, Dr. Sosnoff, which is say what you will. The American contract, banking, investment, exit, entry, all of it, no comparison.
Yeah, that's why it's so difficult for like innovative startups to raise money. Like unless you're like in Estonia or Israel, it's a challenge.
Yeah, forget it. I mean, in this company, we made 100%. All the stock was owned by a U.S. LLC, and it was still impossible. We're like, we'll just make it a full subsidiary. They're like, doesn't matter.
Look at this little sell-off into the close, Mr. Batista.
Yeah, well, Dylan's bad mouth in Italy. All the Italians are selling our market. Even the S&Ps are only up 350 now. Darn, Dylan, ruined everything.
I'm sorry.
Let's keep that going. I got some puts that need bailing out.
The food is still good.
The food is still good. There you go. You better take Sadnoff out for a good meal. He's not, so he can come back and say some nice things about Italian food.
I mean, he had very specific requests.
He knows the pressure. The pressure's on him. I mean,
my man just wants table side, cacio e pepe, pasta in the cheese wheel. He wants exactly what he saw on Instagram, and that's what he's going to get.
And he wants to eat like a child.
I want to be a tourist. Okay, I want a touristy meal. Yeah.
Are you gonna put a bikini on too, Sosnoff, while you're eating this?
I want to eat a tourist meal. Okay, I want to know where the tourists go.
Full cheese wheel, super extravaganza with a nice. Anyway, it's going to be very lovely. It always is.
Set them up, my man. Appreciate it. We're going to take a quick 90-second break and come back. We got more Tasty Live on this unchanged market. We'll be back in 90 seconds. Overtime next. Peace.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Decision to build Thinkorswim was a byproduct or derivative of 20 years. In our minds, the future of finance meant that we were going to move away from something that was very manual and move to something that was tech-driven.
What we did with Thinkorswim truly changed the industry. To do it a second time was a challenge that I just had to take. The platform is just leaner, cleaner, a little meaner, legitimately built from scratch.
Tasty Live's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging, and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
The market goes nowhere on basically no trading volume. Okay, that's a start to the week. It's Monday, June 9th, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in non-riding San Francisco, Dylan Radigan in Milan, getting ready for a Sosnoff and Batista trip over there, coming right up around the corner. But we're here to take you through the rest of this hour. Join us until 5 p.m. Eastern when the futures market closes. If you're on the platform on tastylive.com, thank you for joining us. Come over to YouTube. Tell us what you're trading, what you think of this meandering kind of day. The S&P 500 up by a whole 0.05%.
Hey!
825,000 contracts traded, which me thinking, are we rolling today? That doesn't make any sense, Chris. But sure enough, that's just the trading volume. It's pretty light. Nothing's doing there. S&P up only 0.05 to the Nasdaq's gain of about 0.1. The Russell's the leader up by 0.71. We have yields down a little bit across the curve. Silver continues to charge higher. Your dollar's mostly softer following those yields, which I guess that's good news. The backdrop of all of which, of course, is that there are Sino-American talks going on in London to iron out a potential handshake agreement at the minimum, according to Press Secretary Karen Levitt. But it's a day where the markets basically do nothing. Dylan, I haven't had the pleasure of seeing you, though, since last Wednesday. Has anything interesting gone on in the market since, say, the last time that we met?
Not that I can recall.
Me neither. It's a quiet Monday on the other side of riots in LA, and of course the Trump-Musk fallout here. I know that you got wound up last week. Ilya was very proud of the fact that he's like, oh, we had the best content ever. I just got Dylan going on about Tesla.
Smart on Tesla.
And I listened to it.
We were right. Look at that. Tesla was a buying opportunity. I mean, it was.
Yeah.
If you didn't buy Tesla on the idiocy, when do you buy it? My question for you people is, did Scott Bessent give Elon Musk a black eye, as they assert he did? Was there a physical altercation between the first buddy and the Treasury Secretary where they came to blows and the first buddy took a black eye?
I mean, if Scott Bessent gave Elon Musk a black eye, that might have been the least exciting fight in the history of fighting.
Scott Bessent's not a lefty. So
okay,
I mean,
no way.
Have I looked into would this go into the pantheon of stories about the Trump White House, like Peter Navarro being hogtied so that Lutnick and Bessent can get Trump to tweet out the April 9th? Like, yeah, I would love for this to be the story. It's great for my own personal headcanon. I don't know if Scott Bessent punched Elon Musk in the face. Something that's true. As funny as it would be for how decisions are being made there. But yeah, actually Tesla has a really good day, 4.55% higher. The entreaties between Musk, or at least from Musk towards Trump, are pretty apparent. He's been tweeting some more or kinder things, calming down after last week's nonsense. But Tesla being back up takes a little bit of drag off the index, which quite frankly was down on Thursday simply because of Tesla. It's a quiet start to the week, though, here, Dylan. I mean, are we just waiting for some sort of shoe to drop here? I know, Ilya, we'll talk about inflation in a bit, but surely there's a part of every one of us, maybe people in the chat feel otherwise, that maybe this market's a little bit of a surprise move given some of the headlines in recent days, Dylan.
I mean, it's one of those things where I think we've talked about this a few times, where there's been so much excitement, especially obviously, whatever. There's been a lot of excitement going back to the election, really, right? Like, so figure from last September through the end of April, how many months is that? That's many months of extreme stimulation and wild speculation and all the things. And I do kind of wonder, also summer is coming and, all the things. And I don't think it's unreasonable to speculate that that the market could kind of churn sideways for a while, that the volumes could come down and that price action could diminish until basically up to the point where there's a reason not to, meaning some extraordinary piece of economic data or some meaningful sort of change in the expected trajectory of so the sort of core policy decisions. So I don't know that this is just a one-day wonder. There's a reasonable chance that this is an indication of what could be certainly many days and potentially weeks or even months of a slightly less stimulating type of price action.
I mean, to give Chris where credit is due, let's take the nonsense of the headlines off the menu. Last week was kind of a growthy week. Stocks up, yields up, crude oil up by a good margin. In the FX market, euro is up against the dollar and the yen is down, fractionally, but nevertheless. Euro is up because the ECB sounds reluctant to cut rates next year because of the defense spending boost. That's growthy. The yen weakens as yields go up. That's growthy. Bitcoin, that doesn't really do anything, but it's a weird one. So let's write that one. Yeah, so it's basically in a range. It's near the top of its range. It hasn't gone anywhere in a few weeks, basically. So when you look at kind of the the upshot last week, it all kind of looks like maybe the markets have arrived at the conclusion that as long as the foolishness continues in Washington without any real consequence, in the sense that as long as everybody keeps yelling back and forth, but there's constantly an 11th hour reversal on any one thing. Trump and Musk are fighting. Okay, now they're not fighting. Trump and Xi are fighting. Okay, now they're not fighting. This is happening. Okay, now it's not happening. Okay, now it's happening again. Okay, now it's not happening again. Every 48 hours, the story flips, but ultimately there's not really anything that happens. And so maybe this is like a really loud version of paralysis, and the markets like paralysis.
Interesting. It's kind of like gridlock. Markets do like gridlock.
But loud gridlock.
Yes. Not
headline heavy gridlock.
Yeah, not like I'm resigned to the fact that traffic's moving and this is just traffic. Like I'm angry that I'm sitting in this traffic kind of gridlock.
Like
okay.
Like everybody's spinning around in circles and they're going fast, but they're not going anywhere.
Okay, I can buy into that a little bit here. Dylan, if that's the kind of market that we're in right now, is today is a really quiet day. I mean, all things considered, headlines, flow all session long and no one really does anything. Are we just waiting for the shoe to drop? That is the U.S.-China trade talks. No one wants to make a move until we get some hard data.
I'm not even sure that we are waiting for that, because I think people expect those trade talks to end up with something relatively benign. I think all fear of sort of extreme tariffs has been wiped completely off the table. I just don't. I just think it's, even if, let me put it this way: if those trade talks break down and there's a big headline that's all of a sudden the trade war is back on and the market sells off, everyone will buy that dip.
I would point out 6 sectors are down today among the 25 that we cover here. SMH is your top performer, up by 1.67%. Elliot, I know that you don't like your diagonal trend lines here, but that's a pretty clean one off the highs that we have last July, this past January, and we trade up in there today to sell off. What matters more this week? Inflation data that will do absolutely nothing to convince the Federal Reserve to move on rates in June and perhaps even July? Or this U.S.-China trade talks that Dylan is suggesting may not be even something that we really care about? We're just kind of waiting for it to get out of the way and so we can keep moving.
To me, the most interesting story for a few weeks now, and it becomes a matter of, do you get a lull in the loud stupid to actually have it break through, is the story about growth and the story about the U.S. consumer. And the U.S. consumer isn't happy. And we're not going to get that answer. But in the CPI data, we might be interestingly more interested in sort of the extent to which core services continues to cool, because that's where consumption lives, and that would be a growth conversation. And so the extent to which the CPI data is a growth kind of data point rather than a Fed kind of data point, that would be interesting. Because, at this point, the markets don't even expect the Fed to move in July. They're only 50-50 on the Fed moving in September. They're in favor of a move in September, and they do expect it by October. And then there's about a 60% chance that there's a second cut by year end. But in cumulative pricing here, the markets only see 88 basis points all year. They're, again, slightly more hawkish than even the Fed. And we're going to get an update of the S&P next week, which probably isn't going to give us anything controversial because the Fed probably still doesn't know what it wants to do exactly. So with all of that on the table, to the extent that the CPI data tells you something about the consumer, that'll be interesting. And then, of course, on Friday, you have consumer confidence data, which is going to directly speak to this. But the real question is, how much do markets care? And if we are in this kind of melt up amidst loud standstill in policy, well, then they may not care very much. That's really, to me, the big question is, are we heading into a second quarter where consumption is going to weaken again after it was the weakest in almost 2 years in the first quarter? Because that's the real underpinning of the economy. At a time when Europe is weak and China is, we just saw again, imports in China cratered in the data that came out over the weekend, down over 3% year on year. Sharp decline in imports. That tells you that the uptake in China, either for the front running of the tariffs on the other side or from domestic demand, is weak still. And so the growth story is there. The question is, when does somebody start to care about it?
Dylan, one thing that I found interesting about today's action, this little retail ETF, the one that contains all the clothes makers that were hammered during the tariff and growth scare in April, March and April, new high, not just for June, but going all the way back to mid to late February here. XRT breaking out. We know that XLY is in a similar basket, although the Tesla noise is holding this back. Tesla's a healthy chunk of the overall ETF. Maybe it's flagging still. I can look around to XTL, for example. We see here now another index, another ETF that's made its way back through pre-Liberation Day support turn resistance. Even with today's pullbacks in XLF, we're closer to the highs than we are the range lows. I mean, you mentioned that the market doesn't care about this. The price action seems to vindicate that too, not just because the stock market's up 20% from the lows, but the pieces of the puzzle that have been most inflamed, they're not there.
Right.
Okay, no, I mean, that's kind of why I'm like, how can I mean? I just presume that the market is a better discounting mechanism than my opinion, and I don't think the market gives a damn about anything that Trump says about tariffs at this point.
When does the incentive structure change, though? My that I've shared here with you guys, and you guys have both nodded along at times and said, that sounds interesting. But because of the sell-off in early April, you start the second quarter with a lot of people abandoning positions, and then the market rips. So the incentive structure here with the market still net short, as per the most recent CFTC COT report, although the least net short it's been since it turned net short earlier this year. So the short positioning has almost evaporated. Yeah. There would be an incentive for this market to chase higher through the end of the quarter, because you got to paint the tape. You got to justify people investing with you. If you can't make more than SPY, then why the heck are you charging 2 and 20, right? You have no business. We get to the end of the quarter. We then have the 90-day tariff extension window coming to an end right around the corner thereafter.
Yeah.
Dylan, when do people start hedging again and buying out of the money protection on puts? When do they start selling their stock in anticipation of the fact that we're now more than 2/3 of the way through? We only have a trade deal with one country. It's not even written down on paper, and it happens to be with a country that we have a surplus with. When do people start to question whether or not we're going to kick the can or ultimately tariffs back on? Is that a concern that we need to have here on June 9th, Mr. Radigan?
I don't think so. I think that if anything, we should be from a trading perspective, in my opinion, at this point, we should be so lucky as to have them try to re-implement the tariffs in July 9th or whatever it is, because of the buying opportunity it'll create. Because even if they re-implement the tariffs, they'll pause them within a week.
Ilya, I think that speaks to something that Sosnoff was talking about here, like thinking about the calendar and the timing of things. I know last night when he was on first call with us, he wasn't necessarily thinking about the July tariff deadline. But he did mention that when volatility's low, you start to take your positions off and you start to keep some powder dry, right? And so tactically speaking, if we're thinking about how the calendar falls the next few weeks, there's really no problem with being bullish here, maybe for the next week or two. But as you make your way into the later part of June and you start thinking about the calendar turning over into July, you have to wonder if maybe you may want to make your way through early July with a lot of chips on the sidelines. and see if you get a reimplementation. Because if what Dylan says is true, like Trump's going to come out, he doesn't have his deals in 90 days. He feels really disrespected like Rodney Dangerfield. So he kicks back on the tariffs for a little bit. The market comes back in slightly, right? Countries come forward to accelerate the negotiations. The tariffs get reextended. The market rips again and we pretend like it didn't happen. But there is going to potentially be a small window there in early July where things
with
go
a vol
sideways.
spike and a little excitement.
So you don't want to be like too vested right now, dare I say. You want to have something in your pocket. So if that does occur, the market at first blush is going to treat this like early April, like not a big deal. We fade the dip. We're going to buy the hell out of this dip until we get punched in the face and the data rolls over. We're now like Pavlov's dog. We're going to buy the dip. But you got to keep powder dry to buy that dip. So there is a window here coming up over the next 2 weeks where I think personally, if you have equity market longs like I do, you have to start thinking, do I take these off a little bit? If I keep them on, do I want to lay into a shorter dated long put to protect me in case Trump wakes up and says tariffs back on, no deals in 90 days, tariffs automatically going back to what I said on April 2nd?
Well, of course. I mean, I think if you look at what's actually occurring here, you have this kind of a parallel development, and the Russell is a little bit of a different animal, but it's not also the largest index in the world. So I'm sort of looking at the S&P 500 as my baseline, and to some extent at the NASDAQ, because it's a sort of dominant animal here with who the top market cap names are. But neither one of these indexes have done much of anything since May the 22nd. And if you look at the highs both of them set on May the 29th, neither one of them has been able to close above those highs. Those are the range highs since both indexes stalled. It's managed to clear the May 22nd close. That's a thing. But the swing highs from last month, they're holding in both indexes now on multiple tests over and over and over again. The market bumps into those levels and is unable to do anything. Today was another day. And when you look at the parallel in bonds, the long end of the bonds bottomed exactly at the same time, May the 22nd. And although it's been a slow grind heading higher, today bonds find support, again at their consolidation range. But they've been quietly drifting higher at the long end. All of this together is painting you a story not of exuberant optimism, but of a kind of begrudging wait and see, not prepared to throw in the towel, but getting worried because rate cuts are getting pushed out into the back end of the curve. And the markets go, okay, well, once all of the Michigas filters out of the headlines, if ever, or at least we become so acclimated to it, to Dylan's point, that we just stop paying attention because who cares what they say? It doesn't mean anything anyway. It's going to become a different thing in 48 hours, almost in perfect 180 degrees. And that's going to happen every 2 days or so. If that's what this is, then eventually you do have to look at growth and go, okay, well, we want the Fed to come sooner. They're not coming. Break-evens are falling, suggesting the markets know the Fed needs to start. The president is aggravating the Fed chair again, although interestingly, he doesn't want to call him by name in his tweets. He just calls him, quote, too late. Doesn't want to say his name, which is interesting. So it's almost as if somebody's like, don't say Powell's name out loud. Okay, I'll antagonize him without saying the name. Sorry, Scotty B. I won't say the name. So
didn't realize Trump was a millennial who couldn't say Voldemort. Go on.
See, there you go. So you get at this and you go, okay, so the markets aren't happy, but they're not prepared to get scared. They're just kind of drifting here. But the direction of the drift is very much not what we saw in May. It's very much not what we saw through most of April as all of the chaos unclenched. So I think you have to be prepared for the fact that they're going to be worried about CPI to the extent that it means the Fed's delayed, worried about the Fed to the extent that it means the Fed's delayed next week. And then you get into this weird thing, Chris, to your point, into the end of the quarter where they have to start thinking about, okay, well, so what happens next? What happens with these deadlines in early July? We know markets don't wait for event risk to happen. They front run. So you have to kind of be prepared for the fact that sentiment is going to crack. Now, do we have any evidence that it's cracking actively? Of course not.
No, not yet.
But
not yet.
You do have to be prepared for the fact that this is a soft-footed market that doesn't want to run away with conviction, and that the makings of it make it vulnerable to just exhaustion and a repositioning to rebalance portfolios for something a little scarier, and you never know when that happens. In fact, oftentimes, the most potent versions of this happen for no reason at all. And I'm thinking of mid-July of 2008, where everything just cracked. It just ran out of steam and said, you know what, now is the time. Nothing happened.
The calendar of this all kind of like fits together where, you know, you hear Sosnoff and Tony say, like, oh, as you go into options expiry, you know, this month tends to be penned. So June 18th is expiration. June 18th is a Fed meeting. Options expire. Looking at the 20th, you know, that's the last day of trading. You have quarterly options expire on June 30th. So there's that week 18, 19, 20 where there's a bit of a potential flush through the system. And then the week of the 23rd through 27th, that's when you get a market that's unpinned post-Fed and really starts to pay attention to and think about that deadline here. Because, I mean, we talk about that tariff deadline being right around the corner. I know it's only the 9th, and you go, you know, it's a month away. That's going to happen real quick. That's going to happen real quick, right? At the end of next week, we're talking about the options expiration for the month of June. So it's right around the corner. We're not that far away right now. So right now we're floating higher. I'm staying long, Dylan. I'm pressing on here. Today's a nothing day. Usually volume-wise, you look for 1 million contracts traded by the time, you know, we're on futures power hour midday, and we were at literally 500,000 on the nose. We do not cross 1 million for today's session, 838,000. But that's kind of the summer trading right now. We may be in for the next week plus as we go into this Fed meeting where it's low volume, low volatility. People just kind of have their heads in the sand, ignoring everything, waiting for some news on the tax bill, waiting for some news on the tariffs. Why be bothered with anything at all? I don't think equities are that, dare I say, that interesting right now. We're at a 13.7 IVR in the S&P 500. It's similar levels for the NASDAQ. Although the Russell does get moving here, and I suppose that is a change in my own personal positioning today in RTYU5. I do take a long out-of-the-money call spread wrapped right around 2,300, in part because as we look to the charts here that have the technical analysis on them, left shoulder, head, right shoulder, or on this hourly time frame, we'll go 4 hour. On this 4 hour time frame, post gap out of the China-U.S. negotiations in Geneva, Switzerland, left shoulder, head, right shoulder, pretty clean neckline near 2135. Either way, it looks like the Russell has been thrust into a potential catch-up area. Mm-hmm. And Ilya, as you and I talked on Friday, when you look at the options pricing in the market right now, when you go out to 46 days, looking for a move up to the measured move of 2,300 is not out of the question in this 45 in, 21 day out window, given that the one standard deviation move is right between there, about 23.25 right now. I'm comfortable holding on to this position and adding a little bit of upside equity exposure for like the next week and a half. And then at that point in time, I'm going to start trimming down, and instead of rolling, I'm going to maybe take some flyers if vol is still low on some out of the money put stuff to see what happens with the tariff deadline in early July.
Mm-hmm. Yeah, I mean,
tactically makes sense, I think.
Yeah, I'm thinking here about what to do with Russell and maybe putting something on against my other shorts. It's still a little dicey here because if you look at where the underside is of the preceding range, you're kind of not through resistance quite. But vol is really cheap. And so I'm going to think about maybe putting something on. If this sustains and there's not a crazy spill overnight and we're still looking relatively well anchored as we head into the cash open tomorrow, I might put a little something on here that's mildly bullish against my other shorts to kind of reweigh the boat.
Dylan, there was something that I wanted to ask you about here. It's a conversation that really goes back a year now. So for folks that have been following us along with us for at least since last June, we talked about the Apple WWDC 24 basically a year ago. And Dylan, we talked about the potential for an AI upgrade cycle for iPhones, where the release of the iPhone 16 being an iPhone model that would be AI capable would help drive a potential super cycle for hardware upgrades. And while there was some evidence of that coming together over the course of the year, it never really materialized, I think, in the way that Apple, its analysts, or even folks like you and me hope for. Since then, Apple's basically round-tripped. We're sitting where we were effectively at the start of last June. You could see the WWDC last year on June 11th, and that provokes this big skyrocket up. So we're actually trading right around the same levels we were a year ago. Apple's basically done nothing. I say all that because I looked at the WWDC 25 lineup today, and while there's Tahoe OS and a Chat GPT playground, there's an Apple TV karaoke machine. Do you hear that's the third thing I named? An Apple TV karaoke machine? That doesn't sound like an impressive list. Dylan, no. What's the problem with, how come we are so much less optimistic on Apple here a year from when we were thinking that an iPhone super cycle could be around the corner?
Yeah, I mean, Apple has not delivered a consequential AI. Full stop. They just haven't done it. And it's one of those things where, certainly from where I'm sitting, I would expect much more from them. Although I suppose the more nuanced analysis it would say that the critical characteristic to be a player in AI is a massive, massive, massive pool of trainable data, which is more available to Google, Chat GPT, obviously, and the other relevant players, Grok, et cetera, and that and that Apple, being a hardware business and being a privacy-driven, a more privacy-driven culture in comparison to the other players, this is conjecture. I don't know why Apple has not delivered a meaningful AI offering, particularly when you consider the loyalty and the sort of embedded nature of their hardware in the hands of particularly Americans, and that the sort of the capture of the audience seems peculiar that there isn't a more relevant AI that just is resident, that's a native AI on the iPhone. But to answer your question as to why there's less optimism this year than there is last year is because there's been a year's worth of information and none of it is terribly inspiring.
It really hasn't been inspiring, Ilya.
Mm-hmm.
Is this just because Apple's missed on the product? I mean, I can't help but feel like the first mover advantage that Apple had with Siri has obviously been missed in a manner like Microsoft shutting down Skype. How did they lose out to Zoom? And yet it happened.
Mm-hmm.
So Apple here, they had the voice chat bot that was on every single one of their products, and yet now they're talking about allowing some other company to come on and provide that service.
What's interesting if Microsoft has actually lost out to Zoom because, of course, they have Teams, and Teams is a very big product, and Skype and Teams are written on different architecture, and they just said, you know what, we've picked one. Everybody's got to go to Teams now. And Teams is something that, obviously, we use it here internally, but it's shown up a lot in sort of my comings and goings with people outside of work that are like, oh, I'll schedule a call. I'll do it in Teams. So I'm not sure if there's a parallel here, but for Apple, you do kind of get a Microsoft-y vibe in the sense that Microsoft was quiet for a long time after being sort of the dominant software provider, the dominant OS provider, until they kind of figured out what to do with hardware and with Xbox and sort of things like this. So there is a level of cyclicality to this. A company can only figure out things for so long, but that doesn't tell me to be worried about Apple's long-term prospects. From a trading perspective, you look at this and you go, well, there's just nothing to do here. You're in the middle of a range that you've been holding basically since early April. Vol is really low, so there's really not anything to do as a sideways bet just to be selling volatility. So there's just not anything interesting here.
It's not interesting. It's a 24.3 IVR. I know that's a little bit more than the indexes, but that's just so low. Yeah, I walk away from WCDC looking like this feels like Apple kind of feels like it's listless here. Is it too soon to say replace Tim Cook? If the Knicks can fire Tom Thibodeau, can Apple get rid of Tim Cook? I don't know. This market's been doing nothing. It's been range bound, so I suppose if you've been trading it directionally neutral the last few weeks, it's been nice to work with. But quite frankly, what technical impulse do the bulls have to hang on here? Like, that's broken. This is broken. This is breaking. I'd like to see something more from it. It's obviously a huge part of the NASDAQ, but it's not really doing much of anything here. I mean, the announcement, just for the sake of, I wanted to pull this up for the sake of me not exaggerating. This is CNBC here. We'll just extend this. We're not going to support. Here's the rundown of the big announcements according to CNBC. Liquid glass renumbering of the OS systems to 26. That's the number 2 most important thing. That makes the list at number 2. Vision Pro Gaming, Kiwi Karaoke, Apple Music, ChatGPT for Image Playground, and live translation. That actually looks kind of cool. Where if you're FaceTime,
live translation is pretty cool.
Yeah, that's where we're getting to like the Star Trek. Everyone just talks their language and you just hear it in your own. That's the future utopia world that I'm hoping. That's the the sci-fi world. But everything else is kind of garbage, not really meaningful or impressive. So Dylan, where to next, right? Like, what's the next great American tech hardware company? Is it a Palantir Software? Is it going to be a company like Anduril? Is it a company that's not listed here? Or is it still NVIDIA?
I think it's too soon to, I think you got to be careful about writing off Apple just because it's, hasn't performed.
Right.
I wouldn't be, and to answer your question, I think the greatest American hardware company is Tesla. I believe Tesla is the most important hardware company in America, regardless of the management. I believe that their vision of integration of transport and software is the most consequential thing that's happening in hardware on Earth, or certainly in America. The Chinese have got a whole other racket going, but I just think that the integration of tech and transport and logistics, that there's 2 major tech stories that exist right now. The one, the obvious, which is AI, and then AI Gen 2, applied AI, data training and all that, and then transport, software, and logistics as an integrated field of action. with the sort of self-driving car being the sort of icon of what that represents. But I think there's more there. I'm much happier owning Tesla than I am owning Apple. Let me put it that way.
That's a really good question. Which one would you rather own?
Tesla. Tesla has so much more kinetic energy as a company and as a stock.
Ilya, I'm putting you on, which one? I think this is actually an important exercise. In college, me and my friends used to set an exchange rate for stuff. Granted, these are my fraternity brothers, and the things that we were trying to set exchange rates for probably not, good to talk about on air. But creative situations like, wow, you would do X for Y, but not Z? Interesting. So, like, what's the exchange rate here? Would you rather own Tesla with all of the noise? And it's not exactly volatile. It's a 27.6 IVR. But would you rather own Tesla with all of the narrative noise around it? Or would you rather own Apple for, say, the next 45 and 21-day out cycle if you had to be bullish on it?
If I had to be bullish on it, you'd have to say Tesla, because at the very least, you can go up to the top of the range here, north of 360. You have that space. So if you ignore completely everything and just look at the price action, you would say, okay, if you go long Tesla here, you're wrong quickly and you have more upside. If you look at Apple, you don't have that. It's a narrower range that you're in the middle of, and you don't have great risk reward either way. So on pure trading grounds, and I mean, I don't intend to be long either, but on pure trading grounds, you'd have to say Tesla.
I agree completely. I mean, I don't know if that says a lot about how we feel with Tesla being dislodged on Thursday, Friday, where it's dislodged for ridiculous reasons, or if this is a greater indictment of Apple. I think this is a greater indictment of Apple.
I agree. I was just thinking the same thing. I'm like, what does the world come to that Apple feels like Ford Motor Company? I mean, it feels deeply boring in a world of incredible dynamic activity, which Apple is arguably has been the most dynamic of all of them, over the last couple of decades. I know that that's a story that's been told 1,000 times. Everybody has their day where they get long in the tooth, and maybe that's where we are with Apple.
Yeah, maybe on the other side of WWDC, you see that there's a reinterpretation. Tahoe OS is the great, Apple karaoke. It solved world peace. Look at all the people it brought together.
But also, what was the headset? They've had two big busts as far as I'm concerned right now, because they did that big play, whatever that virtual thing that no one even remembers is, including me. But I know they did a headset. It was a total bust.
The Vision Pro.
And their AI is a bust. What is it?
The Apple Vision Pro.
Yeah, Apple Vision Pro. Whatever. Ridiculous.
The Meta Ray-Bans are cool.
I agree. I saw those.
I mean, I wear, I have Ray-Bans anyway. But like I would get a pair of those. Those would be fun to do things with. Mm-hmm. I've seen some cool videos. There's like a Las Vegas wine guy I follow on YouTube. It's just like he works in some high-end restaurant where he uncorks wine. It's oddly cathartic, right? Him explaining the wine. I don't know. That seems like an Ilya thing, though. Ilya, I'll send you the link for this. You'll like it. We get off of Apple. We get off of.
I can get down with uncorking some wine.
Yeah, like ASMR of wines being uncorked. It's a weird thing. Okay, so we've talked a little bit of Tesla, Apple here. I've seen a few people. They've messaged me, Chris, what do you think of what's happening in Los Angeles?
Yes.
Waymo's cars are being set on fire. Does it matter to Google? No. They're up 1.51% today, closing at the highest level that we've seen going back to the middle of February. Dylan, there are so many different ways that we could take this conversation. I think I'd like to provide a little bit of background here because I just finished watching American Manhunt, Osama bin Laden, the new Netflix documentary that's out over the weekend. Did you know that when we had the Al-Qaeda stronghold of Tora Bora surrounded and Osama bin Laden surrounded, there were about 300 U.S. troops on the ground, 100 CIA officers or so and related entities, and 200 Rangers. And the U.S. military refused to send in any more troops because, according to Rumsfeld, it was a CIA operation. I really think that's important to know here. U.S. troop totals, 100 to 300 on the estimates. 700 U.S. Marines are being deployed into Los Angeles, Mr. Radigan, to quell the rioting. The rioting, I think, is absolutely
U.S.
ridiculous.
Marines or National Guard?
No, U.S. Marines. That came out about 15 minutes ago, officially. Pentagon made the announcement.
Pentagon announced they're doing 700 active duty U.S. Marines.
Correct. We are sending more active duty U.S. Marines by a factor of 7 into Los Angeles than we did to kill Osama bin Laden in 2001.
I'm not surprised.
So I bring that up because this is obviously something on a lot of people's mind. I, for one, find protests like this exceptionally counterproductive and alarming. I don't know who the hell is being convinced by seeing Waymos on fire that you're the good guys. I don't get it. I think it's abhorrent behavior. I think you're radicalizing and negatively polarizing people against you for this very issue. There's a lot of data out there to suggest that's exactly what happens when these kind of things go on TV, because for those that don't really go into the psychology of this stuff, the protests are not about pushing back the police. If you're actually doing a protest, the protest is for the people who are seeing the images of the protest. Because after all, a protest is propaganda. And you want to generate a sympathetic view. That's why when you see the images of Martin Luther King walking across the bridge, it's arms locked with American flags waving behind them, not Waymos on fire with Mexican flags waving behind them. So the aesthetics of this are terrible. The damage to private property is awful. You're not going to win anyone over with this. It's a damn shame that you're doing this, because I recall thinking that January 6th was an issue. So if it's the Capitol or if it's like rioting and burning shit is bad, period. So Dylan, now we have active.
There's a level of gaslighting. There's a level of gaslighting here, and just to add to Chris's element of annoyance, which mirrors mine. Which mirrors mine. I mean, there's graffiti that I've driven by in San Francisco this weekend, calling people like Elias Rodriguez, the killer of the two Israeli staffers in D.C., and Luigi Mangione, of course, who killed the United Healthcare CEO, American heroes.
Absolute cretins.
And that kind of a point of view doesn't represent clearly majority opinion, but representing those kinds of things loudly creates, if anything, the excuse you need for a really sharp, really heavy-handed crackdown from the other side. And you can have those views, Godspeed, as despicable as they are, in my opinion, but the crackdown will be a very real one. And that's not going to help anybody.
Dylan, give us the silver lining to what's happening in the country right now. By the way, I do suppose I owe people an update talking of, geopolitics here. The Ayatollah has not yet responded to my direct message from June 4th. Dylan,
didn't he even bother to block you?
No, he still hasn't blocked me, so it's kind of insulting. It's like leaving me on red.
You're not even relevant enough to block. I think you should double tap that thing, get back in there. Don't be afraid. You triple text if you have to.
What am I going to send? Like a please respond? Oh, I'll send him a GIF of me with the boombox.
Anything to get a rise out of the Ayatollah. As far as America, as far as the LA thing is concerned, my perception of it is that the entire thing is a deliberate action by the Trump administration to create the optics of law and order.
Okay. Boombox.
And so, what's that?
John Cusack holding a boombox sent to the Ayatollah.
Yeah.
Go on.
Thank you. Good job. And so I just think the whole thing feels like theater to me. Not that the deportations are not real or that the protests are not driven by sort of genuine emotion, or that the desire to stop the protests is not driven by genuine emotion, but strategically the decision to do the National Guard override at a federal level and then to send U.S. military personnel into a U.S. city all strikes me as profoundly theatrical and ultimately does, I don't think, much of anything to reconcile the reality between any side. I mean, in other words, no one who doesn't like Trump is going to be persuaded to like Trump because he's sending in the Marines. And anyway, no minds will get changed, but it is, I think sadness is kind of the primary emotion that comes up because you're just looking at a deliberate escalation, a deliberate, hyperbole of an already sad situation, and shame on everybody involved.
Obviously, I mean, Waymos just don't drive around, Dylan. So people are calling the Waymos into the area to light them on fire. Who are you winning over?
Shame.
Who? But just from an organizing tactic, who is that winning over? Who are you convincing? Oh, geez, this is
no. But then you just get all the false flag stuff, and it's there's sort of all these sort of layers upon layers of measures and countermeasures and internal agitation and counter agitation, and so when you have a group of angry people together and you give them the opportunity to destroy something as a mechanism to vent frustration, they will destroy it. It doesn't help it's not good for anyone or anything, but it is the most basic sort of impulsive behavior of the marginally different primate that is a human being in comparison to your standard wilderness chimpanzee.
Chimpanzees are really stupid. That was something I learned this weekend. If you gave a chimpanzee a jar to open, it would smash the jar. If you gave an ape a jar to open, it would open up the jar and pour everything out. And if you gave an orangutan a jar, it would gently open it, pour everything out, close it back up, place it down without breaking it. So
really?
Chimpanzee, yeah. So that was a pretty derogatory low blow to say that it's chimpanzees.
I feel like
that's
humans
really
are more the
stupid.
chimpanzee than the orangutan. If you comes down, I believe the orangutan may be a couple notches above the human, especially when it comes to a large group in a state of heightened frustration and emotion.
I can't help but wonder if we're going to see some of these headlines about mass property destruction. What should we be doing in the insurance space, right? We saw the wildfires at the start of the year, right? What did that do? Wildfires couldn't take down the KIE ETF and the corresponding companies within it. I'm looking at that, and I'm looking at industrials in aerospace and defense right now. Ilya, this has been the most interesting chart that's crossed my screen in recent over the past 2 days since I started looking at things over the weekend. This is a relentless march higher.
Yeah.
Are we going to war sometime soon? Why is defense reeling higher faster than almost anything else since the April low?
Well, I think one of the things that you learn from all of this volatility that we've seen, and you certainly heard it from the ECB last week, there is a lot more defense buying of kit that is going to get done, because if you are losing confidence in the U.S. security blanket, then you need your own guns. And we know Europe has very much gone that way already. That probably speaks to all kinds of other places, because in a world where the U.S. is not the big scary policeman keeping everybody in check, it's more a free-for-all, and everybody needs the guns to survive. And beyond sort of where the U.S. is going.
It's dark.
Which is probably not anywhere. I mean, it's also the reality. Just look at the incidents of war around the world right now. Look at what's going on in Rwanda, looking also to the Middle East, of course, looking to the Russia-Ukraine theater, of course, but also in a lot of other places. There is a lot more war and a lot more conflict around the world right now because the scary policeman has gone to sleep and is not interested in anybody else's business. And that means more guns are going to get sold. And U.S. defense manufacturers aren't just building these things for the Pentagon. We're one of the biggest exporters of arms, if not the biggest, around the world. So this is cross-border sales, perhaps, or expectations thereof.
It was an interesting week of headlines, of course. I think the big picture for us as traders is that you can't overreact to some things that you see on TV, because anyone with any basic media literacy can look at a map of where these LA riots are going on and see that this is something that probably didn't touch 99% of LA's population.
Yeah.
Right? You know, Dylan, one of the things that constantly impresses me when I travel out west is the sense of sprawl once you get away from the Northeast. Because New York, Manhattan is 23 square miles. Los Angeles itself is 520 square miles. So if something happens in Manhattan, everyone in Manhattan knows about it. It's inevitable. Something happens in LA, it could be a world away. I have my own political thoughts on what occurred there, but in terms of what does this mean for markets and rule of law and stability here, if this was a big deal on the first day after this is occurring, even here after hours with these headlines are coming out, we're 2 minutes from the futures day closing, stocks are not red. You're not seeing anything freak out in gold or silver. Right? It's important that we have a job here, guys, right? As much as it is to provide our opinions to folks, it's also important to help folks contextualize what all this means.
Yeah.
And right now, it's a really intriguing news story. And that's about it when it comes to the market. Nothing more. Maybe it becomes something else, but nothing more. There's no trade here.
Yeah, I think it is. I think it is as irrelevant as the tariffs.
I think we all are. You know, we're like, I don't want to see any of this stuff on our streets, right? People, I feel.
But also to your point, I mean, the thing is, because of the way the news works and because of the way, especially social media and the TikTok videos and all this works, you know, it creates the perception of that the whole city is in chaos when 99% of the city is unaware of what's even happening beyond what they're reading on TikTok themselves.
And I'm not doing this.
San Francisco is a much denser city. It's not,
yeah, San Francisco is like New York.
Yeah, it doesn't have the sprawl of LA. You'd know, and even here, all of the kind of, San Francisco is chaotic, blah, 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 blah. It's maybe 5% of the city that was being talked about back when that was still something that was a festering wound, and it isn't even that anymore. So how much does it matter for markets? Probably not very much until there's real conflict between Newsom and Trump and state and federal law enforcement come to blows or some such thing. Absent that, markets aren't going to care.
No, and I bring all this up because I'm not saying these are mostly peaceful protests. I think you want to protest, fine. There is a right way to protest. I know that because I protest. I'm not letting stuff on fire. So it's kind of a lead by example. All right. There is a right way to protest. But if you're looking at social media and you're watching the news right now, you're getting fed a fire hose of misinformation, which is to say that you're being led to think that this is a wider scale issue than it really actually is. 500, 800,000 contracts traded in ES? That's nothing. That's absolutely nothing here. Focus on what really matters in the market this week. We have CPI coming up Wednesday. There are a few interesting earnings reports the next few days. The Fed's meeting next week. We're going to cover it all here. Unfortunately, overtime is out of time for this Monday, June 9th. We'll see everyone tomorrow, same time, same place. as we do every Monday through Thursday here, 4 p.m. Eastern, 3 Central. So for Dylan Radigan in Milan and Ilya Spivak in San Francisco, I've been Chris Vecchio in New York. Good luck trading. We'll see everyone again soon. Up next, after the break, Ilya Spivak with Macro Money.
See you there, everybody.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
The beauty of Thinkorswim was that we were different. From the name to the front-end technology
was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building.
Well, he's more public in his mentality.
I'm a believer. I believe that the world is good.
And I know that the world is not good. That questioning yourself and questioning yourself in dialogue with someone you respect is both pleasant and sometimes extremely insightful and useful sometimes.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. You know, that's what I do.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Craig in New York City, what's up?
I just want to say, I've been with you since the very early days of Thinkorswim, and traded all kinds of markets here and there. And I got to say, I could be off so much worse if it wasn't for what you guys have sort of drilled into me over years and years and years. And so I just want to thank you, because you could have easily just taken the money and run when you sold Thinkorswim, and you didn't, and you started this. And you basically have just given me this full education in this thing that was completely foreign to me many, many years ago. And so even though I've lost money in the last few days, you've saved me a lot at the end of things. It's like losses could have been catastrophic and they're not. So I appreciate you.
I hear you.
I appreciate you guys. Thanks so much.
Thank you, man. And I appreciate
Thanks.
you holding on the line to say that to us. So thank you.
It's a quiet day for markets as they figure out what to do next after last week's fireworks. But as we'll take a look here in just a second, the breakdown from last week's performance, headlines notwithstanding, was decidedly optimistic. That sort of clashes with what emerged out of economic data and out of the policy circles. So we'll try to figure out what it is that the markets are so sanguine about here as we get ready for another week of macro risk and consider whether finally there is something actionable on the table to be worried about, or if the markets just plainly do not care. This is Macro Money. I'm Ilya Spivak, head of Global Macro here at Tasty Live. And we'll start the conversation here as we try to figure out what in the world is occurring here with a look at last week's performance and consider sort of what that means in context and how that sets us up for this week, where we do actually have a good bit of notable event risk to contend with. So here's the breakdown. And if you knew nothing about Donald Trump fighting with his, until recently, first buddy Elon Musk, if you knew nothing about the on-again, off-again tiff with China, where, again, the president seemed to say that China is not holding up their end of their total reset in Geneva, but then there was a helpful conversation, one supposes, if one just reads the headlines, between President Xi and President Trump over the phone that now sets up a negotiation in London, and we've reset again, and back and forth we go. If you ignore all of these things and just look at the price action, we have a second week of gains, albeit at a slower clip, from the S&P 500, up 1.5%. We have another 1.9% rise in the NASDAQ. So back-to-back gains here for the stock indexes. Yields up both at the long and the front end of the curve, 2.5% for the 10-year. And 3.5% for the 2-year. Crude oil surging higher, 6.2%. All of these things have a distinctly pro-growth mix, which is a very interesting sort of thing when you consider that probably the biggest bit of economic data last week on the growth side of things, the ISM surveys of economic performance across manufacturing and services from the Institute of Supply Management showed that economic activity in the U.S. economy actually contracted narrowly for the first time since April of 2024 in May of this year. And that's as new orders fell, prices surged, employment basically went nowhere. And this is 80% or so of the economy. So this is not happy news on the growth side of things. The jobs report ended up looking okay at the headline, somewhat. 130K expected, but 139 returned. So I suppose that was a slightly better than expected reading on headline payrolls. But of course, the previous month was revised down by 30K. And the previous month was revised down too. So on net, did we end up with more jobs than we thought we'd get before the data came out? No, we came out with meaningfully fewer on net. Yet the markets are clearly tuned to this sort of growthy mix when we look across the major assets. Stocks up, yields up, suggests a positive view of economic growth. Business activity boosting both the outlook for returns and the outlook for borrowing costs. Crude oil up meaningfully, ostensibly around the same theme. Looking at the FX markets, you see the euro up 0.3%, but the yen down 0.8%. That also seems relatively in line with a more growth supportive view. The euro up after the ECB cuts rates, but then signals rate cuts are almost near the end, because next year, as we suspected incidentally here on Macro Money last week, the build out in defense spending next year promises a boost in both growth and in inflation in the Eurozone. And so the ECB name checks this, not surprisingly, and suggests that there is perhaps less to be done. So the euro goes up, as we anticipated that it might. Meanwhile, the yen is down, as you might expect, in a situation where yields are up. The world's least positive carry currency and the one that's overwhelmingly the funding of choice for carries strategies, that's not surprisingly here lower as yields are up, as bonds are down, and again suggesting a kind of risk-on vibe, a kind of pro-growth vibe. Bitcoin and gold don't really comply with the narrative, but neither do they go very far. Bitcoin is basically flat inside its range, and gold sneaks up 0.9%, but again is kind of locked in a consolidation. So, headlines aside, all of this looks almost optimistic. Now, this is where we start to have a conversation about what all of this means as we enter the coming week. First up on the data front is the U.S. CPI report. Expectations here that we're going to get a notch up on inflation, 2.9% expected for the core rate that excludes food and energy, which is the Fed's preferred gauge because, of course, it has no agency over either global food or inflation prices. And in any case, as we can see from the chart here, almost all inflation at this point in the U.S. is buried inside core services. So the headline is an interesting thing here. Uptick expected to 2.5% from 2.3 in the prior month. That, of course, would be a meaningful departure. That would be the highest inflation that we'd seen in 3 months at the headline. But the uptick to 2.9% for the core, that's really where the interest is. That would be the highest since February as well. 3.1% was the level then. But it would also be the first uptick since January, when inflation went up from 3.2 to 3.3% on core. So this is yet another data point here, it looks like, that will reinforce the idea that the Fed is not going anywhere fast. You have here the current breakdown in policy expectations, and you're looking at 88 basis points in rate cuts being priced in this year and next, 39 basis points for this year, 48 for next. It's very interestingly light compared with what the Fed itself has been saying since December and then reiterated in March. They're looking for 50 basis points this year and then 50 basis points again next year. So the markets are, against all odds, a little bit on the hawkish side of Fed policy expectations, which is interesting because, of course, it suggests that the markets don't expect the Fed to have much of an impetus to move quickly. And we can see that in the curve here. No rate cut on the menu when the Fed meets next week here, clearly. Continued standstill in July. You start to get a little bit more of a probability of a cut by September, and then by October, that cut is there. So thing to keep in mind here, of course, is that these are midpoint rates because the Fed sets its policy in a range between 2.5 and 4.5 and 4.25, currently, and that's 4.4%. 4.4 is the kind of midpoint here, and you can see that holding through here until July. To really then see the rate cut fully discounted, you'd have to look at the kind of midpoint rate to come down to 4.13 or so. And you see that essentially by October. There's a bit of rounding here, but by October, by late October, which is when this policy meeting is coming, you do have one cut essentially on the board. You then have a little bit of an expectation that you're going to get a further cut by the end of the year, that would need to be at 3.88. It's at 3.94. On the whole, you're looking at just under a 60% chance that you get that second cut. And that's for this year. You can see that the curve has meaningfully shifted to a less dovish setting as relative to when the Fed met in May, and certainly as relative to when it met in March. So this Fed meeting coming up, almost certainly, as far as the markets are concerned, bringing nothing of substance as far as action. We'll see if there's any change that occurs in the makeup of the summary of economic projections. The Fed kind of pointedly marked down its growth expectations and marked up its inflation expectations in March, but left the rates path exactly as it was in December, basically saying, look, we don't know, and we're just going to have to wait and see what all these tariffs mean. We're concerned they might be inflationary and negative for employment at the same time, but we don't know how they're going to work out in practice. We worry that there's going to be a sense that these policies are pushing our objectives in opposing directions, and so we don't really know which one we should prioritize clearly. So we're just going to wait and see. And the markets seemingly are endorsing the idea here that the Fed has more room to continue in that direction. It certainly doesn't help that there's been increasing concern about the veracity of CPI data. Wall Street Journal reporting last week that the percentage of implied outcomes versus actual survey-based data collection in CPI is at this point greater than it was during the full-on lockdowns amid COVID. So right here we can see that whereas before COVID it was normal to imply about 10% of the data where you couldn't readily collect, let's say, the price of chinos in a particular jurisdiction, and instead you were able to substitute the price of cargo pants or some such thing. Things like that accounted for about 10% of the data set. We can see during COVID amid the lockdowns, it understandably poked up about above 50% here very briefly until it sort of normalized to this 10% cap. Over the past 2 months here, especially in April, this has been a runaway skew toward implied data, almost 30% of the total in Wall Street Journal reporting in April, and that's largely as the Trump administration's efforts to reduce expenditures on employment, so hiring freezes and firings, that has meant that there's just not the people to do this data collection. And so the data itself will become somewhat fuzzier than they have before. So if ever there was a reason for the Fed to sit back and wait for the data to really give them a clear story over multiple releases where this kind of a thing becomes less important, because it's just evened out by having enough data outcomes to see the trend. This just further cements that the Fed is sitting on its hands for the foreseeable future here, at least going through the rest of the second quarter here into the third. And then what happens in the fourth, we'll have to wait and see. The next big data point to consider here comes at the end of the week, and that's, of course, the flip side of the Fed's standstill. This is consumer confidence data, and it looks like we're looking for a little bit of an uptick on the headline measure. We can see that there was a sort of stalling at 3-year lows in the May report, and that's as estimations of current conditions continued to deteriorate, but expectations started to somewhat base a little. Of course, this is 1 month's data, so don't write home about it yet. But it does look like maybe we've sort of found an extreme in sentiment. We'll see if that carries off into this month. But this, of course, becomes the most significant counter to Fed inaction, because the majority of economic growth, as we've discussed at length here on Macro Money, is consumption. In the latest GDP numbers, it accounted for 68.5% of the overall total. And that's where things get interesting, because when you look at the breakdown in growth dynamics from the first quarter GDP numbers, aged though they look at this point, you have, of course, this tremendous burst in imports around front running of whatever the tariff regime might be. It's unclear still because, of course, you don't have April in these numbers. But you do have the expectation that a bunch of tariffs are coming, and because, of course, the Trump administration ran on there being tariffs. And, of course, by November at the latest, you'd have to know that some amount of tariff hikes were coming. So here goes the front running of those tariffs. You see that show up likewise in the dramatic build out of inventories. That's this investment component here, and inventories count towards it. So there it is right there. But when you look at how much all of this contributes to actual GDP, it's really not that much. It's the giant swings in these categories that really made them so important in the first quarter. I mean, this was close to a 40% swing annualized in imports, which is absolutely off the charts. But as contributions to GDP overall, these categories are minute. The big one is consumption. And what you find in the first quarter is that, yeah, businesses are front-running all of these things, but consumers aren't exactly going out and buying them. And you saw this in spades in April's retail sales report. Whereas you could make the argument that in March there was a surge in retail sales because of similar front-running by consumers. In April, it didn't hold up. And in the first quarter, it clearly didn't match the vigor of the front running, because we can see here the weakest consumption since back here, the second quarter of 2023, which gives us the weakest setting on the most important part of the growth puzzle in almost 2 years. So really the question here is, can consumers hold up? Despite this loud pessimism, this surge in inflation expectations that we've seen up to levels that are by a full percentage point and then some, topping the peak in 1 year consumer inflation expectations amid COVID. Are we going to see consumers come through ultimately? And at least if the first quarter was any indication, the answer is probably no. But the markets is not particularly concerned about it seemingly just yet. And so this is the dichotomy that we must grapple with this week. We just had an updated set of global PMIs from S&P Global and JP Morgan. This takes in all of the various PMI readings, and we can see that the manufacturing output index has cratered back down deeply into contraction territory. As ever, PMIs are around a center line of 50, where that's neutral. Above 50 is growth. Below 50 is contraction. The faster the contraction, the further below 50 you go. The faster the growth, the further above 50 you go. And you can see here, really, since the middle of last year, global growth has been slowing and has increasingly slowed at the start of this year, largely as the U.S. has started to converge downward on the ongoing weakness in China and the ongoing weakness in the Eurozone, the other two major drivers of global growth besides the U.S. The big upshot here is you had a little bit of a wiggle higher because the service sector, especially in the U.S., turned up a little bit better in the latest numbers for May. But what you see is whatever front running there was to boost global manufacturing, both in China and in the U.S. in anticipation of these tariffs, that has completely unwound. So all of this front running is now gone. And it really is on U.S. consumers now to sustain whatever positive growth there is. If they continue to resist, if they remain defensive, and that's really what we've seen so far. Again, looking at these GDP numbers here, it really is unmistakable. In looking at the retail sales data, unmistakable. In looking at the most recent numbers, as we just discussed, out of ISM, where the service sector shrank unexpectedly in May. Of course, that's powered by domestic demand overwhelmingly. If that's what's going on here, well, then the prospect of a Fed that's not going to do anything for essentially the majority of this year, not until the tail end of the year do you actually get a semblance of maybe some cuts, well, then the mix is going to start to look a lot less supportive. But as we can clearly see in last week's performance, the markets aren't prepared to worry about it yet. You already have the uplift in yields. That much is there. But stocks and growth-oriented assets outside of them, again, looking at currencies, looking at crude oil here, they're not prepared to show that damage. And the question that we're going to have to wrestle with this week is, do we get enough of a lull in headlines for this data to actually tell the markets now is the time? Of course, we'll take these things step by step all week. Macro Money is here Monday through Thursday, right after Overtime, a show I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things may go therefrom. I'm back with Chris for Futures Power Hour on Fridays, with Victor Jones for The Price of Truth on Tuesdays, back with Victor and Tom for First Call on Sundays, writing for the News and Insights portion of tastylive.com, and commenting on the platform formerly known as Twitter, as well as on Blue Sky at Ilya Spivak. If you're watching on YouTube, like and subscribe. Macro Money is back tomorrow. Happy trading.
Welcome back to the Tasty Crypto Show. I'm Dan Cecilia, and with me today is my co-host, Shelly Van Witzenberg. How are you, Shelly?
Whoa, you full named me.
I did full name you.
Hello, I am well, thank you. How are you?
I'm doing all right. We got a great show today. We're filling in for Ryan, but we got a lot going on in the market. We're going to be tailing some of Ryan's trades, which are now available in the platform, and we'll be going over some of the performance dashboards that we put together in the newsletter. So, yeah, how are you doing?
Cold.
Yeah?
Office winter has kicked in now that it's nice outside. So So yeah, we have blankets at our desks. It's silly. I'm excited to be here. What is up, chat? See some friends in there. Do we have a question for the chat?
Yes, we do. Yes, we do. What is your favorite rainy day activity?
Let's hear it, chat. What are we doing on the rainy days? I love my Kindle. So when it's raining outside, I feel like it's just an excuse to do nothing physically and just read all day.
What about singing in the rain?
No, there will be none of that.
You're not a big sing in the rain type of person?
No.
Okay.
You?
No.
Okay.
I can't sing to begin with, so.
Yeah, that's the thing. If I could
Rain
sing,
or
maybe.
shine, I
Right,
can't.
right.
Yeah.
What is your rainy day activity?
Trade crypto.
Of course. I mean, there's always that.
Sit in my office and trade crypto.
What are we doing on nice days then? If just trading crypto all day,
Trading
every
crypto.
day?
Definitely.
Okay. Let's see. In chat, wet juice
I mean, it
box.
says sleeping.
Sleeping, that's a good one. Wet juice box on X says, if it's not pouring, I'll go for walks during the sprinkle. Love it.
Okay. Okay.
Like that.
Wet Juice Box, who is one of our followers, he's deep in the trenches too. Paying attention to meme coins specifically. So, Juice Box, if you have any tips, send them our way because we're always looking for
hot alpha,
new trades, alpha. Yeah. Juice Box is convinced that he has alpha from the trenches. So,
let's hear it.
Yeah.
Let's see. JDD on YouTube is saying, finding all the leaks in my roof.
Yeah.
Pots and pans out there collecting the drips. So, what are we doing today? We're going to get into.
Well, we're going to go over some of the performance dashboards that we put together in the Wednesday newsletter went out this morning, just to give an update on where the market's at. And then we got an update on the platform. Specifically, we have follow feed enabled for crypto trades. So Ryan has been placing some trades recently based on some of the stuff we do as far as like ranges and signals that he gets. So he's got a couple trades that he put on, and I think we're going to tail them. I believe. At least I am.
I already did.
Yeah, Shelly front ran me. So.
Wet Juice Box is saying buy OKLO and DLLM Fartcoin. LMM Fartcoin. So.
Okay, so
there's our trench alpha.
I did the Oklo trade and made a ton of. I did follow the Oklo trade.
I did not.
Yeah.
Although I time-stamped when we brought that up, like in our text messages, because I always have my notepad on my phone open, and I put in there, OKLO, look into it. And so time-stamped was like May 16th. And if you look at the chart, it's like, damn.
It's like a day before it ran up. Yeah.
Like, man, that would have been a good one. So yeah, go ahead, pull it up.
Oklo?
Yeah.
Yeah, can we get our, yeah, there we go. So it's a 1 week chart. Let me clear this. Go to a day.
Mid-May. Oh, here we go. We were right before, not at the bottom, but pretty close to before that pump.
That's insane. 514. Okay. Yeah, right here. Look at this gap up. Yeah, the other thing I did with that is I think I started buying early May, and then I was selling covered calls against it at the top because it was so volatile that the premium on that was insane. So made a pretty decent return there. It was crypto-like price movement for sure.
Yeah. And for people who aren't familiar with this, what is Oklo?
It's a nuclear reactor development company. Has a contract with the U.S. Department of Energy. They don't have a product and they don't have revenue, but they're building these more efficient nuclear reactors. And apparently the delivery date for them is not till 2027. So this is just pure speculation, which is trades like a crypto. So, That's why we're covering.
Yeah.
But more specifically in crypto, let's take a look at some of the performance dashboards, because I think we got to cover here what's going on in the market. So taking a look, Bitcoin off the recent highs of last week, we're back down to like the 105 range, 105,000 price range, kind of just consolidating around there. ETH, I think, has a bullish look. It's up 17% the last 3 months, 46% in the last month. ETH's come roaring back. There's some catalysts there for ETH as a trade against BTC for sure. One being that the Ethereum Foundation has finally got its stuff together and has rooted out all the waste, and is now core focus has been on supporting ETH, not dumping it, doing a lot more in DeFi, rallying around its core values. So I think that's rather bullish, just because there wasn't a lot of direction the last couple of years from like the ETH Development Foundation. Another one is that following the back of these Bitcoin treasury trades, ETH, there's going to be a vehicle now on, publicly traded stock vehicle to acquire ETH and do the treasury, trade. So I think that's a bid for ETH. And I just think it's been kind of beaten down and still a lot going on over there. So definitely taking a look at ETH, see if this momentum continues. Solana, a little less so. I think kind of has consolidated in this 150 range. A lot of the meme coins hype has died down, not some like almost too saturated. So it's kind of like people don't really,
Needs a new narrative.
Needs a new narrative, essentially, yeah. And then XRP, Ripple, always an interesting trade, I think, because you got Ripple USD, which is a stable coin backed by Ripple, which I think is pretty interesting, that the collateral's backed by Ripple itself. And then, just ton of development by Ripple too. So let's see what else we got here.
Look at that green for Aave.
Aave, yeah. So this is specifically one that Ryan is trading. I think he put this trade on early this week, and 60% up move in a month. So definitely bullish there.
Comp is interesting.
Yeah. DeFi, it's like the DeFi narrative. Aave, Compound, stuff that makes money. Both of them are revenue generating protocols. So always good to go back to fundamentals. I think there's a lot of ideas here. Here's the volatility table. Weekly
Quick question in chat from Wet Juice Box. Theory, trenches aren't oversaturated. There's simply a lack of participants currently. Okay. And then he's got a question. What is Aave's end goal? Do you know?
I don't know what Aave's end goal is, but I believe that Aave is a very profitable DeFi protocol and is basically a core primitive for borrow lending, capital efficiency, and just generally supporting the broader DeFi ecosystem. So, if people want to accumulate and just place a bet on protocols that have revenue, that's Aave. If people want to speculate and try and be early to things, then I agree with Juicebox. Like there's definitely some alpha to be had in being in the trenches and trying to trade these meme coin narratives. But I think for what I look at, I'm kind of leaning more toward betting on DeFi, revenue generating DeFi protocols. Aave, Compound. You can even look at Jupiter on Solana. I know Juicebox is a big Solana guy. I got another chat from JDD. So I look at tokenterminal.com.
The question is, how do you analyze fundamentals for crypto? Yeah. Where do you research that?
So I go to DeFi Llama. That's number one. That has basically your dashboard for all of DeFi and crypto. You can track revenue. You can track stable coins, which is an indicator of liquidity, liquidity. I've shown this before, but this green line is basically how much stable coins, which are US dollars on chain, right? That's liquidity. That's what's flowing in to the ecosystem. Usually a bullish signal for activity for, trading, DeFi. Token terminal is another one, which gets into more revenue generating stuff. And yeah, I mean, really there's a ton of platforms. The other one is Messari. So Messari is a crypto research platform. Does a really good job of tracking protocols, tracking activity, news, narrative. But those are the top three. I personally think for like DeFi specific, DeFi Llama is the one. So yeah, I think, you can track fees and revenues down here. So yeah.
We've got a non-believer in chat.
It's all speculation.
Yeah.
So even traditional finance, it's all speculation.
Mm-hmm.
So. But despite popular belief, there are protocols that make revenue, that are profitable, that support billions of dollars of liquidity. You can track it. I dropped the links in the chat. If you want to stick your head in the sand, and there's other places, obviously, so it's fine.
So back to those dashboards.
Yeah. So I want to kind of talk about the expected move here and then get into our follow trade, because our follow feed for crypto is now live on the platform. We can take a look and see what Ryan's trades Ryan's placing. So yeah, Bitcoin, I think it's consolidating in like the 105,000 to 100,000 range. ETH, probably, I think there's more upside on ETH. That's just me personally, not advice. Just, I think there's a lot of bullish momentum backing ETH. I think it's been beaten down for a while, and I think it'll catch a bid here over the next couple months. So definitely pay attention to that. And Solana's probably, I think that narrative ran out a little bit. So we'll see what catches new there. I think Bitcoin Fi and like some of these synthetic Bitcoin products are flowing into Solana. So we'll see what happens with that. But back to our original thought, we have follow feed now on the platform. So
let's clarify. Follow feed is not new.
No.
Ryan being followable is a new addition. And so, yeah, you just simply go, if you have your Tasty Trade account, you go to the trading tab, you go to the follow feed on the left sidebar, click Ryan, and you can see his recent trades, which is the alpha. Because look at the Aave. If you were following and duplicating what Ryan is doing, he got in at 251, and right now it's 265.
Yeah.
Mm-hmm. Well done, Ryan.
Good trade, yeah.
Yeah.
So I think we said that he's going to be placing a couple of trades a week. So I would be paying attention to that, because he's the guy, he has the signals. I'm not the guy, he's the guy. So.
Well, and he did say it's an us thing. It's the Tasty Crypto, we're all placing these trades. Ryan's the big brain of the group.
Yeah, exactly.
So let's just give him, the majority of mind share on these moves. But yeah, awesome resource to have at your disposal. You can follow, and you can filter by crypto and see what all of the traders are trading. I don't know, Dan, if you can show that really quickly to filter by crypto. I think it's, if you go by strategy, I think it's in there. Yeah, crypto.
Okay, cool.
And then reset who you're following. like just put it to everybody,
Yeah.
and you can see that Tom is trading, and so cool to follow.
Yeah,
to look at.
We'll be giving you updates in our weekly newsletters too about what trades are being placed and what we're looking at. I think trying to get more actionable trades on and just stuff you can follow and easily tail.
Mm-hmm.
So yeah, I think number one, that Aave USD trade by Ryan, good trade. I think he's also talking about putting Compound on. So Compound was something that is on the platform. It's another DeFi borrow lend protocol, makes money, and has stable coins backing it as well. So definitely something to pay attention to.
Mm-hmm.
Yeah. Let's see.
And we just put out a couple of new how-to real quick snippet videos on the Tasty Crypto YouTube channel because we're trying to answer some questions that we get in our support tickets with videos.
Right.
And so there's a new playlist evolving over there. So if you're not subscribed to Tasty Crypto on YouTube, please go join us over there.
Yeah, and I think like in the chat, I see Theta Trader, great point. It is a space that's full of vaporware. It is a space that necessarily, hard to track fundamentals, or at first glance, it's hard to track fundamentals. But that's why it's such a great trading venue. It's all volatility. Mm-hmm. You mean to tell me you don't want to trade volatile assets? Like, what are you going to do? Like, you're talking about 20, 30% moves in a day. It's fun to trade, right? So, we are focusing on educational videos to help demystify some of this stuff. So we'll be posting more YouTube videos to the Tasty Crypto YouTube that are just more educational, more how do you take advantage of some of this stuff? How do you trade it? How do you fund your account with crypto? Some of that stuff. So hopefully they help. I think definitely something we'll be focusing on long term.
Absolutely. Theta Trader saying, I'll look at fundamentals after Fartcoin and Shiba die off.
You don't think there's a fundamental behind internet culture? I do.
There's an argument there.
Fartcoin, Shiba Inu, Doge, memes have value.
Mm-hmm. Absolutely. Culture. Culture is a powerful, human behavior.
Yeah.
Is a fundamental. He says that, yes, that was my point. Trade it because it's a risk asset you can trade, not because you think there's some fundamental case for most of these.
Yeah, of course.
Mm-hmm.
I mean, totally agree with you. Great point. But I am saying that if you have like a traditional, whatever, discounted cash flow or whatever fundamental analysis outlook, there are protocols, applications out there that do generate significant revenue for the space compared relative to the space, right? I'm not talking about NVIDIA or Apple trillion-dollar companies, but if you track over the last couple of years, I think there's a ton of projects that make revenue.
Mm-hmm.
But to your point, maybe not as fun to trade as a Fartcoin or a Shiba Inu, right? Definitely a risk-on asset. Definitely when 0% interest rates, money printing, debt palooza, an asset you want to be in for sure.
Mm-hmm.
I think you can definitely argue that you're not trading it because of fundamentals, right? Maybe you buy and hold some of these projects thinking that down the line fee switch will turn on and, it's...
CK calls the crypto charts the purest expression of human sentiment because they aren't manipulated like most other equity markets. I see a 12-step program for crypto traders in the future, just like Gamblers Anonymous.
I like that. That's good.
Yeah.
That's a good, I like that.
Uh-huh.
Crypto Traders Anonymous.
Yeah. CTA.
No, but in all seriousness, I think there's some truth to what you guys are saying, right? Like, I think more than anything, the attention that's gathered in the space comes during these huge volatility spikes or around things that are very bizarre, like fart coin. Why does that have value? As value because other people think it has value, and internet culture is strong.
Do you want to show them Cookie.fun just to illustrate Mindshare?
Yeah, we did this on our other show, Tasty Crypto Show, or
Beans.
Tasty Crypto YouTube, Beans. There's actually a way to, it doesn't look like I can, let's see, Cookie. There it is. So a lot of things in this space, going back to sentiment, can be tracked. So there's this tool, Cookie.fun. It tracks Twitter sentiment and general, vibes. So you can see over the last year or 24 hours, but I can go year to date, what projects have had positive sentiment, which have had bad sentiment. So obviously Bitcoin, it's the king, Ripple, Tron, Hype. These are projects that have been trending positively on X, YouTube, other platforms. And, something you can act off of shows price, shows Mindshare, which again, Mindshare is just attention, right? It's what people are talking about. So I think
it's a good way to predict behavior.
Yes.
If popularity or, conversation is a predecessor to purchasing.
Right.
Yeah.
And I clicked into Aave. Aave is obviously a token we were talking about. We support. Ryan made a great trade on. It gives you a lot of information around major voices talking about it, and then sort of tracks sentiment and Mindshare as, over certain time periods. So I think it's very helpful because, to your point, chat, a lot of this is human sentiment. A lot of this is Mindshare, right? I'm a little jaded. Theta Trader says I'm a little jaded because I've had these arguments with people about the value of syrup pools and cake, for instance. The sentiment goes, and so does your investment. Skill issue? I don't know.
You got to know when to get out.
Yeah.
Just like anything. We are out of time, but before we go, I did want to shameless plug our Beans episode this Friday. We have Dr. Drip. If you can pull the link to the tweet just to show the graphic so people can see that this Friday, 9 a.m. Central, 7 a.m. Pacific, Dr. Drip is going to be on the show with us. He's an incredible trader, builder, early adopter of all things crypto and Web3.
Yeah.
It's going to be a really cool
somebody who's deep in, knows trading, knows what's hot, knows
maybe in like the deepest trenches.
Yes.
Yeah. So it'll be an interesting conversation. So thank you, chat, for being here. Thank you to everybody that's watching on X.
Yeah, and real quick, chat, if you ever want to talk to us, I love the banter. I totally agree with you. We want to help you at the end of the day. I know that there's a lot of questions around this. Email us, email me, Shelly, support@tastycrypto.com. We'll answer your questions. I'll get on a call with you and chat with you about anything. So we want to help you and love hearing, the
good,
banter.
the bad, the ugly, all of it.
So appreciate it. I'm Dan.
I'm Shelly.
Peace.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
What's up, everybody? Welcome to the Life Cycle of a Trade, the series where we break down the thought process behind trade entry, trade adjustments, and closing order. In this video, we're going to cover a call diagonal. All right, so we've got a little bit of a pullback in the market, but one stock in particular has just been whacked over in the overnight session here, and that is McDonald's. There was some E. coli news that came out. The stock is down, let's call it 7% right now. It was down all the way down to like 280 something at some point in the overnight session. So it definitely has had a big pullback here. It's a relatively low implied volatility underlying most of the time. But currently, because of this move, you can see IV rank getting into the 100 handle. Over 100 means that it's exceeding its 52-week high today, right now. So it's as high as volatility has been. I think this is an interesting time to get a little bit of long delta, be a little contrarian here into this move. Again, 20-point move. We've erased, a month and a half, 2 months of price action here, even though the stock has had a very significant rally of late. I'm going to look at a call diagonal spread. Even though, again, because volatility IV rank is high, it doesn't necessarily mean that actual implied volatility is high. The actual implied volatility in McDonald's is actually relatively low when you look at this, 20%, 24%. So it makes getting delta cheap. If something has high implied volatility, it's expensive to buy delta or to get delta via long premium. When volatility is low, it's relatively cheaper just because of the difference in the volatility here. So we're going to look at December. Let's buy this 300 strike. It's the first strike out of the money, but we've got $5 wide strikes here. I'm going closer at the money because I know that this is going to be a relatively cheap call diagonal spread for me relative to the width. It's going to use $500 or $600, $700 in premium here. Now, the high we got to, and we could see this here, 52-week high of 317. Let's play for somewhere a little bit under the 52-week high here. We'll go to the 310 strike for our short option. Now, I'm picking up 18 long deltas here in a stock that's trading at, let's just round it and make it $300. So we're getting $3,000, $4,000 worth of exposure in delta for just $500 or $600. So this is a reflection of two things. First of all, the leverage that you get with options, as well as the low implied volatility here. Again, I said it was cheap to get delta here. It's cheap to get exposure to stock or in effect delta via this call diagonal spread. So stock is rallying here. So this spread has moved pretty significantly. Just to show this on a risk profile at expiration is kind of a hard look because these are calendarized. I like to go to this Theo. This is kind of what our risk profile looks like. So basically a 50-50 shot. Using the analysis mode here, we can actually kind of simulate the passage of time. You'll see the risk profile move in that way. You can even take out some implied volatility. You can take out some from the long option as well. So you can see it's got a very interesting asymmetric sort of upside to this position. And as we keep waiting, we are missing out on some value here. So we'll see if we can get filled at 590. 593 here, 595. You can see the stock is rallying a little bit. It's at 296 now. So we'll try at 595. See if we can get filled somewhere around that. Probably going to have to move it up here. We gave up some money there in my analysis. Stock's rallied about $1.50 since we started looking at it here. We'll move it up to 310. That's probably where we'll get filled here. Routed it at 310, got it price improved at 604. A little bit of long delta in McDonald's into this dip, basically at the high of the session. This might be a good timing on that trade. So we'll see if this one works out over the next couple weeks. Do have a position that we have to manage today. One of our winning trades, we had a McDonald's position. It was trading at $2.97. The stock has rallied about $3 or $4 from here. We had a slightly bullish lean with a call diagonal spread, but really a lot of the value has come from this short option that we sold in the November monthly expiration at the 310 strike. We can go and look at that here. Just to give you an idea, it's trading at about 35 cents-ish right here. When we put this trade on, it was trading at about $4, and that's come from time decay, changes in implied volatility. Volatility has come in significantly after that big drop. So we've gained about $3, almost $4 in value out of that option. That option we sold at $3.90 is now trading at 30 cents. So with that position, the long option has only come in about $2, even though the stock has gone basically nowhere. So we bought it at 10, and it's now trading at 7.59. So we've lost $2.50 from the long option. We've gained almost $3.50 on that short option. So most of the value came from the short option. So that value is what is giving us this profit potential this morning or this afternoon here. All right, so we're going to close out of this position here, selling out of the December call, buying back the November position here. We're going to try and get, let's see if we mark it above the mid price. 7:30, we got filled about 2 cents above the mid price, closing that one out for $126 profit. Nice little trade there, about let's call it 20% return on capital, 30% there. So nice little trade over about a 3-week time frame.
Now don't screw up. You're the weakest link here.
You guys introduce yourselves.
I'm Tony Batista. He's Tom Sosnoff. You didn't know that? I don't have any idea why you watched.
I'm Tony Batista. He's Tom Sosnoff.
41, you got it.
See that? We knew it. Pretty good. Baseball field.
Baseball game.
It was a wonderful evening.
It was a warm summer day, 1982.
It was around 82,
83. I don't know, sometime around there.
Yeah, 83.
83, let's say.
It was 83. I remember because I was dating somebody else at that time. 1983, yes. It was a wonderful day.
No, we were playing. We played softball on the same team.
16-inch?
12-inch.
With gloves. Because we were hand models at the time.
Yes. I played third base, Tony played right field.
You've been dying to say that, haven't you?
We took him as a charity case.
All right, Tony, we have a big week of earnings coming ahead in a time of high volatility and uncertainty. How are you choosing to attack this week of earnings, and do you think that there's anything that traders should be aware of?
I think earnings become less important when you have volatility in the overall market because sometimes a lot easier to find a higher probability trade in a longer dated time frame than you would for earnings. But if you are going to trade earnings, I think you have to trade it much shorter term and probably directional. And with this implied volatility being so high, it's going to be even higher in these earnings trades, which means that all options are going to be priced a lot more fatter. And if they're fatter and you're selling them, then you can get a higher probability of success and be further out. So I think you have to trade them directional, and I think you have to trade them shorter term for earnings themselves if you're using options.
If you don't come from money, working with money sounds like the quickest place to get to money. So this idea of allowing money to work for you was fascinating with me. And then the more I get into it, the more I realize it was just a big competition. You know, it's like a big poker game with really smart people who know game theory, and nobody knows tomorrow, but they're all just taking calculated risk. And when I figured out that's what it was, like it wasn't this weird world of like somebody knows exactly what's gonna happen and this guy's got great stock picks, it's all just calculated risk, that gave me inspiration that like, well, I can do that. So I think spending a lot of time when I was young to learn different option strategies and to learn stocks, options, futures, Forex, crypto, to be able to go where the opportunity is, I think is the most important. Getting hooked in a strategy, it's cool, I respect it, but I tend to think I like to go wherever the opportunity is.
So Venmo is an app that is free, and you can send money to people who also have a Venmo account. So you downloaded Venmo.
Because I need Venmo.
For what?
So like when you go, can I have $5 or $10?
I never ask for $5.
When you ask for $20, sometimes they don't have the cash.
Okay.
I only have hundreds.
Oh. So one thing you noticed with Venmo,
Yeah.
when you downloaded the app,
Yeah.
was that you could see what other people were sending other people.
Why
Only
does
$10.
anybody want to see what anybody else is doing?
It's just like creeping, like Facebook creeping or something.
I know, but
I don't know.
people like this?
You do, clearly. So right now you owe me $10. And I know you won't remember, but we made a bet about solitaire where I said, you don't know how to play solitaire. And then you showed
and I said,
me.
I know how to play.
You said you did.
Yeah, and I
then
still do.
Then you showed me that you really do not know how. So you owe me $10.
Right, so how would I, if I
How
want
would
to
you
send you
send me money? Well, you gotta add money to it. Is a thing you gotta do. You gotta link it to your debit card.
Lindsay Grotto.
Yay! And you wanna pay me, you can put in the amount you wanna pay me. Or you can request money too.
I'm gonna request money from you.
Okay.
Because I am a nice person.
$2?
I'm testing.
That's a little insulty. Then you can click pay.
Pay.
There you go. You paid Lindsay Grotto because I am a nice person. Tom paid you because I'm a nice person. $2.
I like it. I'm in.
What do you think you'll use it for? Do you think
I don't
you'll
know.
use it?
Probably for you.
For me. Woohoo!
I bet you work a lot of hours.
Yes. I bet you can't guess how many hours a week I work.
Really?
Mm-hmm.
60.
61.
Oh, God.
$1,000.
So
Boom!
close.
Oh,
So
my day
close.
is starting out great. Want to go double or nothing?
Let's see. What color are jeans?
Blue.
You got
Common color of jeans. They write songs about it.
I thought it was tough.
Double. I win double.
Great job.
Yes, and you get nothing.
I'll pay you in love.
That's not how this one works.
I will pay you
No.
in hugs and kisses.
There is no hug and kiss worth $1 million. Cool.
I could make it worth $2 million.
I've kissed you before and it's not that good. Woo! This is what I love. Every time the game hurts you, she gives it right back to you.
What do you mean I don't kiss good?
You're awful. You're very mouthy. Man, this feels good. Oh, this is why I do it. All right, come on, let's keep going. I'm on a roll right now. What's the matter?
I didn't know I was mouthy.
You think it would be good, but it's not. You should practice more.
Okay, my turn.
Okay. Try to make a little money back?
Okay, you want to go big?
Yeah, let's go big.
I'll get it on this man's
Oh,
game. I'll get in this man's game.
Yes.
$5 mil.
$5 million?
$5 million and a speedboat.
A speedboat?
Uh-huh.
This is serious. Yes, I'll take the bet.
Okay.
Oh boy, here we go.
I bet I know the name of your childhood friend.
Nobody knows the name.
Really?
I never talk about him.
Oh, really?
Oh.
Lenny
this is-
Cancelleri. Bam!
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
yeah, it is Monday, June 9th, a little bit after 5 p.m. Central Time. The best time. You know what that means. It's time for Tasty Live's evening show. Your little podcast. Your a little podcast called The Price of Truth, a show where we like to explore the incentives that govern our world. Our clown world, I should say. More on that in just a bit. Shout out to everybody watching on tastylive.com. Shout out to everybody watching on Tasty Trade desktop and mobile application. But if you want to be part of Bing, this little guy, this little nice, that is slick. This is a slick little look. If you want to be part of this chat box on your screen, there's only one place you can do it, and that's on the evil Google YouTube. So head on over to YouTube, find the channel, find Tasty Live's channel, subscribe, and all of your thoughts, both appropriate and otherwise, will be streamed right here on the screen. Do us a favor. Keep it respectful. That's all I ask, really. Keep it respectful. Let's use our First Amendment rights while we still have them, everybody. Speaking of the people, let's say what's up to the people. Shout out to Donna. Shout out to Soul Train, Catan, Cato, I see you. Emmett, how are you? Who do we have? Dark Assaulter. What's up, Lone? How are you? Dav. Money Wandering. Love the name. And so many more. Shout out to all of you. I would sit here and just call you out by name individually, but I'm contractually obligated to say something of substance. I'm digging this new look of the stream. Shout out to all the production team behind the scenes, because that's pretty slick. What do you say we get into the meat and potatoes of today? Prayers for the Jones crew. What are you guys talking about? I saw somebody say something. My daughter wasn't in the hospital last week. I don't know what you guys are talking about. We're all good. We're all good here. I appreciate it, but we are all good. A little under the weather, but fine. We're all good. SPX, cash, my babies, closed up 9 basis points. The NASDAQ, up 17 basis points. Oh, you went full platform. You just lost me altogether. Dow Jones, that's probably a good look. I'm better heard than seen. The Dow Jones was flat on the day, and the Russell up about 57 basis points. It was, again, the outperformer. Again, you're getting this little broadening rally happening, which I really love, because what's happening is all the passive people in the market, all the passive are not performing at all. The market's basically not going anywhere at all on a daily basis. You're up like 10, 20 basis points in a day. So if you're passive, or if you've been investing in sort of the same thing that everyone else has, nothing seems to be moving for you. But under the surface, a lot of these small cap stocks are absolutely ripping. And a lot of these individual themes are absolutely ripping. Excuse me. Nuclear being one that just will not let up. Nuclear is just going absolutely insane. The uranium plays are going absolutely insane to the upside. And they should, right? Meta just signed another deal with Constellation Energy. So if I'm not mistaken, Constellation Energy, which is a utility company, has done 2 deals. I believe they did one sometime last year with Microsoft, and now did something with Constellation Energy. So the energy trade, as we've been talking about, man, nobody liked this stuff, and we're going to drill, baby, drill, and the price of oil is going to go down in the dirt. Now all of a sudden, there's a little life in these energy trades, whether it's specifically energy, or whether it's utility stocks, or whether it's the offshoot uraniums as a byproduct, a second order derivative of the AI play. A lot of this stuff is heated up. I think it's tough probably to put an incremental dollar here at this point. I mean, Cameco was up 10% today. Okay, so the overall market not doing much, but if you're in a few of these themes, they're going insane to the upside. Again, Cameco up 10%. Tesla at second day of recovery. Don't say I didn't tell you so. Rewind the tapes, my babies. Go back and check the tapes for last Thursday. Was it last Thursday? I think it was. And I said, I thought that, what you got to 285, this is probably an interesting level to start buying. or to start nibbling, not start buying, but just start nibbling a little bit. And you're making the bet that you work towards some resolution between the two, some truce between the two, some backdoor deal. And it seems like, I don't think they've made a public truce at all. And I think actually Donald Trump said he has no desire to talk to Elon, but Elon's like deleting all his tweets after going nuclear. And to me, that seems like a bit of a sign they're moving towards neutral. And for that, the street is rewarding Tesla a little bit. I think 2 days of rallies here in a row. We're now at 308.58. And quite frankly, I don't know. You think they're done? You know, when I like when I see people come out and start downgrading, because analysts have I don't know, maybe I've been around long enough. I don't think these people do a very good job. I don't think they're very good at their job. And I think what they do is something called cover your ass, cover your own ass. And so the stock was just at 380. I think it was Baird. I can't remember the analyst, but somebody downgraded them with a price target of like 320. It's one of my pet peeves to downgrade a stock with a price target that's higher than its existing price. It is one of my pet peeves. But you can almost bet. You can do the exact opposite of what these guys say. When they're upgrading the stocks, the move is over. You follow their example, you're going to be made into exit liquidity. You follow their downgrades, the move is already over. You follow their lead.
Don't screw up. You're the weakest link here.
You guys introduce yourselves.
I'm Tony Batista. He's Tom Sosnoff. You didn't know that? I don't have any idea why you're watching.
I'm Tony Batista. He's Tom Sosnoff.
41, you got it.
See that? We knew it. Pretty good. Baseball field.
Baseball game.
It was a wonderful evening.
It was a warm summer day, 1982.
It was around 82,
83. I don't know, sometime around there.
Yeah, 83.
83, let's say.
It was 83. I remember because I was dating somebody else at that time. 1983, yes. It was a wonderful day.
No, we were playing. We played softball on the same team.
16-inch?
12-inch.
With gloves. Because we were hand models at the time.
Yes. I played third base, Tony played right field.
You've been dying to say that, haven't you?
We took him as a charity case.
All right, Tony, we have a big week of earnings coming ahead and in a time of high volatility and uncertainty. How are you choosing to attack this week of earnings, and do you think that there's anything that traders should be aware of?
I think earnings become less important
Hey,
when
Victor,
you
can you
have
hear me?
volatility in the overall market,
Yeah.
because sometimes
What happened?
Easier to find a higher probability trade.
Just your video and audio froze, and
time frame than you would for earnings. But if you
couldn't
are
see
gonna
or
trade
hear
earnings,
anything
I
from
think
you.
have to trade it much shorter term and probably directional. And with this implied volatility being so high, it's going to be even higher in these earnings trades, which means that all options are going to be priced a lot more fatter. And if they're fatter and you're selling them, then you can get a higher probability of success and be further out. So I think you have to trade them directional, and I think you have to trade them shorter term for earnings themselves if you're using options.
If you don't come from money, working with money sounds like the quickest place to get to money. So this idea of allowing money to work for you was fascinating with me. And then the more I get into it, the more I realize it was just a big competition. You know, it's like a big poker game with really smart people who know game theory, and nobody knows tomorrow, but they're all just taking calculated risk. And when I figured out that's what it was, like it wasn't this weird world of like somebody knows exactly what's gonna happen and this guy's got great stock picks, it's all just calculated risk, that gave me inspiration that like, well, I can do that. So I think spending a lot of time when I was young to learn different option strategies and to learn stocks, options, futures, Forex, crypto, to be able to go where the opportunity is, I think is the most important. Getting hooked in a strategy, it's cool, I respect it, but I tend to think I like to go where
All right, take two. Let's try this again, everybody. Sorry, not sure what that was, but I guess you start talking about Tesla, and the administration will cut you off the airways. Thank you to the FCC. Just kidding. But like I said, my more broad point is that the loser, I think, over the last couple of weeks is likely the passive investor. While you are getting positive performance, you're seeing these massive moves in these underlying companies, especially sort of small and mid-cap companies. And so it's not surprising. It's the second day in a row. I think you're seeing outperformance in the Russell relative to the NASDAQ. And I think that I said this last Thursday, but I mean, you don't have to be a rocket scientist. Look at this chart of Microsoft. This is one of the biggest companies on the planet. Would you put an incremental dollar in that chart? Do you think you're getting value? Probably not. If I go to Meta, same thing. You're nearing all-time highs. Do you think you're getting value in this chart? The answer, probably not. If you go to NVIDIA, my point is, out of these 7 of the largest companies, you're not getting a particular. I'm not saying they can't go higher, and I'm not saying the multiples can't expand on these. I'm just saying that market participants are generally going to look to where they can get the most bang for the buck in short-term performance, and it's probably not in 3 or 4. If I can go to Netflix, I get pretty much the same thing. 3 out of the 4 of these Mag 7s. So, at some point, if a bull market's going to continue, you get a rotation. And it took a long time to get to this point, but at least in the very short term, it looks like the market's trying to find rotation, is trying to find new value versus the same old stocks. And I think at some level, that's a short-term positive signal versus the market dumping. And I'm going to say this one time. I think I've said it many times in this stream over the last couple of weeks in particular. I think the recession game, the recession talk, it is a loser. It is a losing proposition. I think it is entirely possible you could call an upcoming recession, and you are not going to see what has happened in a typical recessionary cycle. I think what's happening right now, there is clearly a desire to sort of change the monetary structure in global trade and monetary policy, fiscal policy. And I think trying to step in front of that train with your I'm going to buy bonds and this is a recession, I'm going to sell stocks playbook. 1, I don't even think that's where we are. And 2, I think that's a losing proposition. So, there's not many times I'm going to be talking about a quote unquote recession here. I think half the damn country's living in recessionary conditions and have been since last October. When or does it catch up with the aggregate data? I'm not sure. I'm not sure it matters. I think when you're turning the dollar, I think when you're turning the dollar into toilet paper in front of everyone's eyes, people have to take that into consideration. How to think about nominal price of assets, even in the face of a slowing consumer, if that's in fact what you're seeing at the aggregate level. I think you got to be real careful, and I think it's a losing proposition. I think it's especially a losing proposition to be talking about it every single day and waiting for it. People have been waiting for a recession to show up in the aggregate data since 2001, man. And at some point, you got to go, you know what? I was wrong about this cycle. I'm going to reset. Because if you've been calling for a recession for 5 years, were you right if it eventually comes, or were you wrong like for 2 cycles? I don't think there's a ton of people out there doing that. I'm being hyperbolic to make the point. I don't think it's a very valuable discussion. And if anything, I think it holds people back from risk participation. It keeps them in this paralyzed state waiting for this event that may or may not come. Because even if it comes, what is the response? What's the normal response to recessionary conditions, especially at 7% deficit to GDP? What's the normal response, man? How do politicians hold power? By allowing you to go into a recession and not juicing up fiscal spend? Do you think that's how they hold on to power? Or do you think they make promises and they write checks that they themselves do not have to, that's not coming from their bank account, it's coming from yours. It's coming from mine. It's the easiest way to hold power is to give you something that I pay with your own money and make you feel like I did something for you. If that happens, deficits widen, dollar weakens, nominal prices go up, not down, unless there's a liquidity problem. Liquidity problem can totally happen, and you got a whiff of that at that horrible 20-year auction from the other week. It's not out of the cards. But if it's a liquidity problem, that's one thing. If it's a recession, that is another. If they come together, then that's a whole different issue. But I don't think that's what I'm hearing in these discussions. It's not there's going to be a liquidity event. It's there's going to be a recession, and for some reason, that's a reason not to own assets. And I think people have a real hard time making that case, especially over the long arc of history. Let's talk vol, which ironically is dropping. We're down to 17 VIX cash. Sorry, I know it's annoying. Listen to me cough. /VX at 1828. And the VIX term structure is relatively normal. A bit of a kink back in December, but relatively normal in contango, that is. And I bet most of you, I don't know. I don't think this is true for everybody. I was going to say some of you probably missed that April volatility. Some of you probably missed that April volatility, that backwardation, that 30, 40, 50 handle, even the 60 VIX print. Things just get crazy, and everybody tells the truth. When everybody stops pretending that they're some all-knowing, all-seeing tarot card reader, and they just tell you what everybody knew to be true at the very beginning, nobody knows. And we're playing a card game, the biggest card game in the world. And, some part of me, I love those markets. I know not everybody does, and I know it probably did a little bit of damage. Those outlier moves can do some damage, especially to people who are selling outlier moves. And I don't like to see retail get hurt in any way, shape, form, or fashion. But I have to admit, I am partial to high volatility regimes. When it's no longer about the narratives anymore, you have to play cards. And that's, that to me, that's the funnest. That's what this game is actually all about. And you get to look in everybody's eyes and go, oh, you're scared. This game isn't for you. You're scared, aren't you? And you get to look around and you get to see what's what, who's got ice in their veins, and who needs to sit this one out. Otherwise, they're going to lose all their money to the market. Those are my favorite periods of time, if I may be honest. ZB 112, 16, 30 seconds, 112 and a half. Not going anywhere for a while. Straight up chop zone for bonds. I said this to you, I think, last week. When we were at 114, I thought it was probably a good opportunity to take off half of the long bond trade. Because even though I want 117, a move from 109 to 114 is probably a pretty decent move in the short term. And if I'm not being greedy, I take some off the top. I take some off. It would be great if it gets back to 117. I don't know. I don't know if it happens here. I will say that the setup and the narrative for U.S. Treasuries, especially for duration right now, is very negative. But in some ways, I think that the Overton window about the U.S. debts problem, I just think it moved to where it should have been. You know, we've been talking on this program for a year and a half, and other people have been talking about this setup for a long period of time. You know, but past COVID, you can't print $10 trillion in the economy and go on a ZERP spending spree for 15 years, and then rates moved 5% and everything's going to be fine. You know what I think is hilarious too? There was this saying, right, that interest expenses are now higher than defense spending, and that's problematic. So you know what the government did? You know what your administration did? They go, okay, we can fix that. We'll increase defense spending to $1 trillion. And that way your interest expense is only equal to your defense spending. It's not more than. Did we fix it? I don't think that's what we meant. That wasn't exactly what the solution was. It's kind of funny when you think about it. Some part of me, if I could stop really quickly and speak to not only the state of U.S. debt markets and, you know, the flattening yield curve. We're now 48 basis points between the 2s and the 10s, everybody out there. They are lifting that short end. So while the long end lifted, what's happening in the short run is they're going, Powell's crazy. He's not going to do anything. And they've priced out a lot of these cuts in the short run. They didn't shift them, right? They didn't shift them from this year to next year. They just got rid of them. So we basically have 2 cuts priced for this year. And I don't know, this was 95% that they were going to have a cut in September. It's now 70. So it's, you know, the closer we get to September and the less the Federal Reserve is sort of firming up that it's going to happen, who knows? But the point is, two in this year in 2025 and 2 in 2026. There was no shuffling. They just removed them all together. And that's how you get a short end that is lifting up towards 4%. We were somewhere around 380 at one point. And now the short end is at a little bit above 4%, 4.01%. And which puts the difference between the 2 and the 10s have completely, I don't want to say collapsed. I don't know if that's hyperbolic. But we've gone from 60-something basis points, I think 65, 66 basis points, 67 on Monday, April 21st. We're at 67 basis points. And we've now flattened down to 48 basis points with the lifting of that short end. Some part of me, and I tweeted about this a little bit, Catan says $8 trillion looming. That's right. We got to roll this stuff over. Higher for longer, says Lone Sophos. Keep it real. When you heard the higher for longer, did any part of you, were you thinking like 5 years, maybe more? I don't think anyone was really thinking that. But if you look at that implied curve, that's only 4 cuts. That's still fairly high interest rate, and I don't even think they'll cut 4 times between now and the end of 2026. At least I think the market needs to remove some of those cuts before it becomes actual, given reflexivity in markets and market pricing. Some part of me is looking at June 14th. I tweeted about this. And the organized protests across the country. Some part of me that's been thinking all day long that I don't think that's going to go well. I don't think it's going to go well. I think it's set up not to go well. And some part of me is like, I want to buy some vol. You know what I mean? Not meaning I want to buy VIX or anything like this, but like to me, June, if there was like some VIX as a measure of volatility on the social volatility of our society in the U.S., I would buy that right now. I would buy it until my hands bleed, because I do not think these organized protests throughout the country on June 14th, I don't think they're going to go well. And I can't figure out what to do with that feeling. It's kind of a weird, sick thing that that's the way my mind works, which is where's the trade and all this? But I mean, what else can I do, right? Things are getting crazy when you look outside, and I can just do my thing, which is add and remove liquidity to the marketplace. But I can't help feeling that this is not set up to go well. And where can I buy vol? If it is even market moving, which I'm not entirely sure it will be. Some part of me wonders if the market's sort of already seen this coming, and that's why Palantir is a $132 stock. You know? I think it's, if I may opine, and if we may have a little bit of aluminum foil hat time. Uptake says, what do you mean by not go well? Poor turnout or violence? I'm hoping not violence, but it's more the latter than the former, uptick. I think property damage, things of that nature. I think I'm a little bit, I see the world maybe through a different lens. And when I see some organization because this takes a lot of money to coordinate all of this stuff, to plan this stuff. And I think to myself, who put the money down? And what's the objective? If you're going to do these nationwide protests, there must be an objective, right? If it's 100% peaceful, and everyone just says, okay, we demonstrated, we showed our part, we expressed ourselves, let's all go home. Was that the point? Expression? Usually there's sort of a means to a political end here. And I don't think this is going to create any political pressure unless it doesn't go well. Unless there are really, really bad optics. In which case you get situations where, you get martial law, or, you get a government that says, hey, we need to expand our partnership with Palantir to maintain some state of law and order. It's pretense in my mind. The aluminum foil hat stuff, it's like, this is pretense. If this doesn't go well, what's the next escalation point? To me, I think, I don't really buy the whole, we're paying Palantir $30 million. We're paying them $30 million to help to identify illegal immigrants. I don't buy it. You know what I mean? But I never bought it. I think I have an idea of what Palantir does and why it's valuable to a government to maintain a sense of control and to be able to identify threats to an established power structure. I think that's why it's valuable. And so I always said this is a hedge. Palantir is an emotional hedge, because if I make money on Palantir, it means I'm most likely not going to like the world as it looks as I look outside the window. That's what I always said. And so the more entrenched I think Palantir becomes into our government, the more opportunities for the government to use sort of this power that they're unlikely to be responsible with over the long arc of time. And I think Alex Karp and what's his name, Lionsdale, they're doing their best after this New York Times article was written, I believe, last week. They're doing their best to fight the PR war. And they talk a good game, man. But I don't think anyone's buying it. You know what I mean? I think we all know what this company helps governments to do. And I don't think we're super excited about that world. And it's always the same thing, right? The reason you must do this is because the good guys need the biggest gun. Otherwise, the bad guys will get that gun. So we walk ourselves into sort of totalitarianism or techno-feudalism or sort of technocrat authoritarianism in a surveillance state. And we do so because we convince ourselves if we don't do it to ourselves, a bad guy is going to come do it to us, quote unquote. But it's like if you end up in the same place, what does it matter anyway? Anyways, I don't know how I got to this. My point is I'm a bit nervous about June 14th and the optics it's going to create and the potential political and social volatility that stem from it. I don't know if it's highly tradable. I don't know if it's highly tradable, but I think at some level, I think you continue to watch Palantir and you continue to watch them likely expand the relationship that they have with both domestic and foreign governments. I think they're very, very expensive right now. That's obvious. But what I would also say is most growth companies have these periods of time where the market sees a future world of income and they start pricing that today. And that's why the multiple goes crazy, because they're not pricing it on the revenue that you see. They're pricing it on a ton of revenue in the future that the market sees that everyone else doesn't. And so the growth multiple goes crazy, or the multiple goes crazy for these high growth companies for a while. So just because it is expensive, as a trader, I think you got to be careful. As an investor, some part of me thinks this is like you just dollar cost average this thing as far out as the eye can see. And then you hope you lose money, because that world's going to be crazy. You're walking your ass down to a pre-crime or social credit score state. Anyways, I wonder if people agree with me on this point. I wonder how much people sort of give Palantir the benefit of the doubt. I don't know. My mom lives in Beverly Hills. Beverly Hills is quiet. I'm sure it is. So you're predicting another day of love like January 6th. It's not that I'm predicting that. I don't want that to happen at all. I'm just saying the setup is there, So if my whole thing is trying to analyze the incentives, and I think all the incentives are there. I think if I'm not mistaken, it's Trump's birthday. It's Flag Day. And you've got these massive protests scheduled throughout the United States. I think on one side, you've got this pressure to show strength. And on the other side, I think you got organized money that's being put to use to create structured political volatility. And then you've got a lot of organic pissed off people that want to express themselves. And I think it just takes one person in a crowd to do something silly. You know what I mean? People don't, let's say there's a pile of bricks somewhere in a demonstration. Nobody asks themselves, why is there a pile of bricks here? Nobody asks themselves that. But then, it just takes one person to pick one of those things up and throw it. Now you got a big problem on your hands. I hope nothing happens. I don't know that it's tradable in any way. And I am praying that it is a peaceful demonstration and a show of frustration and we move on. but I would argue it's not the way I would bet. And there's nothing you can bet. I looked on Polymarket too. There's just nothing. I'm a sick individual when I'm just looking for stuff to bet on like that. 110,000 Bitcoin. You have a lot of I think a lot of tailwinds to digital assets right now. Whether it's the administration's seeming strategy when it comes to managing the dollar. Clearly, this is what I think they're doing is they're trying to monetize their balance sheet, their assets. They're trying to monetize it in a way we've never seen before. That's why you have the Bitcoin reserve. That's why you have a sovereign wealth fund where you have federal land and you have the potential of them revaluing gold higher. For the very first time, I think at some level we're going to start talking less about the debt and talking more about the government monetizing their assets. I think that's 100% part of the strategy. I think there's a bunch of people that don't think they have a strategy, that they're just pushing buttons. I think those people are missing out on sort of what's, again, I've said this a million times. You don't have to like what's happening, but it's so clear to me that there is a strategy behind all these actions. Anyways, I think there are a lot of tailwinds here, whether it's what I believe the administration strategy is and their approach to the dollar, whether it's a lot of the new proposed legislation that will give, I think, players in the digital asset space a bit more predictability with regards to legislation, whether it is just demand. I mean, look at Circle, for God's sakes. I said last week, this is going to be an old school IPO. This has the potential to be an old school IPO. We've seen for years, maybe a decade, we've seen basically IPOs are really just ways for companies that have been held private too long and a bunch of private investors that have made the lion's share of the return. They're able to finally go IPO when a lot of the growth prospects of a company has been realized, and it's a mechanism to dump onto the public. And so you haven't really seen these like wildly successful IPOs like you might have seen, let's say, in the early 2000s or the late 90s through the internet boom. And I think this was one of those situations where just demand alone, 24 million shares, 24 million when it was like 20 or 30% oversubscribed. So they end up going 34 million shares, just raising $1 billion. That seems like way too little for the only pure play. It's the only publicly traded pure play on this in this theme. Anyways, another 7% here, definitely off the highs. At 138, we closed much lower than that at 115. But another 7% to the upside. Damon says, Victor Jones, did you ask Mike Butler? I bet he would know where you can bet on chaos like that. I actually should ask him. I did this thing every day I was in the office. I would go up to Mike and Nick, and I would say, where's the money at? That's all I would say is, where's the money at today? And either they would have like a market play, or they had a bet that they thought was a lock. And I never asked which one, give me a bet or I just asked, where's the money today? And whatever they had the highest confidence level in is the one that they would tell me. Those guys are sick. Those guys are in a good way, man. They are the embodiment of what this game is. Thinking through just pure risk and reward, no narrative, just pure risk and reward, and they'll look anywhere for the opportunity. If it's futures, Forex, equities, big digital assets, Polymarket, DraftKings, they can just tell you where the odds favor throwing a few chips down on the table. And I can't tell you how much I appreciate that. Silver continues its move to the upside. This is another one, man. Thank God this worked out, bro. This would have been my entire professional career flushed down the toilet. But yeah, man, we hit 37 in silver today. I got a really big smile on my face. We hit 37 in silver. A little sigh of relief here for me, but we got the breakout in silver, and it keeps going. I think what people just do not understand about silver, if you've never seen that, when silver goes, it goes, man. The beta on this is nasty. Its autocorrelation is nasty. It goes. It goes to an extent that you can't even really fully fathom, and that's one of the reasons why I didn't close out silver. I took off 50% of the deltas, and I go, I'm going to let this ride, because I've seen this happen before, and you know how they get it to slow down? They raise the margin requirements. So when you see one of these exchanges raise the margin requirements, that's when I go, okay, the party's over. And I'm kind of curious if that's the way the party ends this time. If it just naturally, okay, we find some new range here, you know, and then things just gently trade sideways for a bit. That's generally speaking, that's not how silver trades. You get these explosions and these just auto correlations in one direction in a way that you sort of can't see coming. So then what can you do? I think we can just watch the gold silver ratio, man. When it's starting to move back in line, back towards something that's a little bit more normal. What are we at? Like 90, something like that right now? Yeah, 90.2. It's still elevated. It's still elevated. It's not as extended when we were like plus 100, something like 103. Let me try to put this chart in front of you guys. It's kind of hard to read because the font is so small. But, you know, this particular site says you switch to buying silver when the gold silver ratio is above 80. You switch to gold when it's below 50. The thing is, you wouldn't have had many opportunities to buy gold if you were only buying it when it was below 50, and this ratio is below 50. But, you know, its longer term average since the 70s is somewhere like 61, but we have not been near 61 in a few years. We didn't get there back in 2021. We got close, back to 66. The last time we were down that far was like 2014. But I think on a long enough time horizon, this, you know, it's still a bit, 90.2 is still high. It's the low end of its range for the very short term, but it's still elevated. I think probably if it doesn't end up being the exchange requirements that gets moved on silver, then it's just we get back to something more normal. You know, below 90, we're getting pretty close to a level that's approaching something that makes a little bit more sense. But what a move. And it's not just silver itself. I think my silver miners are going nuts too. So PAS, Pan American Silver. This thing had a sick move from 22. It had its breakout up to 30. I think the other one that finally is getting a little bit of a move here is Freeport. I think this one's still trading at a discount relative to where copper's trading. I think this one, to me, Freeport looks a little bit like the way Newmont mining looked a few months ago. We're talking about Newmont mining at $40, saying this doesn't make sense. This doesn't make sense. Gold is still near all-time highs, and this stock has cut in half. It doesn't make sense. It wasn't cut in half, but like 30, 40% off. And we've subsequently seen this recovery, and not just this miner, but many others. And in my opinion, and I might be wrong, but this is the next one. I think you guys all know all I want to do is stay in the materials. I want to stay in energy. I want to stay in utilities that provide energy. I want to stay in water. I want to stay in the base metals. I want to stay in precious metals. I want to stay in stuff that you can't print for the duration of this, who knows, 5-10 years of financial repression. I want real assets. And the tech beta that I want on the other side, it's Bitcoin, which is still has scarcity. So that's kind of what I'm doing, man. And so copper, in my opinion, it's another one of those materials. In my personal opinion, Freeport-McMoRan is too cheap relative to the price of copper. Excuse me. And when the market goes and it finally finds value, I think they'll come for Freeport eventually. It's just a waiting game, maybe. Maybe I'm wrong. Let's see what else is out there. I wanted to talk about some themes here. I haven't interacted with the chat much. Faded silver today. I hope you're wrong. Victor Jones says D-chat. Faded silver today. I don't hate that move. I don't hate it. Like, I wouldn't buy into silver at 37. But the problem for you, D-chat, is many people do trade that way. I don't get it. I don't understand the whole buy the breakout thing. But some people do it. And I think one of the reasons you're getting this sort of follow through is those technical, especially in commodity markets, those technical buy the breakout momentum trades. So I wouldn't be putting a new incremental dollar into this trade. I think we got a good price when we did it, between 32 and 33. But I don't know. I wish you the best. Here's the thing, D-chat. I think even if it does roll over, I think we've probably established a new range. And if I'm right that we've established some new range and 34 becomes support versus resistance, I'm cool. I'm still going to be making money. So you can make money on a fade and I can be making money holding long. It can work for both of us. Lucid says, then it's best we eat at the silver table. However, this looks like it needs a breather. Yeah, maybe. Catan still long the junior miners. Good on you. Same. This thing is so underowned. Vic, if you want real assets, Austin, Texas real estate's in the doghouse, 20 to 30% off. I know. It's not just Austin. It's DC. It's a handful of cities right now. But it's hard because I would say most of the housing market has a supply-demand imbalance. Most places, not all, but many places throughout the United States have a supply-demand imbalance. There's way more supply than demand. And people are just stubborn. They're so stubborn, they're not moving the price. In some places, you're forced to. In some places, there's just too much supply, and they're forced to move their price a bit. But I don't know. I've been waiting to buy the home builders. And some part of me wonders, are we close? Are we close here? On a short time frame, XHB looks okay. I say this every week. On a long time frame, it's not much of a discount, right? 125 down to 96. And who are they selling to? You have to, at some point, we got to get these things at the inflection. The inflection point before a change in monetary policy, before an easing. That's ultimately what starts to shift the supply-demand imbalance. So as they start to lower rates, that creates, it could potentially, if they do it at the right time, if they start to lower rates, the long end will come down with it. And as the long end comes down, the borrowing costs go down, which gives people more purchasing power, which helps them to go meet the supply. Because supply is not changing its price. But where is that inflection point? Does 4 cuts over the next 2 years, is that a bit too hawkish? Because we don't need to buy this exactly when this thing is right before they're getting ready to cut. We need to sort of buy these assets at the turning point between hawkish and dovish readings from the market or anticipation of the market. And is 4 cuts over the next 2 years, is that too hawkish? Or could we cut that to 3? Or even 2? Is that possible? I don't know. And even if so, that means we're still probably pretty close. I'm trying to talk myself into buying the home builders. Catan says, Vic, your chat is devolved. Why? What happened? If you want, I see. If you want real assets, you go out into the street and obtain them. Catalytic converters or somebody else's wallet you found. Gangster life. You guys are nuts. Yeah. I don't know. What say you guys about the home builders here? I just don't know what we're going to build. There's no way we go back to building those same 2,000 square foot homes. Right? Like all of these home builders have to pivot, do they not? Into building smaller homes. I think I'm talking myself into buying these things just a little bit at a time. The problem is I don't know what the catalyst is to actually give these things value. Is it just lowered rates? Is that even enough? I don't know. I think it's just like energy stocks, though. For a year, I had to listen to everybody tell me how all of the energy stocks were dogs, and they weren't wrong. But at some point, everyone changes their mind. People are starting to change their mind about energy here. Oh, gosh. The tiny homes market seems to be catching on. Gosh. McMansions by the lake. I don't know what's taken so long. You know, it's like they're living in shoebox apartments in Japan. You know what I mean? This is what happens when you monetize your debt. The scarcity of land becomes crazy expensive. That's what's happening here. And so you have to downsize the size of the homes. So, you know, you either got to start building a lot more densely, you know, a lot more multi-units. You got to deregulate first the building and the zoning of a lot of these places. Start building more densely populated housing markets, or you got to build smaller homes on smaller lots. You can't just keep doing the same. We can't just keep building the same average size home at twice the cost. Garage life. No one wants to sell. Lots of people locked in low rates, and no one giving them up for 6+ rates. I know, JDD. I know. But eventually, there's no new buyers, and there's just an accumulation of sellers for various reasons. Van life down by the river. I'll do a couple more here. Oh yeah, this is the other one I wanted to show. If you're looking out for a recession, and I'm not saying that this is going to be accurate, but this Atlanta GDP now, this thing has been, I've never seen GDP estimates with more vol in them than Atlanta GDP now over the last 2 quarters. It was, what were we, negative whatever percentage in the last reading. And now this thing has just shot up like a rocket ship. We're up at 3.8%, and we were just a week ago even higher than that. We were above 4%. This is insane. This is like it's a meme stock. I don't know if this is going to end up being real. I think that the same thing that caused that negative reading for the previous quarter was net exports. You could see the exact flip of that happening this quarter, and that's what nobody talked about. Everyone got spooked about the negative print. Nobody asked themselves why, and if that's true, everyone's pulling their imports forward. What does that mean for the next quarter? You get the exact opposite, would you not? I think that's ultimately what we're going to see. You see a big GDP print for the second quarter. It will take a recession for home builders to bottom out. I think that's probably true. You need a recession, and then you need a reason to drop rates in order to clear the supply. I think that's probably true. Yeah, I think that's probably true. Ethereum is just, I barely, and when it comes to digital assets, I'm Bitcoin only, because I don't really understand the idea of trading a digital asset that's not scarce in and of itself, right? Because isn't that just the same? Don't you have the same problem? You just have, like, why trade something you can print an unlimited number of these things? I get that the Ethereum network has value, but I'm in my scarcity bag, so I don't play the ETH trade as much. That's a reset, Victor. Yeah. Doesn't it seem like, I'll end on this sort of like, I'll end on this. There was a period in time through like 21 and 22 where you could kind of see what was happening, like, in my personal opinion, like, money is sort of this upper limit on technological advance. Money is technology, but we increase the money supply by about 6% on average, and at some level, I think that upper bound acts as some limiter on technology and on the rate of change of your life. And so when that changed, to like 10 or 20%. The thing I told some of my family members is like, you got to get ready for a completely different pace of change on everything, on the pace of technological innovation, on the pace of social and political change. Everything's going to change, and you're used to 6% change in money, 6% change in technology, 6%. And we've just changed that, and you're going to feel it immediately. It's going to feel very strange. And I also think, like, at some level, there's, I don't want to say everything's coordinated, but I think there's a lot of this where we're doing this, we're going through this choreography. And I think that's why at times it feels very strange. That's why at times I think it feels unnatural. It feels like people are making decisions that clearly are not in their own best interest, not in society's best interest, not in their nation's best interest, but we're making them anyway. And people can't, for the life of them, they can't understand. Why aren't all of these mental models I have about how the world is supposed to work? I'm supposed to be able to vote, and those people make choices that are in our country's best interests, and we should be constantly trying to improve the lives of everyday common citizen. And like, that's the mental model that everybody has. And then they look outside and they go, what's, no, this makes sense. Nobody's making decisions in what seem like the best interest of the nation. And that feels unnatural. It feels crazy. And I guess like a few years ago, I had a very different thought about what was happening. Like, we've reached the end of the line. Like, this system as is cannot continue, and it's very obvious. So now we need to take steps towards getting to a new system. And, for whatever reason, we can't just be honest about that. We have to create pretense. We have to create volatility, create fear that allows us to roll out these new mechanisms. Which to me, I think that's a misread by a certain controlling class. I think it's a complete misread. I think we all know it. We all see what's happening. We've all been through so much that we can take it. You know what I mean? It's almost agony waiting for it to roll out and having to watch all this pretense, all this choreography, just in order to do what we all know needs to happen, which is a reset of the social contract, a reset of our monetary system. It's just watching all this craziness. It feels unnecessary. And what's perhaps a bit sad, I don't know why I do this at the end of the show. What am I doing? I'm going to blame it on the NyQuil. I think what's most sad is the people who think all of this stuff is organic, the people who get lost in believing that they are participating in some sort of political resistance and not understanding the broader context for what's happening. So I would say, man, if you're signed up for any one of these things over the next week, more power to you. Just keep your head out there and keep your cool. Have your friends keep their cool. Because, the incentive structure says they need optics. They need optics that show disorder and chaos in order to bring a new set of rules to establish law and order. That's the game. That's what keeps happening. And when you get scared, when you were scared in the mid-90s, you gave them the pretext to pass the 94 crime bill. When you got scared after 9/11, you gave them the pretext to pass the Patriot Act to make you take your shoes off at the airport, for them to be able to monitor your phones, your emails, your texts with your loved ones. And you gave them pretext to invade countries and spend trillions of dollars. So I just think in markets, the worst thing you can do is operate with fear. And if there's one thing that trading has taught me, it's that fear is a really useful weapon to separate you from either your money or your liberty. So I don't know, if you're out there over the next week or so, keep your cool. Don't give them your fear and don't give them your anger. Give them your logic, give them your reason and your rationale. All right. I'm drugged up, everybody. My apologies. I'll see you back here tomorrow. Same time, same place, same great network, only on Tasty Live. Peace.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade.